decoding key policies, delivering market-shaping insights, and unlocking the potential of India's growth blueprint. Beaming live from the CNBC-TV18 Motilal Oswal Budget Headquarters.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you from the CNBC-TV18 Motilal Oswal Budget Headquarters. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, hi, good morning.
Hi, good morning. And Prashant, you got it right. You said that they'll figure this out. It's only fentanyl.
Yeah.
And that's the big global headline, right? It's sorted, tariffs are on hold, the world's a happy place, at least for now.
Well, that's right. It appears it was a tequila shot. Things better between, Mexico, Canada with the United States. Good news.
Absolutely. And I think now the hope is that the same thing will be done with China as well, where that we've not seen a headline yet that's happened, but we'll see. All right, well, let's just quickly run you through, as we always do, things you need to know as we start a fresh session. So a bit of a roller coaster session last night from the US because there was tariff relief 2 times over, right? And one was during market hours and the other was, of course, post-close. So for Mexico, there's a 30-day delay after a border agreement was reached. The Mexican president essentially said that they're deploying some 10,000 troops to patrol the border. They're going to strengthen all of that and try and supply the flow of drugs and people into the US. So a 30-day pause there. And with regards to Canada, and this came after the close, New York close, Prime Minister Trudeau essentially said that he's had a word with President Trump and tariffs have been delayed for at least 30 days there as well. Now, the White House press secretary said that President Trump and Chinese President Xi are going to be speaking over the next 24 hours. And this is the reason why expectation is that with China as well, although, I mean, it's slightly different. Mexico and Canada are U.S. allies. China is not. So it's slightly different in that regard. But, given what has happened with the other two, with China as well, I mean, the expectation certainly is that something will get done. Now, equities in the U.S., and that's the roller coaster part of it, trimmed losses. I mean, at one point, it was a 2% cut. We left off with the S&P about 3/4 lower. NASDAQ was down about 1 1/4. The dollar index has pulled back steeply. It was about 110, and we are back at about 108.60 or so. The 10-year yield has come off and, it's at about 4.53. So nothing, 1 basis point change or so. There is just one more thing with regards to these geopolitical events, etc. Reuters is reporting that Trump and Putin, Russian President Putin, are going to be could be meeting, and that meeting could take place either in Saudi Arabia or in the UAE. And this is important for that other conflict, which is the Russia-Ukraine conflict, which President Trump has promised to end during the entirety of his campaign very, very quickly. So we'll see. Oil down about 1% or so, about just under $76 a barrel is where we are at. Now, just to circle back the levels here on for the markets, this is certainly relief, right? I mean, what we've seen globally. The only question is these tariff pullbacks that we've seen, is this tactical relief, or will the market assume that this is the playbook now for tariffs? I mean, threaten, sound very tough and then kind of pull back. I mean, we already know that from the earlier Trump 1.0. But it's just a reminder of the way President Trump conducts policy or business. Now, that's a question which we'll find out. But in any case, at the margin, this is relief from a broad global risk-off mood. The mood is much better this morning as we are starting. So we yesterday on the Nifty tested 23,210, which is the 50% retracement of the recent up move from the lows to the high. The 61.8% retracement of the recent up move, if this breaks, is 23,110. We left off at 23,360. So these are the two supports, 23,210 and then 23,110. 50 and 61.8% retracement of the pullback. The major resistance on the upside stands at 23,632. For the Nifty Bank, we saw a rebound from the 50% retracement level. So we hit the 50% retracement, like for the Nifty, and then rebounded. So that number is 48,926. And that's the first support here. The 61.8 comes in at 48,671. Those are the two supports, 48,926, 48,671, 50 and 61.8. And yesterday's high, which is 50,009, is the resistance, immediate resistance as far as Nifty Bank goes. GIFT Nifty will come up on your screen. giving you a quick sense of how trade is likely to start. Indeed, a 100-point bump up this morning, right to the word go. Surabhi.
Absolutely. It's looking good, and that pullback should take us back towards the recent high of our trading range, and we'll talk about that as we go forward. And that seems to be a given, at least for the time being. The question is whether it's going to sustain or not. Now, Asia is a nice, shade of green. Pretty much all the markets are doing quite well around the neighborhood. The gains are between 0.5% going all the way up to 2%. That's the Hong Kong market for you. Taiwan's also trending on the upside. Decent gains coming in there. Hang Seng's doing very well, 2.75%, hoping for similar relief to come through for China as well. Do remember, the Japanese markets, by the way, are also doing very well. The Nikkei is up 1.6% right now. So Australia, South Korea, Japan, Hong Kong, Taiwan, everything's up and about. The mainland Chinese market are still shut for the Lunar New Year holiday. They come back tomorrow after the big break. And, by then, let's see if there's a resolution on this 10% tariff on China as well or not. But that's what we'll watch out for. Just a word, talking about the moves in currencies. Now, this good news should actually help the Indian rupee as well, because it's already pulled back the dollar yuan to an extent. The dollar yuan, which is trading in the offshore market. Yesterday, it touched a high of as much as 7.37%. But now in the offshore market, it's come down to about 7.3, as we just saw over there. So similar moves are expected for most of the Asian currencies. I mean, it's obviously helped the Canadian dollar and the Mexican peso as well. And we are expecting that with the overall pullback in the dollar, the rupee should get some benefit, considering yesterday's headline was, of course, levels above 87. So maybe some relief could be in store. For the Nifty, like I was saying, the expectation is going to be that straight away you come to the top side of the trading range once again. Now, what happens from there? Two questions. One, the bounce has to sustain. And two, a decisive move above 23,500 will start telling us that we are in the next phase. Now the downtrend is over, and that trading range and that consolidation is over, and whether the index can indeed head higher or not. The only problem is the budget-related portfolio churn that India has been seeing last 2 days, and let's see if we have more of that or not, which is why from the results tally, I've just picked out 2-3 interesting names, which the market I'm sure will focus on. KC International, their order book growth is fantastic. They're really piling in the orders, but top line is slightly muted. So let's see how the market reacts to that. Power Grid is not a great number because there's sort of pressure coming in across the board. Revenue, EBITDA and margins have contracted, and they've all sort of come in below estimates as well. Garden Reach Shipbuilders, you've got decent growth on the top line. Gross margins slightly lower, EBITDA margins okay. So it's a mixed bag. So we'll see how it plays out. Because anywhere where in these capex stocks, if there is an earnings miss, the expectation can be that pretty severe reaction could come through. So let's see. And anyway, they're susceptible to selling as portfolios get over the churn. Today's results tally: Asian Paints, Tata Power, Titan, Kajaria, Segal, Happiest Minds. These are some of the key names that we will watch out for today. And I'm just going to end. I should have put up the numbers as well. On the flows front, same picture. 4,000 crores of selling from foreign investors yesterday. Domestic institutions are buying. So whatever's happening, tariff, no tariff, foreigners are selling in India. That's almost a given now.
Well, yesterday's trading session actually was a good one because we had every reason to see a very, very poor trading session. India has underperformed in the month of January. You had the dollar index that was strong. You had this Trump tariff worries, and you had, pessimists who said that maybe this capex plan isn't as much as expected. So you had every reason to see a very poor trading session. But yesterday, to be fair, we ended at the high point of the day. So I'll take that as a positive. And the lead indicators that you have on the screen: dollar index softer, Brent crude prices lower, and the 10-year yield as well a little bit softer. All those three bode well for an emerging market like India. What happened yesterday, there was some lightening of positions both on the Nifty open interest as well as on the Nifty bank open interest. And if you're looking at the FI data, well, they unbound some long positions and they added some short positions, which takes their short positioning now to close to around 90%. Keep in mind, this is the highest in percentage terms that we've seen in nearly the last 2 years or thereabouts. So short positioning at around that 90% odd mark, well, that's the highest we've seen in close to around 2 years. And in absolute terms as well, it's the highest we've ever seen, actually, the short positioning from the FIs. So the FIs, they're still holding on to those shorts. That could be a blessing in disguise if we could see some kind of follow through. And to be fair, in the last few trading sessions, our markets have shown some kind of stability, because early last week, it appeared that they're getting the call bang on. We were drifting lower and they were holding on to the short positions. But now, the short positions, both in percentage terms as well as in absolute numbers, they're at elevated levels. Moving to the options data, the 23,500 call, fairly active in yesterday's trading session, and the 23,300 put. These are the near-term strikes that I'm looking at. Both of them were fairly active. So just punching in the data points and just looking at yesterday's levels, well, you have a couple of crucial levels. 20 DMA, that comes in at around 23,250. Yesterday, we went close to around those levels odd, and the recent high becomes a bit of a resistance mark. So that's the band you're looking at. On the Nifty Bank, well, the 20 DMA yesterday was defended. The 60% retracement, as Prashant said as well, comes in at around that 48,800 odd mark. And, yesterday's low was in that vicinity. So 48,800, that's a crucial mark you're looking at on the downside. Now, for today, since Trump, has postponed those tariffs on Mexico as well as Canada, I expect a bit of a reversal in comparison to what we saw yesterday. So the index that got hardest hit was the metal index. You have the dollar index that's a little bit softer. So expect that stock, that index to do well. And if you're looking at a couple of stocks, a couple of them like Sambandhana Motherson, that one reacted very, very negatively in yesterday's trading session. Since for the time being, those tariffs have been pushed back. So if you're looking at a stock, maybe Sambandhana Motherson could be another stock that you should be looking back. Yesterday, in fact, it was down closer around 8% or thereabouts. So we start in the green. Let's see whether or not we can build on to those gains. 23,600, extremely crucial on the upside.
Absolutely. So let's see if the buyers will keep piling in as we get that bounce on the open. Let's kickstart the show then with the equity call of the morning. Sunil Kaul of Goldman Sachs recommends NSE India consumption versus NSE infra outperformance pair trade. He says the long-short pair has gained 6% in the past two trading sessions since the 1st of February budget, but still offers a 14% upside to 2022 relative peak and 25% upside to the 2020 peak. He says for NSE India Consumption Index, about two-thirds of the weight is concentrated in FMCG, autos, and consumer services, with another 20% in durables and telecom companies. He adds that within the infrastructure segments, while budgetary allocations to roads and railways is flat year on year, and defense allocations have moderated, the government remains supportive of power, which is a risk to the short leg of the trade. So interesting. You've got to go out there with caution. That's what Sunil Kaul is saying.
Okay, all right. More opinion, right? And Rahul Chadda is now with us, founder and chief investment officer at Shikara Investment. Rahul, great to have you back on the program. Good morning. Thanks very much for your time. So there is at the margin some relief. The question is this, with regards to tariffs specifically, is this a tactical relief, or should we assume what has happened with Canada, Mexico as a playbook for things to come in terms of how these things will work out? Sound tough and big and then roll back when you get what you need. What's your sense?
Yeah, so again, our view was that this time is different from 2018. 2018, US didn't have an inflation problem. I mean, if you see last year, Democrats got voted out despite a very strong economy because of the inflation issue. And so I think the Trump administration clearly realizes this, which is where all the noise, all the rhetoric you see on tariffs is basically escalate to de-escalate. I remember I was talking to people yesterday and people were like, we've got 24 hours to go. Would this happen? And we saw this early this morning, Mexican president promising 10,000 troops to guard the border. And the same thing got repeated with Canada. So I think there is a call or there are interactions scheduled with the Chinese authorities in the coming days. And the hope is all these tariffs come with a lag, basically, and some solution is going to be found out. And our sense is, look for China, it's going to be do or honor a part of the deal from 2018-19, buy some of the goods, sell part of the TikTok business, which is in US. And again, at the end of the day, the administration here wants to leave a legacy. President Trump wants to leave a legacy of a strong growth rate. So I don't think they do anything significant to derail the story. But yeah, there is going to be a lot of noise, a lot of bumps along the way.
Absolutely. And that's what we're sort of looking at. I wonder how these days, brokers and analysts are writing their notes. By the time you start analyzing what happens to the tariff or what the numbers and the implications could be, it's gone. So, yeah, I don't envy their jobs at all. Rahul, so let's talk about the big story here at home, the budget and what it's meant for the market. And, just before we said hello to you, I was reading out a note from Goldman Sachs where they were talking about this paired trade, because that's what this market's trying to grapple with. That do you sell down your capex stocks and you start loading up on consumers, and if that's just a short-term trade, or is that a tactical change in the portfolio? Where do you stand on that?
Yeah. So we're going to be far more discreet about what we buy in the consumption space. Say what we like there is autos, what we like is hospitality, hotels, travel, tourism, etc. So I think these are the spaces. There are parts of consumer staples where if you see the valuations are still expensive, these names have pulled back about 20-25%. But look, historically, these names used to trade at 25-30 times until 2014, and then the multiples got expanded to 60 times. I think with the kind of growth we've seen over the last couple of quarters, these names are going back to 35 times. There are categories like paints where competitive intensity has gone up, value retail, competitive intensity is very high. Same with quick commerce. Some of these names, particularly the mature categories, are going to see their multiples contract. So we would not really kind of jump into buy those names, be selective about buying consumption. On your industrials part, I think somewhere around again, probably March, April, you'll get good entry points for industrial. See, the fact of the matter is we've not seen an investment cycle for last 10 years. We get the point that, look, the central government capex is going to plateau around here, having grown significantly over the last 3 years. But state capex is going to pick up, PSU capex is going to come, private sector utilizations are still 78%. So that capex is going to come. And a lot of the Indian industrial companies have now also got inroads into global sourcing programs. So you will see that story gain traction in the coming quarters. So we'll take this pullback to buy industrials. Hopefully you get it 15-20% lower.
All right. Hi, Rahul. Good to hear those thoughts. Well, an optimist on industrials, which have been a little bit off color, but you're saying it could be providing a good entry opportunity. What else has underperformed in the recent past has been the big banking names and the big boy Reliance Industries as well. Post this recent underperformance, do you believe it's a good time to get into these names?
So let's start with the Reliance first. See, I think significant value for Reliance comes from retail. And what we saw was clear struggle for the company in retail. They shut a lot of stores, etc. I think that is getting fixed. Hopefully, in second half of the year, we'll see some concrete actions on their new energy plans, and I think that's likely to excite market. It's a mega cap stock, so it's kind of a function of FI flows into the country. Our view is that Q1 onwards, you're going to see investors move out of US into international equities, into EMs, etc. Clearly, there was a lot of this complacent attitude about US exceptionalism. With the chaos we see here locally, I think those things are going to be questioned, and as a result of which, people would go out and see the rest of the world, particularly emerging markets, Asian markets, where valuations are much attractive, where you have fiscal prudence being followed. So I think that is going to be appreciated by the investors in the coming quarters.
Rahul, I mean, markets, up phase, down phase, there are always stocks, if you identify correctly, which will make you money. With full disclosure, I mean, why don't you run us through 3 or 4 names which you think are very attractively poised after the correction that we've seen?
Okay, so I think some of these kind of an IT services name is something we like to have. If you look at our portfolios, our regional funds would have something like a Cognizant Technologies that's not participated in the rally, trades at 15 times earnings. We discussed about bank in the previous question. I think things improve for banks from here. Similar to Reliance, that's a sector that bore the brunt of FI selling. There was also a pressure on the NI growth because all these guys were somewhere scaling back on their unsecured loan exposure. So as that normalizes, you'll get NIMs kind of a stabilize, you'll get NI growth about 15%, earnings growth are going to be 15 to 18%. And to be fair, 18% earnings growth for next 3 years, I mean, anybody would take it. So that's something one would like to have. One would be still careful of expensive small to mid cap names. See, they had a one-way rally over the last couple of years, and again, nobody could understand what was happening in these names between, I would say, Jan to whatever, somewhere August, September of last year. That is going to unwind. We've seen part of that unwind. I won't be surprised if these names correct another 15-20%.
Another 15-20%. In banks, do you have a preference, Rahul?
I think the large banks, the ICICIs, SDFCs, clearly should benefit here.
Okay, all right. Rahul, thank you very much for joining us. Good speaking with you as always here, and hope to see you back soon. So that's a good conversation and some interesting perspective as well. Let me just quickly run you through what's lined up here over the next 2 hours or so. So at 8:35, right, you just heard Rahul talk about industrials and how maybe there is, and he said, we used the word hopefully, there perhaps is another lower price point where you get to buy them in March or April, he said. So Pulkit Patni will be talking to us about exactly that, India Industrials Analyst at Goldman Sachs. We talk about the implications for the so-called capex sectors. 9:20, Sanjay Mookim of JP Morgan will be our market master today. 9:30, you'll hear from the management of KEC International on their third quarter numbers. IndusInd Bank will be the big banking major with a conversation around what next after the third quarter pain that we've seen. 9:50, Vinati Organics will be with us on the quarter gone by. And of course, it's our special segment, Citizens NPC. Lata will be in conversation with a host of experts to discuss what to expect this Friday.
I am announcing Canada will be responding to the U.S. trade action with 25% tariffs against $155 billion worth of American goods. This will include immediate tariffs on $30 billion worth of goods as of Tuesday, followed by further tariffs on $125 billion worth of American products in 21 days' time to allow Canadian companies and supply chains to seek to find alternatives. Canadian energy powers American manufacturing, businesses, and homes. Of America's top 5 trading partners, Canada is the only one with whom the United States runs a trade surplus in manufacturing. And Canada buys more goods made by Americans than China, Japan, and Germany combined.
Presently, taxpayers can claim the annual value of self-occupied properties as nil only on the fulfillment of certain conditions. Considering the difficulties faced by taxpayers, it is proposed to allow the benefit of 2 such self-occupied properties without any condition.
Welcome back. You're with us on Bazaar Morning Call. And like we've been telling you, the cues are very, very green this morning. The tariff clouds have, dissipated, at least for now, which is why the implied open is suggesting that we'll be up 100 points straight away at the start. And then let's see how it goes from there. Lots of individual stocks to track as well. Plenty of earnings that have come in after market hours. So we've got our team standing by with the cues and updates. But before we get to earnings, yesterday, of course, Shireen was, with the top secretaries at the budget town hall, and some very interesting takeaways came in, particularly on the next policy steps with respect to banks. Abhishek, good morning. Fill us in.
DFS Secretary has said that government has conveyed its view on LCR, that is liquidity coverage ratio, to RBI, but nothing has been heard from RBI's end to them till now. They don't want to lock up the additional capital in this regard, and that is what they have asked RBI for the concession on that. Now, what is LCR? LCR is liquidity coverage ratio. It's a liquidity requirement for banks to maintain at all times. It's a certain portion of high quality liquid assets bankers, which is called HQLA, which can be easily converted into cash, like bonds in the market, etc. So bankers have said that the draft guidelines of additional 5% will consume about 5 to 10%. That is the range that various bankers have given to us of the current level of LCR, which is on a tighter side to them. So that is why they have requested some leeway to RBI with respect to LCR's draft guidelines. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, let's hop across to Vivek. He's here to tell us about Power Grid's results. Vivek?
Well, good morning. A soft quarter as far as Power Grid was concerned. It's a miss across our poll. Revenues were down 2.7% on a year-on-year basis, coming close to the 11,233 crore mark. Our poll expected a revenue of a little over 11,600 crores. EBITDA was down close to 7% at 9,537 crores. This doesn't favor comparably versus our poll of a little over 10,100 crore. Margins too contracted on a year-on-year basis, 84.9% versus 88.5% on a year-on-year basis. And profitability was down 4% at 3,861. Our poll anticipated profits slightly in excess of 4,000 crore. But however, remember, Power Grid will depend on the kind of capex as well as capitalization guidance that the company will provide. The company gave a very strong guidance at the end of Q2. FI capex guidance was actually increased to over 20,000 crore from 18,000 crore earlier. In terms of the segmental revenues, the most important segment, transmissions, actually degrew this particular quarter, 6,545 crore versus 7,059 crore on a year-on-year basis. Expect a start in the red as far as Power Grid is concerned.
All right, Vivek, thank you very much for that. Let's talk about two more names, Tata Chemicals and Castrol, which should be in focus. Upasana's got details here. Upasana, morning.
Good morning. First up, let me start with Tata Chemicals. The numbers were a miss as compared to street estimates. Company says that the highest volume was offset by lower realization, leading to a miss in EBITDA and PAT. Now, company's revenue stood at 3,590 crore, down about 4%. This was mainly due to adverse price movement of soda ash while the volumes were higher. Company's EBITDA was also down about 20%, mainly on account of lower pricing, and EBITDA margins were under pressure, down about 240 basis points at 12.1% versus the street estimates of somewhere around 14.9. Now, companies reported loss of 21 crore as compared to the profit of 194 crore. So overall, weak set of numbers. Moving forward to Castrol, the company's reported steady set of numbers this quarter. Revenue saw an uptick of 7% at 1,354 crores. Margin also increased by 180 basis points on a one-year basis, stood at 27.8 crores, while net profit was also up about 12%. So overall, steady set of numbers for Castrol and weak numbers for Tata Chem.
Got it. Thanks a lot for that, Upasana. Well, Vivek's here to tell us about KEC, Premier Energies, as well as NLC. Vivek, plate is full. Tell us more.
Well, that's right. Quite a few results yesterday. So first up is KEC International, a soft quarter in terms of execution as far as KEC was concerned. Revenue higher by 7%, EBITDA higher by 21.6%, margins at 7%. Margin expansion on a year-on-year basis has been quite strong at 80 basis points. But this leaves the company with quite a lot of work to do, especially as far as Q4 is concerned, both in terms to meet the revenue guidance of 15% and also the margin guidance of 7.5%. Profitability was strong, higher by 34%. YTD order intake very strong. Remember, the company had given us a hint earlier in their interaction saying that they would be able to pass or exceed the order inflow guidance of 25,000 crore for FY25. They're already at 22,000 crore. Order book plus L1's position is now in excess of 41,000 crore. But expect a start in the red as far as KEC is concerned. Premier Energy, a very, very strong set of numbers. Revenues is more than double. In fact, 2.4x is the kind of revenues that you're seeing. EBITDA is up 4.2x. Margins very strong, 29.9. And profitability higher by almost 6 times on a year-on-year basis. Order book also very strong. In fact, seeing significant order book accretion as well. Order book at 4,539 megawatt. Order book value, when you're talking about the actual value, coming in at a little over 6,950 crore. Order inflows in this particular quarter was 2,239 crore. Along with that, the company has given the guidance across wafer, cell as well as module manufacturing facilities. Keep an eye out on NLC India as well. After a while, the company has delivered a robust set of numbers, improved operational performance. Profitability was also aided by strong other income. Importantly, the company saw the Ghatampur Unit 1 actually get operational this time around. Looking at the revenues higher by 40%, EBITDA doubling on a year-on-year basis, profitability up 167% on a year-on-year basis, mining revenues up 5.5%, power generation revenues came in very strong, up almost 40% on a year-on-year basis. Expect some green on NLC India as well.
Okay, all right, got it. Vivek, thanks very much. So looking good for most of them. For KEC, of course, we'll discuss more details with Mr. Kejriwal. He'll be joining us at around 9:30. Talk about that pickup in the order book and whether the margins can head higher from here on. Okay, let's go across to Vinny now. She's watching out for Gland Pharma. What's the latest, Vinny?
So Gland Pharma, they report the Q3 numbers, not an exciting one coming in. We're expecting red coming in for the screen. On the screen for Gland Pharma. What is the main impact of this? Their base business, the main business of the company, that also was a bit of a disappointment versus the analyst expectation, as well as the Sensex business, that's the CDMO business. That also didn't do that well. So overall, we're seeing a revenue decline of around 10% on a year-on-year basis. When you look at it in terms of margins for the base business, the India business, that has managed to see a good growth. So that was a positive surprise. Though the revenue growth was not exciting, the margins was something that was positive because of the improved mix is what the company highlighted. Sensex business, an important update came in that, in terms of break-even, in terms of profitability, EBITDA front, that has now been postponed by the company to Q3 FY26. They were expecting break-even in Q4 FY25, so clearly a delay on that front. And that is something that could be impacting the stock going forward. As of now, in the near term is what we're watching out for. And today also we are expecting a red because of this.
All right. Vinny, thank you very much for that. Garden Reach and DOMS are the other two companies in our focus. Back to Upasana. Upasana.
First up, let me start with Garden Reach Shipbuilders. The company has reported in-line set of numbers. Revenue saw an uptick of 38% to 12,071 crore, which was in line with the street estimates. This was mainly led by strong order book execution. Now, gross margins declined nearly about 1,080 basis points to 28%. This is likely due to the execution mix of the company. Now, EBITDA of the company surged by 55% in line with the street estimates, while EBITDA margins saw an uptick of 60 basis points to 5.9% on a YoY basis due to lower operating cost. Now, other income of the company fell by 12% and interest cost also spiked by 1.05 times, leading to a lower PAT growth than estimate. The company's PAT growth saw an uptick of nearly about 11% on a YoY basis, while the street was factoring in somewhere around 20%. Next up is DOMS. The company's margins are under pressure. EBITDA margins stood at 17.5% with a downtick of 110 basis points, and gross margins also under pressure, down about 90 basis points, stood at 43.5%. Now, company says that the increased selling and distribution costs due to consolidation of unique higher employee expenses and ESOP grants led to the dented margins of the company. Now, revenue saw a strong growth of 35% on a YoY basis, and PAT also saw a strong growth of 40% on a YoY basis.
Okay, all right. Thank you very much for that. We'll watch out for DOMS and the others, Garden Reach as well. Thank you, Upasana, for that. Let's quickly head across to Manisha now and see what the commodity cues are looking like, considering this whole tariff situation seems to have resolved itself for now. Manisha, morning.
Oh, well, yes, absolutely. U.S. putting 30-day pause on tariffs against Mexico and Canada, for one, has led to crude oil prices declining to a one-month low. OPEC and allies meeting that happened yesterday also will continue with existing oil production plan. Whether or not we see the 10% tariff on China is something that the street is looking for, and that uncertainty has led to the gold prices holding at all-time highs at around $28, $20 an ounce. We also have seen the metal prices rebound. So copper has come off its 4-week lows. Markets have seen China factory activity growth slow in January, but China resumes trade today. We have seen opportunity buying continue from China, and with the kind of weak data, 10% tariff or not, could lead to more stimulus measures coming in from China is where the metals seem to be taking support from right now.
All right. Manisha, thank you very much for that. We'll take a quick commercial break here. We're going to come back and get you that promised conversation with Pulkit Patni, India Industrials Analyst at Goldman Sachs, and we discuss the the sell-off that we've seen in the capital goods industrial side of the market and whether that is just temporary. So that's the conversation on the other side.
Streamline the process of transfer pricing and to provide an alternative to yearly examination, I propose to introduce a scheme for determining arm's length price of international transaction for a block period of 3 years. This will be in line with global best practices. With a view to reduce litigation and provide certainty in international taxation, the scope of safe harbor rules is being expanded. A number of senior and very senior citizens have very old national savings schemes accounts. As interest is no longer payable on such accounts, I propose to exempt withdrawals made from NSS by individuals on or after 29th August 2024. I am also proposing to allow similar treatment to NPS Vatsalya accounts as is available to normal NPS accounts subject to overall limits. The middle class provides strength for India's growth. This government, under the leadership of Prime Minister Modi, has always believed in the admirable energy and ability of the middle class in nation building. In recognition of their contribution, we have periodically reduced their tax burden. Right after 2014, the nil tax slab was raised to 2.5 lakhs of rupees, which was further raised to 5 lakh rupees in 2019 and to 7 lakh rupees in 2023. This is reflective of our government's trust on the middle class taxpayers. I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Welcome back. Well, as promised, let's focus on the sector of the last few days. The capital goods stocks, well, they are led by Thermax, Hitachi Energy. All of them have seen a big correction in the last couple of trading sessions. This after the union budget announcements and the revision in the capex targets that seemed to have disappointed the street and got them a little bit jittery. To talk about the capital goods space, how to approach it going ahead, well, we're joined by Pulkit Patni, the India Industrials Analyst at Goldman Sachs. Hi, Pulkit. Good morning, and thanks a lot for joining in, Pulkit. The street is clearly very, very jittery with regard to this capex number. One would argue the last few years, the capex expenditure has been much higher than the 10% growth that they're talking about right now. What is your initial take on it?
Good morning, and thank you for having me. No, it's a fair point. I think market expectations were running ahead of what the government could deliver. For the last few years, while capex growth was significantly higher, I think one has to appreciate it came in with significant higher revenue numbers also for the government. And our base case estimate was that it will start aligning with nominal GDP, which is exactly what we've seen come out this year. I think it's also fair to expect that this is going to be the trajectory going forward in terms of what the government can spend on capex. I think what the market is missing out right now is that at least on a sequential basis, especially the way the December number on capex came out, you're likely to see some very strong months in terms of government capex number, i.e. it will also reflect an order influx of some of these companies. So while the correction has been quite stark, a lot of that is reflecting the excesses that got built in some of these valuations, and you are seeing that correct. But in certain cases, it could actually provide some opportunity in the near term because we expect that the near-term numbers in terms of quarterly order inflows may actually be pretty good, at least for the next couple of quarters.
Yeah, Pulkit, morning. That's a great point, actually. Yes, and in the whole buzz of the budget kind of got missed. That let's not forget that the FY25 numbers still have to meet the RE, right? So they still have to spend to finish up the business for this year. So great point. Now, my question is that it's very clear that, this is no longer about defense expenditure going up by this much, so you buy defense stocks, or railway expenditure going up by this much, so you buy railway stocks. That became a bit of a no-brainer trade, over the last 12 months or so. What is the new nuanced approach that you will take to capex, industrials, and capital goods stocks? Because they are spending in different ways and means, right? There is this consumption boost that's come in, so people will spend more on, I don't know, they'll travel more, or, you'll need more hotels or whatever it might be. So how else do you play? And those hotels still need cement and steel to be made, right? Then there's some talk about nuclear, etc. So what is the new way of playing capex?
No, absolutely. I think the approach has to be a lot more calibrated based on sectors where there's going to be more spending. So, for example, we think cables and wires is one sector which plays into the capex theme, but has its own fundamental growth drivers. One is the real estate cycle, where whatever has been launched gets into construction phase. You've got a reasonably strong power cycle, and I don't think that cycle is going to be a short one. So you should expect announcement both on generation and transmission to be more long dated, as well as the intensity of cable that is getting used in infrastructure is actually a lot higher. So we think one of the ways you could play the capex theme is through the cables and wire sector. Similarly, as you rightly highlighted, I think durables is one sector where there's been quite a lot of softness. With this push that has come in terms of income tax benefit, we think that's another sector of a low base which could actually go on to benefit in the medium term when it comes to the demand cycle. And then there are certain small themes, for example, pipes, where again, you had a weak demand. But if you look at the allocation that has happened to Jal Jeevan Mission on what was actually spent in FY25, that number could also see pretty significant growth. So absolutely, there are parts where there is a reason to be finding optimistic numbers as well.
On the pipe space, how do you play it? If you could name a few companies that have exposure to the ductile pipes business or the smaller pipes, or how do you play this theme?
Yeah, we're talking about the PVC pipe space, PVC, UPVC, which go into the construction phase. We'll typically stay away from talking about specific names. But these are the construction-linked plastic pipe companies.
Pulkit, hi. Morning. Prashant here. So just 2 points. One is, we had Rahul Chadda, formerly of Mirai, and now Shikara, telling us in the morning that an opportunity will appear in the industrials capex-related plays, maybe March, April. And he said, not my words, his words, hopefully 15-20% lower. Now, very difficult to time these things, but if you want to take a shot at that. And number two, if you can talk to us a little bit about valuations here. Because, now, I mean, just using this as an example, take CG Power, right? Was trading at 80, 90 times. It's come off sharply. It's now at about 50, 55 times. I'm talking about 1 year forward P multiples. And I think similar would be the case with many others which have corrected. Now, is that fine? It's all relative in markets, but it's still high, right? I mean, but what's the right P multiple here, in your opinion, for the space as such, not for a stock? Go on.
Sure. No, absolutely. I think when we say about excesses, we refer to valuations that were expecting very strong growth in these companies for a sustainable long period. Now, I think as these valuations correct, they will eventually align with what kind of growth these companies can deliver, because I don't think the path of growth in the capex cycle has really deviated. I think it's, as I highlighted, it's just realigned itself to a nominal GDP growth number. And if you were to pencil in those kind of growth numbers and order inflow of these companies, then possibly at some stage with some correction, you're absolutely right that valuations will start aligning because the growth path for these companies continue. So while again, I would not want to time it, and it's always very difficult how markets react to these things, but it is basically, it will get to a stage where some of these themes start looking interesting. I think the other thing that you also have to factor in is that there are themes within themes, right? While we speak about defense, we also have to appreciate that even if the overall allocation to defense has not gone up, the indigenization theme in defense is something that is going to be there. So you're going to see domestic companies who will continue to gain market share. And that's why there are industrial companies where it's going to be more about market share gain from their global peers rather than the absolute capex growth number that the market is so aligned to at this stage.
Okay. So just to press on that point further, Pulkit, if we talk about sane valuations, you described a lot of different segments, right? You described pipe companies, cables and wires, and maybe in some parts defense as well. So which of the capital goods or industrial segments are now reaching sane valuation zone or close to sane, let's say?
I mean, there's still some time before valuations align to what you would call as long-term median multiples. In most cases, they're still significantly above one standard deviation. But as I said, the themes like defense, like power, where we have visibility that the next 3 to 4 years of order inflow growth should be good, is where I think market will start catching on to the fastest. Valuations still have further room to correct if you were to look at on a long-term basis.
All right. Got that. Valuations have more room to correct on a long-term basis. They have to align themselves with capex growth, which is now in line with the nominal GDP growth, which is about 10% or so, as Pulkit is pointing out. Thank you very much, Pulkit. Appreciate you joining in, and good conversation, good perspective there. We'll take a quick commercial break here. We come back. Amnish Agarwal of Prabhudas Lilladher will be with us for some more fundamental stock conversation. We'll react to some of the news flow from last night in terms of numbers and otherwise. Stay tuned. Coming up.
So, detail the indirect tax reforms and changes in direct taxes in Part B. Financial sector reforms. The FDI limit for the insurance sector will be raised from 74 to 100%. This enhanced limit will be available for those companies which invest the entire premium in India. The current guardrails and conditionalities associated with foreign investment will be reviewed and simplified. The services of India Post Payment Bank will be deepened and expanded in rural areas. NABFID will set up a partial credit enhancement facility for corporate bonds for infrastructure. Public sector banks will develop Grameen Credit Score Framework to serve the credit needs of SHG members and people in rural areas. A forum for regulatory coordination and development of pension products will be set up. To implement the earlier announcement on simplifying the KYC processes, the revamped central KYC registry will be rolled out in 2025. We will also implement a streamlined system for periodic updating. Speaker, I present the budget for 25-26. This budget continues our government's efforts to A. Accelerate growth, B. Secure inclusive development, C. Invigorate private sector investments, D. Uplift household sentiments, and E. Enhance spending power of India's rising middle class. Together, we embark on a journey to unlock our nation's tremendous potential for greater prosperity and global positioning under the leadership.
Okay, welcome back. Let's just look at the GIFT Nifty, which will come up on your screen. I think we've got triple-digit gains now. So a clean 100-point higher start is what you have at about 23,540. So there'll be some numbers coming through. Adani Ports numbers. The last guidance number was, on the way up. The stock went the other way, and this is the January cargo volume update, which is coming through about 13% higher. Surabhi.
Okay, all right. So that's As far as Adani Ports is concerned, let's welcome in Amnish Agarwal, Head of Research at Prabhudas Leeladhar, joining in. Amnish, hi, great to have you with us on the show. So let's actually extend the conversation that we were just having on industrials with the analyst at Goldman Sachs, Amnish. Stocks have corrected 7 to 10%, 2 days, sharp reactions coming through in the market. The question is, how do you expect this trade to play out as a lot of investors, institutional family offices, as they maybe tweak portfolios to make them a little more consumption focused? What do you anticipate as this rotation happens over the next few weeks?
Okay, hi. So, Sylvie, there are two factors. First of all, there's a general perception that there has not been commensurate increase in the capex spending by the government. But if you include the allocation which they have made for states, which is in the form of a 50-year interest-free loan, actually the overall allocation is up by 16-17%, which on a base which has seen a 31% CAGR is not a small increase. That is one. Secondly, when you look at, say, on the capex side, there are two parts to it. One is the private sector, and the second is your government capex. And if the consumption demand in the economy is weak, usually the capex from the private sector, it will not be to the extent it was expected. And so rightly, I think as we stand today, the government has given certain incentive in the form of taxation for the middle class, which should boost the consumption going forward. Now, if you look at, say, last 2-3 years in particular, the consumption stocks, barring a few, you can say, purely stock-specific calls, they have been more or less languishing. And there has been a massive rally as far as this year entire capital goods infra space is concerned. So I think now there will be more attention which will be going towards some of these consumption stocks. But when we are looking at some of the consumption stocks, then we need to be very, very careful as to how much could be the jump in the growth for many of these companies. Because in many of the staple companies in particular, it will result in better growth. But how much of the surprise can come? Because, for example, including us, most of the people are factoring in fair bit of uptick to happen in the consumption demand and the estimates in FY26 and 27. Now, whatever happens on top of it in terms of, I would say, increase will be something which will be determining the trend in the medium term. However, if you look at the trend in the consumption, I think many of the consumption stocks in the listed space today, they might not be representing the reality on the ground. And to that extent, I believe that looking at the way the Indian consumer has evolved over the past, say, particularly 5 to 10 years, we would be more confident that there will be increase in the demand coming from the discretionary segment. Now, that might include QSR, that will include jewelry, that will include, say, entire tourism and travel space, even durables. So I think the pockets to play consumption would be very, very different. So that is one. And secondly, one will have to, I would say, wait and watch, even in that space where there is room in terms of valuations. Now, coming to your capital goods, you see the earnings growth or the visibility that has not diminished. Although the kind of margin expansion we were witnessing in many of the companies, so that might not materialize. So is there room for a sustained 15%, 17% growth in earnings for many of these companies? The answer is yes. There was froth in the valuations of many of these stocks, I think, which have got corrected to quite a good extent. So from here on, I think many of these stocks, they will start looking interesting, because in the market always it is very difficult to catch both the bottom as well as the peak. So I would say that one should wait and watch for some time, because there is too much of volatility centered around geopolitical factors, FI selling and all that. But having said that, I think many of these stocks will eventually or are close to the level where one can start nibbling onto them.
Okay, all right. While we're on the subject of capex and this whole debate around whether the government is spending less or is it just spending differently, speaking at the CNBC-TV18 budget verdict program, we of course had Union Defence Secretary Rajesh Kumar Singh, and he told Shireen that India is on track to sign some of the largest contracts, the largest number of contracts, and he also says that the government needs to ensure that contracts triple compared to last year.
We are on pace right now to sign the largest number of contracts ever in our history. Okay. The largest last year was another high of 1,80,000 8,000 crores. This year we've already hit 1,15,000, and my intent is to double last year's number before the end of this financial year, and the result in terms of expenditure will follow thereafter.
So doubling by the end of this financial year, sir?
Yes, I intend to cross 2 lakh crores and maybe even more. And we intend to ensure that order books are full across the board in the defense industry so that everybody has visibility, everybody from the OEMs down to the component manufacturers, that their order books are full for the next 4 to 5 years and everybody is on the same page when it comes to fulfilling our capability gaps.
Okay, and speaking, of course, at that same program, the budget verdict, speaking on the RBI's new liquidity coverage ratio rules, which kick in from the 1st of April, Financial Services Secretary M. Nagaraju says that the government does not want money locked up. He also says that the government has conveyed its view to the Reserve Bank of India and is yet to hear back.
Not going to second guess the RBI, but RBI has issued the draft, and we have conveyed our views on that. Now they have not issued the final draft, the regulations. We want to more. We don't want to lock up a lot of capital into this kind of ideal situation. So we have expressed our views based on the feedback we received from the industry. Okay. Now the RBI has not issued. So let us put a full stop there.
So lots of hot topics there debated and discussed at our budget verdict show. Let's talk about, banks, Amnish. I mean, taking a cue from that, because that's the next big regulatory step, right? Getting these, new guidelines in place come April. As of now, how are you looking at lenders and, what kind of stocks are you comfortable buying?
Banking is one segment where the valuations are not showing any sort of a froth. If you look at all the leading private sector banks today, their valuations may be at least 25 to 30% cheaper than what they used to be, say, a couple of years back. Now, with the consumption demand expected to pick up, and the overall, it will actually improve. First of all, the overall credit growth can move up. If there is some reduction in your repo rate, which we are expecting to happen from RBI, I think banking as a sector should do reasonably well from here over the period of, say, 9 to 12 months. Because there is, first of all, no problem with the valuations. The only issue with some of them has been for example, the credit growth has been slackening from the last 3-4 months. That is one. And the second is on the side of your unsecured lending. So I think unsecured lending also maybe in a quarter or so, I think the worst will be behind that. And I think one should be constructively looking at the banking stocks from here on, particularly the frontline ones like, for example, your ICICI is there, HDFC, Kotak. I think all these banks are looking quite good to us.
Okay, all right. Amnish, thanks a lot for joining in and giving us your view on all these stocks. Looking forward to having a chat with you soon. For the time being, we slip into a short break. You come back, we'll get you the pre-open rates and some technical trades as well. Madesh and Sudarshan are waiting for us on the other side.
Prime Minister Shri Narendra Modi. As we complete the first quarter of the 21st century, continuing geopolitical headwinds suggest lower global economic growth over the medium term. However, our aspiration for a Vikasit Bharat inspires us, and the transformative work we have done during our government's first 2 terms guides us to march forward resolutely. Our economy is the fastest growing among all major economies. Our development track record for the past 10 years and structural reforms have drawn global attention. Confidence in India's capability and potential has only grown in this period. We see the next 5 years as a unique opportunity to realize Sabka Vikas, stimulating balanced growth of all regions. The great Telugu poet and playwright Gurujada Apparao had said, Deshamante matti kadoy, Deshamante manushuloy, meaning a country is not just its soil, a country is its people. In line with this, for us, Vikasit Bharat encompasses zero poverty, 100% quality good school education, access to high quality, affordable and comprehensive health care, 100% skilled labor with meaningful employment, 70% women in economic activities, and farmers making our country the food basket of the world. In this budget, the proposed development measures span 10 broad areas, focusing on Garib, Youth, Annadata, and Nari, spurring agricultural growth and productivity, building rural prosperity and resilience, taking everyone together on an inclusive growth path, boosting manufacturing and furthering Make in India, supporting MSMEs, enabling employment-led development, investing in people, economy, and innovation, securing energy supplies.
Got to the close yesterday, and today we're likely to start off well in the green. If we gap up by 80-90 points, what would the trade be?
Yeah, good morning. Well, today is a much better day. Yesterday we saw a decline, and it was almost 400 points of giving away from Saturday's highs. But the good news is that the levels that we saw yesterday were significantly higher than the lows made at 22,800. Given today's mood and given today's environment that we will open higher and hopefully remain there, the Nifty made a higher low yesterday. It is possible now to say that maybe the final low of this correction has been made. Of course, that's word is maybe, but in that case, we are now looking at a resumption of the original bull market, and we should really be looking at only long positions starting today. So I would suggest any minor dip in the Nifty is a buying opportunity for the day and also for positional traders.
Okay, got that. Gentlemen, good morning. Thanks very much. Mitesh, what about you? How would you trade things?
Good morning, Prashant. Yesterday I was highlighting the fact that if we can recover and close about 23,350 again, that'll be positive. And I was wondering, we actually did that, and I was wondering what could be the reason. Maybe there was some possibility of this tariff issue being rolled back. I think this gap up would possibly see the Nifty once again try and head towards the levels of 23,500. That's the highest closing we got, which was on Friday. And then there is some modified moving averages 23,650. So I'm looking at both these targets, first 23,500 and then 23,650. And beyond 23,650, then I turn extremely positive. That will be a good reversal on the medium to long term chart. So for the timing, let's stay positive with targets of 23,500 or 23,650.
Okay, all right. Mitesh, tell us your stock picks then.
Yeah. On the stock side, Nigel, good morning. I have some financial names on the buying side. AU Bank is a buy with a stop at 599 for targets of 630. IndusInd Bank is a buy with a stop at 994 for targets of 1,000.
Oopsie.
I think we lost the line. Yeah, back. Sorry. Go on, Mitesh. We lost you there.
Should I repeat the stock again?
Yeah, IndusInd.
Okay. So IndusInd Bank is a buy with a stop at 994 for targets of 1,050. And Chola Finance is a buy with a stop below 1,320 for targets of 1,380. And one sell call, that's IOC. Keep a stop at 124, look for targets of 114.
Okay, just a reminder, we have the IndusInd management joining us at about 9:40 this morning. So keep an eye out on that one. Sudarshan, what are your calls?
Well, I have, again, an all-buy list because the market's mood may be turning, as I explained. Voltas is a buy with a stop under 1375. Aditya Birla Fashion ABFRL is a buy with a stop under 275. Divi's Lab is a buying opportunity. 5,800 is your stop loss. And Alchem is a buy with a stop at 49.50. I do not think we should be looking at any bearish views today. Let the market find out its levels, but it should be on the positive side.
Okay, Mitesh, out of these, chemical stocks have started to perform from the lows. So yesterday, for example, there was UPL which did well, SRF which did well, PI Industries which came up. Anything from that pack which would interest you?
A lot of it actually, Prashant, disclaimer, I have SRF in my long-term portfolio. Now, if you look at the chart of SRF, I'll just take a minute over here. Starting from March of 2022, so we are now about nearly three years into it. The stock never had a monthly closing above 2,650. And similarly on the downside, 2,150 was the base. And this month, which was January, last month, we got a closing of 2,790. That suggests that the 3-year-old consolidation has come to a halt and the price is now getting into an uptrend again. I have a minimum target of 3,150 here, but I suspect this is a 4,000 rupee kind of a stock pattern because after 3 years of consolidation, we'll expect at least 3 to 4 or 5 quarters of move happening over here. So extremely bullish, extremely positive. And as I mentioned earlier, I have the stock in my portfolio, so there's vested interest. UPL also, I have some futures trading positions. The long-term charts have become extremely positive. So there is a pivot at 645, 650 zones. I eventually expect the stock to head towards 740, 750 levels, which is the earlier highs, and then 745, 750 is the first pivot, and then 770 is the earlier highs. So extremely positive in UPL as well. And you can add a Naveen Fluorine to that. That's a stock which I don't own, but I like a lot. That's a stock, which possibly is showing signs of reversal on the long-term charts. So 4,600 is the first target, and then 4,750.
Okay, all right, Mitesh, got that. Thanks very much for the trading calls. By the way, pre-opens here, and absolutely in line with what the implied open was telling us. The Nifty is up almost 100 odd points. Tata Motors, Hero Moto, ONGC, Adani Ports, these are some of the names on the upside. But some of the result reactions that Vivek was talking about, they've really hit the mark. Premier Energies would be one such stock, about 7% higher. Their margins have moved from 17% all the way to 30%. It's been that kind of a quarter for them. Stupendous top-line growth. That's, of course, Adani Ports also reacting to the updates that came in earlier. And even the others, KC International, will talk to the management as we go forward. NLC, so some of the stocks that Vivek analyzed for us this morning, all of them are up and about. Should get them on the screen now. This is the Adani Ports. KC International, LNC, and Premier Energies is looking at a big pop this morning. Nigel?
Well, I'm going to talk about JSPL. In yesterday's trading session, you actually had the stock that ended at the high point of the day. Now, 2 brokerage notes have come off overnight, and both of them have cut their target price, but they maintain a positive stance on the stock. So, Macquarie, they have come out with the note. They have an outperform rating. The target price, they have skimmed down to around 980 from around 1,170 earlier. They're noting, yes, the capex guidance is a little bit of a negative surprise, but they're saying that it's now factored into the stock price. They also go on to make this point that steel EBITDA per ton, they believe it's bottomed out, and they expect margins to improve in the coming quarters. So that's why Macquarie is positive on the stock. DAM Capital, they have come out with the note. They have a buy rating. They have skimmed the target price down as well to around 1,210 rupees from around 1,300 rupees. They're giving it a lower multiple at around 7 times because now they're factoring in the higher debt. They're also taking into account the expansion that's coming on stream, but the multiple has been skimmed down to around 7 times. They say that the risk reward is favorable as of now. And they highlight 2 big factors for them. One is with regard to the cost-saving measures that they're focusing, the high volume growth that they're looking at, and the low leverage as well. So this is what makes them positive. They're expecting a far better show in FY26 on the back of higher steel prices. The current prices in China, they're saying, is not sustainable, and they're expecting some supply discipline going ahead as well. So the stock is opening up mildly in the green. Keep in mind, yesterday it ended at the high point of the day.
All right, Nigel, thanks very much for that. JSPL was up sharply yesterday, a rebound yesterday after being lower. This morning is starting about a third of a percent higher as well. LIC Housing is what we want to sort of focus on once again. Abhishek is here with that. Abhishek, over to you.
Well, Prashant, Citi has written on LIC Housing Finance. They have a buy recommendation, target price of 851 per share. They say that the disbursements were down sequentially by 6% and flat YOY, as Hyderabad and Bangalore, which constitutes about 25 to 30% of disbursements, had faced adverse events. So with respect to Hyderabad, the issue is resolved in December, which is a key positive for other real estate players as well as housing finance companies like Canfin Homes, etc. While Bangalore's issue of Khata registration which is being updated over there, that may get resolved in this quarter or Q4 of FY25. So they are building in an AUM growth of 8%, 10% and 12% for FY25, 26 and 27. Management expects resolution of big ticket or high ticket accounts in coming quarters, especially in Q4. They expect a couple of accounts to get resolved. So management is confident of modest credit cost going ahead in the coming quarters. So the big highlight over here is the issue in Hyderabad has been resolved and Bangalore's issue will be resolved in Q4. Back to you.
Abhishek, thank you very much for that. Sanjay Mukim is with us, Head of India Equities Research at JP Morgan. He's the market master of the day. Sanjay, good morning. Great to have you with us here on the program. Thank you for your time. So let's just get a broad market view out of the way. And then we'll get into individual sectors and themes and whether style has changed in the market, the factors changed, etc. So what's the view, Sanjay? Has enough damage happened here in India this year to force one to look at opportunities, or it's not yet done? Sort of all told, everything which is going on. Go on.
Well, I think, Prashant, if your question is on the global macro outlook, then I don't think we're out of the uncertainty zone yet. There's a lot of changes, as you could see overnight, with tariffs coming and going in a very short period of time. And this is likely to keep volatility elevated in global equities, not just as what is happening in India. And I don't think from a tactical point of view, we are out of that uncertainty zone yet. And this is likely to continue, I would expect, for the next few months at the bare minimum. Valuations, at least on the index level, you've started to get a bit of a discount to global equities, principally the S&P, and that should become a point in favor of markets. But I think that you're not going to get a trend up until some of the macro issues are sorted.
Has a low been made, Sanjay, in your opinion, or that's also too hard to call?
Very difficult to call, to be honest, Prashant, right? Because if you do get some deterioration, let's say tariff wars deteriorate, and that forces currency moves, right? So EM currencies and the INR continue to depreciate, then the markets would still come under pressure.
So you're going to be whipped here and there based on all this global macro and news flow. But at least from a local perspective, things, I mean, there is a slowdown, etc. And what's the view emerging there at the JP Morgan team? We've had a slowdown for the last few quarters now. And now the government is starting to act on the fisc and maybe on this Friday with rate cuts as well.
On the margin, there have been measures that should help growth improve. There is, of course, the government effort to drive urban consumption or discretionary consumption. There is also the RBI's effort in injecting liquidity, and hopefully we start to get rate cuts as well. Or more organically, Prashant, you should see lower income demand improve as the benefits of the great monsoon we had last year filter through. You should see all the handouts we're seeing at states also drive demand as well. And technically, as you enter the June and September quarters thereafter, the comps and the base effects of earnings become much easier as well. So from a reported perspective, whether it is from an earnings point of view or from aggregate GDP growth, there should be some relief. Things should start to bottom out and start to look better.
Okay. Sanjay, hi. Morning, Surabhi here. So, and right at this time, we get this interesting mix in the budget where suddenly the chatter and the debate is all around consumption now and how to play this 1 lakh crore rupee of boost that's coming in, right? What are your thoughts? And, does it warrant a bigger change in the portfolios? If people have not already started taking profits in CapEx, is this the time to do it? And then how to play this whole consumer bonanza?
Well, Surabhi, good to be on. I would say, look, the government's made a clear choice, right? In an environment where resources are constrained, where revenue momentum is slowing down, they have clearly decided that this is the time to start to support flagging consumer outlook, right? The impact of this will obviously filter through to consumers over time because the tax cuts don't accrue on day one. They will be earned by taxpayers monthly basis for the next year or so, right? How it affects sentiment, how it shows up in company earnings, we need to be a little bit patient to my mind. In our portfolio allocations, we have upgraded consumer discretionary X the four-wheelers, and we've downgraded the CapEx bit to neutral. The hope for CapEx, Surabhi, without getting too despondent, is that you start to see better activity in non-government sectors, whether that is corporate CapEx or, let's say, even real estate. And even the measures they've taken on changing tax slabs should on the margin help real estate demand improve as well. So I don't think we should completely give up on some of the industrial names. Entry valuations were very challenging to begin with, and that's a separate debate to be had. But underlying investment to GDP should not look that bad.
That's an interesting point, and this is the view that we've been getting from several experts actually since Saturday onwards, that it's not just curtains on capex. It's a question of different segments and looking beyond the obvious. That's what you'll have to do. So take that point completely on board. Now, on valuations on consumer, and I heard you say only consumer discretionary and not staples, but even in discretionary, what would you describe as reasonable valuation? Not fair, but at least reasonable. Because a lot of the discretionary stocks, jewelry makers, for instance, they already had a great run in 2024.
Well, unfortunately, in this case, beauty is in the eye of the beholder, so to be, right? What is reasonable is very difficult to define. If you were to say that, look, can I find a stock which is at its pre-COVID average multiples, right? So whatever the multiple was 2015 to 2019, you still struggle, right? It's difficult to find that sort of reasonable value definition. But if you say, look, can I find something at 3-year valuation averages? Yes, you can. Many of these things still don't fit a DCF. And a lot of the investment argument you make in India, and not just for this sector, but for many others, is on a relative to market basis. You say, hey, look, this is the best of what is available to me as a fund manager in India, because the earnings momentum of the business cycle is likely to improve or likely to surprise people positively here on. But on absolute valuation, still difficult to define, relative value case.
In terms of the segment, pizza guys, or will it be auto? Will it be real estate? Obviously, you clearly like, you mentioned. I'm just trying to think about when you say discretionary consumption, what part of it are you most bullish on? I'm just trying to understand that.
So within the autos, we prefer the two-wheelers. And again, we are not permitted to name stocks on TV, but we still prefer two-wheelers over four-wheelers. And the bias is to say, look, the extra money in people's hands leads to lower discretionary consumption and not necessarily staples demand.
Okay, low-end discretionary demand and two-wheelers but not four-wheelers. Sanjay, we'll just come to you. Let me just address the market open. So the Nifty is starting at about 23,500 and that's about 135 points higher. The Nifty Bank is up about 0.6%. That's about 300 points higher, 49,536. We've got advanced decline, which is 4:1 in favor of advances, but things are still opening up, and we should maybe look at this 10 minutes from here. IT index is starting about 1.5 higher. So actually IT and consumer, the Nifty Consumer Index and the Nifty IT Index were the two sectors which were doing well yesterday. And of course, IT sold off on Saturday for some reason. That's coming back up. The Sensex is up 0.5% as well. The consumption index is starting 0.25%, 0.5% higher. And we should have the Nifty heat map maybe come up on your screens as well in just a bit, just to give you a sense of how we are starting. But broadly, as expected, and as the GIFT Nifty indicated earlier on, this is a good start.
Well, Trump has postponed those tariffs on Mexico as well as Canada, and we had mentioned this earlier today. Samvardhana Motherson could be the one that pulls back all that it lost off yesterday, and that's precisely what's happened. So that's up close on 7%. Giving it company on the upside is Sona BLW as well, so that's another stock that's done well. Castrol reported its numbers, declared a dividend of around 9.50 rupees as well. The street likes that. Remember, it's corrected a fair bit from the recent peak, but for starters, it's up closer around 7.5%. You have NLC India as well. The numbers look pretty okay, so that stock was up closer around 5%. Another one that's opened up with solid gains is Premier Energies, and the volumes are very, very high on that one. Remember, Premier Varie, they had seen a fair correction from the recent peak, and now post the numbers, you've seen both those two stocks that have done well. Kamath Hotels, a smaller stock, we don't talk about it very often, but that one's up close to around 15% as we speak. So big volumes actually for initial trade on that particular name. Thomas Cook is the one that's pulled back close to around 8% to kickstart trade. Welspun Enterprises as well as down close to around 8%. Volumes not very, very high on that one though. And another one, Vishnu Prakash, our Ungli, that's down close to around 13%. Only highlighting it because, have very, very large volumes out there. And that one is down. Paradeep's Phosphates as well, down close to around 5.5%.
Yeah, absolutely. I mean, Samvardhana, the gains now 7.5%. Actually, it's not the only one. A lot of the auto ancillary plays are doing well this morning. Look at Bharat Forge, 4.5 to 5% higher. There's Sona BLW that's also doing good. Not just Castrol, Gulf Oil Lubricants is also up 4.5%. So interesting auto plays. But to come back to the large cap screen, Nifty's up 140 points, and the biggest gainers include some of the global-facing names like a Hindalco, up about 3.5%. ONGC's higher, about 3%. Then there is M&M, BEL, Infosys, Adani Ports. It's a pretty widespread move across stocks and sectors. L&T is recovering this morning. So that whole beat down the industrials trade seems to have paused. The exception would be something like a Power Grid because numbers are bad. I mean, and there the market's not going to be charitable. Power Grid is down about 3%. And consumers are cooling off this morning. Staples, what you've heard the last couple of days is that not too many people are gung-ho on staples with this income tax cut. So Britannia, Lever, even Asian Paints for that matter, ITC, these are all stocks that are correcting. Rest of the market doing fairly okay for now.
So 140 points on the Nifty is what we have, and 23,500 on the index holding at this point in time. On the downside, Tata Chemicals is coming off about 4%. Power Grid, I think Vivek was talking about this, it's down about 3%. These are the top volume-led losers, top 5 volume-led losers. Swiggy had a 5% up move yesterday. It's coming off about 1.5%. I think we did mention Paradeep, which is down 6.
Yes.
And 110, 111. Wellspun Enterprises is down 5.5%, so 570. Asian Paints is down about 1%. And AB Capital is down about 1. Gland, Ajanta Pharma are some of the others which are down between 2, 3, 4%. So that's the overall picture as far as market open is concerned. The big volume-led gainers, Premier Energy, 5%, Divi's 5%, Motherson 8%. So this is, this is what's stacking up right on the top of the gainer board. And Vedanta is up about 4% as well. So it got smashed down, beaten down quite badly. So back to about 440. And Castrol is the other one I think we highlighted, which is up about 9% or so.
All right, well, let's get back to the conversation we're having with Sanjay Mukim. Sanjay, we've got the market open rates and we've discussed a fair bit about the budget. What about the next skew for the Indian markets, the RBI? What are your expectations out there? The street seems to be almost factoring in that we're definitely going to get a rate cut. Are you in that camp? The RBI, to be fair, in the recent past, they've done some OMOs, try to put some liquidity into the system as well. Do you think the rate cut is coming?
Yes, we do. And given everything that you highlighted, what the RBI has done, allowing liquidity injections and, of course, permitting the rupee also to move, we think the rate cut, at least in the near term, is a decently high probability. And that should start to transmit to the economy as well. Liquidity constraints are gone, so rate cuts should help, to be honest.
Rate cuts should help, absolutely. So we spoke about consumption, right, Sanjay, and what you like and what you would avoid. But what about infrastructure? Is this, you said you've upgraded consumption, ex-four-wheelers. But will that be at the expense of what we broadly define and what falls under capex/industrial kind of names?
On the margin, it is, Prashant, because if you upgrade something, you've got to fund it from somewhere, to be honest. And we do expect, and even before the budget came out, we did expect capex momentum from a government perspective to start to taper off, right? Because it was evident that the momentum we'd seen post-COVID, where government had a whole ton of revenue buoyancy, and you'd seen deficits expand, those periods were over. So we were anyway expecting this to taper off. It's come a little bit harsher than we had imagined. So yes, the upgrade to consumer discretionary comes at the cost of our capex-oriented allocations.
And in this, like you did with consumption, right? There are so many areas, subsectors, etc. Is there any space that you're more comfortable with, just in terms of growth? Forget valuations for a bit, but where you think growth should not be a problem?
Well, at the moment, it's very unclear, Prashant, because growth seems to be a problem across many sectors. It's just the outlook seems to have improved a bit with what the government has done. And like I was arguing earlier, even organically, we expect the lower income households, which is commonly termed as the rural basket, to start to do well in a few quarters. Right. So the anticipation of growth is better, I would say, in a more discretionary sort of cohort, rather than the standard staples. And I think you're starting to see that in the market as well.
Sanjay, on a sort of slightly different note, this relentless FBI selling, I don't know what's the latest. First it was, okay, fine, it'll get better. And it'll peak out when Trump takes office, and that didn't happen, and they were supposed to change when the year turns. That also hasn't happened. Daily basis, still 3,000, 4,000 crores every day. And now, I don't know, with the portfolio churn happening, like you yourself are saying, right, that you've gone a little, you've cut weights on industrials and you've gone over on, consumer. So now as portfolios are churned, will we see more of it? FPI selling?
I don't know if you'll see more selling, Surabhi. I think the interest in EM assets will remain muted as long as global uncertainty remains high. So the VIX index remains high. And, US bond yields are very elevated. So you're seeing, let's say, in liquid funds, you make very handsome returns in dollar terms, right? So why would a global asset allocator look to add EM equity risk in anticipation of 8 or 9%, 10% local currency growth, right? Because that's the kind of medium-term expectation everybody has. So it's only when the opportunity cost reduces and when you see lower rates in the US or better certainty of growth in EM assets, will you see a reversal of these outflows? I don't know if they will stop selling, but inflow might take time.
So, okay, you're saying inflow might take time. Got that. Just a quick word, and this is sort of feedback from your global teams as well, Sanjay. What's the broad view which is forming with regards to the US now? The number of rate cuts, etc., is moderated to, I think markets are expecting 2 now through the course of the year. But at the same time, there are many other things happening, right? Big cuts in government spending being proposed. What that could mean? Will that initially have a bit of a deflationary impact if they were successful in doing it? Is the view pretty sanguine with regards to US itself?
There's 2 answers to that, Prashant. Current data looks very strong, right? So the activity in the US, whether it is consumption, whether it is the broad-based growth indicators are strong, and inflation remains contained at the moment. But everything that is proposed is potentially inflationary and negative for growth, right? So you're seeing this combination of policy uncertainty, which is therefore forcing the Fed to hold back from rate cuts. Because while the data is strong, whatever is proposed could lead to inflation, not deflation in the US. And it may be prudent, therefore, for the monetary authorities to wait until that plays out. And this uncertainty, I think, is therefore transmitting to the rest of the world. Because if the Fed is not cutting and rates in the US remain this high, what is the attraction of EM assets?
All right, talking about EM, Sanjay, what about the India versus China debate? We were the only game in town till, I think, around 6 to 8 months or so ago. Then suddenly they started pushing in some stimulus. People started talking about valuations that appear. There's a bit of a reallocation that's taking place. Your view on India versus China at current reckoning? Indian markets have underperformed in the recent past. China has done pretty okay, though the economy continues to struggle. Your take?
Well, I think we've gone from that India versus China to an India and China, at least from a market point of view. So if you look at how India behaved pre the US elections, the Indian index used to track S&P beautifully. In dollar terms, the gap between India and S&P used to be close to zero, almost, on a daily basis, right? But as this US exceptionalism has crept in, and it is US first and everybody else will figure out for themselves effectively, we've started to behave more like an EM economy, at least the markets have, right? And therefore, it's not a X versus Y anymore. It's a US versus EM trade. And the Indian equity markets now behaving as they used to previously, behaving more like an EM asset.
Okay, all right. That's a fair point there.
But, before we thank Sanjay, I just want to go back to the point from where you started, which is, where is this market going, Sanjay? Recap that for us.
I'll tell you, I'll give you a different one. It's going up, then it's going down, then it's going up, then it's going down.
It's going down again. But Sanjay, complete that point. You said that you don't see, it's hard to say if there's a bottom in place already. Just expand on that. I mean, what are we in for the next 6 to 8 months, given the global volatility, given all the Trump talk? What's your base case?
Well, we don't expect the market to go up in a hurry, Surabhi, and we hope that it won't fall further, especially on the broader market, the mid caps, because that could lead to potential liquidity issues. There are downside risks in the event of macro uncertainty, right? So you can never rule out downside, but I think you'll have to be patient through at least the first half of the year. Wait for some of this policy uncertainties to sort out and the growth momentum in India to improve, in which case you get back to looking for upsides.
Okay, so it is a bit like what Prashant is saying, right? Some down, some up, I guess. Great speaking with you this morning, Sanjay. Thanks so much for joining in. Have a great day. We look forward to the next chat as well. Well, it's all about capex and whether the government is changing its focus or not changing its focus. You heard a lot of stock market experts and analysts tell you that maybe it's not taking its foot off the pedal entirely. It's just that, as investors, we have to look at a different set of stocks altogether to play the story. Let's talk about this and more with the management of KC International. We also have to discuss the third quarter numbers. Revenue growth for the company came in slightly tepid, but the order book growth has been very solid. Margins have also improved, and the stock is showing a little bit of green this morning. We have with us Mr. Vimal Kejriwal, Managing Director and CEO of the company, joining in. Mr. Kejriwal, first, let's start with the good. And congratulations on your order book growth, because you're firing away. I think 22,000 crores already. You guided for an intake of 25,000 crores. If we put together the L1 and the actual order book, you're at 41,000 crores. So those numbers are really lofty. Let me start right there. Whether the buoyancy is so much that you want to revise your guidance, order inflow guidance upwards. And that ties in with what we're hearing around the budget, right? This whole debate around capex, whether there will be a slowdown in the new fiscal.
Good morning, Survi, and thanks for having me. As far as the order book guidance is concerned, I don't think we'll be able to revise it now, because we're at 22, L1 is 4,000. So I don't see more orders converging. We may get a few more L1s, which will probably converge in the next quarter. So this quarter, I think we are happy with the numbers, what we are talking about. And I think obviously with whatever has been talked about in the budget for the capex at 11 lakh crores, and then a straight piece, and then some other piece on top of it, the PSUs. Actual numbers being talked about are 19 lakhs, not 11 lakhs. But let's see what happens.
Okay.
Sorry, go on.
So you're not looking to revise the guidance upwards. I got that. But from our earlier conversation, I remember, you said that your transmission order book is growing very, very fast. I mean, that business is really doing very well. But you had mentioned that the slowdown in public capex meant that the civil contracts that are happening, the civil work, that's going a little slow. So how should we sort of, read the next couple of months? And again, your interpretation of whether the business that you're in, whether you will still be the beneficiary of more public capex.
So, Surbi, you are absolutely right. If you look at our order intake of 22,000 crore, 70% of that is in the transmission piece. And even in the L1 of 4,000, I think virtually everything is transmission. So clearly what is going to happen is that our transmission revenues, which were almost at around 50-51 in Q3, I think were around 59%. 9 months is around 57. So we clearly see that the transmission piece will keep on going up, the way the tenders are coming and the way the announcements are happening. As far as civil is concerned, I think clearly we saw a slowdown. In fact, our order book has degrown slightly, I'll say, because we were about 10,000. I think we are now at 9,700 or so. So I think that's the way it's going to continue for some time.
Okay, all right. Hi, Mr. Kejriwal. And it seems, at least for the time being, the street has looked through the operational numbers and they're impressed with the order book. But let's talk about the operational numbers, because for the first 9 months, you've grown by around 9%. You were guiding to grow by close to around 15% for the year. So by the end of this year, what kind of a growth rate will you wind up at? Point number one. Point number two is margins have improved, but they're still short of that 7.5% that you were talking about earlier. So on an average, what will margins look like? Revenue growth for the year, margin outlook, and maybe you could give us the margin outlook for even for FY26. Please go ahead.
Yeah, so if you look at our revenue growth, we definitely wanted to have a higher growth than what we have now. Okay, and I think if you look at what we talked about, there are a couple of reasons why this is happening. One is the significant slowdown in the water projects, which was done deliberately because payments were not happening. Now, hopefully, we have seen an allocation of some 67,000 crores for Jan Jeevan Mission. And if it starts translating quickly into cash flows, then a part of the revenues which we have deferred in the last quarter should come in this quarter. Secondly, I think the labor shortage still continues. We still have a shortage of close to 4,000 people across our civil and T&D business. And thirdly, what we have been talking about, the supply chain, especially on the transformers and conductors, is easing out significantly, but it is still less. So I think those is what contributed to a lower growth than what we had projected. See, as far as the annual is concerned, 15%, I don't know whether honestly we'll be able to do 15, but I don't think we'll be very far off. It may be 14, it may be 15, it may be 13.75. I don't think we are still given up on that number. We have a large Q4 lined up, and there's a huge amount of
So 12 to 14% is doable, Mr. Kejriwal? 12 to 14%, that means
100%. No doubt about it.
Okay, 12 to 14%. And margins?
Margins, I am not sure right now with what with the quality of revenue it will happen, but I don't think we'll be very far off. Whether it will be 7.4 or 3 or 0, it will definitely between 7 to 7.5. I don't see that it will go down below. We are already at 7% for this quarter, and with the revenue projections or growth of 12 to 14 for the year, we'll definitely have a very large Q4, which will pull up the entire margin scenario.
Okay, so between 7 and 7.5, I mean, your guidance has been at 7.5 for a while. Mr. Kejriwal, good morning, sir. Thank you for joining us. Prashant here. Just talk about railways as a segment, right? I mean, if you look at what the budget is promising in terms of allocation, it is absolutely flat. So is that that part? And you've told us earlier that the focus was on Vande Bharat. Now they maybe hopefully things will come back and they'll focus on rail infra building and not just on train sets. But this number that we've seen what do you make of it and any implications therein?
So Prashant, if you look at the number of 2,52,000 crores, I think the addressable market for that out of that is, I think, around roughly 1,11,000 crores, which is the new lines and doubling and the Kavach, etc. So I think we are generally happy with that number because our order intake for this year has hardly been 2,000 crores. So for me, it doesn't matter too much whether it is 1,10,000 or 1,30,000. We have honestly gone slow on the railway, conventional railway side, where you need to work on tracks. What we are focusing on is on the Kavach side, on the power supply, and also on the metro side, where we are doing a few projects on ballast less. So I don't think the railway is right now,
Yeah. Okay. So there's room for you to grow even within that 1 lakh, 11,000 crore number that you said, right? The addressable market.
Absolutely.
On Kavach, I think late last year you got, there were 7-8 tenders which were issued. Has anything, what's it looking like this year?
So last year, I think last quarter, we announced some orders of around 650 or some crores on Kavach. There are a few tenders which have already come out and which should be decided any day. And if you heard what the railway minister said, in 3 years, he wants everything to have all their locos and all the things to have Kavach. So we do expect that there will be more orders coming out. I think the orders for Kavach are couched under the CLW order, the allocation, etc. It's not coming out directly, but we do expect it will come out.
Mr. Kejriwal, I'm curious. You started by telling us that there's the top line impact has happened because you've consciously chosen to go slow on water project because of some payment issues. Can you expand on this? I don't know. I mean, are these government projects or what? Because otherwise we keep getting very big headlines. Even in this budget, this Jal Jeevan Mission, etc. There's a big increase in allocation. So what is the issue in water and what potential do you see here?
So Surabhi, we are doing only Jal Jeevan Mission projects. Okay. And they are government projects. So if you look at the numbers, if I'm not wrong, last year also they had an allocation of around 67,000 crores. But I think what happened was, for whatever reason, its spend was only 26,000 crores. So now they have restored it back to 67, which is the last year's budget. So if they actually spend that 67, then I think we all will get money. It's not me alone. All the competitors, everyone has the same scenario.
So, but this is interesting, sir, and this is, I'm glad you're bringing this up. So you're saying there's a delay in receivables, government receivables, in these Jal Jeevan orders.
So Jal Jeevan, what is happening is, Surabhi, the Jal Jeevan is a mix of central government and state government funding. It's a question of who puts the bill first. Okay, the state sometimes waits for the center waits for the state. I don't know, but I think, let me put it this way. In January itself, we got almost 150 crores of payment on Jal Jeevan. Okay, so I think somewhere we are seeing some opening happening, and I'm hopeful that with the allocation in this budget and the FM actually talking about Jal Jeevan Mission, saying that we want water in all the houses like power. If that actually happens, I think this business can really grow.
All right. Mr. Kejriwal, just one quick query. By the end of the year, you're saying 12 to 14%, 100% you're going to do that. I'm taking a median, around 13% growth. So for you to do 13% growth for the year, your quarter 4 will have to be blockbuster. Back of an envelope calculation suggests that quarter 4 of this year in comparison to quarter 4 of last year should deliver a growth of around 22%, which will be around 7,500 crores. Doable?
Absolutely. That's a number we have in mind.
Got it. All right. So quarter 4 will be blockbuster. We'll brace ourselves for the 22%. That was just the back of an envelope calculation that I did. Final question from my end. The cable subsidiary, any plans of listing it? That's the buzz.
I think it's too early for that. The idea of transferring to a subsidiary was that we thought we'll have much more focused growth as a product company rather than a part of a EPC. So, and we are spending around 200 crores right now on the capex. So I think whatever we want to do will probably be due at least 1 year down the line or maybe 1.5 years down the line. Not today, no.
Okay, and just leave us with the mix, the revenue mix. Like you said, transmission is firing on all cylinders, and that's 57% of your business. What is water at right now with this Jal Jeevan? And how much, what is the contribution of railways? We're just trying to understand the mix and what you're projecting. Just very quickly.
So railway for this year would be around 10% of our revenue. Water, I don't have the exact figure, but it would be around 6-7%, around 1,200 crores or so would be our revenue from water.
Okay. Got that, and I think that's a pretty... By the way, I just wanted to ask one thing on Kavach, and I think you've given us this number, I forget. What's the total over 3 years, if everything has to be, Kavach has to be installed, as the minister has pointed out, what's the opportunity size and how many players are there now eligible to participate in these tenders?
So as far as I know, there were 3 approved players. Then there are 2 or 3 more who are in the pipeline, who has, I think, got some in-principle approval. Some of them, I think, have got trial orders also. So the expectation is that in the next quarter, maybe by this quarter, they will also get, actually they'll get formal approval once they install in one of the projects, once they complete the project. So I think in the next 2 or 3 months, you'll have probably another 2 or 3 more players from the equipment side. EPC side, there are not many. So we are one of the very few players who actually work with them on the EPC front.
Okay, all right. So 5-6 players in total over the next couple of months, right? Including what you have now. Mr. Kejriwal, it's always a pleasure, sir. Thank you very much for patiently answering all our questions, and good luck to you and your team. Thank you. We'll take a quick commercial break here. We'll come back with the management of IndusInd Bank. That's a big bank earning that we want to focus on. Lots of interest here. Back in just a bit.
Supporting exports and nurturing innovation. For this journey of development, our 4 powerful engines are agriculture, MSME, investments, and exports. The fuel, our reforms, our guiding spirit, inclusivity, and the destination, Vikasit Bharat. This budget aims to initiate transformative reforms across 6 domains. During the first 5 years, these will augment our growth potential and global competitiveness.
Welcome back. IndusInd Bank posted lower profit from year-ago levels due to a fall in margins and partly because of higher provisioning it had to make for the higher slippages in the MFI segment, unsecured loan portfolios. Margins have also fallen about 15 basis points from second quarter to below 4%. Slippages, of course, are essentially what the market would like some guidance on. What's the situation like for the rest of the year? And of course, we'll talk about whether there are any implications from the budget which has come through. Well, we have the Managing Director and CEO of IndusInd Bank, Mr. Sumant Katpalia, joining us now to take some questions. Sir, good morning. Great to have you with us here. Thank you for your time. Prashant this side. You know, so the focus for IndusInd really is because everything kind of depends on what happens in the MFI portfolio for you. So that's what I want to start with, sir. Could you give us some sense of whether we've seen the worst of stress in MFI? You know, because this is a segment where stress is high, but profitability is also high, right? I mean, yields are typically, 10 percentage points higher as compared to other segments. So it's a trade-off. Could you give us some context, some sense about how this segment is likely to behave over the next many quarters?
So Prashant, first of all, I must say that the bank has a very well diversified book, and microfinance is only 8 to 10% of our book. So we were at 15%, but slowly and steadily we've been diversifying our book. And one of the businesses which we've started is the merchant acquiring business in deep rural. So I continue to believe that while microfinance is a very important component of our book, but it's only 8 to 10% of our book. Having said that, I think what we've seen in the month of December and January, the forward flows have stabilized, and which means that our collection efficiency in the 0+ bucket has been 99.5%, which gives me the comfort that we've seen the worst of microfinance. But I think it's too early to comment on it. I would like to see another 1 or 2 quarters before we can say that there is stability in the microfinance business as of now. Of course, October and November were bad quarters, and you've seen.
Right. Sorry, you did say we've seen the worst of microfinance. So that is we can go with the headline, Mr. Katpalia, right? But have you seen the worst?
No, I don't think we can go. I said.
No, he didn't say that.
I've said that we need to see more stability, and
Okay.
I think we will see 1 or 2 quarters more of the flows coming in, and what the forward flows are, and then we can say, yes, there is a stability which has come in. So in these businesses, you have to see 1 or 2 quarters.
Yeah.
Okay,
Will you grow the MFI book, Mr.? Are you confident to grow that book, or will you be in a wait and watch mode for the next 2 quarters?
See, we've done about 9,000 crores of disbursements last quarter. I continue to believe that there are customers which are exclusive to you, or exclusive plus one for you, which is about 75% of our book. I continue to believe that you should do that. Then there are 83% centers which are greater than 2 years, which we believe that you should continue to service them. So I think there are specific pockets where we believe we have created loyalty or we have center loyalty, and we should continue to service these clients. It's not a bad business. It's just that there were certain areas where there was over leveraging, and we stopped the growth in this business 4 quarters ago, having seen the over leveraging happening.
Okay. Suman, good morning. I'm Lata, and time permitting, will come back to the MFI issue, which you have answered, of course, adequately. You know, I went through your investor presentation. I believe MFI bad loans are only 30% of the slippages. So there have been some trouble even with the unsecured loan portfolio. Can you tell us whether that is likely to improve? Have you seen the worst over there?
So you're absolutely right. So there are 2 areas where I think are areas. One is a corporate loan slippage out of the restructured asset, which did, and I think that's a 250 crore. And in the retail segment, other retail segment, we had flows coming from credit cards specifically, about 300 crores of flow which came in. And I think those flows which came in, what we are seeing, the 0+ again in the credit card has stabilized now at an elevated level. So it's not that they have gone down like in microfinance, but at an elevated level, the stability is happening. I think the stability of credit card book will take about 2 to 3 quarters more before we can say that we are out of the wood on the credit card business. Personal loans continues to do well.
Okay, so overall, you will have a good idea when you look at the incremental flow in the SMA1 and SMA2 book. Just for the viewers, SMA is when people don't pay within 30 days, and SMA2 is when people don't pay within 60 days. How is that flow looking? We are almost 1.5 months into the new quarter. Is it falling?
So in the microfinance, you've seen it, I told you 99.5%. So 0+ collection efficiency is 99.5, which was 98.3. So there is a flow. In credit card, I think the flows have really improved. PL and LAP are always doing well. So there is no issue.
So in terms of slippage ratio, can we expect that this is the high and the annualized slippage ratio will be less than 2.4? I mean, is there a reasonable hope?
I'll tell you, Lata, you must look at October and November were bad months. So the 30 plus flow is still 4% in the microfinance. They will flow. The resolution rates are poor in the 30 plus bucket. That's why you have to see the forward flows. And October, November, and those customers will flow in this quarter. And I think that's the end of what you should see in microfinance. I've always said that the microfinance businesses do correct themselves in 3 to 4 quarters. And I think this is the third or the fourth quarter which we are seeing of microfinance. And next year, hopefully microfinance should have a very good run.
Yeah, actually, we got that Sadhan and the MFIN gentlemen over previous shows, and they have pushed back the guardrails. So that was what worried me. If they are pushing back the guardrails, then people are still giving more than 3 loans per person. They were supposed to, tell their members, you should not give more than 3 loans. But now they have pushed it back from Jan 1st. So I'm worrying whether, you will have one more quarter of pain.
I think as long as your forward flows are stabilizing and the composition of a book which we've disclosed in the investor presentation looks the way it looks, I think you should be fine.
Okay. All right, Mr. Katpalia. So what you're saying is that maybe another 2 quarters to a certain, if MFI is completely bottomed out, another 2-3 quarters to, for the credit card business to also, all that stress to also even out. So now let's talk about both business growth and margins. I guess because the slight more cautious go-slow approach on the unsecured side of the business, obviously, yields to an extent get impacted. And now we're expecting the rate cut cycle to begin as well. Your net interest margin slipped just below the 4% mark in the third quarter. What is the guidance, sir, given the market environment?
I think it's be very unfair to give a guidance as of now. I would like to restrain from giving it. I think what we have to watch out is how the growth comes back in the microfinance business. And I think this quarter will define whether disbursements come back and the collection efficiency is sustained. Second, I think the vehicle finance business should have their best quarter. We did 13,300 crores of disbursement last quarter. I think if we can do better than that and continue to grow the vehicle finance, which also the industry went through a very tough first 2 quarters, I think we should start seeing the retail growth coming back as a consequence. And our margins comes as a consequence of a portfolio mix. Today, the portfolio mix is tending more towards corporate. I think we should be 56-44. Today, we are 53-54, 53-54 consumer. Yeah. And I think the mix change will define our margins.
But sir, just to follow up on that point, right now you're saying it's more geared towards corporate and you'd like to see that, tilt go back towards some of the higher growing segments like retail. That's one part of it, the mix and whom you're lending to. The other part is the rate environment itself. As the rate cuts start coming in and the expectation is we'll get the first on Friday, how will that play out on the margin profile?
No, I think the pointed questions, Sumant, is how many of your loans are external benchmarked?
So that's exactly. So EBLR has been coming down. So if you look at the corporate yield or the floating rate book has already been coming down. Yeah. So it's already at the EBLR rates are already coming down on a regular basis. Unless and until your repo linked, which is only 7%, EBR linked is about 33%. So I think those loans have already started coming down. So please,
you have only 7%
repricing already started.
Okay, so only 7% is repo linked. That's important. If there is a repo cut, only 7% is impacted. Yeah. That's right. Okay, now let me come to the budget. Okay, let me come to the budget. There is more money in the pockets of people earning 12 lakh and maybe even people up to 25 lakh. It makes a big difference. If you have 10,000 rupees more in your hand, do you see that as a reason why you will have more retail loans, more personal loans, and perhaps even safer ones?
So I think if you look at this budget, I think there has been a balanced approach towards 3 key aspects. One is consumption, the other is capex, and the third is the fiscal deficit. If you look at the tax threshold, which has been changed from 7 lakh to 12 lakh, and also the guardrails or the slabs which have been changed, I fully agree that it should boost consumption and the disposable income of the middle class will improve considerably. What is more important is, I think the launch of a comprehensive program like Rural Prosperity and Resilience, aiming to address the women entrepreneurs. And I think this augurs well for the marginal farmers, women entrepreneurs, and specifically for microfinance segment. So I think we are going to see a consumption coming up. We're going to see rural India continuously doing well. I think it's a very pragmatic, forward-looking budget, and I think they've addressed a lot of gaps which existed in rural India as well as the middle class, and the sentiment, household sentiment, which was one of the objectives of the budget, has been met as a consequence of that.
So what would you say will be your loan growth because of these positives? Will it go up to mid-teens? And what will be the retail?
Give me another quarter. Give me another quarter. So I think, give me another quarter. I've always said our guidance has been 56 to 58% retail. That is where IndusInd Bank will make 4 to 4.2% NIM. That is exactly the split which the bank wants.
Okay, 4 to 4.2% NIM in...
if you get to 56 to 58% retail. And when do you think you reach there? I mean, you take 2 quarters? Is that what you're saying?
I've just told you, give me another quarter before I give a guidance on that.
Okay, got that. Mr. Katpalia, just a quick word on, I mean, your term, sir, ends in March of this year, right? And could you tell us what's the RBI approval is awaited? Could you give us a sense of what that is looking like?
You can't give ever a sense of what it's looking like. You have to wait for the approval. So that's where we are. We are in the process of awaiting for the approval, and that's where it stands right now.
Okay. No capital raising plans.
We don't need it. We assess it every 6 months. We are very well capitalized. Our risk weights have gone down. So I think we are very well capitalized as of now.
If perchance there is LCR or ECL guidelines, have you all assessed the impact on the balance sheet or on the return ratios?
Yes.
If you can elaborate.
So I think we've seen that. So if we've done it basis the older guidelines, they are going to come up with the new guidelines. But if I take the older guidelines, it's about 2,800 crores. We already hold provisions of 1,400 crores on our books, and I think we are fine.
Okay. Thank you very much.
To it.
Yeah. Go ahead.
All right.
Okay, Suman, thank you very much indeed for your time and all the very best. As per your promise, we will call you after that 1 quarter when you think that you will be in a much better position to tell us about margins and about loan growth. All the very best.
Okay.
Over to you.
All right, so that's the word coming in from IndusInd Bank, Mr. Katpalia there. Let's move on and talk about the chemical space, because a couple of chemical companies have actually reported a good quarter after a long time. The next management on our radar is Vinati Organics. The company saw a steady performance in the third quarter. Revenue registered a double-digit growth. There was sharp margin expansion as well. To talk about this and the trends ahead, we have Vinati Saraf Mutreja, MD at Vinati Organics. Great to have you, Vinati, with us. So, that's exactly what everybody is trying to figure out, that whether it gets better from here. But before I talk about the numbers, something else caught my eye. Apparently, you are setting up a subsidiary in the US. And perhaps you'll be looking at some manufacturing there as well. So, I don't know, I mean, is that a step forward to de-risk yourself just in case there's some tariff action here and there? Let's start there by understanding this expansion in the US that seems to be in the works.
Yeah, well, the subsidiary in the US is we export a lot of product to the US, and some of our customers expect us to have a warehouse, as well as sometimes we need to restructure the product, do some reprocessing. So it's purely for that. I'm not really sure if it's anything to do with the tariffs, given transfer pricing and all of that, but it's just purely to service our US customers better.
Fair enough. So it's not like you're thinking of manufacturing in the US. It's a warehousing facility to better serve your customers.
And maybe some reprocessing as well, yes.
Some reprocessing. Now, these days, whenever an Indian company is sort of thinking of better on-ground, onshore presence in the US, you've got to ask whether that's forward-thinking to mitigate any tariff issues, right? Never know what's coming next. But anyway, let's talk about the business now, because the business has been looking really good. We'll get the numbers up on the screen. 17% top-line growth for the quarter gone by, and 19% if you're looking at the 9 months, and there's margin expansion as well. So let's walk us through this. I mean, is it volumes, is it better pricing, or is it both?
No, it is purely volumes. Last year was a subdued year, and most of our products have seen growth this year, especially ATBS, butyl phenols, as well as antioxidants. And I expect this momentum to continue going forward.
Okay. On ATBS, you're also commissioning a new line, right? I mean, there's new capacity that's coming on stream by, I think, March or April. So what are the volume projections then as that starts going on stream?
Yeah, absolutely. That increases my volume capacity by about 50%. And that is expected to come on stream by Q1 of FY26. It's a 20,000 ton capacity. We do expect to reach full capacity utilization over 3 years.
Okay. What can you sort of tell us about pricing? Like you said, right now the improvement is entirely volume-led. But is there any scope, I mean, any sort of sign of some movement on pricing as well? What are customers saying?
No, see, we function, as you would see, at an EBITDA margin of 26%, 27%. And I think that's a healthy, sustainable margin for a manufacturing company. So to expect a price increase or a margin improvement, I think we are more focused on adding new products, expanding our capacity, and going for a volume growth while making our margins.
So your margin, speaking of margins, the margin bumped up to, at the EBITDA level, bumped up to 27% in this quarter. So is that a one-off, or is this a new level where you're hoping to run? At which you're hoping to run?
No, I think in the range of 7%, again, depends on, there was some raw material fluctuation. There could be some RMC price that comes down with the quarterly lag, which affects, the next quarter. So this range is quite sustainable for the next 3 years.
Okay. Got that. I think we're having some issue with the video, which is kind of conked off for now. This new ATBS plant that has been sort of commissioned, Vinity, morning, Prashant here. What will the contribution be from ATBS in 26?
Yeah, ATBS contributes about 40% of our revenue now. And next year, we expect to maintain that percentage because a lot of the volume growth will also come from antioxidants and butyl phenols, as well as BOPL, our subsidiary, Needle Organics.
Okay, fair enough. And you've already spoken about margins on revenue CAGR. You've said 20% CAGR is what we should expect. No reason to change it?
No, absolutely no, because just given the momentum in our products and the new products coming on stream, I think we maintain a 20% revenue growth.
Vinity, just a quick, word on China. The industry had been complaining about, heightened competitive intensity. I don't know how that's playing out. Is there still a lot of import coming in from China? And are you expecting anything in terms of, policy measures like the steel guys are asking for safeguard duty?
Well, in PTBP, the butyl phenols as well as antioxidants, we do see a lot of cheap product coming into the country from China. And we have approached the government for some trade remedy, but let's see how it pans out. I think there's still time for them to make a decision.
All right, Vinity, we'll leave it there. Thank you very much for joining us. Good luck to you, your team, as you execute, and we look forward to our next chat. Thank you. Well, I think there's a new listing as well, which is at the bottom of the screen. Dr. Agarwal's is listing at 406. Issue price was 402, so it's a flattish kind of start for Dr. Agarwal's Health, which is the listing of the day. I mean, towards the end of in December, November, I mean, it was absolute crazy madness, right? I mean, a few listings. I remember one day when we had about 5 listings It's kind of slowed down. The pace has slowed down as the market's cooled off a little bit. But the pipeline is strong on the primary market side as well. Let's talk about some more stocks on the move. Divi's, of course, has been surging. Vinny's been tracking this name. Let's revisit this. Vinny, over to you.
So in terms of, yes, Divi's Lab, what we're seeing is right now in terms of con-call highlight that came in yesterday, they highlighted in terms of the Kakinada project, where they've done a lot of capex work coming in, which was an important update on that front. So they have fully commissioned one of the part and unit 3, that is a phase 1 for this project. The next 6 months, we'll see more units and more phases coming out from this project. So an important update there. Custom synthesis business of the company, that's seen as a good growth. They're expecting several opportunities here, as well as generic business. Pricing has maintained a bit of a stability. Do not forget that's been facing a lot of pricing pressure, so stability is something that's a positive front. Now Citi on the back of this is maintaining a buy rating. It's a target price of 6,850 rupees, top pick for the company. The company is also highlighting in terms of how upbeat they are in terms of GLP-1 opportunities, multiple products and custom synthesis, which has led to increase in terms of inquiries that the company has been getting, customers that are coming in for the company, and obviously they are expecting, conservatively targeting a double-digit growth. Jefferies on the back of this is also maintaining a hold rating, target price of 6,280 rupees per share, and they too are positive in terms of the growth opportunity that Divi's has on the GLP-1 side. So that is why we're seeing Divi's app has been buzzing in trade. Good set of numbers plus good commentary coming in from the company.
Got it. Divi's up 5%. Actually, it's not just Divi's. The whole market is buzzing. We haven't checked the market in a while. What started as a 100-point up move has now become a 200-point up move. It's looking really good for the Nifty. And the mid-cap index is even better. 1.5% up on the mid-cap index, 1.5% up on the bank Nifty. So it's pretty solid. And the interesting aspect is that the consumer stocks in the Nifty, they are completely getting sold out today. Trent is down 5%. Look at this. Britannia, Lever, Nestle, ITC, all of these stocks are lower. And some of the others, including the CapEx names, they're doing better again. L&T, BEL, these are stocks on the upside. However, one CapEx-related name that hasn't hit the mark in the third quarter is Power Grid. Let's go across to Vivek. Vivek, you were earlier telling us that it's a miss on all counts, is it?
Absolutely right. Operationally, it's a miss on all accounts. But also one thing to keep in mind as far as Power Grid is concerned, especially regulated equities like NTPC and Power Grid, is that markets generally tend to look beyond the numbers themselves. But of course, our numbers key to track, and it's a miss across what the street was anticipating. Just to go through the numbers once again, revenue is lower by almost 2.5% on a year-on-year basis. EBITDA is down over 6.5% on a year-on-year basis. Again, a miss versus our poll. EBITDA margins too have contracted on a year-on-year basis. Almost a 350 basis points contraction is what Power Grid has seen, and profitability is down 4%. Now, segmental revenues, when you're looking at it, transmission revenues have actually dipped. So 6,545 crore versus a little over 7,050 crore last time around. Consultancy revenues quite strong off a much lower base, and telecom revenues are something that we need to keep track of going in the future is 126 crore versus 100 crore. A key to watch as far as the Q2 or the Q3 call is concerned. Number one, any tweaks to the capex and the capitalization guidance that the company has given. Remember, at the end of Q2, very robust commentary was given as far as the capex guidance was concerned. FY25 capex guidance, they increased to over 20,000 crore from 18,000 crore, and which was actually a revision upwards from the earlier envisaged 15,000 crore. So two upward guidances as far as capex is concerned. FY26 capex guidance was increased to be in the range of 25 to 30,000 crore from 25,000 crore earlier. Also keen to watch out for smart meter projects. Company has a robust order book, very strong success rate, whether that can continue. But it's a miss on numbers, which is why the street is selling off Power Grid today.
All right, Vivek, thanks very much for that. Mitesh is back with us with what's he making of the market. Mitesh, Nifty is about 60-80 points away from Saturday's high. Bank Nifty, I think at the day's high, almost got there and then has pulled back a little bit. How are you looking at it, and what would you advise?
So early in the morning also I suggested, maintaining a long bias, and the Bank Nifty now is at close to 50,000, which was my second target. 49,750 being the first, that was clear. So 50,000, I think you might see some mild profit from the supply emerging, but overall pattern is quite bullish. So I think once we get a move above 50,070 to be precise, I think this index could possibly see further upside to about 50,700, 800 zones. So I'm positive, but I think traders can now take some profits and maybe trail their stop losses, but maintain a long bias. I don't think this is a market which is suggesting me to go short. Just that, you've had a rally for last 4 or 5 days, you're at a supply pivot. You might see some volatility in profit booking. That's about it.
And Nifty as well. I mean, similar kind of view.
Yeah, I think very similar, Prashant. The breakout for the Nifty or the next target for the Nifty is 23,600, 630 zones. I think once we clear that, I'm looking at 24,000 plus levels. So the only thing is that, again, if you're getting close to 23,600, take some profits, wait for intraday volatility, buy in that decline, or buy about 23,630.
Just a couple of names. I mean, it's all chopping around because prices have been up and down, and in most cases, I mean, and I'm talking about stocks which are up 4-5%, right? Look at Hitachi, BHEL, Inox Wind, Sona Comstar, REC. I mean, it's not clear. It's not really clear. It's basically just chopping around, and today it's a bit of an up day. Taj GVK, though, is a more forceful move from the lows recently. Any thoughts here? Taj GVK, Mitesh, 436?
So I think, Prashant, one, this is a stock which has been in a very strong outperformance mode, and even when the stock corrected from 445 odd levels to as low as 340, the medium-term trend was still pointing on the upside. The averages, the indicators on the weekly charts were still positive. I think we should see some supply on this 445 or 450 marks, the previous high, but once it clears that, expect another 100 points on the upside. So my target for the near to midterm would be about 550 here.
Okay, it's not very far from the highs that it made, and the high on Taj GVK, I think, was made in January. It was about 460 or so from where it sold off. Mitesh, thank you very much. Good speaking with you, and we'll come back for more later. We take a break. We are back with Manisha, who will be focusing on what's happening in commodities. Stay tuned. Coming up.
Are taxation, power sector, urban development, mining, financial sector, and regulatory reforms.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters, as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC.
Welcome back. Well, the equity markets are doing very, very well. Let's figure out what's happening in the commodity universe now that the tariff threat has been, put to rest, at least for now. We have Manisha in the studios. Manisha, what do you have your eye on?
Well, I'm looking at gold prices, Surbi, because we've seen all-time highs coming into this one yet again. Yesterday, we saw an all-time high of $2,830 an ounce. We're trading at $28.20 at this point in time, but still very, very close to those all-time highs. Well, if you look at the prices itself, we've seen prices gain up by 28% in the previous year and 7.5% already in 2025. You mentioned about tariffs, and that really seems to be an issue right now. And even with that easing a bit, even as the US has put a 30-day pause on tariffs against Mexico and Canada, Canada, we haven't seen the gold prices come off too sharply. That is because the US trade policy is still uncertain. US is yet to discuss trade policy with China. So there's a lot of uncertainty, unpredictability into the markets. This is what the gold prices really seem to be making use of. The other thing really is about the US dollar index, where we saw almost 110 yesterday. That coming off also has been supportive. You also have markets expecting that US will deliver 2 rate cuts in this year itself. Apart from that, we also have rate cuts already coming from Bank of Canada, from Switzerland, from European Central Bank, and that has been supportive for gold. The markets do anticipate that Bank of China and India, as they meet in this week, also could go ahead and cut rates, and that is where markets are taking support from. Inflation, slowing economic growth are some of the other factors which are in favor of gold right now. The other thing clearly has been about US buying. US has been buying a lot of metals, precious metals and base metals in last 1 month as this tariff conversation started to begin. So the numbers that we have latest from COMEX tells you that a lot of this metal has been converted from futures to physical. JP Morgan very interestingly says that $3,000 an ounce is a possibility in 2025. I mean, that is something that you have had Credit Suisse and Goldman Sachs continue to reiterate as well. So the US has been importing a lot of gold ahead of these tariffs. And JP Morgan, which is the largest bullion dealer in the world, is anticipated to give a delivery of around $4 billion worth of gold as the February contract expires. So there's going to be a lot of movement, a lot of volatility that you can anticipate going forward in case of gold here.
All right. Manisha, thank you very much for that. So, yeah, I mean, gold is shining and shining brightly, has been for a while. Manisha, thank you very much for that. Well, we'll take a quick commercial break here. On the other side, it's our special segment, Citizens MPC. Lata will get chatting with experts and they'll discuss what the RBI will do on Friday, that is the 7th of February, at the MPC meeting. Lots of interest, and it's a big one this time around. Back in just a bit.
Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the
Hello and welcome to our monetary policy curtain raiser. It is baptism by fire for the new Reserve Bank governor as he goes ahead to present his maiden monetary policy. The budget was kind, yes, in terms of a lower deficit, but President Trump has created a perfect storm in the global currency markets, including for India. So exactly what should the Reserve Bank and the MPC do Can you cut when there is a global storm in terms of EM currencies? That's the question for which we need answer. And as always, the Citizens Monetary Policy Committee of CNBC-TV18 meets on the eve of the RBI MPC to deliberate on what should be the issues and how to look at them. I have with me Chairman of our committee, Dr. Pranab Sen, and members Soumyakanti Ghosh of State Bank of India, Sajid Chinoy of JP Morgan, Samiran Chakrabarti of Citi India, and Sonal Verma of Nomura. Gentlemen and Sonal, thank you very much indeed for your time. It's a very, very crucial policy, as I said. Sajid, it is the global churn that is going to worry us most. Just outline the, the announcements that have come from the US. What does it do to global inflation and our own inflation expectations? And what does it do to global growth?
Thank you, Lata. I think the global economy is getting more precarious by the day. 2024 was characterized by US exceptionalism, where US growth was very resilient, and that meant a stronger dollar and higher US rates. And both of those things put pressure on emerging market currencies, constraining their space and their ability to respond. What we're seeing now is the onset of the much feared trade war. The US has put on tariffs on Canada, Mexico, China. Those countries have begun to retaliate. So this trade war could get ugly very quickly. And the question really is, number one, this is going to depress global growth. I think the lesson from the first trade war in 2018 was very clear. It was the uncertainty of the trade war that depressed global business sentiment and global capex intentions. And it was very clear in the data in 2018 and 2019. So I think we should brace for a global environment with more growth headwinds, where exports will most likely, take a hit. The difficult question is whether the trade war is going to exacerbate or undermine US exceptionalism, because there is a scenario in which global growth gets hit, but US growth gets hit less because that country has offsets, easier fiscal policy and more deregulation. Now, that's the worst of all worlds for emerging markets, because you are living with lower global growth and therefore lower export growth. But your ability to respond to lower growth is compromised by the fact that US exceptionalism means the dollar remains elevated. Today's dollar rate is almost at 20-year highs, and US rates remain elevated. And then you're in this bind where you want to respond to a more hostile global environment in terms of weaker growth, but you're unable to do so completely.
I take your point,
that's the dilemma that these economies face.
Yeah, I take your point entirely, which brings you to the classical question, which the MPC will have to address, Samiran. Can you really respond with rate cuts and growth stimuli in a situation of, tension on the currency?
3 points here. The first point is that when there is so much of global growth uncertainty, we have to think of what we can do for our domestic growth. And from that perspective, whatever the budget is trying to do or whatever the MPC is trying to do will be very much focused on trying to get the domestic growth up. The second point is that to start with, our currency was somewhat overvalued by standard metrics of 40-country trade-weighted RER, etc. So part of the depreciation that we are seeing might actually be a good thing, and to some extent might be also giving that little bit stimulus that exchange rate depreciation gives to the overall growth outlook. So some part of the depreciation might not actually be a bad thing at all. And the third issue is that there is, at least our view is that our capital flows are more growth sensitive than interest rate sensitive. So it is somewhat unorthodox view, but if the governor, RBI, MPC, they believe that they can spur growth expectations at this juncture by a somewhat easier monetary policy in tandem with the fiscal consumption stimulus that we have seen, then it might just kickstart the capital flows into India, which are more growth sensitive, and to some extent that can stabilize the currency as well. So to me, the interest rate cut is not necessarily an antithesis to the currency story.
No, actually, you're right. Even in the last few days, we have seen inflation. We are seeing actually debt flows continuing somewhat. It's only equity that's hurt. If interest rate differential was such an issue, we should not be seeing debt flows. But, you know, your growth issue is more important. Is growth really under so much threat? Dr. Sen, that question to you actually. The budget is expected to have boosted consumption since it has cut taxes so generously. So what's your assessment of growth per se, domestically speaking? Do you think growth has a better chance now in FY26?
That's not clear, Lata, because they've given with one hand and taken away with another. And the way it's been done, I find a little disturbing, particularly for the consumption story. Yes. Because what they've done in effect is given a break to the middle class. But they have reduced the outlay on education, health, social services of various kinds, which essentially affect the lifestyle of the poorer, which is much the larger number. And we do not know whether these people will be then forced to, in a sense, rejig their consumption basket. And the net effect may well turn out to be negative.
Okay, well, yeah, that there is, of course, not much for the bottom of the pyramid if you look at it that way. But let me also get, some inflation questions out of the way. Sonal, how would you look at inflation now? Is there a possibility that with so much of, uncertainty and supply chain disruptions likely, inflation may surprise negative, or is inflation definitely headed towards 4.2 or something, which the Reserve Bank is forecasting?
For now, Lata, it looks like we are headed in the 4.5% range. I mean, if you look at India's CPI basket, bulk of it is actually non-tradable. So food services play a much bigger role. The pass-through from currency weakness, our estimate is a 5% depreciation leads to about a 30 basis point impact on headline inflation. And we are in a soft demand environment, so really the spillover to consumers will be less. There's a bigger risk that firms see pressure on their corporate profit margins. Food in particular, we've seen a positive surprise. The two items that were holding inflation up, which is vegetables and pulses, are sequentially falling. And the big run-up in edible oil prices, the pace of increase there is also slowing down. So we are seeing some positive news on food inflation. Rabi prospects look a bit uncertain, but on the whole, I would say the decline in headline inflation and core, which is very well anchored, soft demand conditions mean that headline inflation, which was at 5.2% in December, should come down to below 4.5%, in fact, in January itself, and then stay in this 4.5% range through the next 12 months. So the inflation outlook does look a lot more favorable.
Okay, so that means the Reserve Bank has more elbow room. Well, let me get a little more on growth, and then I come to the all-important steps, the liquidity steps in particular. Soumya, if you can wrap up the growth argument, how will a lower currency at 87.30 or 87.50 help growth? Again, there is the budget. Are we in a position to expect better growth in FY26 than in 25?
Yeah, thank you, Lata. I think regarding before I answer the question on growth, the point on exchange rate you mentioned, I think exchange rate movements in India, as we see that the exchange rate there has been again a significant depression in the value of the exchange rate because of the measures of President Trump. But my sense is that also a large part of the currency movement is also growth accretive in the Indian context. If you actually do an empirical analysis, you will find that apart from the dollar index movement, which determines the direction of the value of the rupee, a large part of the rupee is also determined by the factors which are positive to growth. So from that point of view, I think these current movements in exchange rate, we should understand the global idiosyncrasies. And the best thing to happen at this point of time is basically look into the growth prospects. As of now, if you ask me about the growth prospects for the next fiscal year, the numbers are actually not significantly different from what you will get in the current fiscal year, which is basically FY26. So my sense is that I think it will be better if we look into the perspective from a growth one rather than purely from an exchange rate perspective that what one may think of.
Okay. So short point, you're saying that next year's growth will be as good as this year's or as bad as. So something like 6.3, 6.4.
Yeah, it should be similar to this year's growth rate. So from that point of view, I think there could be, it is required that there could be policy interventions which could actually spark growth.
Well, the more important liquidity questions are coming just after this break. Bazaar viewers, you will get to see it only at the end of the day. For now, it's time for Chartbusters for you.
India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
There are straight rebounds on the back of bullish global cues after Donald Trump pauses tariffs on Mexico and Canada. The Nifty crosses, it's yet to cross the budget day high. The mid-caps are relatively outperforming.
Samadana Motherson and Sona BLW rebound in trade after tariffs on Canada and Mexico are delayed by a month. Mexico contributes close to 4% to Samadana's total revenues.
Castrol rallies more than 7% on the back of strong quarterly results. Earnings improved both year-on-year as well as on a sequential basis. The company also reports margins that were better than the guided range of 22 to 25%.
Defense stocks like HL and BEL get a boost on the back of Defense Secretary Mr. Kumar Singh's comments. The Secretary tells CNBC-TV18 that the defense sector plans to cross contracts worth around 2 lakh crore before the end of the fiscal.
And the new kid on the block, Dr. Agarwal, makes a subdued debut on the street, lists at a discount to its issue price of 402 rupees a share.
Hello and welcome to Chartbusters. I'm Nigel, with me is Hormuz, and as we speak, the markets are holding well in the green in today's trading session. The Nifty hovering around the 23,500 odd mark. The positive global backdrop. Yesterday we were resilient, and today we're doing quite well. So good to see you, Hormuz. We have a green-looking screen, but we've got a couple of managements, so let's get straight to that.
Matching the color on your shirt, Nigel. But yes, indeed, a couple of managements on the show. We're being joined first by the management of Alembic Pharma to discuss the road ahead for the company. It was a drag in their earnings in the third quarter on the back of muted India business and lower operating leverage as well. The profit was also down on a year-on-year basis. Pranav Amin, who is the managing director of the show, is joining us now. Pranav, good morning. Thank you so much for joining in. On the domestic formulations business first up, it was a subdued quarter, right? A 3% growth this time compared to 5.5% that you grew in the second quarter. What therapies are doing well, and so what are the others that you need to scale up a bit?
Yeah, absolutely. I think, hi, good morning. Thanks for having me there. Overall, if you see, net revenue was up 4%. Within that, the India business was up only 3%. That was still not as happy a performance as we'd like. I think the acute has been a little slower, not just for us, I think the entire market. But few bright sparks that we had in the India business. Our specialty grew about 6%, so that is a little better that we did in that. And the veterinary continues to outperform, so that was about 20%. I think we're just making some fundamental changes in terms of enabling the MRs more, focusing on execution using technology as well. So let's see, I hope the next couple of quarters we should see the rebound in the domestic market with market-beating growth.
All right. Hi, Pranav. So you admitted, right, that domestic business, the growth is a little bit subdued. You're likely to be better. It was in low single digits at 3%. What's the outlook on both the businesses? On the domestic business, what kind of growth are you looking at, say, in the quarter four, as well as for the next year on a year-on-year basis, if you could quantify it? And the US business, that was a pleasant surprise at around $62 million. I think most on the street were in that vicinity of around $56, $57 million odd. So what is the quarterly run rate likely to be from here on?
So good question. I think with the India business, as I said, we've just made some fundamental changes. We're focusing on execution. So I hope in the next couple of quarters, we get back up to market growth at least. And hopefully in a few quarters after that, beat market and grow faster than the market. So that should be there. I think the veterinary, as I said, has been outperforming the market, growing at about 20% plus. So that will continue to do well. If you come to the international business, both the international formulation businesses, be it the US generics, which grew at 10%, and the rest of the world generics, which also grew at 10%. Q4, I expect even stronger performance from both these units. I think ROW should grow at least 15 to 20% in Q4, and US also will grow in excess of 10% in Q4. Actually, the Q3 growth in US, while the revenue growth was 10%, but volume growth was far higher.
What about the API business, Pranav? Because the last time we spoke to you, you mentioned that it's under pressure. You will see some pressure over the next 1 to 2 quarters as well. Is this the quarter where you see a bottom and then you start moving higher as FY26 begins? Or do you see some more pain? And also, what's the pricing scenario currently on ground?
Okay, so good analysis. Actually, so the API business, yes, as I mentioned, a couple of quarters, we've seen it's been quite sticky and very slow, the API business. That's because of a lot of pricing pressure from China and other countries. And our API business has been traditionally a very high profit margin. But I think we've just had to recalibrate ourselves. I think this should be the last quarter of degrowth. In my opinion, it'll start growing Q4 onwards. It'll match the last year's revenue and then slowly get back to growth as we pick up more business in the next couple of quarters. As regards the pricing pressure, there is still pricing erosion in the US market. As I said, our revenue growth was 10%, but volume growth was far higher, almost 30%. So we could see there's some erosion. But however, we're managing and keeping that in check by picking up market share as well as new launches. So we launched 2 products in the last quarter, and we expect to launch about 5 products in Q4 as well.
Let's get to the profitability aspect then, Pranav. And before we do that, if you could tell us what is the industry growth for India you're factoring in? Because as you said, you'll get back to industry growth and then you look to outbeat industry growth. So what kind of numbers are you factoring in for the industry? And on margins, you've been steady, 15.5% or thereabouts. But you have told us in the past that in the next few years, you want to go to around 18%. So should we be working with 100, 150 basis points improvement, say in the next fiscal, and then following that another 100 basis points, so then you'll get to around that 18% mark?
No, absolutely right. I think what we have to do is part of the this year. Actually, we should have done better. But two things: one, as I mentioned, the API business was a little bit of a surprise. And that's been drilled down. I think it started with few big customers, and then we've seen it across the board, some pricing pressure. That should rebound, as I mentioned, Q4 onwards. The India business has been slower than market. For me, I expect market should grow about anywhere between 6 to 10%. I would say 8% or so would be fair enough for the market growth. So let's see how that goes next couple of quarters. We'll wait and see. And again, about our margins, yes, I do expect that we should get to the 18% kind of margins in the future. That'll happen because of a few things. One, as we add more scale to the US business, ROW business, these two underperforming businesses also start performing. And thirdly, we have a lot of these capabilities that we've created, which right now are a little bit of a drag. So once they start doing better, which is the injectables and the oncology facilities, you'll automatically see a bump up in the margins, net margins.
Two-part question, Pranav. You have a lot of high focus therapies, right? Be gynecology, anti-diabetic, ophthalmology. Are your subsequent launches going to be focused on these specific areas? And lastly, also, if you could share us some insights on your animal health business, what kind of growth are you penciling in for FY26 for that?
Yeah, so you're right. I think the four therapies that we're focusing on in India quite a bit is these are the relatively newer therapies for us, because as you know, historically, we've been quite strong in acute. So the newer therapies are ophthalmology, derm, gynecology, and diabetology. So yes, we will see a lot of launches in these therapies moving forward in the India business. The veterinary business has been an outlier or a great performer for us, I think, in terms of the market as well. That grew 20%, and it's not just now. I think over the last 15, 20 quarters, that's been just going gangbusters. It's we focus mainly on the livestock and the poultry, and we're doing new product launches there as well, and that's doing pretty well.
All right, Pranav, thank you so much for sparing time and joining us this morning. Wish you good luck for the road ahead and your subsequent launches as well. The management there of Alembic Pharma on the road ahead for the company. Shifting focus now to our special segment where we get you a few ideas for profit from Money Control Pro. Bharat Gianani of moneycontrol.com now joins us to talk about a stock that he is tracking very closely.
This ideas would be Indian Hotels Company Limited. The company posted record quarter 3 performance. The hotel business revenues grew 16% YOY. The domestic properties RevPAR grew 13% YOY, mainly driven by the better pricing growth. The international business of US and UK also posted improved performance with 13% YOY growth in quarter 3. The air catering business grew 18% YOY. Operating margins improved in quarter 3, mainly due to the operating leverage in the hotel business. The demand momentum continues to remain strong with higher wedding dates, spiritual tourism, as well as several concerts and events. The company is confident of delivering double-digit RevPAR growth in quarter 4. The depreciation of Indian rupee against the US dollar is also beneficial for the hotel sector and will be positive for Indian Hotels Company. The company has lined up a strong inventory addition plan and aims to add about 70% room inventory over the next 3 to 4 years. The hotel industry upcycle is expected to sustain over the next few years, which is positive for Indian Hotels Company. The new businesses of Human Food, the Ginger Hotels, as well as Ama Bungalow Stays is ramping up fast. At the current market price, stock is trading at an EV by EBITDA of 33 times FY26 projections. Investors with a long-term view can add the stock in the book. Thank you.
Some ideas for profit there from Money Control Pro. We take a short break. The Nifty has cooled off from the highs of the day, but we'll shift focus to the markets on the other side. And some flashes on your screen citing Bloomberg, where China has decided to impose a 10% tariff on some products being imported from the US. Now, these are some countermeasures that China has been levying on US. Remember that tonight is the deadline where the tariffs imposed by the US will take effect, and China is also probing Google over alleged antitrust law breaches. And some of the new developments that are coming in on this trade war or the potential trade war between US and China. We'll get you more on this on the other side, but we take a short break and we'll be joined by Samvid Gupta, who is the Joint Managing Director of Gateway Distriparks on the other side to discuss the road ahead for the company. Stay tuned.
issue that Donald Trump fears so much. We offer this question of the land. I don't know what Donald Trump has to do with South African land because he's never been here. And he must keep his America. We will keep our South Africa.
I think FI selling is not beyond a point a big negative. It is that whether India is doing well or not. And then there is some correction of excesses and stuff like that, which clearly seems to have been done. One reason has to be India related, that Indian results came out very bad.
We are hitting the limits on what the government can directly do in terms of capex. And therefore, the guidance from the government was that we will maintain capex as a percentage of GDP.
Back with us here on Chartbusters. The Nifty has cooled off significantly from the highs of the day, and that was courtesy the flashes that you can see on your screen. China deciding to levy some taxes on products imported from the US, and that includes coal, LNG, oil and agri-machinery. So coal and LNG will attract a 15% tariff, while oil and agri-machinery will be attracting a 10% tariff. And the date for that, the same, has not been specified yet. But from the data which I could gather in the last few minutes, China, for the first 10 months of 2024, China had imported around 63% higher LNG from the US compared to the same period in 2023, and they had a contract of almost 14 million tons of US LNG starting 2026. So some important data coming in there, some important developments on the global front. We'll see if the talks between Donald Trump and Xi Jinping transpire going forward as well. We'll keep an eye out on these developments going forward. For now, the markets have cooled off from the highs of the day, but corporate conversations continue. And we've been joined by the management of Gateway Distriparks to discuss the road ahead for the company. Samvid Gupta, the joint managing director of the company, is joining in. Samvid, good morning. Thank you for joining in. Could summarize the quarter gone by for us, if you could tell us, and almost a 2.5% revenue growth. You can call that a subdued quarter. Do you see things improving on ground in the current quarter so that your growth improves going into FY26?
Yeah, hi, thank you. Good morning, and thank you for having me on the show. So this quarter was more or less same like Q2. If you look at a 9-month versus 9-month, you might see a dip. That's because Q1 was one of our weakest quarters. But month on month since about June, July, we've been seeing improvement, and even January is looking better than the previous months. So we expect some uptick to come in the coming quarters now.
All right. Hi, Samvid, and good to see you after a while. Samvid, give us a couple of numbers. Earlier you were guiding for volume growth of roughly around 10% or thereabouts for the year. If things are going to get better, how much will you grow in the railway segment in Q4 for the year? What does that mean? And in EBITDA per unit, I think you're doing roughly around 9,600 rupees. Where does that number head? So volumes on railways and EBITDA per unit.
Right. So the rail volumes on Q4, the last year base was quite low. So we should see better than 10% growth, just Q4 versus Q4. But if we compare it to Q3, it'll probably be a similar trend with some marginal improvement. Now the Red Sea crisis was ongoing since January last year. There are some ceasefire talks, and we're hopeful that that shipping lines start using that route again. That should be a big boost to trade in India if that happens.
And for the year,
as
what
far
will
as
you
the-
end at in terms of volumes and EBITDA per TEU from here?
Since Q1 was low, I think our volumes will be flat year on year, but EBITDA per TEU will remain in the same range. We've increased our double stacking, so that's helped improve our margins slightly. So Faridabad got double stacked in November. Q4 will be a full quarter for Faridabad being double stacked.
Okay.
So 9,500 to 9,700 is a good range for EBITDA per TEU.
All right, Samvid, I wanted to focus on the smaller part of your business, which is the CFS business. And you all have mentioned on your call that you all could possibly look to monetize it. In the past, we as well have conversations on the channel, and we've asked you, what is the plan out there? You all have hinted at monetizing it. Give us a timeline. By when will you all monetize it? Part by part, when should we be hearing about this news? Point number one. And also, if you could tell us, I think earlier you all were saying that this unit could be valued at around 1,000 crores. Would that be a fair estimate?
So we've started the process. We're talking to people. Our preference is to sell all 5 in one go. There is some piecemeal interest, but it takes time since it's a more complex matter with customs, with some land leases. We're hopeful to give a better update in next quarter, but hopefully if there's some transaction is to take place, it'll probably be towards the end of the calendar year. And we're just right now, focusing on trying to grow up the CFS business as well. The EBITDA is looking slightly better this quarter, and there is some better pipeline also in place over there.
But is 1,000 crore value a fair estimate, Samvid?
The value, so we have to do a price discovery method. We haven't received any formal bids yet, so it's tough to give an indication. But we're looking at a higher figure than that for all assets combined.
Since you mentioned double stacking for Faridabad and all of that, what kind of a target have you set for this year and for FY26 for double stacking?
So last quarter we were at 38%. This quarter we did 40%. And historically we've gone up to 45 to 46% also. So that's the immediate target to go back there.
Okay, all right. What about the plan with regard to Snowman Logistics? I recall, that you all will gradually increasing stake from the mid 40s. Now you'll have gone past the 50% stake. You'll have done now buying stake in Snowman Logistics, and now you'll consolidate this asset?
Yeah, so it started getting consolidated from December 24th. So if you see the financials, there would be some accommodating entries for one-time gain as well as line by line of revenue, EBITDA, PAT being added now. For now, we are happy with 50%, but we'll evaluate once GDL is done with its capex and we have free cash flows, then we could possibly take a decision then.
What is the capex spend that you'll have for this particular year? If you could revise that number, FY25 as well as FY26, and how's your balance sheet looking?
Yeah, so GDL's got a capex of about 30 crores this year. Maybe there's about 5-7 crores more. For the next 2 years that we keep saying that we have 2 new terminals in the pipeline, as well as Jaipur whenever it comes in, that total, those 3 terminals would be about 300 crores put together. Other than that, it's about 30 crores capex yearly just for new equipment, new capacity at our existing locations. As far as our balance sheet, our net debt is quite comfortable. So we're below 200 crores for the first time in about 5-7 years. And it's improving month on month. We get about free operating cash flow of 20 crores. And now that our Snowman purchase is done for the time being, this will probably go down faster.
What is your current capacity? And as you're saying, you could add 3 terminals. So what does the capacity go to? Current capacity, utilization levels, and where's the capacity headed post this expansion of 300 crores?
So we have a huge capacity because we buy land way ahead of its time. So current utilization, say on the rail side, we're doing about 350,000 TEUs. Our installed capacity would be closer to 600,000 TEUs. But our land bank is capable of handling about 1.2, 1.3 million TEUs. These 3 terminals, when we finalize them, it could add possibly another 200 to 300,000 TEUs in the initial phase. And again, we're going to buy land bank bigger than our current requirement because it's very hard to acquire land. Once you do it, it's very tough to get adjacent land because the prices go really high.
All right, Samvid. Yes, please finish your point. Please finish your point.
Yeah, utilization, whenever it crosses 70-80%, then we start developing more container yard space, more warehousing space, and bring it down to 50-60%, so that we have ample room for growth whenever the volumes kick in good seasons.
All right, Samved, thank you so much for sparing time joining us today. Wish you good luck for your expansion plans and for the road ahead as well. The management there of Gateway District Parks. Take a short break. More on the markets on the other side. Stay tuned.
Onwards, that the scope for us to do more is now gone. So now they're experimenting with, for example, this 1 lakh crore that they've decided to spend on urban infrastructure. They have to find such avenues so that capex continues, but there is very little more they can do at the center level. Investment activity in the country is going to be a lot more dependent on how well the real estate cycle turns, how well the power generation cycle turns. And I think this almost obsession with waiting for the government to spend an extra 30,000-40,000 crores, in the larger scheme of things, these are all rounding errors.
I think FI selling is not beyond a point a big negative. It is that whether India is doing well or not. And then there is some correction of excesses and stuff like that, which clearly seems to have been done. One reason has to be India related, that Indian results came out very bad. Well, I think it is one of the best budgets that we've seen in many, many years. And I tweeted that's a dream budget. So first thing is that you normally want money with the public rather than with government. It should just be the general thumb rule of looking at anything, that money with public is better than money with the government. You have not said that, oh, you cut a tax rate across the board, therefore the rich will get much more. It has come to the correct audience in that sense. So it has to be travel, it has to be savings, it has to be these car consumer durable types. As I said, we are not buying those, but they could. The overall markets are down a lot, then India may outperform because A, it's not directly affected, and B, don't worry about markets like Taiwan because they have been closed for a week. So if you just look at how TSMC ADR was trading during this period because of NVIDIA and others, and then the TSMC local fall. So don't get totally carried away. A little bit you're allowed to get carried away. But the point is that the budget was good and this tariff situation is bad.
Welcome back. Markets have come off the top, but a couple of stocks actually deserve special mention. So we should pull up the intraday charts out there. Mahindra & Mahindra has a good run in the last couple of sessions. That's moved to the low point of the day. Hero MotoCorp, the other one that we were talking about because of the consumption picking up here in India, that one as well has moved a little bit lower. On the flip side, Ultratech Cement that delivered a good set of numbers, but that's been a little bit under the weather. That's currently moved to the high point of the day. So good move out there. And Shriram Finance as well is now moving from strength to strength. It went through a phase of underperformance, but that one is bouncing back and bouncing back in style. From the broader markets, Zomato is the stock that's had a good pullback. I think from around 205, it danced away all the way to around 240. But from the top, actually, it's seen some bit of selling pressure. Next few days will be crucial because we'll be hearing about the Nifty inclusions as well as exclusions. So that one should be on your radar. Well, that's it from Hormuz and myself, though, on Chartbusters. We leave you with the market still up 100 points, but come off the high point of the day. No worries in terms of the breadth of the market. The team of Trading Hour, though, will take all the action forward. So stay with us.
Tonight, I am announcing Canada will be responding to the U.S. trade action with 25% tariffs against $155 billion worth of American goods. This will include immediate tariffs on $30 billion worth of goods as of Tuesday, followed by further tariffs on $125 billion worth of American products in 21 days' time to allow Canadian companies and supply chains to seek to find alternatives.
Good morning. Welcome to Trading Hour. It's a Tuesday morning. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I am Reema. With me is Vivek Iyer, and the big story that's breaking right now on the agencies on Bloomberg is that China's hitting back at Trump with tariffs on U.S. goods and even a probe on the U.S. company Google. So according to what we've picked up from Bloomberg, China is to levy tax on some products imported from U.S., a 15% tariff on coal, LNG imported from the U.S., a 10% tariff on oil agri-machines from the U.S., and they're also planning to probe Google over alleged antitrust law breaches. That's what we've picked up right now. Markets are erasing the gains. So pull up the Nifty intraday chart and you would see that just in the last 30 minutes, the Nifty was comfortably above 23,500, and now we're closer to 23,450. So we've slipped in the last few minutes. And you can see that even in the rest of the Asian markets where some gains are being pared back. So the Nikkei is now just up a little bit. It was up more than about 1% when I last checked before this news was coming through. They're setting export control on tungsten-related materials. Remember, while the U.S. has paused the tariffs on Mexico, on Canada, but on China, the tariffs that U.S. has imposed, 10%, come into effect from today. And there is just so much uncertainty. We've not heard the last word on tariff right now. And it also changes the Fed calculus, the global economic growth, etc. And markets are reacting to that right now.
Good morning, Reema. Like you mentioned, the first country, I believe, that put retaliatory tariffs was Canada. And now China has also joined in going ahead and giving some retaliatory tariffs. And this will be the most important development to track as far as the entire equity markets worldwide are concerned. But overall, when you're talking about how Indian markets are performing from yesterday, it's quite a bit of a bounce back that we're seeing in the Indian markets. In fact, what's actually happening is that there's been a little bit of a reversal of trends or unwinding of trades in terms of the consumption stocks. The entire pack today is actually seeing quite a bit of profit booking emerge. Look at names like Trent, Tata Consumer, Zomato, Jubilant Food. All of these names today actually have cooled off after the sharp rally that you saw over the last couple of trading sessions. On the other hand, the set of stocks yesterday that fell very sharply were the capital goods and defense names. They've actually managed to do quite a bit of a bounce back. Look at L&T, look at the Cummins, look at the Bharat Electronics. They have bounced back quite significantly, and earnings reaction continues, especially in the power pack. Some very strong numbers have come through. So names like NLC India, Premier Energy, good set of numbers. A lot of one-offs as far as NLC was concerned, but despite that, you're actually seeing these stocks are doing quite well. Premier has cooled off a little bit in the last 20-25 minutes of the session.
Just looking at sectorally to give that perspective, banks are doing well. So the Nifty Bank is outperforming with a gain of more than 1%. So it's 500 points gain on the Nifty Bank. The PSU banks are advancing more, 1.8% up on the PSU banking index. Metals, which were under pressure yesterday, higher today, so reversing yesterday's losses as the dollar index has eased to levels of 108.5 versus nearly 110 yesterday, so that's helping. And pharma is a big mover. And then, of course, defense, capital goods, which got beaten down, as Vivek was telling. are rebounding today. But let's get to Divi's Laboratory. That's in focus right now on the back of the management conference call and some brokerage notes. Vinny's here with the details. Vinny.
Yes, so we have Divi's that is buzzing in trade today on the back of this con call highlights that have come in from yesterday. Now, in terms of Kakinada project, which was an important one where they've spent a lot of money, capex that has been going on for a long amount of time. Now, that has actually started and fully commissioned on 1st of Jan. This is one of the parts, first phase for this, 1st Jan 2025, and some production has been started. Now, overall, the other units also will get commissioned in the next 6 months. So, it's going to be an important one to watch out for. Other than that, custom synthesis segment of the company that has been doing well, supporting the growth of the company. This time also it supported the growth for the company, and the company highlighted that they're seeing several opportunities on this front. They're extremely positive on terms of the growth that will be there for this segment. Generic business, they said that that has maintained a bit of a stability given that the current pricing issues are going on. Now, Citi on the back of this maintaining a buy rating, target price of 6,850 rupees per share. They are quite positive in terms of the commentary that's coming from the management in terms of the GLP-1 opportunity, the generic business, as well as the contrast media, where they think that this could actually see a growth for the company. They said the company is also highlighted about working with a lot of MNCs on this GLP-1 opportunity. They're highlighting how they're seeing a lot of inquiries and RFPs coming in from customers and clients, new clients. So that is something interesting that one is watching out for. And pricing environment stabilizing is a key factor. Strong positive pipeline in generics is a positive factor. So Divi's Lab, positive commentary coming in from the con call is keeping these brokerages positive on the stock. Even Jefferies continues to maintain their hold rating, target price of 6,280 rupees per share.
Thank you so much, Vinny, for joining us. Divi is clearly, one of the top stocks of the day after the strong up move that it saw yesterday post the results. That the GLP-1 focus is keeping this particular stock perked up. But one company that I've been tracking is Spargrid. It's recovered quite sharply from the day's lowest point. This is after the company actually reported a muted set of Q3 numbers. When you're looking at the numbers were a miss to our own estimates. Revenues were down 2.7%, coming in close to the 11,233 crore mark. Our poll was anticipating revenues a little over 11,600 crores. EBITDA was down 6.7%, closer to the 9,530 crore mark. We anticipated, our poll threw up a number of a little over 10,140 crore. Margins too, on a year-on-year basis, have declined, and this is over the 350 basis points margin decline that has been seen. Profitability down 4%. The core business, which is the transmission segment revenues, that actually has fallen 6,545 crore versus a little over 7,050 crores that it saw last time around. But one important thing to note, Rima, when it comes to the utility names of these companies, remember, enjoy fixed returns, is the fact that you are more dependent, especially when it comes to Spargrid. You look and you focus more on the capex and the capitalization guidance. And at the end of Q2, the company's capex guidance actually had been increased to 20,000 crore from 18,000 crore, which itself was actually an upward revision from the 15,000 crore that they had anticipated at the start of FY25. So overall, in that particular aspect, Spargrid expected to have a strong year, but execution is something that's been a little bit of a faltering this time around. And the stock, it's corrected quite significantly recently, but today it's off the day's lowest point.
So FY25 capex guidance stays at 20,000, which was raised in Q2, and for FY26,
we'll wait for the call to see if there is any tweaking over there. But at the end of Q2, that is where
it was raised. So we don't know yet whether it's
generally they don't revise it downwards, and generally on a quarterly basis, especially a company like Spargrid is unlikely to.
But the call is at what time?
It'll be later today.
So we'll watch
track that as well. Yes,
we'll watch that closely. But let's get to Tata Chemicals. The stock is under pressure, and this quarter the company has reported a loss. Upasana is here with the details.
Well, certainly it was a muted quarter for the company. The numbers missed the street estimates. It was a muted quarter mainly led by declining soda ash prices. Now, there is a one-time expense. Now, company has additionally said that it has ceased soda ash production in UK, which led to a one-time charge of 70 crores, provisioning for the employee termination benefit, decommissioning of the plant, and closure-related exposure. Now, revenue has seen a downtick of 4% on a YoY basis. This was mainly due to adverse price movement of soda ash, while volumes were relatively higher. EBITDA was down by 20%, mainly on account of lower pricing, and margins were under pressure, down about 240 basis points, around 12.1%, while Street was estimating somewhere around 14.9%. Now, companies reported a loss of 21 crores versus profit of 194 crore. Now, Additionally, the specialty products, the segment has barely reported EBIT profit, leading to a higher pressure on the overall margins. Now, company held its con call yesterday, and here are some of the highlights where companies emphasized that soda ash prices are likely to stay at the current level for the next 3 to 6 months, and demand in the soda ash market, particularly in Asia, especially China, continues to grow, while rest of the market is seeing subdued demand. Specialty products, utilities for more capacity, hence margins are impacted overall is what the company has highlighted. So overall, weak set of numbers coming in from Tata Chem.
Thank you very much for that. Let's get to Castrol. That also reported numbers. Sudarshan is here with the details.
So before talking to the earnings, if you look at the stock move, Castrol India might be buzzing in trade today, but if in the last 1 year, stock has hardly done anything. From January 2024 to August 2024, stock had moved 50% higher and had hit record high, but from that level, it has raised almost all the gains and is now almost at the same level that it was in January 2024. Now coming to earnings for Q4 of CY 2024, company has reported a good set of earnings with an improvement coming both sequentially and year-on-year, and the biggest positive was on the margin front. For Q4, margin has come in at 27.7%, which is much higher than company's guided range of 22 to 25%. Now coming to the overall numbers, profit was up 12%, revenue has increased 7%, EBITDA 2 has come in 14% higher, and margin has come in at 27.7%, that is almost 200 bips higher year-on-year and almost 500 bips higher if you look at sequentially. Apart from earnings, company has also announced dividend, total dividend of rupees 9.50 per share, that also includes special dividend of rupees 4.50 per share. Now earnings call is scheduled at 12:30 p.m. We'll have to say what does company say on demand front.
Thank you so much, Sudarshan, for joining us and telling us what's driving Castrol higher today. Well, the other set of stocks today that are doing quite well are the defense stocks. They are buzzing in trade today as Defense Secretary Rajesh Kumar Singh says India is on track to sign the largest number of contracts. Speaking to CNBC-TV18, he also said that the government needs to ensure that contracts triple compared to last year. When asked about Donald Trump's message asking India to buy more defense equipment from the US, Defense Secretary said India is willing to procure more from the United States if they meet requirements on quality and indigenization.
We are on pace right now to sign the largest number of contracts ever in our history.
Okay.
The largest last year was another high of 1,08,000 crores. This year we've already hit 1,15,000, and my intent is to double last year's number before the end of this financial year, and the result in terms of expenditure will follow thereafter.
So doubling by the end of this financial year, sir?
Yes, I intend to cross 2 lakh crores and maybe even more. And we intend to ensure that order books are full across the board in the defense industry so that everybody has visibility, everybody from the OEMs down to the component manufacturers, that their order books are full for the next 4 to 5 years and everybody's on the same page when it comes to fulfilling our capability gaps. We do have some procurements which are on the anvil where American companies would be in the picture, and as long as they are able to meet our requirements in terms of quality and in terms of certain levels of indigenization, of course we'll be, those are carrots that we will be able to dangle before the Americans. We are already, meeting a good proportion of our requirements from capable American companies, and we intend to continue doing so. There will be significant buys, and some of that will go to the US as well.
Well, that particular commentary has aided the defense stocks to bounce back from the recent sell-off that they've witnessed, especially over the last 2 trading sessions. Let's now slip into a short break. Up next, we'll discuss what's buzzing in the commodity space with Manisha Gupta.
Canadian energy powers American manufacturing, businesses, and homes. Of America's top 5 trading partners, Canada is the only one with whom the United States runs a trade surplus in manufacturing. And Canada buys more goods made by Americans than China, Japan, and Germany combined.
Presently, taxpayers can claim the annual value of self-occupied properties as nil only on the fulfillment of certain conditions. Considering the difficulties faced by taxpayers, it is proposed to allow the benefit of 2 such self-occupied properties without any condition. To streamline the process of transfer pricing and to provide an alternative to yearly examination, I propose to introduce a scheme for determining arm's length price of international transaction for a block period of 3 years. This will be in line with global best practices. With a view to reduce litigation and provide certainty in international taxation, the scope of safe harbor rules is being expanded. A number of senior and very senior citizens have very old national savings schemes accounts. As interest is no longer payable on such accounts, I propose to exempt withdrawals made from NSS by individuals on or after 29th August 2024. I am also proposing to allow similar treatment to NPS Vatsalya accounts as is available to normal NPS accounts subject to overall limits. The middle class provides strength for India's growth. This government, under the leadership of Prime Minister Modi, has always believed in the admirable energy and ability of the middle class.
Welcome back to Trading Hour. Well, let's now shift our focus to the commodity space. Manisha joins in, and today we are focusing on crude oil.
We are, because we've seen the prices decline and it's trading nearly a percentage point and lower right now, and that is because we have seen prices, the US rather, put that stop or a 30-day pause when it comes to tariffs being imposed on Mexico and Canada. The 10% tariffs on China still stand, but China seems to have retaliated today with 10% taxes on some of tariffs, that is, on some of the US products there. Well, the crude oil prices, the last couple of days, last couple of sessions, that is, did see some gains on concerns about tariff, but we have seen some profit taking, as you can see, a percentage point of decline coming in right now as well. There was an OPEC and allies meeting as well yesterday, and while US has been telling OPEC members to increase production to ensure that the prices decline, there is no such statement or reaction that we saw coming from the OPEC meeting yesterday. Apart from that, the markets also are looking at the kind of demand that China seems to be putting out, which has continued to decline. The European Union winter demand, though, has been on the stronger side, but that seems to be supporting natural gas and heating oil prices more than the crude oil prices, as you can see. The markets also are looking at the overall China data that we saw come in, the factory activity numbers that were slightly on the weaker side as well, and that seems to be weighing onto the markets. The street does believe that you could be looking at some support coming in at $70 a barrel. One, because many of the refineries in US are going to be going to maintenance as Feb ends. Second, the demand is continuing stronger from the winter season, but come second half of Feb, you could be looking at that dampening as well. So some more pressure expected in prices for the very near term.
Thank you very much for that. By the way, the Nifty is back above 23,500 and some of the stocks moving up now. ITC was down over 1%, so it's managed to trim its losses. Grasim is trying to get back into the green line. Ultratech Cement is going strong. That's up nearly 2%, while L&T is building on its gains, so 3.5% higher on that. And then a couple of two-wheelers are also holding up in the green, Bajaj Auto and Eicher Motors. But there has been some recovery in the markets, 23,523 on the Nifty, Sensex up 540 points. Mid-caps, small caps continue with their outperformance. Get into a break. On the other side, Neogen Chemicals join in to talk about the quarter gone by and the way forward.
Building in recognition of their contribution. We have periodically reduced their tax burden. Right after 2014, the nil tax slab was raised to 2.5 lakhs of rupees, which was further raised to 5 lakh rupees in 2019 and to 7 lakh rupees in 2023. This is reflective of our government's trust on the middle-class taxpayers. I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees. So, detail the indirect tax reforms and changes in direct taxes in Part B. Financial sector reforms. The FDI limit for the insurance sector will be raised from 74 to 100%. This enhanced limit will be available for those companies which invest the entire premium in India. The current guardrails and conditionalities associated with foreign investment will be reviewed and simplified. The services of India Post Payment Bank will be deepened and expanded in rural areas. NABFID will set up a partial credit enhancement facility for corporate bonds for infrastructure. Public sector banks will develop Grameen Credit Score Framework to serve the credit needs of SHG members and people in rural areas. A forum for regulatory coordination and development of testing.
Welcome back. As promised, let's invite the management of Neogen Chemicals. They recently reported the Q3 numbers. It was a good quarter. The company's top-line growth was 23%. Margins expanded 500 basis points on a year-on-year basis. We have with us Hareen Kanani, Managing Director at Neogen Chemicals, joining in on the show. Thank you very much, Mr. Kanani, for joining in. This is Reema here. So you've managed a top-line growth of 22-23% on a consolidated basis, despite a challenging pricing environment. So can you tell us the breakup between volume and pricing? To what extent are prices under pressure? And when do you expect a recovery in the prices?
So thank you for having me. Yes, in this quarter, we had more than 20% growth in our revenue, and we had more than, like, if you look even at 9-month numbers, because that's a better comparison, because last year Q3 was a bit off because of lithium price movements. So even our EBITDA was up almost 35% and PBT was up almost 70%. Mainly what these numbers indicate is, you know that last year the chemical industry and Neogen also went through a bit of a pain because the industries was not doing well. Our basic raw material, lithium and bromine, the prices of those, which are commodities, was going down significantly. Those have leveled off now, and they are still at below the historical level. So anywhere between 6 months to a year, people expect, because at this levels they can't sustain long. So we will basically see like a growth we'll see the correction happening and they come back to normal level. And if this was not there, our top line would have grown almost like 30%, in line with what you are seeing, almost 35% EBITDA. So Neogen has an ability to basically pass on the benefits, pass on the price increase in commodities to the customers. So sometimes our top line doesn't reflect it, but the EBITDA gives a better indicator of what's happening. So I think this is where we are. And I think the main contributors are improvements in pharma, improvement in our CSM business, and the organolithium business, which we have acquired, which is now also merged into Neogen. So all this together has contributed to the growth. The battery materials have just started contributing, but it will take a little bit more while for it to start contributing in a meaningful way.
So you're saying, in a way, the realization impact, the negative impact due to realizations was about 7%. You would have done 23% if the pricing environment was normal, and now you've done 23%.
Yes. So if the pricing environment was lower, actually the volume growth is almost 30%. So if you go to
30%.
our earnings presentation, it has the exact numbers, but it would have been almost 30%.
And so for 9 months, you've done 17% top line growth. What are you likely to end the year with?
So we are looking at a number somewhere between 800 to 850 crores. So you can see we have a quarter-on-quarter momentum. Our quarter-on-quarter performance has been improving for last 3 quarters, and Q4 is always a strong quarter for us. We are also seeing good order books, so we expect to end even further improvement over our Q2 number, our Q3 numbers, and that will be historically the highest revenue which we would have quarterly revenue since the beginning of Neogen.
Mr. Kanani, 800 to 850 is the kind of top line growth projection you've given for FY25. FY26, yes. We understand that you've given close to 950 to 1,000 crore of top line growth, guidance to the street, within which we understand that there will be a 200 to 250 crore component as far as the battery chemical business is concerned. So what is the growth that you've seen over there? Do you already have commitments from customers in that particular space? And what are the kind of growth targets that you have in that particular vertical?
Yeah, so sorry, I'll have to correct a little bit. 950 to 1,000 crore is just the base business growth revenues.
Okay. So
the battery would be on... Yeah, battery would be on top of that. And in yesterday's conference call, we've said, we are targeting a revenue between 300 to 500. So it's a little bit bigger window just because, India electrolyte, India battery manufacturing is just coming online. So as you can understand, when our customers are coming online, it's a little bit difficult to predict exact numbers that we can have. Also, we are getting approval from international customers, and we have a brownfield expansion coming online and a greenfield. So with a lot of variability in the battery business, we are giving a bigger window of 300 to 500 crores. And for our base business, we are looking at 950 to 1,000 crore kind of revenue on full utilization of capacities and little increase in capacity on our organo-lithium business. In terms of your question about what visibilities we have, so we have been working with all the Indian cell manufacturers who are planning to make ACC cells, some of which also have a PLI benefit, so they want to work domestically. So with these customers, we've been working for last 2-3 years, going through several phases of approval. So as their demand picks up, we expect a very significant share out there. And internationally also, we are working with 4 to 5 companies for taking care of their electrolyte salt demand, which is basically right now 95% sourced from China. So there are hardly 3 or 4 players outside China. And we are one of the most competitive sources which can meet the quality better or equal to China and Japan. So that's why there's a very strong demand in the international market as well. Here we have many pricing agreements in place. It's only we have to go through a very rigorous qualification. So once the qualifications comes in, the revenues will start kicking in. So we expect revenues will start kicking in significantly. So, the total capex we are doing in 2 years is 1,500 crore with a visibility of around 2,500 crores in the battery business over the next 3 years. So we are expecting at least 300 to 500 out of that 2,500 coming in next year back on the capacities we have.
FY26, close to 300 to 500 crore is the kind of top line that you expect to come as far as the battery chemical vertical is concerned. Let's now talk about the Bewley Chem business. How did that particular vertical ramp up? What kind of utilization are you seeing over there? We also understand that there are some NCLT approvals that you require in that particular business for corporate restructuring. So where does that stand, and how will the combined entity look like at the end of the approval once it comes through?
So the approval already came through in January. The standalone number you see already, Bewley Chemical is merged into Neogen. So and that business was supposed to operate between 50 to 100 crores. Kind of revenue potential depending on price of lithium. So on a lower band of lithium price, we should be somewhere closer to 50 crores. And we are already doing more than that. So the capacity utilization also. So last year we had just acquired the business and it was getting stable. But within 5 to 6 quarters now, like Q2 and Q3, we were almost operating at full utilization capacities. And we also received environment clearance where we can increase capacity significantly from Delhi. Now we are waiting local clearances where once we receive that, we will double the capacity in next year with a very limited debottlenecking kind of capex. And we already have a very strong order book for that business. So that's a business where it's not only for pharma, agro, the traditional areas, but it also gets used in semiconductor, specialty rubber kind of applications. So it's also opening, doors into new industries for Neogen. So we're very excited with that, and we'll keep ramping up the business over the next 2 years.
Mr. Kanani, I believe you've said in the past that FY28, FY29 is when all the efforts, all the investments that you've made come to fruition, come together and get completed.
Yes.
Is that right? So clearly you've laid out the next 5-year plan. By FY28 or FY29, what would the top line of the company look like and the margins of the company?
So all the capex which we are doing today, which we already have in place, which is in our base business, can take us between 1,000 to 1,200 crores. And what we are doing in the battery, what we have announced, which will complete in the next financial year, will give a potential of 2,500 to 2,900, depending on the price of the battery. So overall, if you look at FY28-29, and that basically just depends on how fast the battery manufacturing picks up in India, and how fast, we are able to get, how much market share we are able to get. So based on that, we would be somewhere around 3,500 to 4,000 crore, let's say by FY28 or FY29. And now,
margins?
we already, so margins, on the base business, we are looking at 18% kind of, 18 plus or minus 1.5%. So basically, as we go full utilization, we are expecting EBITDA to go more closer to around 20%. And for the battery business, the top line can change depending on price of lithium and other materials. So we are basically guiding at a 20% ROC on the investment which we are doing. So that's more depending on, the price of lithium, it can be varied between 16% to 20% or even higher than 20%, depending on the price of lithium. But let's say on an average, you would see above 18% or 20% kind of an average EBITDA on the normal lithium kind of price.
Thank you so much, Mr. Kanani, for joining us, giving us a sense of the various verticals of the business and the way forward as well. Let's now slip into a short break. When we return, we will discuss market technicals with Mitesh Thakkar and also discuss their top trading bets.
Will be set up. To implement the earlier announcement on simplifying the KYC processes, the revamped central KYC registry will be rolled out in 2025. We will also implement a streamlined system for periodic updating. Speaker, I present the budget for 25-26. This budget continues our government's efforts to A. Accelerate growth, B. Secure inclusive development, C. Invigorate private sector investments, D. Uplift household sentiments, and E. Enhance spending power of India's rising middle class. Together, we embark on a journey to unlock our nation's tremendous potential for greater prosperity and global positioning under the leadership of Honorable Prime Minister Shri Narendra Modi. As we complete the first quarter of the 21st century, continuing geopolitical headwinds suggest lower global economic growth over the medium term. However, our aspiration for a Vikasit Bharat inspires us, and the transformative work we have done during our government's first 2 terms guides us to march forward resolutely. Our economy is the fastest growing among all major economies. Our development track record for the past 10 years and structural reforms have drawn global attention. Confidence in India's capability and potential has only grown in this period. We see the next 5 years as a unique opportunity to realize Sabka Vikas, stimulating balanced growth of all regions. The great Telugu poet and playwright Gurujada Apparao had said, "Deshamante matti kadoy, deshamante manushuloy," meaning a country is not just its soil. A country is its people. In line with this, for us, Vikasit Bharat encompasses zero poverty, 100% quality good school education, access to high quality, affordable and comprehensive health care, 100% skilled labor with meaningful employment, 70% women in economic activities, and farmers making our country the food basket.
Welcome back to Trading Hour. Well, Mitesh Chakkar now joins in for a quick technical check of the market. Thank you so much for joining us, Mitesh. How are you looking at markets at the current state? A bit of a bounce. Do you think that can sustain?
See, I think not exactly a bit of a bounce. It's been a good move on the upside. One, I think, we are now above the 23,500 mark. The next level should be around 23,630, which is where we had the high on the 1st of Feb. And that's also an area where a couple of moving averages, the modified moving averages are placed. So I think the next target is 23,630. But once we start closing above that, then I think we might be looking at a short to medium term up move starting in the Nifty. So the structure is positive, except for the fact that there's one level to be taken out. So don't worry on that. Stay on the long side, but closer to about 23,600, take some profits and then, either buy about 23,650 or wait for a pullback to buy it.
By the way, ITC is moving up quite smartly now. It's recovered about 1.7% from the day's low and is up nearly about 0.5%. Mitesh, hi, morning. What about stocks? What are you looking at?
GNFC has, pretty come on the radar. That's a buy with a stop at about 558. Look for targets closer to about 600. And ICICI Bank is a buy as well. Keep a stop below levels of 1260. Look for targets of around 1295.
Thank you so much, Mitesh, for joining us, giving us your view on the markets as well as your stock-specific ideas. Well, moving on, DIPAM Secretary Anurish Chawla highlighted a calibrated asset monetization approach when it comes to public sector units. Speaking at the CNBC-TV18 budget verdict program, he also said that government hopes to monetize land assets of BSNL and MTNL in FY26. Revenue Secretary Tuhin Kanta Pandey said that the PSU dividend strategy is aimed at being consistent and not maximization of revenue.
At the dividend, as Arunish mentioned, we are looking at consistent dividend, not maximization of dividend. Because if you maximize the dividend, you basically evacuate the money out and then it doesn't help for growth of the company. So there is a consistent dividend policy and consistently also the targets of dividend are being met.
We are going to help MTNL and BSNL in monetizing whatever assets they have so that the value that is locked in can be redeployed, the liability is cleared, and we can re-energize the sector.
And do you expect that to go through within this in the next financial year, FY26?
Touch wood.
Touch wood. Okay, that's an important headline.
Okay, let's also get in one more update. The new direct tax code will only halve the the new direct tax code will only have half the text of the current law, and words like assessment year will vanish, says the Revenue Secretary. The CBDT chairman says the new legislation will be simpler, inspired by similar exercises in UK and Australia. The new law is scheduled to be introduced in the Parliament this week.
We are making a very sincere attempt. This particular thing in other sovereigns also this has been attempted. Some people have taken years, 4 years, 5 years to change the new law, to rewrite the law. We had some groundwork earlier in some committees which they did the work. But this work, this piece of the work, bringing it has been done in about 6 months. So obviously, while we will say that we have done a great job, we don't know. So we have to, the suspense is, the jury will still be out.
Yes, the jury is out and we'll have to wait for you to actually bring the bill.
But what I can say is that the words will be halved, chapters will be halved, I think if you really look at last three years, we have been growing at 20% on PIT side, which of course includes the STT. We have this 20% growth, and therefore, but we have assumed 14% going forward, so we have moderated it.
As a result of this entire exercise in this 6 months, the act has been now, the proposed act would be about half. I would not say exactly half, but it will be about half. It will be about half because we have to take care of different situations, you see. The shift in approach is that, well, we have taken some provisions which were elaborated in the base act to the rules also. And also we took inspiration from the similar exercise which was done in other sovereigns. For example, UK, Australia.
Well, moving on, let's now take a short break. Up next, we'll discuss market fundamentals with Ashi Anand from IME Capital.
In this budget, the proposed development measures span 10 broad areas, focusing on Garib, Youth, Annadata and Nari, spurring agricultural growth and productivity, building rural prosperity and resilience, taking everyone together on an inclusive growth path, boosting manufacturing and furthering Make in India, supporting MSMEs, enabling employment-led development, investing in people, economy and innovation, securing energy supplies, promoting exports and nurturing innovation. For this journey of development, our four powerful engines are agriculture, MSME, investments and exports. The fuel, our reforms, our guiding spirit, inclusivity, and the destination, Vikasit Bharat, and global competitiveness. The domains are taxation, power sector, urban development, mining, financial sector, and regulatory reforms.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Welcome back. Let's talk about markets and inviting on the show Ashi Anand. He runs a digital disruption PMS. So the stocks that he owns in that include a PB Fintech, Zomato. Both these two have an approximately 20% holding. It's got Paytm, Nykaa, Infomart, Swiggy, IndiaMart, basically all the digital stocks. And the last couple of months have been rough. The fund has given a negative return of 15% in the last 1 month. And in the last 3 months, it's given a negative return of about 4%. So Ashi Anand is now with us to talk about the way forward. He also runs another PMS, which has got some concentrated bets. But Ashi, first on the digital stocks. Now, it's been a tough couple of months. Stocks have pared back significantly. What are you doing to mitigate the damage? And, you know, at these levels, are you looking to add to your holding? Because you have cash of about 6% as of end Jan.
So, hi, first of all, thank you so much for having me on the show.
We are honestly not too concerned about any of the recent price movements that you've seen. It's very important to understand that the digital PMS strategy was always positioned as a longer-term, quasi-private equity style investment approach. We are taking concentrated bets on what we believe to be the long-term outperformers in this particular space. We see very strong kind of growth, shift towards profitabilities, and therefore very attractive value creation over the kind of coming decade. Given how concentrated the bets are, a high level of volatility, both on the upside and the downside, is to be expected. And we've always been very clear that this portfolio is not something that needs to be looked at from a year-on-year kind of from a year-on-year performance perspective relative to the markets, etc. You look at it similar to kind of private equity. You're taking long-term bets and you kind of believe that over the longer term, this will outperform quite significantly. Just to kind of understand in terms of the current kind of decline that we've seen since January, we're down about 15%. This is kind of more than the large cap indices, kind of in line with the small cap indices. The largest kind of drive or the biggest kind of impact has actually been a fall in some of our larger weights. And Zomato and kind of Swiggy would be amongst them. Now, if you're looking at what is happening in these particular companies, what you are seeing is in this quick commerce space, a segment which has a lot of value over the longer term. It's tremendous kind of growth potential. The overall size is actually many multiples of the existing food delivery business. You have the entire grocery kind of potential moving towards this as a very, very attractive new channel. Now, this space is still in relatively much earlier stages of maturity as compared to the food delivery business. You are still going to have multiple new players coming in. They are going to be sitting and fighting for market share. We believe it is very, very important that Blinkit and Zomato and Instamart and Swiggy actually invest upfront, right? So this could be in terms of new store additions. It could be in terms of increasing discounts to mitigate new competition coming in. It is more important to really focus on cementing your position and ensuring that you are one of the 2 or 3 long-term winners in the space, as compared to focusing on profitability over the shorter term. So just the way we look at the space, we are actually very comfortable with these companies increasing investments. We are not too perturbed about the fact that Blinkit, for example, has gone from EBITDA break-even to EBITDA losses. We would also not be too perturbed if losses were to increase substantially. As long as the overall unit economics, the overall growth and cementing the position remains. Now, this is kind of really, and that's why we, multiple times use this word quasi-private equity. When you're looking at these companies, you're really trying to ensure that you cement your longer-term positioning and your longer-term outlook. And for that, these companies very often may have to invest in the near term, which could impact profits. This is very good long-term, but it may not be considered positive from the markets in the shorter term. This really, according to us, presents a very attractive opportunity. We are sitting on cash. We are looking at deploying the cash. We're just waiting for the kind of current market sentiment to turn, but we see this is a very attractive opportunity to buy into what we clearly believe to be the most attractive opportunity for India over the coming decade.
Right. Actually, so within the list of stocks that you currently own, where exactly will you be deploying the additional cash? Will it be in the quick commerce space? Will it be in the fashion and beauty space? Where do you see more opportunity?
So without really getting to where exactly we're going to be deploying, let me just tell you the spaces that we find interesting. What we really like about digital are platform businesses, where they kind of connect a large number of buyers and sellers and say other network participants together onto a single platform. The stronger the value of this network, the more attractive the business. Now, that's kind of where, we've always been very strong bulls on the Zomato and the food delivery and the quick commerce space. And you now also have Swiggy, which is available. Both of which are, what makes these models very attractive is these are actually 3-sided networks. There's a customer, there's a restaurant or a dark store in the case of quick commerce, and there is your delivery partner. Replicating this is something which is going to be very, very difficult for any new entrant to come in. And we therefore believe that the competitive moats in this space are very attractive. The longer-term growth potential is also very attractive and continues to be clearly the top weight that we have. We also see a lot of value in different forms of fintech. It could be a payments form of business. It could be insurance tech. It could be new forms of wealth tech. There could be, and there's certain new kind of businesses coming in the pipeline to be listed. We see a lot of value in that space as well. And we also believe there's intrinsic value in certain kind of horizontal focused e-commerce players that are focusing on a particular narrow niche. All of these are very interesting bets. Where we choose to deploy the cash would really be in terms of relative opportunities and relative upsides that we're seeing over the medium to the longer term.
India Mart, you seem to have raised your weightage in India Mart compared to what it was a couple of months back. It's now about 4.5% of your overall portfolio. What is it that you like in India Marts? Because numbers have been disappointing. The number of paid subscribers that they've been adding, in fact, turned negative in the quarter gone by.
So just to confirm, we've not increased our weight. What you're actually seeing is the impact of relative movements. So the Zomato and AB fintechs would have moved down more. And that is why kind of the weight has increased because of price performance on other stocks. We've not increased our weight. Yes, results have been disappointing. This is a kind of company we are tracking really closely. Most importantly, right, is the value of the network intact. That is something that we believe is relatively intact. They are clearly facing certain short-term challenges, primarily related to kind of subscribers in the silver bucket, where there is a high level of churn. We believe the management does clearly kind of need to come in and address this, right, to be able to demonstrate value of the platform to kind of consumers in the silver bucket. This could involve more aggressive sales. It could involve better kind of customer service in order for them to be able to ensure that you are reducing churn. We believe these are challenges which are kind of addressable, but it may take some time, a few quarters for this to be addressed. Given that said, valuations are now extremely attractive for what is kind of India's largest B2B classifieds business. So we are aware of the challenges. It is something that we are monitoring quite closely. But overall valuations really are quite attractive and do, according to us, factor in a lot of these current slowdown challenges.
Right. Thank you so much, Ashish, for joining us, giving us a sense of the new age portfolio that you run and how exactly you're finding opportunities within that. Time now for a short break. We put the spotlight on Titan and Asian Paints ahead of their Q3 earnings.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed.
Welcome back to Trading Hour. Well, Titan is in focus ahead of its Q3 numbers today. Winnie is here with more details.
Absolutely. So in terms of numbers that we are watching out for from Titan, we had the Q3 update that came in also from the company. In the update, they showed a standalone revenue growth of 24%, jewelry business growth of 26%, and gold sales at 24%, studded sales at 21%. Now, what we're expecting this time, the revenue growth, obviously we know 28% growth. Margins are expected to see a bit of a contraction of around 100 basis points. 10% is what the EBITDA margin is expected versus 11.2%. In terms of our expectation, profit expected to see a 9% growth. What we're watching out for is going to be the inventory loss. Maybe we could see a one-time inventory loss of around 200 to 275 crores. Keep an eye on that. Lower margins due to the studded ratio mix changing. That is maybe something that could impact the margins. Studded share maybe is going to be a bit low by around 100 basis points. So keep an eye on that. And we're watching out for any inorganic growth opportunity that is there or anything that they're looking at in terms of the company. Do not forget the stock is currently trading at 67 times its FY26 PE, as well as the stock is 6% away from, almost 6-7% away from its 52-week high. So important to watch out for Titan in trade.
Thank you. And what about Asian Paints, Vinny?
So in terms of Asian Paints, what we're expecting for numbers as well, we're expecting a decent set of numbers coming in from the company. Do not forget that the stock has actually seen a decline, a 31% move coming in from its 52-week high as well, a decline there. Now revenue, we're seeing a muted show coming in. 3% decline there. Margins expected to see a contraction of 18.6%. Profits seeing a decline of 22% in terms of expectations. Higher competition, weak consumer sentiment is something that is going to be denting the stock. As well as the decorative paints volume is expected to see a flattish growth in Q3. We're expecting margins to be impacted by the product mix, higher cost of sales, as well as negative operating leverage are the key factors that will be impacting the margins of the company. Let's keep an eye on the volume growth trend going forward. What is that coming in from the company? So Asian Paints maybe a bit of a muted set is what one could watch out for.
Thank you so much, Winnie, for joining us, giving us a sense of what exactly to expect from both of these FMCG giants. Well, one set of stocks that have seen a very sharp recovery, especially in the last half hour of trade, is actually the pharmaceutical pack. So a whole host of pharma stocks now trading near the day's highest points. Names like Dr. Reddy up over 2% in the session. Cipla, Laurus Labs, that stock has rebounded quite sharply. And even some of the diagnostic players, some of the healthcare names like Alchem, all of these names have seen quite a bit of a sharp recovery, especially in the last 20 to 25 minutes of the session. But with that, it's a wrap on this edition of Trading Hour. Stay tuned. Halftime Report is up next.
India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Market off morning highs. Trump puts imposition of tariffs on Canada and Mexico on pause following talks. China retaliates with fresh levies on US imports. Capital goods and energy are the big gainers, even as consumption drags in trade.
Even as banks grapple with liquidity, the Secretary of the Department of Financial Services says that the government is against locking up bank capital for liquidity coverage. He adds that the view has been conveyed to the Reserve Bank of India.
The Defense Secretary says contracts awarded will top 2 lakh crore by the end of the year, making FY25 a record year for contracts. He expects the order books of OEMs and component vendors to be full for the next 4 to 5 years.
The Economic Affairs Secretary says that India may need to recalibrate its approach to cryptocurrencies, adding that its use for multilateral settlements will have an impact on the economy.
CNBC-TV18 Citizens MPC sees a rate cut on February 7th from the RBI by 4-1 majority. None except a CRR cut. Nomura and JP Morgan economists see a 100% rate cut through the year, while Citi and SBI see a 50 to 75 basis cut in this year.
You're with us here on Halftime Report on CNBC-TV18. I'm Hormuz Fataki, and joining me today is Nigel D'Souza. Nigel, good afternoon. There was a bit of a dip a couple of hours ago when we were in the studio after China levied those tariffs, but the markets have completely discounted that and are moving to the highs of the day.
Well, if you don't get any big negative news, actually the markets are looking resilient, Hormuz. I'll have to admit that, because even in yesterday's trading session, India outperformed in comparison to what the globe did. And today as well, you had every reason to see a bit of a dip, but that dip got bought into. So at least as of now, things are looking good. I think the crucial mark we need to get past is 23,630, which is the recent high. And the Nifty Bank has seen a good recovery. It's defended that 20 DMA. And that, in fact, is looking pretty okay once it defended that 48,800 odd mark. So it's on its way to around the 50,000 mark. I think 50,200 is the next level that you should be looking at. So the market's looking pretty good. But let's focus on the first management on the show. And we've got quite a few. Kalyani Steel, that's the one on our radar. The stock, well, it's up, I think, marginally. It's come off close to 30%, though, from the recent peak. And as we speak, it's down another 4.5%. Mr. R.K. Goel joins us on the show. Hi, Mr. Goel. Thanks a lot for joining in. Well, first tell us, how is demand on ground? Is it as good? Normally, you talk about being booked out by 100%. Is that the case?
Yeah, good morning. As far as the demand is concerned, it is definitely improving. We were booked last quarter also, and we are booked for this quarter also. So as far as volumes for us is concerned, we have no issue. Yes, definitely there is a pressure on price, and that you understand because of the dumping from China, and the sentiments are pretty low.
All right. So dumping from China is impacting you as well. But you follow that contract system, right? You normally deal with the OEMs and then bargain for a price increase. So tell us, Q3 in comparison to Q2, what was the price change? And do you think prices will move up from here?
Whenever there is a dumping by China, the impact is there largely on commodity products, and that puts pressure on the price of engineering steel long products also, as far as that part is concerned. Last quarter, we had to give a general price decrease of around 2,000 rupees, but definitely there was some reduction in cost also. We are trying to find ways and means to reduce our cost further and improve productivity further. So with this, I think we are pretty positive about the situation.
2,000 rupees per ton was the pullback in the last quarter. Is that correct?
Yeah, 2,000 rupees.
2,000 rupees. And right now you're saying that you're expecting prices to remain more or less stable, and there is some benefit of the lower input costs that you're getting, correct?
Absolutely. No, and not lower input cost, but lower manufacturing cost because of higher efficiencies and better productivity.
Yeah, you had taken those cost efficiency measures, I think, a couple of years ago, and you were saying that, that will result in around 15 crores per quarter of savings. So that is being recognized by you. Is that correct?
Absolutely. Absolutely.
All right.
Mr. Goel, good afternoon. Thank you for joining in. For a better part of this year, you've been in that 17% to 20% margin band. 20% last quarter, 17% in Q3 again. Do you remain in the same band going into Q4 and in FY26 as well, or do you expect to cross the higher level, which is at 20%?
We are definitely much better than 20%. But then it depends on so many things. What is happening globally, what is the reaction and what are the responses from the world about the decisions taken by US government, how China will respond, what are the sanctions or duty decrees on India. So there are fairly large number of issues on which the profitability depend, including depreciation or including exchange rate, whether the rupee depreciates further or appreciates, that again impacts us.
Okay, all right. Now you give us some more inputs then. You know, last year you peppered the street. You signed an MOU with the Odisha government for a contract. I think the total value was around more than 5,000 crores odd. What is the update? What has happened on that front? That's point number one. And you also did some inorganic growth that the street liked very much. The Kaminini steel acquisition. What is the update on both these two assets, the MOU in Odisha as well as on the inorganic growth?
You know, as far as our MOU is concerned, government of Odisha is working very hard to really honor all their commitments, and they are doing it. They are getting forest clearance for the land so that it can be allocated to us as soon as possible. So they are doing a lot of good work in a very positive manner, but let's hope when that is over.
So this asset that you have acquired, Mr. Goyal, what are the kind of volumes that you are penciling in for this, and also the EBITDA contribution, say for FY26, if you could give us a number for that?
So as far as the new expansion, once we get the land from Odisha government and all other things are settled, and once we set up the project, I'm sure in Odisha manufacturing costs will be lower than what it is today. So we'll be much better off once we set up that project.
Expect that to happen, sir? The allocation of land and all of that, if you could give us a timeline?
You know, it depends on the government. They are putting a lot of efforts, but then certain things are even beyond them, like forest clearance and all. So they are trying in their best possible manner, but it's still very difficult for them to give any timeline. But let's see how fast it can happen. But they are doing their best.
One would think things would work faster there, because now you have the same government in the state as well as centre, and sometimes that works to your advantage in terms of approvals. But you're saying that you're waiting by for that. So should we expect in the next 2 quarters that we should get further details with regard to this Odisha MOU?
Our wish is same. Let's see how best and how fast it runs.
Okay. And
good
this,
part is, and I'm repeating third time, they are trying to do a good job.
I mean, you know, the street always appreciates good job and good effort, but they would like to see some results as well. And that could explain why the street is a little bit nervous, and that's why your stock right now is lower, Mr. Goyal. And I'm sure that, you know, you've been heading the company for many, many years, and you perfectly get that the street wants to see some you know, aggression coming from you. On the inorganic growth, what did you say? When does that get closed out?
No, that plant which we have acquired, it's a very good asset, and this will be a part of, as soon as we get moving on the Odisha project, this will be a part of that project.
All right, so we have to wait for further clarity on both these two assets. Got it. But you would explain to Hormuz that you expect margins to improve back to 20%. But in the near term, what should the margins look like? They were at around 17% in the past quarter. Have they bottomed out at 17% and they improve from here?
We are trying hard, we are working hard and trying to do a lot of things to ensure that we do much better than what we did last quarter. However, the uncertainty lies in the environment, what will happen about various decisions which are taken by US government, what are the responses from China. There are so many things, and including depreciation of rupee. Like last quarter, rupee is depreciated very heavily. We expect it to remain stable or a little bit stronger. Rupee becomes a little stronger. If that happens, I think we will do much better than last quarter.
And your current cash in books is how much?
It is more than 600 crores.
More than 600 crores. And you aim to become a 1 million ton plant by 2028. Is that correct?
28-29.
28-29. All right.
Yeah.
All right, Mr. Goel, you know, Hormuz and me at the start of the show were discussing how hard we are working. What it seems is not just us. You're working hard to reduce the costs. You're saying the Orissa government is working hard to get the approvals in place. So it's a hard-working midday interview that we've had. Thanks a lot, Mr. Goel. Looking forward to having a chat with you in the coming months as well. And hopefully things improve on ground. Well, time to slip into a short break. Our next management is waiting for us, though. Stovecraft is the one that we're talking about. They reported their numbers yesterday, and we'll get to understand what happened in the last quarter and what's the way ahead.
This issue that Donald Trump fears so much will offer this question of the land. I don't know what Donald Trump has to do with South African land because he's never been here. And he must keep his America. We will keep our South Africa.
I think FI selling is not beyond a point a big negative. It is that whether India is doing well or not. And then there is some correction of excesses and stuff like that, which clearly seems to have been done.
Well, the markets have moved higher from the start of the show. The last few minutes, we've seen a good up move, and a few stocks actually are moving very, very well. The big boy, Reliance Industries, that's come to the party. That's helping the markets move up, and the Nifty Bank as well. Remember, if you just plot a chart for the last 6 months or so, you'll see Reliance Industries coupled with the Nifty Bank, they've been relatively underperforming, but they seem to be finding their own, and that's the reason we have moved up. Shriram Finance, we had pointed the stock out just a week or so ago here on Bazaar itself in the morning chat, that has been a big underperformer. It seems that bulk of that selling was getting absorbed. And now that one has moved to the high point of the day, remember, if we get a rate cut, then in fact, some of these stocks could benefit because the cost of borrowing will go down. And that could explain why that one's doing well. ONGC as well is firing away as we speak. I think what's a little under the weather is the consumption-driven names. Whether you look at HUL or Titan as well, both of them have moved a little bit lower. I'll tell you what, we'll slip into a short break, come back. Management of Stovecraft is waiting for us. Remember, the stock yesterday ended at the low point of the day, Today it's seeing a bit of a bounce back. We'll get into further details on the other side.
India related, that Indian results came out very bad.
We are hitting the limits on what the government can directly do in terms of capex, and therefore the guidance from the government was that we will maintain capex as a percentage of GDP here onwards, that the scope for us to do more is now gone. So now they're experimenting with, for example, this 1 lakh crore that they've decided to spend on urban infrastructure. They have to find such avenues so that capex continues, but there is very little more they can do at the central level. Investment activity in the country is going to be a lot more dependent on how well the real estate cycle turns, how well the power generation cycle turns. And I think this almost obsession with waiting for the government to spend an extra 30,000-40,000 crores, in the larger scheme of things, these are all rounding errors.
I think FI selling is not beyond a point a big negative. It is that whether India is doing well or not. And then there is some correction of excesses and stuff like that, which clearly seems to have been done. One reason has to be India related, that Indian results came out very bad. Well, I think it is one of the best budgets that we've seen in many, many years. And I tweeted that's a dream budget. So first thing is that you normally want money with the public rather than with government. It should just be the general thumb rule of looking at anything, that money with public is better than money with the government. You have not said that, oh, you cut a tax rate across the board, therefore the rich will get much more. It has come to the correct audience in that sense. So it has to be travel, it has to be savings, it has to be these car consumer durable types. As I said, we are not buying those, but they could. The overall markets are down a lot, then India may outperform because A, it's not directly affected, and B, don't worry about markets like Taiwan because they have been closed for a week. So if you just look at how TSMC ADR was trading during this period because of NVIDIA and others, and then the TSMC local fall. So don't get totally carried away. A little bit you're allowed to get carried away. But the point is that the budget was good and this tariff situation is bad.
Welcome back. Continuing with corporate conversations with Stovecraft now, and the company is surging, the stock surging today after a good third quarter performance. Revenues were up 12%, EBITDA, the margins also expanded from the same quarter last year. To discuss this and more, we are being joined by Rajendra Gandhi, who is the managing director of the company, to discuss the road ahead. Rajendra, good morning. Thank you for joining. Good afternoon, actually. Thank you for joining in. I'll stick to the volume growth bit first up. How has demand been for the quarter? What are the trends that you're witnessing? We are almost, 40 odd days into the fourth quarter as well. How has festive season demand been? How are you witnessing it currently on the ground? And based on that, do you stick to your volume growth guidance for the year?
Yeah, we continue to witness growth. Of course, this is not the festive season. The festive season is generally between the second and third quarter. The fourth quarter is a relatively smaller quarter compared to the last two quarters. But we, comparable quarters, we continue to see growth, both in volume and value.
All right. Hi, Mr. Gandhi. Good day and good to see you. When, yesterday, going by the stock reaction, the street expected a little bit more from you in the third quarter because quarter two was good. Could you help us out with what will you end this year with? All right. I think...
I seem to have lost the line.
Seem to have lost that line. We'll have to get him back in just a bit from now. But all right, I think he's back with us. Yeah, he's not yet back. All right. So we'll wait by. So for the time being, Hormas, I think management sounding a little bit confident with regard to the volume growth number for the year, but we'll have to see what exactly ends the year with. Mr. Gandhi is back with us. Mr. Gandhi, could you tell us what kind of a revenue number do you end this year with? I was just making this point that it appeared that the street wanted a little bit more from you in Q3. But what do you end this year with? Last year you did around 1,360 crore rupees. For this year, what is the revenue number you look at? And on that number, what kind of growth can you deliver?
So we, this year, of course, historically, we've grown at about 18-19% CAGR. This year, we are very confident of a double-digit growth. And as demand comes back, we'll get back to the historical growth rates.
That's a double-digit can be anything, 10, 12, 15, 19%. What is it? For this year, what should the growth look like? And for the next few years?
Definitely better than 10, and we believe we will be able to, with all the initiatives that we have done both on our product side and the channel side, we are confident to get back to that historical growth rate of 18-20%. But for the year, we are confident of a double-digit growth.
Double-digit growth this year, and from next year onwards, 18 to 20%. Is that correct?
That's our endeavor, yes.
All right. And what about, what is the contribution you're factoring from IKEA? IKEA, I think you all have done that tie-up. So is there any revenue contribution that you'll be factoring in?
It is a long-term arrangement with them. We have set up a facility exclusively to cater to their requirement where they have a global presence, is a large retailer. And this is for a cookware segment. It's a brownfield project. We are developing products as per the design. And this is initial stage of this, the various categories in the cookware that we would want to partner with them. This is a long-term arrangement. And of course, it's good for the company, both in terms of revenue, but not limited to revenue. There is a good contribution coming from them with their participation in our automation program, in our manufacturing excellence. And the
Mr. Gandhi,
program.
Yeah, Mr. Gandhi, you know, we have gone through the press release and it appears quite an interesting, development for the company, but we require two numbers. One, how much money are you putting? Two, what is the revenue potential of this? And by when you'll get there?
Number one is the plant is already ready in terms of the civil structure, and we are putting up machines there. This, we would invest about 15-20 crores additionally on the machines. On the revenue, in the long term, there is a good potential to get to about 200 to 300 crores in the next 2 to 3 years. Initially, of course, the supplies only will start in the fag end of this year, around the October-November period, because it's a development stage now.
And by when does this start to contribute to your revenue? You mentioned that there is going to be good revenue contribution next year by FY26?
Yeah, FY26 is a full year for the revenue.
And does that improve your margins as well? The third quarter you were at 10%. So in this 10 to 12% band, does that improve your margins significantly as well?
No, the margins are on the similar range, but there is definitely overall for the company, as we grow, the operational leverage will give us additional advantage on the margin. We'll improve the margins from here.
By how much? What should the margins look like? There has been some improvement. Wow. As of the last quarter, you have done around 10%. For Q4, what should the margin? Q4 margins will be better than Q3.
For the year, we should end up a little lower than 11%. Our endeavor was to deliver 11. We would be at a notch below that 11. But going forward, we believe as we grow from here, we'll be between that 11 and 14.
11 and 14%. That's quite a big range. So for the next year, we should at least factor in 100 basis points improvement from little lower than 11 in FY25.
We believe we can deliver that.
Okay, all right. In the past you mentioned with the capacities that you have, you could potentially double your revenues. By when do you think you'll be able to achieve that? Because as you mentioned in the past, that capacities are not a problem. The problem is that, in fact, demand needs to pick up. And now you've got a booster shot that's coming in from the central government as well. So by when do you think you can achieve these bigger numbers that you were talking about?
Yeah, we should be able to double the revenue in the next 3 to 4 years.
Double the revenue in the next 3 to 4 years. Right. Mr. Gandhi, you had launched a new personal care product line as well this year, starting like hair dryers and trimmers. What kind of response have you received so far?
The initial response is very good. We have just launched it without any marketing effort on the e-commerce platforms. For the short, near term, we'll be only on the e-commerce platforms. Once we get good feedback from our consumers, and when we start manufacturing, we'll then take it across the various channels that we operate.
And how much do you expect it to become a part of your business, say, over the next 2 to 3 years?
It's too early to comment on this category. We are excited with the initial response. Definitely, there's a huge potential in this category. With the BIS regulation setting in, there's a huge opportunity for people who manufacture these products. If they can deliver a high-quality product, there is a market in India.
Okay, all right. And just a final question before we let you go, I briefly asked you about the government of India putting more money in the hands of consumers. And it appears, if I compare you with your competition on a much smaller base, you have been growing relatively better. So do you believe there is a good amount of opportunity for you out there because of this additional money in the hands of the consumer? Could help us out with that. And as of now, are there any signs of slowdown?
Not exactly, but there is not that high demand situation that we have witnessed during the COVID and post-COVID, immediately after the COVID. But in the last 1.5 years, there has been a softer demand compared to the base that was set during the COVID. We expect that that demand will come back. But your question on the outcome of this budget, we believe that when it leaves more money in the hands of the middle income group, that is the addressable group that we address, it could be a huge advantage for us.
All right, Mr. Gandhi, we hope that it's an advantage for you. Good luck for the road ahead. Thank you so much for sparing time and joining us this afternoon. As the management there of Stovecraft, expecting demand to pick up post the budget and confident of double-digit growth in FY25. Take a short break. On the other side, Himanshu Baid, the managing director of Poly Medicure, joins us to discuss the road ahead for the company. Stay tuned.
Tonight, I am announcing Canada will be responding to the U.S. trade action with 25% tariffs against $155 billion worth of American goods. This will include immediate tariffs on $30 billion worth of goods as of Tuesday, followed by further tariffs on $125 billion worth of American products in 21 days' time to allow Canadian companies and supply chains to seek to find alternatives.
Welcome back. Well, one of the big movers in trade is Polymedicare. It's buzzing today. Strong growth outlook in Q3 continued. The revenue jumped up by 25%. Margins as well held steady. We have with us Mr. Himanshu Bed, the Managing Director at Polymedicare. Hi, Mr. Bed. Good afternoon and good to see you win. Well, the street is applauding these set of numbers. They like it. Could you give us a sense about how do you see things panning out from here on in terms of the growth? What kind of growth number are you looking at, both for the domestic business as well as for the global business? And what about margins? How should they pan out for FY25 and 26?
Nigel, thank you. I think we have stuck to the target which you have set initially in the beginning of the year to get a growth rate of between 22 and 24%. So we are at close to that number, very close to those numbers. So I think if we see the whole year, a year as a whole, I think we should be in that range, same range, and margin improvement also around close to 100 to 150 pips compared to FY24. So I think there we are pretty much solid there. But I think going forward, I think what we want to do is, clock a growth rate of around close to 20% or a little bit over 20% for next 3 years. And that's the whole plan. The money which was raised through QIP will enable us to put in new manufacturing capabilities on capacities and invest in new technology. So for that, I think we are trying to, put that whole plan together. But internally, we think we can do 20% plus growth for next 2-3 years easily.
Indeed, because you've grown at 20% plus over the last 4 quarters as well. So expecting to sustain that. Talk about the product mix as well, Mr. Bed. Good afternoon. Thank you for joining in. How has the international and the domestic markets been this quarter? Because your mix is pretty even, right? 31% from India, 29% from Europe. The rest of the world comes to around 40 odd. How has the situation been both on ground here in India as well as overseas?
I think India, we are more bullish today because India, we have added around close to 65 people this year in sales and marketing. The plan was to add 100 people for the whole year, and we are on track to do that. So I think India still remains to be our most important market as we are bringing in a lot of import substitutes. And also, regional business has taken off very well. We had planned a 50% growth for the whole year, and we should end over 50% growth for that business. The new businesses, cardiology and critical care, are shaping up well. We have just received approval for the stents recently, just a few weeks ago. So we are going to launch that product soon. So India is, of course, we are more focused in India. Of course, Europe continues to be a big boost for us. We have a direct presence there through our subsidiary. And also we see, more products being added to the kitty as we receive our new certifications for regulatory approvals. So, and that continues to be the growth drivers to key markets. US will take some time as we are building the whole business there. So the real kick in revenue will start happening, let's say, by next year. It's only, not this year, but next year. In year 26, but we have a pace which is not building up right now.
So does that mean that this 31% contribution that you have from the India business will go up to say 34, 35, maybe even 40 over the next 2 to 3 years, Mr. Bed?
I think not that number, but I think we should see it around 33 to 35% in next 3 to 4 years.
All right. Could you give us the absolute number? The renal business, it's done around, I think, 35 crores for the past quarter. For the year, what should you end at? And for next year, since it's growing at such a fast clip of 50%, how do you see this number pan out?
So I think for the year, we are looking at growing to around 150 crores. That is what our target is. And on next year's number, I think, again, we are looking at a 50% growth from here.
225 crores or thereabouts, right?
Exactly. Yeah.
Mr. Bed, I want to ask you a question, which I've asked you the last few quarters, and every time I have you. You know which one? About the inorganic growth. What's going on there, Mr. Bed? Give us some timeline, give us some quantum. The street likes what you're delivering, but ye dil mange mo. They would like to see some more, aggression from your end, because as you said, the unorganized market is very large here in India, and there is plenty of potential as well. So by when could you see some kind of, announcement on this inorganic side of things?
See, basically, we are on a lookout for sure. Part of the QIP proceeds was, to be used for inorganic opportunity. So we are on lookout. Mainly, we are focusing on technology side, that what we can bring in faster if we have to develop, build versus buy. So we are working on that. In India, in our core segments, I think we are pretty much out there. and we have a lot of product range which we are developing internally. And the story always ends at build versus buy. But when we go outside of India, I think there are a lot of new technologies available. So we are focusing there. So give us a few more months, Nigel. Definitely will have some good news.
Which month? First quarter of next fiscal year? That's the maximum, because build versus buy, technological, outside India, I've heard it before. So should we be hearing about this inorganic acquisition? I think you've kept around 250 crores for this particular inorganic growth. So should we hear about it?
We have a bigger budget to buy. We have a bigger budget to buy.
How much bigger?
So we can also use internal cash in the company, which we also have internal cash around close to 300 crores. So we are not limiting ourselves to 250 crores. We have a bigger, let's say, kitty to buy, if we have to buy something. So we are not limiting ourselves here. So let's see how it pans out.
550 plus crores then, Mr. Baid, you're working with to look at that inorganic growth plans?
Yes, that's correct.
And would it be build versus buy? Which side are you veering towards, build or buy?
No, I think it has to be buy because, in our business, regulatory approvals take a long time, if we need to go to overseas markets. So I think it will be more prudent to buy versus a build story here.
And are you, as you mentioned, you are on the lookout. Have you zeroed in on something?
Not yet. Not yet. We are looking at 4-5 right now.
What about your expansion plans in the overseas market, Mr. Baid? You had mentioned earlier that you are planning on growing there in the direct presence, be it in the US as well. How much has the US become as a part of your business individually?
No, individual US this year will be between $2.5 to $3 million. It's not a big number. But as we have already said earlier, that we are trying to build it to around $15-20 million. I think we should hit that number by FY28 or so. And then maybe, and meanwhile, we are adding some more product lines. So maybe we may see that number also increasing. But again, it depends on FDA approvals and the contracts we get into.
The recently concluded budget, did it have anything for your company?
Not really. I think what I see is more on the ease of doing business side, and I think that is very important. And I think that gives us a strong leg up, I would say, on the custom side, GST side, all that stuff. But typically for medical device industry, there was nothing.
All right, Mr. Baid, the stock is up close to around 10%. You're confident you'll grow at more than 20%. You believe there's scope for margins to improve by more than 100 basis points from here on. We wish you well. Continue doing the good work. Besides the stock price and financials, I think the country needs a lot of focus on medical equipment. So all the best on that front. And the next time around, hopefully something on the inorganic side we hear from you. For the time being, we slip into a short break with news that the markets are at the high point of the day. We'll get you more updates on the markets on the other side. Stay with us.
Canadian energy powers American manufacturing, businesses, and homes. Of America's top 5 trading partners, Canada is the only one with whom the United States runs a trade surplus in manufacturing. And Canada buys more goods made by Americans than China, Japan, and Germany combined.
Presently, taxpayers can claim the annual value of self-occupied properties as nil only on the fulfillment of certain conditions. Considering the difficulties faced by taxpayers, it is proposed to allow the benefit of 2 such self-occupied properties without any condition. To streamline the process of transfer pricing and to provide an alternative to yearly examination, I propose to introduce a scheme for determining arm's length price of international transaction for a block period of 3 years. This will be in line with global best practices. With a view to reduce litigation and provide certainty in international taxation, the scope of safe harbor rules is being expanded. A number of senior and very senior citizens have very old national savings schemes accounts. As interest is no longer payable on such accounts, I propose to exempt withdrawals made from NSS by individuals on or after 29th August 2024. I am also proposing to allow similar treatment to NPS Vatsalya accounts as is available to normal NPS accounts subject to overall limits. The middle class provides strength for India's growth. This government, under the leadership of Prime Minister Modi, has always believed in the admirable energy and ability of the middle class in nation building. In recognition of their
Welcome back. Well, the markets have moved to the high point of the day, and you like the look at the screen actually. The breadth of the market is still in favor of the number of stocks that are advancing, so it's more broad-based. Yesterday as well, we pulled back from the lows of the day, but today we're building on. Asian Paints will come out with their set of numbers. That's one stock that's spiked up in the last few minutes, so just keep an eye out. It's been fairly volatile, but that one deserves special mention. Moving on to how the options data is looking. Well, in an uptrending market, you like the nearest possible put to see some bit of writing. And that's precisely what's happened. So the 23,500 put, that has seen a big surge in terms of open interest, and you have the premiums that have come down. So that's clearly a sign of writing out there. Remember, the base for the market, the near-term base is around this 23,200 odd mark. So that's why, in fact, you're seeing writing at around the 23,500 odd mark. The 23,600 put as well is seeing a fair bit of writing out there. And the attempt is to try to push up this base a little bit. Our reference point is 22,800 because that's the recent low. But those are the crucial numbers. Yesterday, we defended the 20 DMA, which was good news. Now the bulls would like to get past the 23,800 odd mark. Remember, the last time around, we did a U-turn from here itself. So 23,800 becomes important. Big boy Reliance Industries. That went down to the 20 and the 50 DMA, which was at around, the 1,258 odd mark. And Reliance Industries has built on from there. Currently, it's holding more than 1% higher. And that's why after it got past the 1,250 mark, we did see the stock gain some momentum. So the hope is that this can hold one end up. And for the Nifty Bank, it has a clear pathway. It could rally further from here, provided it holds on to the recent lows, which is very, very important. It held on to the 20 DMA yesterday, went down to them. And now the next level you're looking at is at around the 50,500 upwards for the time being, holding at around 50,000 odd. Hormuz, the screen is looking good. We'll have to keep an eye out, whether or not we can build on from here on. And we have a net short market. So in a market where you don't have any bad news actually could serve as the additional trigger. And we have an RBI rate cut potentially that could come about in the next 2 trading sessions. So setup is pretty good.
Important levels as well, important triggers lined up for the nenext few days, and that 23,632 level is the one that you need to watch out for on the index. You just spoke to Poly Medicure, that's up 10%, but the others that are up 10% in today's session is NLC India. That stock is up 10.5 as well, and the other one that's up 10.5 is Nuvama Wealth. So both of these names also doing fairly well for themselves. NLC India, of course, is an earnings reaction, and Nuvama Wealth doing fairly okay for itself, and not on very substantial volumes, but still trading with gains of around 10.5%. Take a short break. On the other side, Manisha Gupta joins in with Sumit Gupta, who is the co-founder at CoinDCX. Stay tuned. Back on the other side.
In recognition of their contribution, we have periodically reduced their tax burden. Right after 2014, the nil tax slab was raised to 2.5 lakhs of rupees, which was further raised to 5 lakh rupees in 2019 and to 7 lakh rupees in 2023. This is reflective of our government's trust on the middle class taxpayers. I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees. So, detail the indirect tax reforms and changes in direct taxes in Part B. Financial sector reforms. The FDI limit for the insurance sector will be raised from 74 to 100%. This enhanced limit will be available for those companies which invest the entire premium in India. The current guardrails and conditionalities associated with foreign investment will be reviewed and simplified. The services of India Post Payment Bank will be deepened and expanded in rural areas. NABFID will set up a partial credit enhancement facility for corporate bonds for infrastructure. Public sector banks will develop Grameen Credit Score Framework to serve the credit needs of SHG members and people in rural areas. A forum for regulatory coordination and development of pension products will be set up. To implement the earlier announcement on simplifying the KYC processes, the revamped Central KYC Registry will be rolled out in 2025. We will also implement a streamlined system for periodic updating.
Well, the Economic Affairs Secretary Ajay Seth told CNBC-TV18 that there's a need to recalibrate the RBI discussion papers, said several jurisdictions have now changed their propositions on crypto assets. Let's listen in.
Cryptocurrency and the committee had finalized the discussion paper, but thereafter we find that when it was about to be issued, that several jurisdictions, and you named one, but more than one jurisdictions have changed their position on crypto assets in terms of their scope, where they see the utility. We are recalibrating the paper because the purpose of that paper is to pose the right questions to the stakeholders so that we get the right answers in terms of an appropriate answer to inform our policy making.
Oh, well, that's a change in stance, perhaps, for the Indian markets there when it comes to cryptocurrencies. Joining us to take the discussion forward now is Sumit Gupta, co-founder at CoinDCX. Sumit, hi. While we did not see much in the budget, and no news perhaps is good news, because immediately after budget, we've seen SECIs show a slightly positive stance when it comes to cryptocurrencies in India. How would you read into that language, where we do understand that more than one country is now perhaps warming up to cryptocurrencies and there is a need for recalibration in India's stance?
Yeah, first of all, Manisha, thank you for inviting me. It's good to see DA acknowledging the developments that are happening around the world with respect to crypto regulations. It is certainly the case. There's been a lot of movement around utilities use cases like remittances, which has been highlighted in the video as well. But I also want to paint a different perspective where in 2023, in G20, when India was the president of G20, India has committed that we will align to regulations in alignment with what other countries are doing. I think there should be a lot more movement. All the other G20 countries have taken the decision. They are moving towards regulations. They've gone ahead and implemented a lot of these guidelines, and India is still catching up to a lot of those decisions. See, my question is simple, right? Why? So there has been change in stance in terms of in the discussion paper because of what has happened globally. But my question is that why do we have to wait for other countries to take steps and then we'll recalibrate our position? I think India is a leader. India needs to be like a leader, and in emerging technologies like crypto and Web3. I think I would be as an entrepreneur in this space, I'd be a lot more happier if basically one thing, because right now we are actually losing out a lot in terms of Web3 technologies, and we will get left behind again if we don't take proactive steps here in terms of regulations.
That point is well taken. Also, Sumit, this year has started on a very strong note. We've seen US really pushing on for it. And we do understand that there is perhaps some conversation happening today as well when it comes to US leading in sense of cryptocurrencies. There is a press conference to that effect. And there have been conversations about putting Bitcoin as a reserve. How are you reading into it? I mean, I'm sure you are into more thick of the information than we are.
No, absolutely. I think the signal is very, very clear. So this is an emerging technology where a lot of innovation is happening in the US, and America is very clear that they want to be the world leader when it comes to crypto and Web3 technologies. And the way things are happening, the kind of decisions that are being made in the US and the Trump administration, the current Trump administration is very, very pro-crypto. I think it's time that we also sort of look at it very seriously and do not look at it as just in a very very myopic view, but just broaden the horizon and see what all India can do out of it. I think that if and it's very, very, very clear, like in the US, President Trump and everyone is very, very gung-ho about this technology, and we should not miss out. I do believe that US, the way things are going right now, US is actually going to come out very, very stronger and is going to be leader. And the rate at which these developments are happening is insane. Like I'm seeing it every day. The way US is moving when it comes to regulating and making US the center of crypto. I think it's very, very impressive. I think it's high time that India, if we want to continue to remain relevant in the technology space, both in crypto as well as in AI, I think it's high time that we take these technologies very seriously and also take actions in collaboration with the industry and make sure that domestic companies are essentially getting promoted. Just to give you one example, the way crypto industry is here in India right now is that if anyone is trading if an Indian customer is trading internationally, there is no clear taxation that is implied. So what's happening here? It's clearly the talent, the users, everything is moving offshore, which is what nobody wants to see. So I think we need to recalibrate not just the idea of crypto, but also like in terms of how India can essentially come out as a leader when it comes to emerging technologies like crypto and AI, and also how can we support domestic companies because India truly has a lot of potential. I've seen it on the ground. I can vouch for it. I think we can really come out very, very stronger, but we can't wait for other countries to take a lead and then us being a follower.
Well, yes, why go so far away to US? Dubai also seems to be taking very strong leads here. Sumit, initially in the last couple of years, and we've discussed at some points, that a lot of developers, a lot of crypto startups, Web3 startups for that matter as well, have moved out of India and Dubai and Singapore and various other countries as well. What is the situation right now? How many developers would you say India has right now? How many Web3 blockchain businesses here? And the kind of use cases that you talked about, where all is it getting utilized?
Yeah, absolutely. I think, Manisha, you would be surprised to know that India is actually number 2 when it comes to developers and blockchain and Web3 technologies, number 2 in the world. And in next couple of years, it is going to be number 1 globally, more than US. Right now, US is number 1, number 2 is India. And one very, very interesting anecdote is when I was talking to one of my friend in the US, they invite startups. It's like a Y Combinator kind of thing for crypto startups. And they're in their cohort, 25 to 30% of applications are Indian founders. Right, and it's borderless, so they can work for those companies. It's just that when it comes to value creation, when it comes to incorporating their businesses properly, they are not comfortable setting up their businesses in India. All of that value is getting captured outside India, which is a big loss to the nation, which hurts me at times. But I think that's the ground reality. I do still see a lot of talent migration happening from India to, let's say, UAE or to Singapore or other countries. In fact, to US now, a lot of people were actually thinking coming back from US to India to build their startup, but with the changes that are happening, they are now rethinking that whether should we continue to be in US and build our crypto startup there. So those are some of the challenges that I'm seeing on the ground and some of the losses that India essentially will have to face if
Clearly.
we don't turn this stance into positive.
All right, Sumit, thank you so much for sparing time joining us this afternoon on this conversation. Manisha, thank you for joining in as well. With that, it's a wrap on this edition of Halftime Report. We leave you with the Nifty tantalizingly close to the budget day high of 23,632, just 20 points away. We count down to results from Asian Paints anytime now, and Business Lunch takes you through the next 30 minutes. Thank you so much for watching.
Speaker, I present the budget for 25-26. This budget continues our government's efforts to A. Accelerate growth, B. Secure inclusive development, C. Invigorate private sector investments, D. Uplift household sentiments, and E. Enhance spending power of India's rising middle class. Together, we embark on a journey to unlock our nation's tremendous potential for greater prosperity and global positioning under the leadership of Honorable Prime Minister Shri Narendra Modi. As we complete the first quarter of the 21st century, continuing geopolitical headwinds suggest lower global economic growth over the medium term. However, our aspiration for a Vikasit Bharat inspires us, and the transformative work we have done during our government's first 2 terms guides us to march forward resolutely. Our economy is the fastest growing among all major economies. Our development track record for the past 10 years and structural reforms have drawn global attention. Confidence in India's capability and potential has only grown in this period. We see the next 5 years as a unique opportunity to realize Sabka Vikas, stimulating balanced growth of all regions. The great Telugu poet and playwright Gurujada Apparao had said, "Deshamante matti kadoy, deshamante manushuloy," meaning a country is not just its soil, a country is its people. In line with this, for us, Vikasit Bharat encompasses zero poverty, 100% quality good school education, access to high quality, affordable and comprehensive health care, 100% skilled labor with meaningful employment, 70% women in economic activities, and farmers making our country the food basket of the world. In this budget, the proposed development measures span 10 broad areas, focusing on Garib, youth, Annadata, and Nari, spurring agricultural growth and productivity, building rural prosperity and resilience, taking everyone together on an inclusive growth path, boosting manufacturing and furthering Make in India, supporting MSMEs, enabling employment-led development, investing in people, economy, and innovation, securing energy supplies, promoting exports, and
Market off morning highs. Trump puts imposition of tariffs on Canada and Mexico on pause following talks. China retaliates with fresh levies on U.S. imports. Capital goods and energy are the big gainers, even as consumption stocks drag. Even as banks grapple with the liquidity, the Secretary of Department of Financial Services says that the government is against locking up bank capital for liquidity coverage. He adds that this view has been conveyed to the RBI. The Defence Secretary says contracts awarded will top 2 lakh crore rupees by the end of year, making FY25 a record year for contracts. He expects the order books of OEMs and component vendors to be full for the next 4 to 5 years. Greater uncertainty around tariffs, trade dynamics and forex volatility gives gold a boost, powering it to a new high of over $2,830 per ounce. Experts say $3,000 per ounce may well be on the cards. CNBC-TV18 Citizens MPC sees a rate cut on Feb 7th from the RBI by a 4:1 majority. None expect a CRR cut. Nomura and JP Morgan economists see 100 basis point rate cut through the year, while Citi and SBI see a 50 basis point to 75 basis point cut in rates this year. Hello, good afternoon. You've tuned into CNBC TV18. You're watching Business Lunch with me, Vinny Motiwala. I'm in the Motilal Oswal studio. Thanks so much for tuning in. A quick look at what the market is doing today. So not a bad picture coming in, right? Exactly different from what we saw yesterday where we saw a cap down start. Today we've seen a cap up opening coming in for the market. Nifty holding on to gains of almost 1%. Day's highest point, 23,600. About that mark is what the Nifty is trading at. Sensex is up almost 890 points in trade as well, holding on to gains of more than 1%. Let's look at the contributors that are coming in for the Nifty 50 today. We have some of these banking names that are topping the charts. So we have HDFC Bank, ICICI Bank, SBI. That's pulling the Nifty upwards today. We have Reliance that's performing and holding on to gains of 2%. So among the top contributors surely there, as well as L&T. That is also among the contributors. Axis Bank making the list. So clearly what we're seeing coming in is the private banking side is managing to hold on to very strong gains. And look at the Nifty Bank today on that front. Nifty Bank is also holding on to very, very strong gains, outperforming actually the benchmark indices is what we're seeing in terms of Nifty Bank coming in. Other than that, let's pull up the mid and small cap. Nifty mid and Nifty small cap, both are managing to hold on to gains. Nifty mid cap actually is holding on to gains of almost in tandem with the benchmark indices, 1% uptick. Small cap, a bit of an underperformance, but still holding on to that positive side of the day's highest point is what the small cap is trading at, 0.4% of gain. A sector that's trading in the red today is the Nifty FMCG, so keep an eye out on that. And a lot of losers and gainers in trade on the Nifty 500 front. We have Trent, which is down and out in trade. Gland Pharma, Keynes Technology among the top losers, while the top gainers, NLC, Polymedi, Cure, as well as ABB and Castrol managing to hold on to very, very strong gains. But yes, that's how the market shape up is looking like this afternoon. Let's move on and start with the story for today. The first one is on US President Donald Trump, who's saying that the tariffs against Mexico and Canada would be put on pause for a month. Donald Trump confirmed the deal on his platform Truth Social, where he wrote that Mexico's president agreed to deploy 10,000 Mexican soldiers on the border. Later, he also posted that he was pleased with the initial outcomes and was keen to see whether or not the final economic deal with Canada could be structured. Take a look at this report.
U.S. President Donald Trump backed away from his threat to impose a steep 25% tariff on Canada for 1 month, according to Canadian Prime Minister Justin Trudeau. The decision came after the two leaders had a phone call that Trump said went very well, during which Trudeau promised to deploy new technology and personnel along its border with the United States to stop the flow of fentanyl. Just hours earlier, Trump also paused a planned 25% tariff on Mexico after President Claudia Sheinbaum agreed to send 10,000 National Guard members to the border to stem the flow of illegal drugs. She told reporters on Monday the agreement included a U.S. commitment to act to prevent trafficking of high-powered weapons to Mexico.
I told him we wanted him to pause the tariffs, so we reached that agreement. But I also explained to him that the amounts of high-potency weapons that enter from the United States into Mexico is a serious issue.
Trump said Mexico sending soldiers to the border would stem the flow of narcotics, fentanyl in particular, as well as curb illegal immigration.
He asked me how long I wanted to pause tariffs. I said forever. He told me how much time. I told him a month. But I'm sure that during this month, we'll be able to deliver good results for his people and the people of Mexico.
Trump said the month-long suspension would be used to engage in further negotiations. U.S. tariffs on Mexico, Canada, and China had been set to take effect at midnight on Tuesday.
And when Trump was later asked if anything similar could be expected for the 10% tariff imposed on China, this is what he had to say. Listen in.
China will be speaking to China probably over the next 24 hours.
On fentanyl in China, President Trump.
We don't want fentanyl coming into our country. Now, we had another big thing, speaking of China. China's involved with the Panama Canal. They won't be for long. And that's the way it has to be. What I have discussed is we'll have some good meetings with China. We have meetings planned, and we'll see what happens. But that was just an opening salvo. If we can't make a deal with China, then the tariffs will be very, very substantial.
Meanwhile, China has decided to retaliate against the United States' decision to impose 10% tariff on Chinese goods. According to agencies, China will impose 15% tariffs on United States coal and LNG. An additional 10% tariff will be imposed on crude oil, farm equipment and some autos as well. Let's move on and also listen into Jefferies chief market strategist David Zevos, who had says that the tariff pause and the way forward for the market in terms of the news reaction coming in. Listen to his views.
We're starting to know that the Donald Trump era is upon us, and there's some certainty to the chaos. And I think that's just going to slowly become the norm here in the market. We're going to wake up and there's going to be a tweet, and we're going to get a Fed meeting. You saw that on Wednesday, and after the Fed meeting, there was a tweet. The tweet seemed to move the market even more than the actual statement or the press conference. We have the tariffs coming in. So I think we're going to get used to this. We've kind of had 4 years of a very quiet administration, an administration that did not seem to involve itself in the day-to-day of markets. And this one is exactly the opposite. We were there in 17, 18, and 19, and obviously in 20 with COVID, everybody was all hands on deck. But I think we'll get used to it, and I think we'll understand it, and I think the markets are actually taking this all really well. I don't want to go too far out on a limb, but I think there's a lot of controversial views about what tariffs really mean. Some people have very strong views about inflation, others don't. I think the economics profession has some biases there, but we saw 17, 18, and 19, we saw tariffs, we saw this movie, and inflation went nowhere. So I think there's a lot of people who actually kind of want to see it happen and kind of watch the data as a result of it. We'll see. We'll see how it goes. But I was kind of happy with the market reaction, to be honest with you. I thought the bond market did what it was supposed to. Stock market took a little bit of a hit, not a huge one, bounced back. And then, of course, as we got some clarification that some of the requirements that the president was asking of trading counterparties in Canada and Mexico were going to take place with vis-a-vis the border, the tariffs were lifted, at least for 30 days.
And Rahul Chadha, founder and chief investment officer at Shikara Investments, also spoke to CNBC-TV18 earlier on the tariffs imposed and the pause taken by the US. Listen in to his views.
All the noise, all the rhetoric you see on tariffs is basically escalate to de-escalate. We saw this early this morning, Mexican president promising 10,000 troops to guard the border. And the same thing got repeated with Canada. So I think there is a call, or there are interactions scheduled with the Chinese authorities in the coming days. And the hope is all these tariffs come with a lag, basically, and some solution is going to be found out. And our sense is, look for China, it's going to be do or honor a part of the deal from 2018-19, buy some of the goods, sell part of the TikTok business, which is in US. And again, at the end of the day, the administration here wants to leave a legacy. President Trump wants to leave a legacy of a strong growth rate. So I don't think they do anything significant to derail the story. But yeah, there is going to be a lot of noise, a lot of bumps along the way.
On that note, we're going to step into a very short break. When we return, we'll get you exclusive excerpts from our conversation with the Defense Secretary, and we'll say why defense stocks are surging following his comments.
For this journey of development, our four powerful engines are agriculture, MSME, investments, and exports. The fuel our reforms, our guiding spirit, inclusivity, and the destination Vikasit Bharat. This budget aims to initiate transformative reforms across 6 domains. During the first 5 years, these will augment our growth potential and global competitiveness. The domains are taxation, power sector, urban development, mining, financial sector, and regulatory reforms.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 Budget Headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies for
Welcome back and thanks for staying tuned into Business Lunch on CNBC TV18. Now let's move on and talk about why defense stocks are buzzing in trade today. The Defense Secretary Rajesh Kumar Singh says that India is on a track to sign the largest number of contracts. Speaking to CNBC TV18, he also said that the government needs to ensure that the contracts triple compared to last year. When asked about Donald Trump's message asking India to buy more defense equipment from the US, he said that India is willing to procure more from the United States if they meet the requirements on the quality and quality front for the country. Listen in to what more he had to say.
We are on pace right now to sign the largest number of contracts ever in our history.
Okay.
The largest last year was another high of 1,08,000 crores. This year we've already hit 1,15,000. And my intent is to double last year's number before the end of this financial year, and the result in terms of expenditure will follow thereafter.
So doubling by the end of this financial year, sir?
Yes, I intend to cross 2 lakh crores and maybe even more. And we intend to ensure that order books are full across the board in the defense industry so that everybody has visibility, everybody from the OEMs down to the component manufacturers, that their order books are full for the next 4 to 5 years, and everybody is on the same page when it comes to fulfilling our capability gaps. We do have some procurements which are on the anvil where American companies would be in the picture. And as long as they are able to meet our requirements in terms of quality and in terms of certain levels of indigenization, of course, we'll be, those are carrots that we will be able to dangle before the Americans. We are already, meeting a good proportion of our requirements from capable American companies, and we intend to continue doing so. There will be significant buys, and some of that will go to the US as well.
And speaking to Shireen Bhan at CNBC-TV18's budget verdict, Department of Economic Affairs Secretary Ajay Seth spoke about the relief in income tax that will soon have an effect on consumption and slammed commentary about reduced capex allocation. Listen in.
Whether it is on a capex or on reforms or several schemes, will always have a lag. But as far as consumption, the big tax relief, which is 0.3% of the GDP, 1 lakh crore, individuals get to know that from 1st April onwards, that is an extra money in their pocket. They may use it for saving, they can use it buy durables, they can buy it for another EMI, for a larger house, etc. So the impact starts immediately, the very start of the financial year, because that money is extra money is available for them to use it in a manner, or even taking the family out for a tourist site, and hopefully within India. See that in terms of giving a boost to the economy, this is the fastest means available. Till about 5 years back, we were 1.5% of the GDP. That used to be the capex from union budget. Today it is 3% plus. But if we add what the grants Government of India provides to states for providing for their capital expenditure, prime example, if you can say Jal Jeevan Mission, there's a huge amount of provision getting made there. The total provision is 15.5 lakh crore, which is 4.3% of the GDP. And please look at the number. Total fiscal deficit is 4.4%. Yeah. That means almost the entire borrowing of Government of India is going for capital expenditure. Since mid-70s, we never had a revenue surplus. So these are the limits of capital expenditure, what the government can do, union government can do.
Ministry of Electronics and Information Technology Secretary A. Krishna also spoke to CNBC-TV18's budget verdict on the PLI scheme for electronic components and comments that the mobile PLI is the best performer.
On the new scheme which relates to electronic components, there's a process that it has to go through in the government system. Just because it doesn't find a specific mention in the budget speech, it doesn't mean that it won't come up during the course of 2025-26. PLI on large-scale electronic manufacture, which is mobile phones, is still the best performing PLI amongst all, and disbursement is continuing quite strongly.
Now, the new direct tax code will only have half the text of the current laws, and words like assessment here will vanish, says Revenue Secretary. The CBDT chairman says that the new legislation will be simpler, inspired by similar exercises in the UK and Australia. The new law is scheduled to be introduced in the Parliament this week.
You know, we are making a very sincere attempt. This particular thing, in other sovereigns also, this has been attempted. Some people have taken years, 4 years, 5 years, to change the new law, to rewrite the law. We had some groundwork earlier in some committees which they did the work. But this work, this piece of the work, bringing it has been done in about 6 months. So, obviously, you know, while we will say that we have done a great job, we don't know. I mean, so we have to, the suspense is, the jury will still be out.
Yes, the jury is out, and we'll have to wait for you to actually bring the bill.
But what I can say is that the words will be halved, chapters will be halved.
As a result of this entire exercise in this 6 months, the act has been now, the proposed act would be about half. I would not say exactly half, but it will be about half. It will be about half because we have to take care of different situations, you see. The shift in approach is that, well, we have taken some provisions which were elaborated in the base act to the rules also. And also we took inspiration from the similar exercise which was done in other sovereigns. For example, UK, Australia.
And on that note, we're going to slip into a very short break. As we slip into the break, here are some opinions on the market and the impact of budget announcements from Sanjay Mukim, Head of India Equity Research at JP Morgan.
I don't think from a tactical point of view, we are out of that uncertainty zone yet. And this is likely to continue, I would expect, for the next few months at the bare minimum. Valuations, at least on the index level, you've started to get a bit of a discount to global equities, principally the S&P, and that should become a point in favor of markets. But I think that you're not going to get a trend up until some of the macro issues are sorted. Hey, look, the government's made a clear choice, right? In an environment where resources are constrained, where revenue momentum is slowing down, they have clearly decided that this is the time to start to support flagging consumer outlook, right? The impact of this will obviously filter through to consumers over time because, the tax cuts don't accrue on day one. They will be earned by taxpayers monthly basis for the next year or so, right? How it affects sentiment, how it shows up in company earnings, we need to be a little bit patient to my mind. In our portfolio allocations, we have upgraded consumer discretionary X the four-wheelers, and we've downgraded the capex bit to neutral. The hope for capex, Surabhi, without getting too despondent, is that you start to see better activity in non-government sectors, whether that is corporate capex or let's say even real estate. And even the measures they've taken on changing tax slabs should on the margin help real estate demand improve as well.
Macro pundits and chart wizards. Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Welcome back and thanks for staying tuned into Business Lunch on CNBC-TV18. Now let's move on. And Mumbai's Municipal Corporation, the BMC, presented its budget of 74,427 crore rupees for the year 25-26. Santhya is joining with us to give us more details on this one. Santhya?
So this is the third consecutive year that the BMC budget was presented to an administrator and not to a standing committee. Reason? The term of the corporators expired in March 2022 and the elections for the new corporators are yet to be held. In this 74,000 crore rupees budget, BMC did not announce any new infrastructure projects. In fact, it focused on completing the ongoing ones such as Coastal Road and GMLR. In terms of taxes, BMC announced that it's planning on imposing a tax on commercial properties in slum areas. It also said that it's planning on introducing a solid waste management user charge. BMC announced that it's planning on opening 25 new public clinics called Apla Davakhana and 3 physiotherapy centers across the city. Other than this, initiatives like eco-friendly cremation and proper disposal of residue from idle immersion showed that BMC is planning on focusing on environmental initiatives in this particular budget and the coming months of this year. Another interesting announcement was regarding the introduction of cyber security program for students in schools. This is to ensure that students stay away from cyber crime, especially cyber fraud, and use internet in a safe manner.
Thanks so much for that, Santhya. But with that, we're absolutely out of time on this edition of Business Lunch on CNBC-TV18. Thank you so much for tuning in. Up next, your Midcap Radar.
For the 8th consecutive time, Finance Minister Nirmala Sitharaman will rise to present the Union budget in a few hours from now.
Hello and welcome to CNBC-TV18.
What will she deliver on? What will she sacrifice? That will be one big question. The key tax-related asks. We will tell you right here.
Catch the most authoritative analysis of Budget 2025 with the biggest and the most influential voices.
We're here at the NSE on a special trading session for the budget.
The Finance Minister rising in Parliament to present Budget 2025.
This budget continues our government's efforts to personal income tax reforms with special focus on middle class. I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
this issue that Donald Trump fears so much. We offer this question of the land. I don't know what Donald Trump has to do with South African land.
It's a strong day on Dalal Street with the Nifty crossing the highs of the budget day as we count down to the final 120 minutes of the trading session. You're watching Midcap Radar live from the CNBC-TV18 Motilal Oswal studios. I'm Hormuz Fatakia. With me is Vivek Iyer, and the markets, Vivek, have completely discounted China's tariff announcements and are moving from one high to another.
That's right, Hormuz. A very good session, especially as far as the broader end of the markets are concerned. We have quite a lot lined up in today's show. Let's start off with the top headlines. Market moves back to the day's high even as China retaliates with fresh levies on US imports. Global cues positive after Trump puts tariffs on Canada and Mexico on pause. Mid-cap index well in the green but slightly off the day's high.
Defense stocks HAL and BEL get a boost on the back of Defense Secretary Rajesh Kumar Singh's comments. The Secretary tells CNBC-TV18 that the defense sector plans to cross contracts worth 2 lakh crore before the end of the financial year.
KEC International is under pressure after reporting Q3 numbers. Company revenue growth has been tepid, but order book has been strong and margins also improved. Management tells CNBC-TV18 that top-line growth for FY25 may be under 15%.
Samvardhana Motherson and Sona BLW have rebounded in today's trade after tariffs on Canada and Mexico are delayed by a month. Mexico contributes nearly 4% to Samvardhana Motherson's revenue.
NLC India gains more than 8% on the back of good quarterly numbers. Net profit more than doubles on the back of a one-off. Board has declared an interim dividend of 1.5 rupees per share.
Crossing the budget day high is the Nifty, going from strength to strength. Now 23,650 on the index. The Sensex is up nearly 1,000 points. So good going for the benchmark indices. The mid caps and the small caps too continuing to do well for themselves in today's trading session after this series of underperformance that we have seen from the broader markets. But before we get to Godrej Properties and their results, Vamakshi is here to take us through a lot of the mid cap movers this afternoon. Vamakshi.
Well, good afternoon, Hormaz. Quite a good session for the mid-cap index, right? And on that note, let me first pull up the list of the top gainers today. Novama Wealth features in that list. That stock is seeing an uptick of almost 12%. Poly Medicure continues to gain in trade today after the company declared its numbers yesterday during market hours. The stock is up somewhere around 7%. Sundaram Finance is the next one that we're watching out for, because that stock is also seeing an uptick of 7.46%. Started at the low point of the day, and in fact today it has surged higher. Techno Electric slightly off the day's highest point, but nevertheless gaining with around 5.5%. Apart from that, let's also look at several earnings reaction. NLC India reported a strong set. That stock is up nearly 8%. Castrol India, GIC as well as Subros are some other counters that are gaining anywhere between 2 to 5%. Apart from that, there are some stocks that are reacting negatively to their numbers. That includes Thomas Cook. That stock is seeing a downtick of almost 12.38%. Eris Life Sciences trading near the lowest point of the day, down nearly 4.4%. Tata Chem has slightly recovered from the day's lowest point, but that stock is too down somewhere around 3%. And Premier Energies opened in the green, but the stock has seen a continued downtick. Apart from that, we have several PSU banks that are in focus today. All of these counters, as you can see, Union Bank, Indian Bank, Canara Bank as well as Bank of India are gaining anywhere between 2 to 4%. And lastly, let's also take a look at this, some of the top losers today. Triveni Turbine is down somewhere around 8.4%. Ajanta Pharma, Keynes Tech as well as Bata are some other counters that are down and out in trade today.
Vamakshi, thanks a lot for that. A lot of movers in the broader markets. By the way, Godrej Properties is off the highs of the day, and that is after it shared its investor presentation as well, where the the guidance for the full year, where it's talking about the fact that it has met its business development guidance for the full year, but deliveries are at 79% in the first 9 months. Customer collections are still at 67% for the first 9 months, and booking value is at 71% for the first 9 months of the year. So they said that they are on track to meet all of these parameters. It will be interesting to see how the fourth quarter turns out for the company as well, Vivek.
Well, there's one comment from Pirojsha Godrej, right at the end. What he's saying is that they are on track to surpass their booking guidance of 27,000 crores in FY25. And this is going to be in addition to achieving their highest ever cash collections, deliveries, earnings and operating cash flow. So some positive commentary along with the fact that to go ahead and meet their stated FY25 targets, Q4 has to be quite strong. But moving on, let's welcome Shrikant Chauhan from Kotak Securities for a technical check on the market. Good afternoon, Shrikant. Thank you so much for joining us. How are market looking at the current state? Do you think this bounce or this rally can sustain?
Good afternoon, Vivek. Good afternoon, Hormas. This market is very clearly moving higher because the way it has formed its technical pattern. One thing is very clear that the market is on the verge of crossing all its important resistance level. By crossing the level of 23,500 and today the level of 23,650, it is clear that we are heading towards the next major level of 24,000. So even at these levels, I am of the view that we should look for adding some long positions with a stop loss close to or below the levels of 23,500. Now, it looks difficult for the market to break the level of 23,500 unless and until something comes negative from the US. So in that case, only we could see the market dropping below 23,500. Otherwise, we are heading for the levels of 24,000.
Interesting. 23,500 now becoming a base for the index as per Shrikant. But Shrikant, good afternoon. What are the specific stocks that you're recommending now?
Good afternoon, Hormas. I think all these NBFCs, they are doing really well. Bajaj Finance has already broken its important multi-year highest levels of 8,000. And now after crossing these levels, based on technicals, we could even see the levels of 10,000. That's the overall view. But I think other NBFCs, I think that should participate in this move. And in that case, we believe Shriram Finance should do well from current levels. It is currently around 572, 573. Based on technical formation, we could see the levels of at least 610, 635 in next few days or few weeks. So it will take some time, but at this level, risk reward ratio looks good. It's a buy at current levels around 570, 572 with a stop loss close to 550. And the other stock which we like is from the hospitals. Apollo Hospital looks good. It is around 6,800 levels. But if we see the entire structure of the stock, then the stock has spent maximum time between 6,500 and 7,800 on the higher side. So based on technical formation, I'm again expecting stock to move towards 72 or 7,300 levels. So it's a buy at current levels. And if there is any trading position, then one can keep stop loss around 6,500.
Thank you so much, Shrikant, for joining us and giving us a view on the markets as well as your individual trading bets. Let's now slip into a short break. The management of Suzlon Energy joins us next to discuss the budget expectations, how they're looking at the operating environment going forward.
In here, and he must keep his America. We will keep our South Africa.
I think FI selling is not beyond a point a big negative. It is that whether India is doing well or not. And then there is some correction of excesses and stuff like that, which clearly seems to have been done. One reason has to be India related, that Indian results came out very bad.
We are hitting the limits on what the government can directly do in terms of capex. And therefore, the guidance from the government was that we will maintain capex as a percentage of GDP here onwards, that the scope for us to do more is now gone. So now they're experimenting with For example, this 1 lakh crore that they've decided to spend on urban infrastructure. They have to find such avenues so that capex continues, but there is very little more they can do at the center level. Investment activity in the country is going to be a lot more dependent on how well the real estate cycle turns, how well the power generation cycle turns. And I think this almost obsession with waiting for the government to spend an extra 30,000-40,000 crores, in the larger scheme of things, these are all rounding errors.
I think FI selling is not beyond a point a big negative. It is that whether India is doing well or not. And then there is some correction of excesses and stuff like that, which clearly seems to have been done. One reason has to be India related.
Welcome back to Mid-Cap Radar. Well, we have a special guest, Girish Tanti, the Vice Chairman at Suzlon Energy, joins us now. Thank you so much, Mr. Tanti, for joining us. First up, we have to talk about how exactly the budget panned out, especially as far as the renewable energy is concerned. Not too many granular details is what we saw from this particular budget, but overall, from the point of view of a wind turbine developer and also from the point of view of a renewable energy, one of the largest renewable energy players, how did you view this particular budget?
Yeah, hi. Good afternoon, and thank you for taking me today. I think, we have had a very holistic budget this year, which is in line with our Prime Minister's Viksit Bharat, vision that he has set for the country. And it covers very nicely various segments of the society in a balanced way. So I think overall, the budget has been holistically very nicely done for all segments of the society. If we talk specific to renewable energy, I think we have had three important components here. The first one is that we have got the announcement of the National Manufacturing Mission, which is primarily going to focus around Make in India and how do we strengthen our ecosystem around that. The second one is on the National Export Mission, which is again going to primarily focus on how India can be the global hub for green energy manufacturing. And the last one is on the green corridor, strengthening our grid systems to take care of the renewable energy growth that we have. If I was to just to quickly touch base on these ones, I think the manufacturing focus is one of the first one, which is of utmost important. And the key elements there is that today, as we have seen, the growth of wind and solar in the country, there has been there is a need for harmonizing the policies between wind and solar, be it on the domestic content requirement, be it on the PLIs and other elements. And I think with this mission in place, we will see a more fair and equitable growth of both the sectors, which is very crucial because ultimately, it's important that wind and solar kind of grow together to make sure that the cost of energy to the end consumer is balanced out. Because while solar produces during the day, but the peaks which we have in our country in the morning and evening, this can be supplied from wind energy. So a balance of wind and solar together will ultimately deliver the least cost option to the end consumers. If you look at the export potential, I think, unlike in solar, where our local content today, from all the solar projects that's getting built, only 20% is made in India currently. Whereas in wind, we are already at 64%. And I think the industry is poised that by 2030, we will hit close to 85% local. And we are effectively, with the current manufacturing base that we have in the country of 15 gigawatts plus, as per the last Global Wind Energy Report, India is poised to take up at least 10% of the global market share in the wind market worldwide. So I think having the export mission will also be very crucial. And the grid expansion, which is happening, it's also important that our infrastructure grid, which is getting developed, is also keeping up to pace with the renewable energy buildup of assets.
Understood that. Thank you so much for breaking down the entire budget for us in that particular manner. Well, coming specifically to the wind energy sector, the government has set out a target of adding close to 50 gigawatt of renewable energy capacity every year, of which 10 gigawatt is expected to come with the wind energy itself. How has on-ground tendering been? We understand that that's been slightly muted against the government's own target. Number two, the feedback we get from wind energy players is the fact is that there is land availability issues, both in terms of land having enough high PLF factors and also having enough wind power capacity. So what is the kind of issues the wind energy players are facing when it comes to execution and also the tendering pipeline?
Yeah, so here if you see today, the industry we are just reaching about 48 gigawatts of wind installation against the country's target of 100 gigawatts by 2030. So we have 6 years to catch up, and we are just hitting the midway point of 50 gigawatts now in at this point in time. So with that, we need another 50 gigawatts to come in the next 6 years. And I think if you look at the entire value chain, then from a manufacturing point of view, we have a good capacity as an industry. If you look at from an execution point of view, two key elements there. One is on the grid system, and other is on the land. If you look at the grid systems, then I think largely, of course, these investments are driven by and managed by government. And I think we have a very strong plan to make sure that the 500 gigawatts of renewable energy development by 2030 is achieved. So the grid systems are getting developed, keeping that in mind. Third component is the land component. And I think, also I wanted to kind of get off the myth that, whether do we have enough land available and is it of good quality and things like that. But just to give you some statistics, today, the total wind potential of India is 1 terawatt, okay, of which we've just done about 48 gigawatts, which is just about 4% of the land available for investment in wind is utilized. So we still have 96% of land available in our country to do the projects. So, there would be challenges on last mile implementation, ROW and other things, but that's part of the business. You have to manage those and work with the local communities to make sure we have a overall economic development of those areas wherever we are building the projects. So I think there is more than enough land availability in our country to grow the sector. So the 50 gigawatts target which we have as an industry, I think we are pretty strongly kind of believe that we should be able to kind of meet that and probably beat it by 2030.
Right, Mr. Tanti, good afternoon. Thank you for joining in. How does this benefit you as a company, right? Because you've mentioned you've mentioned a 50 gigawatt plan over the next 6 years. With you being one of the leading players in the industry, what part or how much will you be able to contribute through for this? And is there any inorganic acquisition opportunity that you are eyeing currently that will boost your capacity towards this endeavor?
Yeah, so I think today, if you see, cumulatively, we've had close to, 25 to 33% of the market that we kind of enjoy today in the industry. And going forward, I don't see any reason why we shouldn't be able to be within that band. So naturally, as the industry grows, the pie will be there. And as the overall growth comes, we will try to ensure that we maintain our market share in that growth. So from that point of view, we are pretty confident with the kind of products that we have, the projects that we are working, the client relationships that are built. And now also what has happened is that the market has, the overall market segments, if you see, now we have 3 market segments. You have the traditional bidding market, which has been there historically, which continues to grow. And then second market, which has opened up due to, deregulation of our regulatory system in the grid systems. We have the private sector. So today, all large Indian corporates have also set up their very strong focus growth for the decarbonization. So there is a strong growth from the India Inc. on investing in renewable energy. And the third segment is the PSU segment. The government themselves, all the private public sector units are also investing in renewables. So now we have more, almost 3 separate segments which are growing. If you see today's Suzlon's order book, almost 50% of it is coming from the private sector, 25% coming from the bidding market, and 25% coming from the PSU segment. So there are various levers which will help to kind of grow into this space.
Mr. Tanti, one thing which you want to understand is that when it comes to the actual bidding, we understand that most of the tenders now are looking for more round-the-clock solutions, hybrid, FDRE. That is the kind of solutions that are coming. In that particular context, how does wind compare versus solar? Will you also be looking at a blended version of bidding where you'll probably tie up with other players to provide round-the-clock solutions?
Yeah, so I think two things there. The first one is that what's going to be the share of wind in the hybrid situation, and other is Suzlon kind of going to be able to provide an RE solutions to our customers. So if I take the first one, I think today when you look at round-the-clock power, and if you look at CEA's own data in terms of what is the best configuration to have the least cost option in the round-the-clock power, then I think the more you have the component of wind in your portfolio, you will be able to have the least cost option. So for sure, there is going to be a significant share of wind going to be there in round the clock for any projects that are coming. And largely because, as I explained earlier, that your peak demand of morning and evening in India cannot be served by solar, whereas wind can serve that demand. So when people are looking at round-the-clock power, cost of the energy from a consumer point of view, wind will have to be equal or better than solar in the overall portfolio to keep the cost of generation the least. In terms of Suzlon's readiness to be able to provide RE solutions, round-the-clock solutions to our customers, definitely I think we are a technology enterprise and our focus is to make sure that we are able to provide comprehensive RE solutions to our customers. And as the demands are coming in that direction, we are preparing the organization in that space also.
All right, Mr. Tanti, thank you so much for sparing time and joining us today. Wish you good luck for the road ahead. That was the management there of Suzlon on the reactions post the union budget. Take a short break, more on the markets and specific stocks on the other side. Stay tuned.
Came out very bad. I think it is one of the best budgets that we've seen in many, many years. And I tweeted it's a dream budget. So first thing is that you normally want money with the public rather than with government. It should just be the general thumb rule of looking at anything, that money with public is better than money with the government. You have not said that, oh, you cut a tax rate across the board, therefore the rich will get much more. It has come to the correct audience in that sense. So it has to be travel. It has to be savings. It has to be these car consumer durable types. As I said, we are not buying those, but they could. The overall markets are down a lot, then India may outperform because A, it's not directly affected, and B, don't worry about markets like Taiwan because they have been closed for a week. So if you just look at how TSMC ADR was trading during this period because of NVIDIA and others, and then the TSMC local fall. So don't get totally carried away. A little bit you're allowed to get carried away. But the point is that the budget was good and this tariff situation is bad.
Welcome back. There is no stopping the Nifty now. 23,700 on the index at the highest point of the day, continuing to build on to this very, very sharp short covering move that we are seeing after the reversal of tariffs and despite China's retaliation earlier in the day. But there is one stock that is not doing very well even in a market like this is Trent. That's down at the lowest point of the day, 6.5% lower on the stock. There are concerns now with the relaunch of Shein back in the country by Reliance Retail, and that appears to be weighing on the Tata Group company that has already corrected almost 35% from the highs of the day. And before we call time on the show, also quickly pull up MobiKwik. That reported results just a few minutes ago, and that has recovered from the lows of the day but is still trading at around 400 rupees and seen in a very few days of its listing has seen both the highs and the lows. A 700 rupee high post its listing, now trading at just 400 bucks. With that, it's a wrap on this edition of Midcap Radar from Vivek, me and the team that put this show together. Thank you so much for watching. MF Corner on the other side.
Tonight, I am announcing Canada will be responding to the U.S. trade action with 25% tariffs against $155 billion worth of American goods. This will include immediate tariffs on $30 billion worth of goods as of Tuesday, followed by further tariffs on $125 billion worth of American products in 21 days' time to allow Canadian companies and supply chains to seek to find alternatives. Canadian energy powers American manufacturing, businesses, and homes. Of America's top 5 trading partners, Canada is the only one with whom the United States runs a trade surplus in manufacturing. And Canada buys more goods made by Americans than China, Japan, and Germany combined.
Presently, taxpayers can claim the annual value of self-occupied properties as nil only on the fulfillment of certain conditions. Considering the difficulties faced by taxpayers, it is proposed to allow the benefit of 2 such self-occupied properties without any condition. To streamline the process of transfer pricing and to provide an alternative to yearly examination, I propose to introduce a scheme for determining arm's length price.
Hello and welcome to Mutual Fund Corner on CNBC-TV18. I'm Vinny Motiwala in the Mumbai studio. Let's talk about the Union Budget that was just taking place on 1st of February, and that was the Saturday. Now, Union Budget 2025 has introduced several measures that we saw that was aimed at empowering the middle class. Tax relief of up to 12 lakh rupees under the new tax regime for all those with the salary of 12 lakh rupees was one of the key highlights that came in on the budget. And this is a decision that is likely to boost, the consumption side, maybe an investment that could see a boost coming in, including mutual fund industry. Is that what we could see maybe? We're going to discuss all of that with Mihir Bora, Chief Investment Officer at Trust Mutual Fund, joining with us. Thank you so much, Mihir, for joining with us this afternoon on CNBC-TV18. It's a pleasure having you in the show. Budget surely has made a lot of announcement. Everyone was cheering when they heard that, for the salary employees, the 12 lakh rupees, you do get that relief coming in. But, what do you think are the factors that might actually have come in from the budget, the measures that have come in from the budget? Do you think that is something that will boost the consumption story? Do you think that is something that we could see an increase coming in maybe on the investment side?
Certainly. First of all, thanks for having me on the show. Always a pleasure. See, the budget provisions for the middle class and the taxpayer, I think, impact the economy in a couple of ways. One is, of course, the fact that you have more money in the hands of the taxpayer, which they can consume or save or invest whichever way they want to. There is also, a relief from the perception that it's only the taxpayer who is bearing the burden of economic growth, so to say. So there was this underlying, resentment, so to say, because of increased taxes and the increase in the capital gains tax in the last budget, etc. So there was a thing that, it's only the taxpayer who's bearing the burden of growth, but now at least it seems to be more fair. So that's a, sentimental relief, I would say, and sentimental positive. And hopefully the consumer animal instincts, animal spirits, as we call it, should come out. But coming back to the, actual budget, the provisions are significant. It should unleash about 1 lakh crores of, extra money into the hand of the consumer. About 1.8 crore taxpayers will benefit, and to the extent of almost 4 to 5% of their net salary. So it's a significant boost. About, I would say, 1 lakh crore is about 0.3% of GDP. So it's significant, not earth-shattering, but as I say, significantly high enough to kind of create a positive consumption wave. The other thing that one can also see is that part of it may go into consumption, part of it may go into savings, but if it goes into investment, which is a leverage, then the multiplier effect can be more. So, for example, if with 1 lakh rupees per year, you end up buying a new house, then it's a leverage bet. Then you can actually end up with a higher multiplier of that 1 lakh crores.
Absolutely. Just to follow up on this one, that, obviously the SEBI's new rule had come of this, SIPs of 250 rupees, as low as 250 rupees is what you could start. With these given factors combined together, is there a possibility that maybe that saving that we could see coming in from the investor is maybe something that is possibly higher, that we could see shift coming towards the mutual fund side? Or the
certainly.
Side?
So this 250 rupees is probably a very small step. The big one is, of course, this 1 lakh crores that we have extra in hands. And as I said, part of it can come into savings. And if it comes into savings, not through lump sum, but SIP, then it becomes, as I said, even more sustainable for the longer term.
Absolutely. Now, one thing that came in the budget and those decisions that came in was that they were maintaining the current long-term capital gains and the short-term capital gain tax. How should an investor actually approach their equity as well as the debt mutual fund in terms of allocation right now after the budget?
Sure. So we started, at least I started the budget with the attitude that no bad news will be good news.
Good news. so even a slight bit of a positive news, I think everyone was happy with that.
So there was no hike, no tweaking around with the capital gains. Of course, you have the new income tax laws coming in the next couple of days. So hopefully, again, that should simplify things a lot more. But, In the budget, from the asset allocation point of view, does it kind of warrant any change in mix? I would say no. But having said that, one should stick to the long-term strategy. So equity is always for long-term wealth creation. Fixed income is always for capital preservation and regular income. So typically, what I would recommend is that anything which is less than 2 to 3 years in maturity, or if your cash flow requirements are anywhere in the next 2 to 3 years, then probably that portion you want to keep it in the fixed income segment, and for the longer term, you want to put it in the equity funds.
Okay. Now typically talking about a separate class of investors, that's like who's more aggressive. Typically they are like higher risk and they want the higher tolerances there for their risk and may seek to maybe look at higher equity exposure. What announcements that have come in, and what should they be capitalizing on? What opportunities are there for them in the mutual fund industry?
Sure. So for the aggressive person or the investor, obviously it makes sense to be in equities. But just on the previous question, I forgot to mention that our view on fixed income is also positive, by the way. So for the moderate or not so aggressive investor, we do believe that you can make 8 to 9% over the next 2 to 3 years in the fixed income funds, because we're expecting a rate cut cycle. So that's something that to keep in mind when you're kind of calculating your risk return. But coming back to the the aggressive investor, assuming that he's a sophisticated investor, now has a wide choice of funds to choose from, wide range of funds to choose from. You have the large cap, the flexi cap, the multi cap, the sectoral funds, the thematic, small cap, mid cap, everything. So I think beyond a point it becomes a challenge. So what I would recommend is that the diversified funds like flexi cap category should always be your core, right? The main cake, and the thematic funds, the other funds, small cap, mid cap, can be the icing on the cake, but it should not be the main cake. The reason why I say that is that when it comes to thematic funds or sectoral funds, the responsibility is on you or your advisor to advise you to get in or out, because no sector or theme typically lasts forever. Whereas a diversified fund can churn and select the upcoming sectors, give more allocation to the faster growing segments, and then when the cycle or theme turns, you can shift back to other, which you can't do in a sectoral or a thematic fund. So the responsibility then becomes of you or your advisor.
If you're going for those funds,
exactly. So it becomes more of an active management from your side. That's the thing that you need to understand when you're talking about sectoral or thematic funds. It's very exciting to see ads and put it into
it does interest you. Like last whole year, whenever anything used to come, you were quite pumped up by those sector funds, thematic funds.
Absolutely.
So that story is something, but you have to be very aware when you take such decisions.
Go in with your eyes open, and you also need to plan for exit.
That's also important, because sometimes you're stuck in it. You're like, okay, it's going to do well, but understanding those situations at the sector specifically would be an important one. Okay, Mihir, there was one more thing that came in, is that there is an increase in TCS threshold, and this is under the LRS side, right? And this is from 7 lakhs to 10 lakhs. How does it affect investors, especially who are looking at international mutual funds? Could you explain that? And what should one be doing in strategies for international mutual funds?
Sure. So when you remit money, there's a tax collected at source, which is not a tax per se, it's just an advance, and when you file your returns, you claim it back. But there's a cash flow mismatch, right? So when you're remitting, say, 7 lakh, beyond 7 lakh rupees, then the incremental amount you want to invest, then you need, if you're remitting, then you probably have to, your bank will retain 20% of it, which you can claim back later. So it becomes a cash flow issue, right? So if you are investing, say, 10 lakh earlier, you would probably have to pay TCS on the incremental 3 lakhs, which you can claim back later, but it's a cash flow issue, right? So now the threshold has been raised to 10 lakh rupees. So now beyond 10 lakhs, you still have TCS, but at least for 3 more lakhs, you don't have to pay TCS, which means that your upfront investment amount is higher.
True.
So it's a cash flow, so the irritant of, having to 3 lakh 20, so 60,000 rupees, you could have invested if there was no TCS, but now you have to pay and then claim back. But now you can invest those 60,000 extra up to.
Well, we have some breaking news that's coming in. The Asian Paints numbers have come up for you on the screen. And in fact, the street has read 2 numbers positively. One is the decorative paint volume growth has come in at around 1.6%. The poll was for a more or less flattish number. They are saying that in the near term, they remain cautiously optimistic on demand recovery. And that's why we're seeing a bit of recovery. And even the EBITDA margin number, the absolute number, I think, was more or less in line. but the margin number was a little bit better, which is telling you that, in fact, at least as of now, there is some kind of, profitability that's coming about. Revenue number, that's a wee bit lower, but the EBITDA number was better, the absolute number, which explains why the margins are better. So two numbers to focus on for Asian Paints out here. One is the volume number. Volume growth number is a little bit better than what the street was working with. The second reason is that, in fact, the margin number is a little bit better. And as the management is saying, they're cautiously optimistic about the future. Keep in mind, it's a bombed out stock. It's a big underperformer. So any kind of positive trigger could send the stock flying. And that's precisely what's happened. Explains why the stock has moved to the high point of the day. Prakash Diwan joins us to help us out with a quick analysis of these numbers. Well, Prakash, margin beat, volume growth a little bit better, and commentary fairly optimistic. What do you make of the stock?
Nigel, all of this sounds quite positive given the fact that this was expected to be a very weak quarter, especially, the profitability was likely to get impacted with the margins, while revenue might not have been such a big disappointment. But then, this is the interesting part about some of these big brands. And now Asian Paints is also possibly, and we'll of course wait for more details from the management, but they're possibly getting much more traction in the non-paint segments as well. So that could be quite interesting to see whether that becomes a defensive play which offsets the weakness in the competitive intensity-led weakness in this thing. Pricing power is missing as yet, but I'm sure the margins have been made up for from other segments. We'll wait to hear the commentary, but very good numbers given the low expectation that we went into the earnings with.
Okay, all right. So on muted numbers, Prakash says that these numbers look good. Naveen Kulkarni, Chief Investment Officer at Axis Securities, joins us as well. Hi, Naveen. Good afternoon. Asian Paints, it's been a while since they surprised, but they've surprised positively this time around. The stock is up more than 5%. Volume growth numbers a little bit better, and margins a little bit better, and commentary is a little bit optimistic. What do you make of these numbers?
Yeah, so after a long period, I guess Asian Paints has beaten our expectations. We were expecting numbers of around 1,090 crores, and they have delivered 1,128. So there is a 3% beat on our earnings growth estimates, right? So that is good. But more importantly, what I can see is that the margin number is significantly better than what we expected. So margin at 19.5% is definitely much better than, let's say, the street expectations or our expectations of 18.5%. And this was the key concern for a very long period, right? So Asian Paints as a stock has derated significantly, right? And that was primarily on account of margin concerns. Now with this kind of margins, I think overall prospects look to be much better than what they were, let's say, a couple of months back.
Interesting. So would you be positive on the stock from here on, Naveen? Because the problem is the street has been so pessimistic. And if you look at the EBITDA number, the absolute number on a year-to-year basis, it's a big degrowth. But still the street is celebrating it because expectations are so low. Your view on the stock added on this 2,400 odd mark?
Yeah, so if you broadly look at it, let's say there is a decline of almost 20% on a year-on-year basis. However, if I were to look at, let's say, the stock price performance over the last 3 years has been flattish, right? In fact, marginally negative also. So from that perspective, all these things are into the price now. Of course, from here, they have to deliver on numbers, they have to deliver on margins. But I think considering, let's say, the macro environment stands to improve from these levels. Secondly, of course, they continue to be leaders. That is not going to change anytime in the next decade also. So from that perspective, there is a good chance that investors might relook at Asian Paints, and it might be worth allocating to this name considering the kind of prospects that this company still has.
Got it. And I think on a valuation parameter, it trades at around 45 times, Naveen, on a forward earning basis?
Might be a little higher, let's say around 50 rupees EPS, and maybe in the range of 48 times. So
48 times, which is at a discount in comparison. We have seen Asian Paints trade at 60, 65 times as well in the past, isn't it?
Maybe 75 also, right?
Also, it's all right. Yeah. Okay, all right. Got that, Naveen. Thanks a lot for joining in and giving us that view. So, Prakash, what would your view be? Naveen has just told us about the numbers. There is some optimism in the commentary. This volume growth number is a little bit better, and there are plenty of challenges as well that still lie. But still, the street is celebrating it. They would be considering that, on a valuation parameter, it's trading relatively cheaper in comparison to what it trades at. There is some kind of positivity in terms of the volume as well as margins and commentary. Your take on the stock at around this 2,350 odd mark?
Yeah, Nigel, I agree. So there is positivity. The commentary is, of course, what's driving the interest. But remember, this is also in the backdrop of the budget, which has done enough to spur discretionary consumption. And if you were to stretch that logic or rationale of decorative paints also featuring in that at some point in time, it will see some sort of a demand revival across the board. And if that happens, the leadership position that Asian Paints has will also yield decent improvement in earnings. But I would not buy it at this thing, though I know forward 47, 48 times is much cheaper than what it has historically been trading at. But those multiples are what need to be re-rated and recalibrated. I think the steady state multiples will probably be in the late 30s. And for that to happen, you'll have to give it another 1 quarter. So let's see. I'm not in a hurry. Lots to pick and choose from. But yeah, it does tell you that things could look up and the worst might be behind us. But before making any buy calls, we'd probably wait for 1 more quarter.
Thanks a lot for joining in. You're waiting by patiently for the time being. You're seeing that these numbers look better. And as Naveen told us, on a valuation parameter, it trades at a bit of a discount in comparison to what it's traded, when things were going very, very well for them and they were firing all cylinders. So that's about Asian Paints. The other number we'll be looking at today is going to be Titan. And that stock will be in focus. Remember, it had corrected a fair bit from the recent peak, but it's clawed back in the last few sessions. And that's why it's only around 5% away from its 52-week high. To run you through the key parameters that will play out, festive as well as wedding season, gold price hike, that's what will help the revenue growth. And the quarter 3 update is already in. The standalone revenue growth came in at around 24%. The jewelry business growth came in at around 26%, while the gold sales was up by close to around 24%. The studded sales, though, that's still as a percentage of the total mix, it's still been faltering, but the hope is that it gets back to the early 30% odd. For the time being, it was up close to around 21% in the update that we have. Looking at the standalone numbers, which will be most crucial, the revenue number will jump up by close to around 28%. However, the EBITDA number will move up only by around 15%, which tells you that margins should see some compression on a year-on-year basis, coming in at around 10%. The profit number as well is expected to grow in high single digits, growth of around 9% or thereabouts. The other businesses, well, watches and wearables, they should grow by close to around 15%, eyewear around 18%, and emerging businesses close to around 5%. CaratLane, on a lower base, should jump up by close to around 25%. The key things to watch, there could be one-time inventory loss to the tune of close to around 250 crores. So we'll have to keep an eye out on that particular number. Lower margins because of the lower contribution from the studded ratio. As I said, in the last few years, it's come down. At one point of time, it was 34-35%. That's gradually been coming down, but the management has promised in the time to come, they expect it to go back up. And also watch out, for any kind of inorganic growth. There has been some buzz and some talk on street that maybe there could be some inorganic growth as well that we should be looking forward to. So we'll keep an eye out on the numbers, on the commentary, and any inorganic growth, if at all. That's about both those two consumption numbers. Asian Paints delivering, and we are staying tuned for Titan's numbers. But defense stocks, they are buzzing today as the Defense Secretary, Mr. Rajesh Kumar Singh, said that India is on track to sign the largest number of contracts, speaking of CNBC-TV18. He also said that the government needs to ensure that contracts triple compared to last year. When asked about Donald Trump's message asking India to buy more defense equipment from the United States, he said, India is willing to procure more from the United States if they meet the requirements on quality and indigenization. Let's hear him out.
We are on pace right now to sign the largest number of contracts ever in our history. Okay. The largest last year was another high of 1,08,000 crores. This year we've already hit 1,15,000, and my intent is to double last year's number before the end of this financial year, and the result in terms of expenditure will follow thereafter.
So doubling by the end of this financial year, sir?
Yes, I intend to cross 2 lakh crores and maybe even more. And we intend to ensure that order books are full across the board in the defense industry so that everybody has visibility, everybody from the OEMs down to the component manufacturers, that Their order books are full for the next 4 to 5 years, and everybody is on the same page when it comes to fulfilling our capability gaps. We do have some procurements which are on the anvil where American companies would be in the picture. And as long as they are able to meet our requirements in terms of quality and in terms of certain levels of indigenization, of course we'll be, those are carrots that we will be able to dangle before the Americans. We are already, meeting a good proportion of our requirements from capable American companies, and we intend to continue doing so. There will be significant buys, and some of that will go to the US as well.
I don't think from a tactical point of view, we are out of that uncertainty zone yet. And this is likely to continue, I would expect, for the next few months at the bare minimum. Valuations, at least on the index level, you've started to get a bit of a discount to global equities, principally the S&P, and that should become a point in favor of markets. But I think that you're not going to get a trend up until some of the macro issues are sorted. Look, the government's made a clear choice, right? In an environment where resources are constrained, where revenue momentum is slowing down, they have clearly decided that this is the time to start to support flagging consumer outlook, right? The impact of this will obviously filter through to consumers over time because the tax cuts don't accrue on day one. They will be earned by taxpayers monthly basis for the next year or so, right? How it affects sentiment, how it shows up in company earnings, we need to be a little bit patient, to my mind. In our portfolio allocations, we have upgraded consumer discretionary X the four-wheelers, and we've downgraded the capex bit to neutral. The hope for capex, Surabhi, without getting too despondent, is that you start to see better activity in non-government sectors, whether that is corporate capex or, let's say, even real estate. And even the measures they've taken on changing tax slabs should on the margin help real estate demand improve as well.
International transaction for a block period of 3 years. This will be in line with global best practices. With a view to reduce litigation and provide certainty in international taxation, the scope of safe harbor rules is being expanded. A number of senior and very senior citizens have very old national savings schemes accounts. As interest is no longer payable on such accounts, I propose to exempt withdrawals made from NSS by individuals on or after 29th August 2024. I am also proposing to allow similar treatment to NPS Vatsalya accounts as is available to normal NPS accounts subject to overall limits. The middle class provides strength for India's growth. This government, under the leadership of Prime Minister Modi, has always believed in the admirable energy and ability of the middle class in nation building. In recognition of their contribution, we have periodically reduced their tax burden. Right after 2014, the nil tax slab was raised to 2.5 lakhs of rupees, which was further raised to 5 lakh rupees in 2019 and to 7 lakh rupees in 2023. This is reflective of our government's trust on the middle class taxpayers. I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees. So detail the indirect tax reforms and changes in direct taxes in Part B. Financial sector reforms. The FDI limit for the insurance sector will be raised from 74 to 100%. This enhanced limit will be available for those companies which invest the entire premium in India. The current guardrails and conditionalities associated with foreign investment will be reviewed and simplified. The services of India Post Payment Bank will be deepened and expanded in rural areas. NABFID will set up a partial credit enhancement facility for corporate bonds for infrastructure. Public sector banks will develop Grameen Credit Score Framework to serve the credit needs of SHG members and people in rural areas. A forum for regulatory coordination and development of pension products will be set up. To implement the earlier announcement on simplifying the KYC processes, the revamped Central KYC Registry will be rolled out in 2025. We will also implement a streamlined system for periodic updating.
Welcome to India's #1 budget headquarters. Decoding key policies, delivering market-shaping insights, and unlocking the potential of India's growth blueprint. Beaming live from the CNBC-TV18 Motilal Oswal budget headquarters.
Taiwanese index 0.6% higher. The Hang Seng trading with healthy gains as well.
Meeting a good proportion of our requirements from capable American companies.
48,926. And that's the first support here.
LCR is liquidity coverage ratio. It's a liquidity requirement for banks to maintain at all times.
So the Nifty is starting at about 23,500 and that's about 135 points higher.
Growth seems to be a problem across many sectors. It's just the outlook seems to have improved.
Labor shortage still continues. We still have a shortage of close to 4,000 people.
Whatever the MPC is trying to do will be very much focused on trying to get the domestic growth up.
Big story that's breaking right now on the agencies in Bloomberg is that China is hitting back at Trump with tariffs on U.S. goods.
BMC announced that it's planning on opening 25 new public clinics.
Strong day on Dalal Street with the Nifty crossing the highs of the budget day. As
Good afternoon. You're with us here on CNBC-TV18 Motilal Oswal Studio, budget headquarters. Markets, of course, are roaring, and they're roaring after a while like this, at least the large caps, even though broader markets are lagging a little bit. But nothing to complain, really, because it's been up since the morning with little by way of hesitation in terms of the direction it wants to take. I'm Prashant. With me, my colleagues Surabhi and Rima here. Nigel is joining us from the newsroom floor. Guys, hi, good afternoon.
Hi, and talking about the budget headquarters today, we've also surpassed the budget intraday high of 23,632. So that, of course, is a positive. And broader markets also participating in the up.
Absolutely. You really can't complain with this market, right? Because you've got mid-caps participating, broader indices are doing well. And barring consumption, most parts of the market are up. There's buying even in some of those beaten down capital goods names. So it's pretty well-rounded this session so far.
Well, that's right. You know, just a week or so ago, people were talking about 22,700. Surprise, surprise, we're almost at 23,700. So that's the way the markets have turned around. And it's giving you some hope that maybe, in fact, bulk of the bad news for the time being has got discounted. Just going by yesterday's trading action and going by the screen today as well, we have relatively outperformed, in the last couple of trading sessions after underperforming in January. So you'll take heart from that fact.
No, absolutely. And, I just hope that something... if we go at this pace, something is left for the RBI, right? I mean, by the time we get to the RBI in terms of post-reaction, because markets are now completely penciling in a rate cut. And I think a rate cut will come. But it's not just a rate cut. There are other things, more liquidity enhancing measures, etc., which the market is hopeful of. So the Nifty Bank, of course, is leading 1.5%, is doing better than what the Nifty is doing. And, those levels that we were talking about, right? If you can just quickly put those up. So the resistance is 23,632. Okay, I think we've moved past that now. 23,675. As we were walking in, we were around those levels, but I think we've now taken that out. And Nifty Bank is also taken out. At least intraday took out that high of Saturday, which is 50,009, I think was the high. And we are at 49,960. So we are almost there. I mean, so both Nifty and the Nifty Bank around their resistances. Nifty slightly higher. The mid and small cap part of the market is a little more restrained today. So especially small caps. Mid caps are still okay. But the 0.75% higher as far as small cap index is concerned. Market breadth is positive, and of course enough and more in terms of single stock action, which is underway. Rima.
Single stock action. Asian Paints stock was up more than 4%, but now has moderated, tempered its gains a bit, but still up close to about 2.5% on Asian Paints post the numbers. There you have it. There was a spike initially on the back of the margin beat, but the stock now is just up 2.5%. There's a rebound taking place in many of these capital goods defense names. So L&T, BEL advancing 3%. HAL in the mid-cap space higher in trade. You've got strength in Adani Ports. Reliance Industries is a big mover today. 3% up on Reliance Industries. And conversely, you've got Trent. That heavyweight is down nearly 7%. Perhaps it's the launch of Shein, the relaunch of Shein after nearly 5 years that's taken the wind out of Trent and boosted Reliance Industries today. Other notable losers in the large cap space include some of these staple companies yet again, like yesterday, Britannia and Nestle on the back foot. Hero MotoCorp too is nursing a loss of more than 1%.
Okay, now I don't want to spoil the party here, but the fact is that US futures are lower. US futures were doing really well because of this exuberance around things having come to a bit of a standstill with Canada and Mexico. But the problem is China. And China has announced countermeasures already, which is why globally there is still a little bit of unease about how this is going to go. And whether, what kind of reaction this will now get from the US again. Because what has China done? Talking 10% tariffs on, on a lot of different things like liquefied natural gas. There is, oil and agricultural equipment as well. There's also coal, by the way. So any of this coming from the US into China, there is a counter tariff that the Chinese have now declared. So this is, this is tough talk from China coming in. Remember, tomorrow is when the Chinese markets open. Finally, after that big Lunar New Year holiday, we will get the true reaction in terms of how the equity markets are, and even the currency market, the onshore currency markets are feeling about all of this. So that's the situation right now. And what you're seeing on your screen, that dollar yuan, this is the offshore traded yuan, and that has come to this level of 7.29. So continuing to see a lot of currency action over there. But back to our screens, I guess, Nigel, it's been so far so good. A couple of the numbers have also helped. For instance, I think I was seeing Asian Paints where the margin hit was not as bad as what the market had feared.
Yeah.
That's one stock that's bucking the trend. Otherwise, it's a weak day for consumer.
Well, that's right. If you look at Asian Paints, it saw a bit of a recovery and now it's cooled off. It's still up 2.5%. But I think the other one to look at is Berger Paints. Just pull up the intraday chart out there. That stock as well was in the red. It recovered into the green. So that's one stock that you should keep an eye on. The paint space, the initial numbers on volumes and margins look better from Asian Paints, and it seems to help sentiment on these paint stocks. The other stock I'm looking at is UltraTech Cement. There is this buzz now that there is a price increase that's come about. Normally in the first half of January, you don't see a price increase. Then you wait for the budget. But what I understand is there's an attempt to push prices higher. And that's been the case for the last 1 year or so. You attempt to push prices and then some part of that gets absorbed. So there's another attempt being made on ground to push through a price increase. Demand needs to catch up, and then in fact, we'll see how much of that price increase sustains. But normally it starts from south, then moves to the west, and then to other parts of the country. So that's why you're seeing UltraTech Cement higher, and Ramco Cement as well is higher in today's trading session because of this buzz of a price increase. How much is accepted is very, very important. So keep an eye out on that front. And IMFA, that's Indian Metals and Ferroalloys, the stock has been a big underperformer. Last quarter's numbers were very, very disappointing. But the management had told us that maybe, in fact, pricing will improve from here on. And if you look at the global setup, a couple of these miners globally, they have shut down capacity, which is explaining why, after correcting from 900 rupees to around 700 rupees, today the stock has moved up a little bit. So these are a few stocks that I'm looking at, as of this hour. But let's find out, how do you trade the final hour of trade? Mitesh Thakkar joins us to help us out with his take. Well, Mitesh, you were sounding mildly positive. And now we've got a 300-point rally, and who would have thought? We've got a 900-point rally from the recent lows. What do you suggest? Take some money off the table, or we're good for more?
So, good afternoon, Rajan. I think we're good for more. See, there are two reasons for that. One is that the Nifty has, while slightly tapered off from the highs of 23,700, we are still about 23,630, 640 zones, and that could mean a test of 23,950, 24,000 to begin with, and then maybe even higher levels. Secondly, I'm just waiting for the bank Nifty to get past 50,150. 50,170, 150 is a zone where some averages are converging. But the way the indicators are shaping up, I think if not today, in a day or two, we should be able to clear that. Once that happens, the bank Nifty could head towards 50,720, and in a good case scenario, 51,500, 600 zones. Stay positive. I think very clearly the market is showing signs of resilience and extraordinary strength. Yes, after a good rally, there could be mild pullback, but that would be a buy on decline kind of a scenario for me. So I'll be hoping that this move continues.
Mitesh, what about stocks? What would your last hour trades be?
So on the stock side also, in line with my view, I have positive buy calls. In fact, I did believe somebody discussed Reliance. I forgot who, but Reliance is something which is showing good momentum. So buy here with the stop below levels of 1266 for targets of 1320. And once we clear 1320, see that's the high which the stock made in December, 3rd of December, and then 5th of December again. And then again, on 17th of January when the numbers were announced. So 1320 is the first target, but once we clear that, I would be looking at levels of around 1380, 1400 to begin with, and then even higher levels. And second call is a buy on Chambal Fertilizers with a stop at 504 for targets of 525.
Thank you very much for that. Reliance up 3%, but Trent is down 7%. So Shilpa joins in for more on what's ailing Trent today and what's boosting Reliance Industries. Shilpa.
Well, what seems to be ailing Trent today is the comeback of the fast fashion app Shein. Now, if you know, on Sunday, Reliance Retail has brought back the very popular app Shein back into India after it was banned in 2020. Now, the app went live over the weekend on both Play Store and Apple Store. And within like a day of it being back in India, it already saw over 10,000 downloads. And it was among the top apps on the Apple Store as well. Now, currently, Shein is in India and it's already delivering in Mumbai, in and around Mumbai, Bengaluru, Delhi, NCR, and Pan-India shipping will also start soon. Now, remember, this app was banned in 2020 because of data security issues. And at the time, Shein was a very popular fast fashion app in India. And even today, it is an extremely popular app globally as well. Now, how is Shein 2.0 now as it comes back in its new avatar? Now, Reliance Retail has brought it back. The entire operations and everything will be managed by Reliance Retail, and the data, the customer data also will be within India and will be with Reliance Industry. Shein is only a technology partner to which will receive a licensing fee from Reliance Retail, and it will not have any access to any of the customer data in India. Now, the app, like I said, is already live, and it will. The other difference is that Shein will only sell items that are made and designed in India. That is also part of the deal of bringing Shein back to India this time. And I was taking a look at the app. So far only apparel is available for men and women, and this is as low as $199, and that is probably what is causing jitters for Trent as well, because Trent with Zudio is one of its biggest competitors right now, where Zudio has grown exponentially in the past couple of years because of its affordable fashion offerings, where everything is below $999, right? And it doesn't only take on Zudio. Shoppers Stop's Intune, Reliance Retail's Ustar, ABFRL's Style Up, all of these will now will face competition from Shein. But it will be interesting to see how, the customers will take to this, because the landscape has changed a lot. A lot of this is also available online. And while Shein is now only available online, Zudio is only available offline. So we have to see how that will play out. But we know how aggressively Shein has been growing, and we know how aggressively Reliance Retail also, grows its products. So hence, a little bit of jitter there. And in fact, Shein's products will also soon be available on Ajio Ajio also. So Reliance will look at cross-selling Shein items on its other platforms as well. So that is also cause for concern when it comes to its competition. But it's also important to note that Trend's shares have also corrected over 30% from its peak of about 8,500 that it touched in October 14 last year, and it has delivered a solid 83% returns over the last year. So there's some correction happening there also. But yes, Shein is something that everyone will look out for, and as you can see, early response has also been massive. So it will be interesting to see how the value retail space now plays out both online and offline as well. Back to you.
Just quickly, will it remain an app? Or are they thinking of on-ground? They're not thinking of any on-ground presence as of now, right?
Shein has always been an online player in India so far, right? Even globally also, it is an online fashion app, and we don't know whether Reliance will bring any of its products to, say,
into their stores.
Yeah, that is not clear, but they will definitely bring it to Ajio. It will be available on Ajio, but no offline presence yet.
And look at the,
thank you.
No, absolutely, Shilpa. Great. Thank you for that information. I think Shilpa put out numbers, right? $18 billion.
In the first half of the year, yeah.
So that's $36 billion revenue. I looked at Trend. Trend does $1.5 billion in revenue.
Yeah. So this is global, right?
The market cap, they filed December 24 article. In London, they filed for an IPO. Valued at, the last funding round happened at $66 billion. Trend is about $22 billion.
$66 billion on a revenue of about
$36 billion.
$36 billion.
And $400 million, so annualized $800 million in profits, basically. And I think, so, I mean, it's not like, of course, there's just 1,500 crores in net profits for Trend, right? So, much larger player, and of course, a global footprint, etc. as well.
Yeah, no, I was just saying because for Zudio, their offline presence did help. I mean, that growth really came in from the offline channel, while the others were always there online. But nobody perhaps thought that offline could become as big as it did for Zudio. But maybe we'll take that up with...
I think this was all what Shilpa was saying, right? Privacy concerns. When TikTok, I think was...
when they banned, other Chinese apps, including TikTok.
This was part, I think this was part of that. And... so a little bit of softening is happening, definitely happening, and I think the secretary.
But now it's Reliance which will be housing.
That's what she said. All the
data centers, exactly.
Partner, it's all going to be local, etc.
They're going to manufacture also 100% locally. Earlier, it was all imported from China.
So the question is this dip on Trend, is this dip an indication that the good times have rolled over, or is this dip the best buying opportunity you'll get in many months? Let's put that question to Deepak Shenoy. Deepak, good afternoon. Great to have you on. Welcome to the debate. Trend, buy or stay away?
This is interesting because we own Reliance, so obviously at some level, if that's the competition, that's where it is. But I think in general, the formats, whether it is Reliance and through Shein, I mean, I don't see this as a reason why you would, bump up a Reliance stock by 3%. It's not that meaningful, I think, at least overall. But this is going to be a space where competition means that even though India may consume more in the branded segment, in the online branded segments as well, it may not necessarily lead to more profits for any single player because there's so much competition that at some level, you're going to get the pie spread across a lot of people, and therefore I don't expect profitability to start moving up right now. But in the coming year or 2 years, if you look at it from a trend perspective, overall, I think both Trend and Reliance Retail should do well. They address a very interesting, upcoming niche, and I think that is where the largest growth has been in the last few years, and I think that will continue going forward. The problem, of course, in Trend is valuations. In Reliance, it's the confusion of which part you're paying, how much are you paying for which part of the business. So both of them, have short-term issues in terms of how do they justify that price inside their share, inside their market cap. So I think, that is a different problem. But I think the business should grow well in the long term, both Trend and Reliance Retail.
But would you buy Trend? At these levels?
I'm not buying Trend right now. It's just expensive. I think Reliance is a better bet. If it does demerge, this might actually result in a much lower valuation for what is effectively going to be the same business. But you can't see it right now because it is confused with the oil and consumer and Geo and all the other businesses together.
Well, at least in the quarter gone by, Reliance Retail was the big positive surprise in the earnings this time. And Shein coming on board will only boost Reliance Retail's presence. But let's get to Godrej Properties. Reported their Q3 numbers, revenues and profits have surged on a year-on-year basis, but the EBITDA has slumped. Vinny is here with the details.
So absolutely, in terms of numbers that are coming from Godrej Properties, specifically in terms of the pre-sale or the booking value that you're looking at, 5,446 crore, which is a bit of a decline versus last year, 5,720 crores. Collections, on the other hand, have seen an uptick of around 27%. The net debt of the company has seen a significant reduction on a sequential basis. So important to watch out for that. We're seeing that the stock was also buzzing in trade. Now, booking value for the 9-month period has also seen a good uptick of 48%. This is the highest ever booking that they've seen in terms of 9-month period for the company, and they've already achieved the 71% of annual booking guidance which the company has mentioned for FY25. Collections around at 10,086 crore rupees. Management said that they are on track to achieve that 27,000 crore booking guidance for FY25. Total estimated booking value of potential that they have over here is around 23,450 crores, which is also surpassed the guidance that they've given of 20,000 crores. So guidance is also much, they've already surpassed the guidance for most of the factors that they're given for FY25, and that is the reason why the stock is in focus and buzzing in trade.
Okay, that's Godrej Properties. Got it, Vinny. Thank you very much for that. Deepak, very quickly on real estate, whether it's Godrej or anything else, because that's one sector that's supposed to be a beneficiary of this income tax cut, right? Maybe some of it will make its way to larger houses or upscaling, upgrading of houses as well. So real estate or some of the related plays as well. I mean, your home improvement companies, tiles, sanitary ware, etc., etc. Anything there?
So, Surbhi, I think home improvement may be a thing, because with 1 lakh rupees, I don't think anybody is going to buy a house meaningfully in the tax saving. You have to look at the people who are going to save this tax are largely concentrated in metros, where the prices of houses are so high that this 1 lakh rupee extra money is not going to meaningfully mean anything for most people who earn the amount of money to be able to save that tax. So I think it's not going to result in an increase in housing prices or housing bookings. But in general, I think you might see more in terms of how home furnishings, maybe, remodel bathrooms or however that, kind of need arises. So that might be one area. Consumer durables, including, auto and cars at one level, on white goods at the other level, ACs and fridges and so on, which the price points kind of meet the level of tax changes that you're going to see. I think that may be the consumption play here. Real estate per se is not seeing as much outtake. If you see the RBI report recently, we're seeing inventories at relatively high levels. Bookings and new launches seem to have come down. So while the numbers look good for the last quarter, I think the going forward point, this is not the greatest point to enter. I think we'll see a slowdown in sales.
Yeah, Deepak, no, I take your point on real estate, and that was more a question because, this is the fiscal side is just the one side of it, and then RBI, who knows, they're saying Friday onwards we start getting rate cuts. But let's leave aside real estate. On home improvement stocks, some names, whether it's durables or home improvements, what do you like?
So durables, of course, we like cars and two-wheelers at this point. That maybe looking at it from the higher end part of the thing. But we haven't looked more, deeply into home improvement. Companies like Cera have kind of made serious inroads here. Asian Paints and the paint companies are generally a little expensive, so valuations kind of put it in a little bit of a disadvantage there, and plus the competition. So you're seeing Birla Opus come in big time. They're looking at JSW enter the market and advertise also big time. So again, fragmentation is going to cause issues over there. So I'm more looking at maybe it could be at the toilet, the sanitary ware kind of companies where you might see floor tiles. Kajaria is probably one of the players there that you should look at, and there are lots of others, from curtains and plywood and so on. But we haven't done a more deeper dive into this yet. I'm just kind of waiting for all the results to come through, and then we might do something more. But to be fair, this may be an interesting play for the next year.
All right. Deepak, we'll leave it there. Thank you very much for joining us and running us through all of that opinion as far as various stocks go. Markets up and it's looking good. We'll have Abhiram Eliswarupu from BNP Paribas India join us on the other side for more market conversation. Stay tuned.
Speaker, I present the budget for 25-26. This budget continues our government's efforts to A. Accelerate growth, B. Secure inclusive development, C. Invigorate private sector investments, D. Uplift household sentiments, and E. Enhance spending power of India's rising middle class. Together, we embark on a journey to unlock our nation's tremendous potential for greater prosperity and global positioning under the leadership of Honorable Prime Minister Shri Narendra Modi. As we complete the first quarter of the 21st century, continuing geopolitical headwinds suggest lower global economic growth over the medium term. However, our aspiration for a Vikasit Bharat inspires us, and the transformative work we have done during our government's first 2 terms guides us to march forward resolutely. Our economy is the fastest growing among all major economies. Our development track record for the past 10 years and structural reforms have drawn global attention. Confidence in India's capability and potential has only grown in this period. We see the next 5 years as a unique opportunity to realize Sabka Vikas, stimulating Bappa Rao had said, Deshamante Matti Kadoi, Deshamante Manushaloi, meaning a country is not just its soil, a country is its people. In line with this, for us, Vikasit Bharat encompasses zero poverty, 100% quality good school education, access to high quality, affordable and comprehensive health care, 100% skilled labor with meaningful employment, 70% women in economic activities, and farmers making our country the food basket of the world. In this budget, the proposed development measures span 10 broad areas, focusing on Garib, Youth, Annadata, and Nari, spurring agriculture.
Okay, welcome back. So you've got the market, which is looking pretty solid. Abhiram Eliswarupu is head of India Equity at BNP Paribas India. Abhiram, good to have you with us here. Thanks very much. The Thermax numbers, by the way, are also at the bottom of the screen. I'm not sure if there's, something like a one-time or something, but profits are down sharply. Revenues are up about 8%, and we'll have our, research team member join us to give more details. They're pouring through the numbers as we speak. EBITDA is absolutely flat as well. This is all on a quarter-on-quarter basis. I think, in that same industrial space, Cummins reports tomorrow. So that's the other thing. We'll get to previews in just a bit from now as well.
On Thermax, I don't know if it's related. I haven't opened the full P&L, but they have decided to give a corporate guarantee of 400 crores for one of their arms. Now, I don't know if they've made a provision to that effect, which is why, that could have pulled down the bottom line. Optically, it would be lower. But there is a corporate guarantee of 400 crores that they're...
The number, it's not a cash item, so I don't think that should affect the actual numbers. But that is important. That's not to say that it's not important.
No, I don't know whether this is a group entity, if it's related party, unrelated. We'll look at those details.
Absolutely.
But they're writing a corporate guarantee worth 400 crores.
Absolutely. So revenues and profit numbers, basic numbers are up. And as I said, we'll have someone join us with more on this one. Abhiram is with us. Abhiram, thanks for waiting. Just a quick word on the market first. Do you think We've seen the lows, and this is now going to look a lot better. The general consensus out there is it's going to be fairly volatile, so it's not one way. But what's your sense?
It'll probably continue at least for another month or so until the dust settles on various aspects, not the least, and end the year with maybe high single-digit returns, which is what we had for the large caps last year, to be honest. So a Nifty target of 25,500 is where we see it from here.
Good afternoon and good to see you in. Abhiram, if I remember correctly, on the consumer staples, that wasn't a sector that that you like too much, if I remember correctly. But now suddenly there is this bit of this consumption boost that's come about. So how are you playing the consumption theme? If you could give us a sense on that.
Let's kind of break down the budget situation a little bit here. So what we have is, as per budget documents, $11 billion odd consumption boost. But if you break it down and think, it's really going into the affluent consumer, mostly the urban consumer. And you got to see what kind of products or services they will consume. And I doubt it's still going to be staples. You could upgrade the staples item that you buy, but I think the incremental spending will more likely go into first a little bit of savings. So that should be beneficial for AMCs, insurance companies, those kind of things. The second could go into a bit more discretionary purchase. So the long pending surgery, for example, getting your tests done. So that means a little bit of healthcare and pharma. And the third bit is discretionary, which means four-wheelers, maybe home improvement, all the additional things which are not extremely large ticket, but certainly not staples. So somewhere in between is where I think the biggest beneficiaries lie. And I do not think that our view on staples is dramatically going to change as a result of this.
Abhiram, hi, afternoon. Rima here. You liked the EMS space, electronic manufacturing companies, and some of them, like Keynes, had a very sharp negative reaction to their numbers. So what have you made of the Q3 numbers that we've seen so far from the EMS companies? And have you changed your assessment? Maybe you think the stocks have run up too much and therefore there is a case for a little bit of profit booking. Valuations have run up. So talk to us how you feel about the EMS companies.
I mean, there's no doubt that valuations have run up. The stocks were very strong performers for the past year or so. But if you take a look at the large EMS companies, I think the results, at least for a couple of them, were quite good. What's more encouraging is that most of them continue to report 30, 40, 50% revenue and earnings growth, which is quite scarce. And therefore, the view having a long-term positive bias towards the space absolutely remains. I think this theme is still quite structural. That doesn't change. Now, the truth is that the market has corrected quite a bit. So you already have maybe small caps correcting 15, 20% from their peaks. It is quite natural that companies that have run up a lot will correct. But the positive view is still very much intact. The drivers, frankly, are intact.
Okay. Also, I'm still looking at Thermax, just pointing out that in the base quarter, they had an exceptional item. There was a gain of 126 crores from sale of property, which obviously is not there this time around. So that's another sort of reason that would have gone into how the bottom line is looking. I mean, year on year, if you're comparing, it's looking quite low. 200 crores versus about roughly 100 crores. That's Thermax. But otherwise, the numbers are being received quite okay, at least for the time being, by the market. But must say that the growth is not really blowing away the rooftops in the third quarter. Again, year-on-year comparison, it's all right. Mostly, I think it seems to be single digits for most of their businesses. Abhiram, hi. Good afternoon. Good to have you on the show. Since I'm talking about Thermax, let's actually, bring you in on this because ever since the budget, everyone's trying to figure out. Actually, even before the budget, people had started booking profits in this side of the market, right? In capex, capital goods, etc. Now, how are you positioned? Do you think valuations have become a bit more reasonable? Would you add them back to the portfolio, or what's the stance?
Well, I'll give a slightly macro answer and then kind of address the question you posed. So it's rare that unless you have a calamitous situation that the market corrects 15-20%. And if you see where small caps have gone, maybe 15% already from their peak, maybe closer to 20, to be honest. That to me suggests that it's about time to start doing your homework on which leg to buy next. Now, looking at capex, actually, I'm not all that bearish about it. There's a couple of ways to think about it. First and foremost, what the government has probably realized over the course of the budget exercise is that you can only spend that much in a particular year. And last year's situation tells us that they couldn't actually spend all that they budgeted. And therefore, while the market took the capex growth number to be quite weak, I think that it's quite practical. The issue, though, now is that the rotation within capex is happening. So what you're seeing is more towards power and metro, for example. And I also think one more thing, which is that if the government is to achieve its 2025 budgeted number also, it means a significant spending in the fourth quarter. What that tells me is we are pretty close to a capex bottom. And this is about the time to start doing work on companies in the space. And as I mentioned, power is one. Metro is another, renewables probably as a long-term theme anyway, to do a little bit more on all of these areas.
Okay, all right. No, I think that's a fairly good point that you make there. By the way, Abhiram, on Friday, right? I mean, you'll get this easing from the RBI. Is your team on the expecting anything more apart from a 25 basis point cut?
Well, we do think that the conditions are ripe for a 25 basis point cut. I also suspect there'll be a little more to add about the liquidity measures, maybe something about CRR and so on, because we have seen the RBI kind of change its stance a little bit towards easing the liquidity situation. So I think both of them could happen. Now, there's a bit of an issue in this, which is that in the meantime, we've had the Trump tariffs come through. And I'm not sure if that's a cue from a global perspective, because it does suggest that the Fed may hold through the rest of the year. That said, I think the conditions are ripe for a 25 basis point cut.
Thank you, Abhiram, for joining in. The countermeasures from China come into effect only from the 10th of February, which leaves about a 6-day window for further negotiations if a deal could be struck between China and US. That's the hope that is alive right now. But let's talk about the defense stocks. They're buzzing in trade today. Defense Secretary Rajesh Kumar Singh says India is on track to sign the largest number of contracts. Speaking to CNBC-TV18, he also said that the government needs to ensure that the contracts triple compared to last year. When asked about Donald Trump's message asking India to buy more defense equipment from the US, the Defense Secretary said that India is willing to procure more from the United States if they meet the requirements on quality and indigenization.
We are on pace right now to sign the largest number of contracts ever in our history.
Okay.
The largest last year was another high of 1,08,000 crores. This year we've already hit 1,15,000, and my intent is to double last year's number before the end of this financial year, and the result in terms of expenditure will follow thereafter.
So doubling by the end of this financial year, sir?
Yes, I intend to cross 2 lakh crores and maybe even more. And we intend to ensure that order books are full across the board in the defense industry, so that everybody has visibility, everybody from the OEMs down to the component manufacturers, that their order books are full for the next 4 to 5 years, and everybody's on the same page when it comes to fulfilling our capability gaps. We do have some procurements which are on the anvil where American companies would be in the picture. And as long as they are able to meet our requirements in terms of quality and in terms of certain levels of indigenization, of course we'll be, those are carrots that we will be able to dangle before the Americans. We are already, meeting a good proportion of our requirements from capable American companies, and we intend to continue doing so. There will be significant buys, and some of that will go to the US as well.
Big statements coming in over there. Defense stocks today have recovered after the steep losses over the last few days. How do the valuations stack up? Upasana is here to tell us more. Upasana.
Well, certainly defense stocks were under pressure yesterday after the lower defense allocation, lower than market expectation, was seen in the union budget. However, defense stocks have recovered today after the bright roadmap laid out by the Defense Secretary. Now, let us look at the valuation, order book and revenue visibility within this defense pack. First up is Bharat Dynamic. The stock is trading 45 times its one-year forward PE, and the order book for this company stands as high as 19,500 crore, which is nearly 8.2 times the FY24 sales of the company. Next up is BEL. BEL reported, mind you, a strong set of numbers led by healthy order book execution, trades at 37 times, and the order book stands currently at 71,100 crore as of 9-month FY25, which forms 3 times the FY24 sales. Again, strong revenue visibility here as well. BEML is the next one on the counter. It trades at 30 times the one-year forward PE, and the order book as of H1 FY25 stands 15,100 crore, which is nearly 3.7 times the FY24 sales of the company. And lastly, HAL also remains in focus as it trades at 28 times the one-year forward PE, and the order book is as high as 1.2 lakh crore as of H1 FY25, which forms nearly 3.2 times the FY24 sales. So all in all, the order book visibility remains quite strong. Revenue visibility remains strong. There is strong order book execution as well. And guidance of all these companies also remains quite upbeat in the upcoming years. So defense stocks remains in focus.
Okay, all right, Upasana, got it. And yeah, they have stopped falling. 2 days of dropping, Saturday and Monday. Today's turned out to be better for many of these companies. Look at that, about 1.5% higher. BEML still lower, but HAL is the one that's really been flying away. We'll take a break on that note, come back with all the buzz from dealing rooms. D-Street chatter coming up with Nimesh, and some final trading ideas with Mitesh as well.
For the 8th consecutive time, Finance Minister Nirmala Sitharaman will rise to present the Union budget in a few hours from now.
Hello and welcome to CNBC-TV18.
What will she deliver on? What will she sacrifice? That will be one big question. The key tax-related asks, we will tell you right here.
Catch the most authoritative analysis of Budget 2025 with the biggest and the most influential voices.
We're here at the NSC on a special trading session for the budget.
The Finance Minister rising in Parliament to present Budget 2025.
This budget continues our government's efforts to personal income tax reforms with special focus on middle class. I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees. Productivity, building rural prosperity and resilience, taking everyone together on an inclusive growth path, boosting manufacturing and furthering Make in India, supporting MSMEs, enabling employment-led development, investing in people, economy and innovation, securing energy supplies, promoting exports and nurturing innovation. For this journey of development, our four powerful engines are agriculture, MSME, investments and exports. The fuel, our reforms, our guiding spirit, inclusivity, and the destination, Vikasit Bharat. This budget aims to initiate transformative reforms across 6 domains. During the first 5 years, these will augment our growth potential and global competitiveness. The domains are taxation, power sector, urban development, mining, financial sector, and regulatory reforms.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 Budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Investing. Welcome back. Well, the stock of the last few minutes has to be Kalyan Jewellers. Pull up the intraday chart on that stock. It's moved to the high point of the day, and it could be a factor of short covering as well that's come about. Now, keep in mind a few factors. They came out with a set of numbers which didn't look too bad, but the positive in those numbers was that, in fact, the member from Warburg Pincus came back onto their board. And I think the street got some confidence from that fact. The other important point is the last time around, the promoter entity had bought around 530, 535 rupees per share. So that's the important mark. The stock had slipped all the way to around 450 rupees, but now it's moving higher. There's an element of short covering, I think, because it was at upper freeze with a gain of 10%, and now it's building onto those gains. So keep an eye out on Kalyan Jewellers. But we have been asking a lot of market men all through the day. And I think Nimesh could have a possible answer with regard to what he's picking up. Nimesh, we have been asking when the FIs will start buying, well, they'll sell less. Should we brace ourselves for maybe a positive surprise today?
Well, that's the feedback, Nigel. That today there is genuine buying from larger FIs. So I wouldn't be surprised if there is a positive FI number in the cash market. That's overall feedback. Just a word on Kalyan Jewellers, Nigel. 530 was the price at which the block happened when promoters also participated. Yes. And after the stock went down, they had to create fresh pledge. Yes. And that was largely because they were in a silent period. So they couldn't do anything else. So they had to create more pledge. Yes. Now that the stock has gone above 530, there is a bit of an ease that even that pledge could get released. So I guess that's the reason why there is a bit of short squeeze as well in Kalyan Jewellers. So just to add that point. From a market point of view, yes, there is buying interest is what I understand. So look out for the FI number. Could be a positive number is the sense I'm getting in. It's a trending up day, right? I mean, throughout the day we've seen every dip is getting bought into, and there has been a rally as well. I guess the buying is largely from the passive fund. So it limits to largely large cap names, the Nifty names, so to speak. But outside that, I guess the sector to watch is clearly real estate. That's one sector which is well bid. And I guess the entire rate sensitive sector is in focus out of the RBI policy this week. So that is something to watch out for. And I guess market is now sensing in pricing in a 25 basis points rate cut. So that's something to watch out for. Again, the other short squeeze seems to be in the PSU names. A lot of PSU stocks are buzzing in trade. The index is up 2.5%. Yeah. And a lot of individual names are doing well today. So I guess post the clarity to CNBC-TV18 by a lot of the secretaries yesterday has given a bit of confidence to the PSU basket as well. I guess technically now what we are talking about 20,300 as a big resistance. Now that will act as a big support now that the market Nifty is trading above that. So watch out for that level as a big support now. And looks like this trend can continue given the fact that there is so much of short which is still pending. And the FIs tend to be net buyers at the margin in cash market.
All right. So that will be a positive surprise. Even if they sell 500,000 crores, it's still okay compared to what they've been doing in the last couple of months. But Nimesh, tell us, what about individual stocks? What are you picking up?
Right. So in terms of individual names, the first stock is Hyundai India. That stock has sharply recovered in the last few days, and the volumes have picked up as well. I guess largely because there is buying interest back from large institutions. And I understand a leading domestic mutual fund has been an aggressive buyer in Hyundai India in the last couple of days. That's the first name. The second stock is Dabur. Well, the stock has done well post the budget announcement. Again, I understand for Dabur, there are bid blocks been pending at some FIs. So looks like some interest is back in the consumption names, and Dabur includes in that in terms of buying interest there. The third is a couple of stocks which are up in trade today, Samudra Motherson as well as Sona BLW. Both are buzzing because of the reversal of tariff hike. But from a flow perspective, there is selling pressure which is continuing. So the upside is getting sold into, is what I understand, as far as flows are concerned in both those names. And the last is TD Power. For second day running, that stock is buzzing in trade. Volumes are on the higher side, and looks like the FI interest is back. So there are buy flows, and so expect high delivery volumes. And TD Power is something which is again well bid by larger institutions today.
Okay, well, Nimesh tells us and that there perhaps is a positive, flow number, FI number. So we should keep that, very... Sorry, Nimesh?
So, Prashant, just to add, whatever the feedback I've picked up from the institutional desk, there is a very large basket buying is what I understand. But do remember, now even in the India market, 50% of the flows come via DMA. So, actual numbers, not many get to know till the market closes. So, whatever feedback that I picked up looks like it's a decent buy number or a buy figure from the FIs today.
DMA is direct market access.
Direct market access.
And that's basically foreigners putting their own trades in and not going through an intermediary, a broker here. Look at Kalyan. I think it is limit up 15. I think it's at the 15% mark. I think it's frozen there for a few minutes, and then the freeze opens up. But it's moved up swiftly, very, very swiftly on Kalyan. So 578, and that will come as a relief for many out there in the market, including funds, mutual funds, which own a lot of Kalyan jewelers, funds like Motilal, etc., for example, which own a fair bit of Kalyan. So it'll come as a relief for both individual investors who own it and, of course, funds as well. So that's a big mover at this point in time. Market, of course, is doing well. 370-point gain, so 23,730 is what you have at this point in time. So this is turning out to be a fantastic session. Mitesh is with us, and Mitesh has been, of course, of the view when we spoke with him earlier also that perhaps there is more to go an hour back, and I think in the last hour we've only added more. Mitesh, what's the view now, and what are trades?
So, Prashant, my view remains positive. We are closing with more strength, so likely that we should see continuation. On the stock side, I have a BTST on Coromandel Fertilizers. People start at about 1867.66 and a target of 1895 on the upside is possible. And I've already given Reliance as a buy. BTST on Geo Financials can be taken with a stop at about 242 for targets of 250.
Thank you very much for that. And now let's talk about the high-stakes battle. The national capital is all set to go to the polls tomorrow. It's going to be a three-way battle between AAP, Congress and the BJP. Last time, in 2020, AAP swept by winning 62 out of the 70 seats. Shivani joins in with the expectations this time around and the key details. Shivani.
Well, Rima, absolutely. Big contest, big battle in Delhi tomorrow. Three-way contest, clearly, as you mentioned. But Aam Aadmi Party has been the favourites in the last two consecutive times. As you mentioned, 62 seats out of the 70 seats. But this time around, there are 700 candidates on these 70 seats. So clearly a high-stake battle. But it's not going to be that easy for the Aam Aadmi Party this time, because whatever has happened with the liquor scam and the arrests of the top brass thereafter, this has to have an impact on this time's elections as well. So, but however, the Delhi national capital has been a high-stake electoral battle for the longest time. It has this time 1.55 crore voters in total. 2 lakh voters are going to be the first-time voters. These are 2 lakh people in the age bracket of 18 to 19 years. So the demographic is really interesting. Among that, 83 lakh male voters, 71 lakh female voters, and very interestingly, 96,000 female voters are new registered voters this time around. So clearly, that's why all the three parties have been targeting women-centric schemes like the Mahila Samman Yojana that Aam Aadmi Party has presented for 2,100 rupees per month for women of Delhi. Clearly, the Pyari Didi Yojana by the Congress promising 2,500 rupees again. And similarly, on the similar lines, BJP has also promised 2,500 rupees to the women voters. So how much this is going to yield results? Because we were on ground in the last 1 month, and according to the ground reports that we have spoken to on the field, bigger issues remain in the national capital, that are the safety and security of the women, but also unemployment this time. Because if you remember, in 2022, Aam Aadmi Party's budget was called the Rozgar budget, which said that it will give 20 lakh plus jobs to unemployed youth in the city, in the national capital in the next 5 years. But it has remained a non-starter sort of a thing. And the Rozgar Bazaar 2.0, the website that was supposed to give out 25% of these 20 lakh jobs, is also a non-starter, and there has been no talk about this particular thing, unemployment per se, from the Aam Aadmi Party since then. But let's see, because this has been one of the things that Aam Aadmi Party has faltered on. So this time around, it doesn't seem that easy for the Aam Aadmi Party. Like you said, last 2 consecutive times they have won big numbers, but this time it seems like a tougher contest. But we'll have to wait and watch till the 8th of February when the results are out. But clearly a big high-stake battle tomorrow in Delhi. Back to you.
All right, no, absolutely, and I think will be closely watched. Shivani, thank you very much for that. Titan reports numbers. Let's get a quick preview going. Vinny's here with details. Vinny.
So absolutely, in terms of numbers from Titan, we have the Q3 update that's already there. Standalone revenue growth, what we're expecting this time is 24%, jewelry business growth of 26%, and started sales expected at 21%. Now, revenue growth this time, what they highlighted was mainly led by festive as well as wedding season. So overall, we are expecting the revenues to come in at around 16,710 crores. Margins expected at 10% versus 11.2% last year. So contraction in terms of margins, mainly because of the change maybe we could see in terms of the mix, and the started sales are something important to watch out for. Profit growth of 9% is what we're keeping an eye out on. Profits expected at 1,134 crores. Key to track in terms of one-time inventory loss that's possible this time of around 250 to 275 crores. Margins, what is the impact of that going forward? Started share, we are expecting a bit of a decline on that front, but what is the outlook going forward? And watch out for any inorganic announcements that is possible to come out with the result will be a key to watch out for that.
Okay, all right, Vinny, got it. Thank you very much for that. So Titan is going to be in focus tomorrow, of course, as well. We will take a break on that note, come back on the other side. Jay Bala from Cash the Chaos joining in.
Strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Welcome back. We'll just keep your eye on ITC Hotels. There's massive volumes in the last 1 hour or so. More than 2 crore shares have exchanged hands. Total volumes for the day as well, close to around 4 crore shares. So we'll keep an eye on that stock. How much of the selling is pending? Because the stock has seen big volumes in today's session. That said, let's go across to Jay Bala of Cash the Chaos who joins us. Hi, Jay. Markets have bounced 1,000 points, 900 points to be precise from the recent lows. You've been a little bit skittish. What do you think? It's the rise before a bigger fall.
Hi, Rachel. Good to be here. See, if you recall, in December, I pointed out a couple of dates on January 23rd, 24th, and February 18th. The market has bottomed from January 27th, which is one trading session after Jan 24th. So the potential for this market to hold the January low is quite reasonable. And I still hold the belief that we still haven't seen the final low for the bottom. But I'm willing to abandon that if the markets were to take out 24,800. The current projection is that this rally could extend to somewhere close to 24,100, maybe not 24,800. But this market has bullish potential if it can show further strength going forward. I'll be watching February 18th, the date I projected. So what the market is doing around that date. So right now, I'm still anticipating the market to get lifted a little more higher. If you hold puts, maybe it might be safer to exit them on dips and then probably reposition once the market comes somewhere close to 2,400 or even 2,400.
So how to play this rise on the Nifty towards 24,100 or perhaps even higher to 24,800? What's the best trade now?
The best sector is still probably the IT sector, which is still not broken down, and it's still the one sector that's holding out. But still, there are chinks out there. But there is still bearish play out there. I'm bearish on Britannia as I believe that the FMCG sector has clocked a multi-year high. Britannia, I'm bearish against a stop loss level of 53.79, and Bajaj Finserv, if it were to trade below 1470. I'll be bearish. 1740. I'll be bearish on it, and that view get invalidated if it crosses 1856.
Okay, all right. Sorry, on the Nifty, above what level will you change the view, Jay? You said? Sorry, missed that.
Yeah, above 24,800. It's not an exact figure; it's a rough figure.
So about 1,000 points more from here.
Yeah, that's right. But anticipate 24,100 to put a lot of pressure on this market. The significance is that the AI-housed semiconductor index is pointing that the U.S. markets, the technology sector has clocked a very significant top, but that's not yet confirmed by the Nasdaq 100 index. As I pointed out last week, I'm waiting for the Nasdaq index to confirm that. If you see the Nasdaq futures trade below 2763, 2694, that will confirm what the semiconductor index is pointing out. So bullish with a bit of caution.
Jay, thank you very much for joining in. For now, we'll chat with you. Closing what's been a very strong session for our markets. The Nifty closing above 23,700 with a gain of nearly 400 points. The Sensex up 1,400 points, 78,500 plus on the Sensex, and now the indices have turned positive for the year, at least the Nifty has. The mid-caps and small-caps participated in the up move. The advance decline ratio was positive. We had two stocks advancing for one in the red. Sectorally, PSUs bounced back, capital market plays higher, defense up and about, banks gaining nearly 2%, PSU banks doing even better. And on the way down, it was just the consumption names which continue to get hit, and Trent, that was the big loser.
Absolutely, and lots and lots of moves today, right, in the broader market space. And maybe if you can just quickly follow me and look at these stocks, right? Kalyan, if you can put this up. Big 14% pop. Vishal Megamart, about 7-8% higher today. Neyveli Lignite, NLC India is the stock. There was HAL, which was up strongly, sharply. That's NLC, and I'm just going by volume-led gains. HAL, ABB was up sharply as well. There was AG's Logistics, very large volume-led gain today. Motherson's Sumi was another one, which reversed after yesterday's cuts. Cummins India, which reports tomorrow, was a sharp gainer, 5-6%. Amber was another one. Look at something like a REC, look at Castrol. These are all big volume-led gains. Novama was up sharply, 10-11% capital market play there. Prudent, we should put up Prudent Corporate Advisory, again from capital market play. Novama on your screen, back at about 5,700, and Prudent also reversed. There was JSW Energy, which was up sharply today. Sundaram Finance, of course, NBFC, and large gains coming through. Polymedicure, basically. We had the medical devices company. We had the management with us earlier. NCC, Techno Electric, Taj GVK. Nigel was talking about ITC hotels. Look at Taj GVK as well, which is... actually, Taj has been strong since the morning. And, of course, India Cements. Westlife is up 20% this month. So that's, just a sampling of what happened. So it's a pretty solid, across the board, volume-led recovery that we had on our hands. We'll take a break here, but we'll take you through what to watch out for as we come back tomorrow. Rima, I'll do that in Markets Forward. Stay with us. We're back.
issue that Donald Trump fears so much. We offer this question of the land. I don't know what Donald Trump has to do with South African land, because he's never been here. And he must keep his America. We will keep our South Africa.
I think FI selling is not beyond a point a big negative. It is that whether India is doing well or not. And then there is some correction of excesses and stuff like that, which clearly seems to have been done. One reason has to be India related, that Indian results came out very bad.
Dalal Street sees its best day since the first week of January to end at a one-month high. The Sensex and Nifty soar 1.5%. The Nifty reclaims 23,700. The Sensex crosses 78,500.
China retaliates after US President fired his first tariff missile. Beijing imposes additional taxes on select US goods and launches an antitrust probe into Google. Trump puts a tariff on Canada and Mexico on hold after 11th hour talks. Global stock markets attempt to rebound after a sharp fall that we saw yesterday.
Asian Paints gains after a mixed bag in the third quarter. Decorative paint volumes and margins beat street expectation. Trend tanks after Sheen's relaunch. The street fears heightened competition from the relaunch. Thermax falls after a miss in the third quarter.
Okay, well, you're with us here on a fresh new edition of Markets Forward, your go-to program where we aim to get you everything you need to know as we gear up for the next trading session. Today was good. I'm Prashant, with me, my colleague Rima. Rima, hi.
Hi, good day, right? I mean, there's no complaint. Everything participated. The beaten down sectors like defense, capital goods up and about, banks higher, IT up.
Just like the old days, right? It's like too much reporting on markets which are down and out, and you had a bit of a break today. And a solid one at that as well. So the Nifty, and it'll come up on your screen. And there was only that initial hesitation. The market actually started higher. By 10:30, it was down. It had given up all the gains. There you go, on your screen. But then after that, it was just a trending move through the course of the day. And we ended not quite far away from the day's high. Nifty Bank also ending about 1.5%, almost 1.5% higher. Mid-cap index looking strong. Small caps lagging behind a little bit. And participation coming from everywhere. Actually, if you look at the market breadth, almost, it was not incredible. It was about 2.5:1 in terms of number of stocks which were up and number of stocks which were down. But it was pretty broad-based and gains coming through from all corners, really. You've got to look at, when you look at a day like today, you've got to remember, of course, the kind of damage we've seen. Stocks have been down 30-40% in many cases. And so the recoveries also, when they come, typically are sharp on days like today. So you had many between 5 and 15% kind of gains, at least 15 of them with very strong volumes coming through. So names like Kalyan, etc., prime examples of what got beaten down massively and which came back up about 14% or so. Actually, from the lows, a name like Kalyan is up about 120, 130 rupees or so. Rima.
And it helped that even the trade tariff fears got softened a bit as the day progressed. But let's tell you what we've lined up for you on our show today. We start with the top movers and shakers of the day with Vivek. The stocks of the day were Trent, Asian Paints and Godrej Properties. So stay tuned. We'll tell you why these stocks were buzzing, and then we'll get you the key market events to watch tomorrow. But it's over now to Vivek. He's at the big wall with the top stock movers of the day.
Well, thank you so much for that. Like you mentioned at the start, nothing to complain about as far as the markets were concerned today. First, let's start off with the top gainers. Reliance Industries, one of the top gainers. Remember, it's a heavyweight as far as the Nifty is concerned, over 3% higher, and that had its significant heft as far as the market up move was concerned. The second set of stocks that did very well in the session today was the entire banking pack. All of them saw a strong up move. The Nifty Bank Index, one of the top gainers, and look at names like HDFC, ICICI, Anderson, broad-based buying across the entire banking pack. On the other hand, the capital goods and defense stocks that saw quite a bit of a sell-off in the recent past, especially in the last two trading sessions post the budget, saw a significant comeback. Look at names like ABB, Cummins, L&T, all of them up anywhere between 4 to 8%. ABB up over 8.5% in the session today. Shriram Finance, the top Nifty gainer, select NBFCs today bounced back very sharply. This one over 5.5% higher. And NLC India, one name from the broader end of the markets on the back of strong results, actually did very well in the session today. But on the other hand, quite a few laggards as well. Trend, like you mentioned at the start, incoming competition from Shein is something that led to a significant sell-off, over 6% lower today. Tata Chemicals, another quarter where the company saw a weak set of results. Outlook for Tata Chemicals was quite muted. The stock ended low by 3%. Gland Pharma, another name from the pharma pack that saw a weak set of results. That stock too ended low by almost 3.5%. And AB Capital, one name from the F&O space, NIM compression as far as the NBFC arm was concerned. This particular stock has cooled off quite significantly from the recent high, today ending lower by close to 3%.
All right, Vivek, thank you very much for that. So that's basically what moved, and some strong moves there. Jay Bala is with us, and so Sudeep Bandopadhyay. Gentlemen, good afternoon. Great to have both of you here. Jay, since we've had a very forceful move today, for our viewers, what's the setup looking like from here?
Yeah, hi Prashant. See, I pointed out that the downside was limited to 22,600, and the market have turned from 22,784 and change. So the upside potential is about 24,100, but I'm still viewing this as a counter trend bounce, but open to revising to a much more bullish stance. So the takeaway is that abandon bearishness for the short term. The potential for the market to hold the January low of that registered about 22,700 has a little bit of tailwind to it. So we'll watch out to the structure of what the market does. We're watching February 18th as an important turn date. So if the markets post a corrective structure into that date, we'll once again turn bearish. But if it were to start looking bullish, we're looking for all-time highs. But at the moment, I'm leaning more towards the bearish side rather than the bullish side. But, as I said a few weeks ago, the downside was very limited to 22,600. We're watching what the market does around resistance level of 24,100.
Which areas are looking, if you said be more constructive, where be more constructive, which areas, which pockets?
Once again, pharma index is starting to look corrective. And the bullishness is probably in the tech space, but there's a lot of cross currents here because the semiconductor index in the US market is saying that there is a distinct probability of a significant top. And if that is confirmed by the NASDAQ 100, then we have to abandon the bullishness that's there in the IT sector. IT sector is likely to take cue from the US tech sector. So right now, bullish on Nifty IT. And a little bit on the pharma sector, and counter-trend rally in the BSE Capital Goods Index.
Got that.
Jay, Jay, by the way, there's a cat right behind you.
Yeah, that's right. That's Clover.
Clover.
Cute.
Wow.
Yeah, last in the leaf.
Very cute. Just a quick word. What's the significance of 18th of February as a turning point in the market?
Yeah, we have some price structure which respond to markets timeline. So basically, square dates from significant lows and significant highs is a GAN measurements of turn dates. So that's how the markets turn from Jan 27. I had projected Jan 24th as an important date. The market bottomed one day lower after that. So we have a similar date coming up on the February 18th.
Okay, thank you. Let's get to the big story. Fast fashion brand Shein has made a comeback in India. Reliance Retail has relaunched the app in India after it was banned in the country in 2020 over security issues. So the relaunch today has sent the firm's competitors into a tizzy, with Trend seeing a big cut of 6%. Shilpa is here with the details of the story. Shilpa.
Well, you're absolutely right. You know, fast fashion app Shein is now back in India. It went live over the weekend and it has been brought back to India by Reliance Retail this time. In fact, you know, there was so much wait for the app to come back that within a day of it being launched, there were over 10,000 downloads of the app, and it was also the top trending app on the Apple Store as well. Remember, it was banned in 2020 over data security issues, but now it is back in a new avatar. Now, what is Shein 2.0? Reliance Retail has now brought Shein to India, and as part of this deal, the entire operations, the data, all of that will now be managed by Reliance Retail in India. The customer data entirely will be retained within the country, and Shein will only act as a technology partner, and Reliance will pay a licensing fee for the technology. So that's part of the deal, because it was banned over data security issues, and so now all of the data, all the customer data and all the operations will be within India. And also, because Reliance Retail has launched it, this time Shein will only have products that are made and designed in India and potentially will also be exported outside as well. And you know, this was part of the deal that Reliance Retail brought it back, and they're also looking at eventually cross-selling Shein's product on its other e-commerce platform, which is AJIO as well. I was taking a look at the app. Currently, it's only delivering in Bengaluru, in and around Bombay and in Delhi. Pan-India shipping will happen soon. And currently, there's only apparel fashion that is available on the app, with products starting as low as $199. And that is sort of what seems to have sent, you know, jitters down all the stocks of value retail, because Zudio, remember, took to popularity over the last couple of years because there were not many other value fashion retail players that were available in India, and with its low pricing, with just everything around under $9.99, Zudio really took off, and it also prompted a lot more players to come out. Shopper Stop launched Intune, ABFRL launched Style Up, and even Reliance also launched its own version called Usta. Now, all of these will face competition from Shein, but remember, most of these, especially Zudio, is only an offline player. It is not available online, whereas Shein is only an online player. And with Reliance has a pan-India network that is already ready. So it won't take the company a lot of time to, you know, sort of reach everywhere. And that is also a concern. And if you see, Shein globally has been massively popular. Ever since its launch, it has really taken over. Even in India, before its ban, it was very, very popular. And that was one of the reasons why the government was worried about data security. So when it banned TikTok and all of these apps, it had banned Shein as well. Just look at the numbers also, right? Globally, it has done almost 2 billion in sales in 2 billion in profit last year. And despite a slowdown for the first half of 2024 alone, it clocked profits of just under $400 million. And in its last valuation, when it raised funds last year, it was valued at a whopping $66 billion. So it will be interesting to see how Shein will take to India's Gen Z, and how Gen Z will respond to Shein, and how that will sort of, you know, shape, or rather reshape, the value retail landscape in India going forward.
Thank you very much for that. The stock markets have responded. Trend share price was down more than 6%. So now Trend is down more than 30% from its 52-week high. Is it a buy?
Well, I think I still would not be running to buy Trend. I think valuation still is rich. But, you know, this Shein launch, I'm not sure that this should lead to significant correction in Trend, because they operate in different spaces. You know, Zudio is fully physical. They have gained market share. They have done very well by physically expanding, you know, around across the country into tier 2, tier 3, tier 4 towns and cities. And that has been their mantra. Whereas Shein globally, and what I hear even in India, is a completely online offering. So this is online, that is completely offline. So yes, there is of course conflict, and there is of course you know, competition, but it's not so direct. And I don't think Trend will be immediately impacted with the launch of Shein. Yes, sentiment and you know, challenges of course, but not this way, so that the price needs a significant correction because of Shein launch. So I'll keep watching the space. Trend valuation continues to be rich, so I don't think I will venture there even now.
Okay, so Zudio's offline dominance perhaps is not going to be questioned for now, given Shein's online presence. Asian Paints gained close to about 2%. Q3 numbers were broadly a mixed bag. Margins look good. Vinny joins in with the details. Vinny.
In terms of numbers from Asian Paints, we're seeing mixed numbers this time. While revenues and profits are largely in line, margin a slight bit of a beat. But what is a concern is that the commentary, that's still not changed, right? In terms of demand trend, that's still a concern. Now, first, let's look at the numbers quickly. Net profit of the company, that's down by 23.5%. Revenues down by 6% on a year-on-year basis. While in terms of the margins of the company, 19.5% versus 22.6%. So on a year-on-year basis, we're seeing contraction that has come in terms of the margins of the company. Our poll was anticipating somewhere at 19.6%, 18.6% the EBITDA margins. They've come in at 19.5%. So slight bit of a beat on that front. Now, decorative business of the company, that's an important one. The paint volume growth over there is at 1.6% versus the growth of no growth that we were expecting, zero growth. Now, domestic business revenue, that's a decline of around 8%. The company highlighted that there is muted demand conditions coupled with down trading is what they saw, and weak festive season impacted the revenue growth of the company. Subdued demand condition, adverse mix is something that is impacting the overall margins of the company, as well as the near-term challenges in terms of demand. They're cautiously optimistic on that front, and that is why we're saying Asian Paints is a mixed set of numbers this time.
All right, thank you very much, Vinny, for that. Sudeep, any thoughts on Asian Paints? Or actually, I wanted to, a wide amount of damage has been done. So actually, why not leave the field open instead of asking you about Asian Paints? Anything looking interesting? If markets are looking more constructive after the fall, and on the technicals also, Jay seems to believe so, would you want to leave our viewers with a stock or two?
Oh, absolutely, Prashant. I think, Q3 numbers, leave aside the budget and what's happening with Mr. Trump and his tariff, I think the specialty chemicals and chemicals, these segments, they were completely bombed out sectors, and, last 7-8 quarters have been terrible. But this quarter, when they declared results, very clearly the green shoots are visible. And the valuation, of course, is very, very attractive compared to where they were and where they have come. And also, on otherwise also, valuation is looking attractive. So if somebody is building a portfolio for, let's say 1 year plus kind of a time horizon, it's worthwhile to look at Aarti Industries. It's worthwhile to look at SRF, and Deepak Nitrite. And, these kind of chemical, specialty chemical businesses, they definitely will reward the shareholders who are buying in now over a 1 year plus kind of a time horizon.
Okay, betting on the specialty chemical companies. But let's talk about Godrej Properties. Stock ended with a gain of 3% post the Q3 numbers. Vinny's still with us. Vinny.
So absolutely, in terms of numbers that are coming from Godrej Properties, specifically in terms of the pre-sale or the booking value that you're looking at, 5,446 crore, which is a bit of a decline versus last year, 5,720 crores. Collections, on the other hand, have seen an uptick of around 27%. The net debt of the company has seen a significant reduction on a sequential basis. So important to watch out for that. We're seeing that the stock was also buzzing in trade. Now, booking value for the 9-month period has also seen a good uptick of 48%. This is the highest ever booking that they've seen in terms of 9-month period for the company, and they've already achieved the 71% of annual booking guidance which the company has mentioned for FY25. Collections around at 10,086 crore rupees. Management said that they are on track to achieve that 27,000 crore guidance, booking guidance for FY25. Total estimated booking value of potential that they have over here is around 23,450 crores, which is also surpassed the guidance that they're given of 20,000 crores. So guidance is also much, they've already surpass the guidance for most of the factors that they're given for FY25, and that is the reason why the stock is in focus and buzzing in trade.
Okay, well, there's Godrej Properties out there in focus, which reported numbers. Jay, quick view, any of the names discussed? I mean, you want to comment on specialty chemicals or Asian Paints, Godrej Properties, anything?
Yeah, SRF is actually a very interesting breakout. It's consolidated between 2021 and 2025, between 2,800 and 2,100. Usually, this kind of rectangular breakout, it leads to very, very, very sharp up move. So, but the risk reward is quite wide. The bullishness gets negated below 2,100. As you can see, it's currently at 2,900 and change. So the stop loss is quite wide for it, but it is what it is. this has potential to even touch something like 5,000. So it's a beautiful breakout, a technician's delight. So, but the risk reward is quite wide for it. And when it comes to paints, as I pointed out earlier, FMCG sector has possibly clocked a very significant top for the medium to long term. So remain negative on Berger as well as Asian Paints.
Okay, all right. Godrej Property is a big call, right? Which Jay is making. And of course, there's a view on paints as well. One more number which came in the last hour today was Thermax, and the stock actually ended 3% lower. It was up actually. Vamakshi is here with details. Vamakshi.
Well, Prashant, it was a weak set coming in from Thermax. When we look at the revenue, that saw an uptick of 8% but came in 7% below the street expectations. The margins too contracted by somewhere around 53 basis points, and as compared to estimates, it was nearly 185 basis points lower. The net profit too saw a decline of 52%, but this is largely because Q3 FY24 had an exceptional gain of 126 crores. But nevertheless, again, it was a miss across the board for Thermax. Largely, when we look at the revenue miss, it is being driven by industrial infra. When we look at the EBIT margin as well, it is being impacted by the industrial infra segment in particular, because there were some cost overruns out there. Chemical segment profitability was also lower on account of the products mix changes. When we look at the order booking this time around, there was no large order book during the current quarter, and this in turn led to lower order book. Order inflow dipped by almost 8% year on year, so again not boding well for Thermax, and the order book saw a marginal uptick of only 6% year on year. So overall, when you look at the revenue, when you look at the financials as well as the order activity, it was not that great. Weak set of numbers, resultantly the stock dipped in trade today.
Thank you very much for that, and we'll thank our guests Sudeep and Jay for joining in. Get into a break. On the other side, the top corporate voices and the key events to watch tomorrow.
We are hitting the limits on what the government can directly do in terms of capex, and therefore the guidance from the government was that we will maintain capex as a percentage of GDP here onwards, that the scope for us to do more is now gone. So now they're experimenting with, for example, this 1 lakh crore that they've decided to spend on urban infrastructure. They have to find such avenues so that capex continues, but there is very little more they can do at the central level. Investment activity in the country is going to be a lot more dependent on how well the real estate cycle turns, how well the power generation cycle turns. And I think this almost obsession with waiting for the government to spend an extra 30,000-40,000 crores, in the larger scheme of things, these are all rounding errors.
I think FI selling is not beyond a point a big negative. It is that whether India is doing well or not, and then there is.
Okay, welcome back. Let's just quickly get you a sampling of the corporate voices that we had through the course of the day. IndusInd Bank, we spoke with them after their numbers. Numbers were disappointing, but the bank's CEO and MD, Sumant Katpalia, said that forward flows have stabilized in the microfinance book. Microfinance is about 8% of their overall portfolio, but that's been the cause for the pain. He added that the IndusInd Bank would wait for another quarter or two before saying that MFI business has stabilized. He went on to say that they've done about 9,000 crores worth of disbursals in the MFI book in the third quarter. So that is IndusInd. There was also commentary on credit cards and, of course, other unsecured portfolios as well.
Well, Poly Medicure's management said that the company's margins would improve by 100 to 120 basis points on a full-year basis. They are guiding for a 20% top-line growth over the next 2 to 3 years. They also highlighted that India remains a key market, growing at 50%. The company also added that the QIP proceeds would be used for inorganic growth opportunities.
All right, well, before we wrap up on this program, let's quickly get you some of the events to watch out for as we come back tomorrow. Upasana is here with that. Upasana.
Well, it looks like quite an eventful day tomorrow. First up, let me tell you the global economic cues that we'll be closely tracking. US will be reporting its trade balance data, non-farm employment change data, S&P global services PMI data, non-manufacturing services PMI data and crude oil inventories. Europe will be reporting its composite PMI data for the month of Jan, and mind you that the ECB president will also be giving speech tomorrow. Back home, India will be reporting its S&P Global Services PMI data for the month of Jan. Now let us look at the key stocks that will be in focus on back of some corporate action. Board meetings like Info Edge will be in focus on back of this, as board will consider stock split tomorrow, and Sona BLW Precision Forgings will also be in focus as this stock goes ex-dividend tomorrow. Now, important list of results such as Abbott India, Arvind Fashion, CMS Info Systems, Cummins, Kansai Nerolac, Gujarat Gas, Page Industries, Swiggy, all these companies will be in focus as they will be reporting their Q3 FY25 numbers. And lastly, Delhi Assembly elections is scheduled for tomorrow, and RBI MPC meeting also begins tomorrow till 7th of February. Also, IPO Ares Infra Solution closes for subscription tomorrow. So all in all, these are the broad list of events that we'll be closely tracking tomorrow.
Basna, thank you very much for that. So Delhi elections, Swiggy numbers, those would be the big ones. That brings us to a close in this edition of Markets Forward. Thank you for watching.
Of excesses and stuff like that, which clearly seems to have been done. One reason has to be India related, that Indian results came out very bad. I think it is one of the best budgets that we've seen in many, many years, and I tweeted it's a dream budget. So first thing is that you normally want money with the public rather than with government. It should just be the general thumb rule of looking at anything, that money with public is better than money with the government. You have not said that, oh, you cut a tax rate across the board, therefore the rich will get much more. It has come to the correct audience in that sense. So it has to be travel, it has to be savings, it has to be these car consumer durable types. As I said, we are not buying those, but they could. The overall markets are down a lot, then India may outperform because A, it's not directly affected, and B, don't worry about markets like Taiwan because they have been closed for a week. So if you just look at how TSMC ADR was trading during this period because of NVIDIA and others, and then the TSMC local fall. So don't get totally carried away. A little bit you're allowed to get carried away. But the point is that the budget was good and this tariff situation is bad.
Some of these kind of an IT services name is something we like to have. If you look at our portfolios, our regional funds would have something like a Cognizant Technologies that's not participated in the rally, trades at 15 times earnings. We discussed about bank in the previous question. I think things improve for banks from here. One would be still careful of expensive small to mid cap names. See, they had a one-way rally over the last couple of years. And again, nobody could understand what was happening in these names between, I would say, Jan to whatever, somewhere August, September of last year. That is going to unwind. We've seen part of that unwind. I won't be surprised if these names correct another 15-20%. All the noise, all the rhetoric you see on tariffs is basically escalate to de-escalate. We saw this early this morning, Mexican president promising 10,000 troops to guard the border. And the same thing got repeated with Canada. So I think there is a call or there are interactions scheduled with the Chinese authorities in the coming days. And the hope is all these tariffs come with a lag, basically, and some solution is going to be found out. And our sense is, look for China, it's going to be do or honor a part of the deal from 2018-19, buy some of the goods, sell part of the TikTok business, which is in US. And again, at the end of the day, the administration here wants to leave a legacy. President Trump wants to leave a legacy of a strong growth rate. So I don't think they do anything significant to derail the story. But yeah, there is going to be a lot of noise, a lot of bumps along the way.
Hello and welcome to Business 360. I'm Shireen Bhan. The top stories that we're tracking for you this evening. China retaliates after US President Trump fires his first tariff salvo. Beijing imposes additional taxes on select US goods and launches an antitrust probe into Google. Trump puts the tariffs on Canada and Mexico on hold after the 11th hour. Global stock markets attempt a rebound after yesterday's sharp fall. The rupee holds steady along with other emerging market currencies against the dollar. The Sensex and the Nifty turned positive for 2025 after a sharp rebound. Asian Paints reports a mixed bag in Q3. Decorative paint volumes and margins beat the street. Management highlights subdued demand, especially in the urban centres in Q3, remains cautiously optimistic on demand recovery. Defence stocks rally in trade today after the Defence Secretary exclusively tells CNBC-TV18 they intend to end the fiscal year with orders worth 2 lakh crore rupees or more. This would be close to double of last year. Hindustan Aeronautics and Bharat Electronics rally over 5% in trade. Prime Minister Modi's visit to the US to hold talks with President Trump likely on the 13th of February. The visit comes against the backdrop of concerns in India over President Trump's rhetoric on tariffs and immigration. The US deports over 200 Indian nationals who were allegedly staying illegally. This is the first round of deportation of illegal Indian immigrants. Sources say the military flight carrying the Indians would land at Punjab's Amritsar airport tomorrow morning. Finance Secretary Kanta Pandey says that discussions are ongoing on the issue of waiving AGR dues for telecom companies, but refuses to give any more details. Tells CNBC-TV18, and I quote, "You will come to know when it comes," end of quote. CNBC-TV18 Citizens Monetary Policy Committee expects the RBI to cut rates on Friday by a 4-1 majority. Economists at JP Morgan and Nomura predict a 100 basis point rate cut through the year. Mumbai Civic Body unveils its highest ever annual budget of more than 75,000 crore rupees. More than 43,000 crore rupees allocated for capital expenditure on key infra projects. Proposes a universal footpath policy to make the city more pedestrian friendly. Delhi goes to the polls tomorrow in a three-cornered race between the Aam Aadmi Party, the BJP and the Congress. 699 candidates across 70 assembly constituencies in the fray. Over 15 million citizens eligible to cast their vote. Results to be announced this Saturday. Well, the top story this evening, US President Donald Trump has pulled back from the brink of an economic conflict with Canada and Mexico, but he's pressing ahead with tariffs on some Chinese imports, sparking a retaliation from Beijing. Stock markets are trying to rebound across the world after that sharp fall yesterday. Shares did rebound across Japan, Hong Kong and India. European markets also in the green. Shares in Shanghai ended marginally in the red after China imposed taxes on US petroleum products, among others, and launched an antitrust probe against Google. Well, Archana is standing by with more on the fresh round of the tariff trade escalation between US and China. Archana, what are the products and the goods caught in the crossfire?
Shireen, in an interview last year, Donald Trump declared that tariff is the most beautiful word in the dictionary, and by now, the whole world has seen it too. A day after Trump imposed a 10% tariff on Chinese imports, Beijing retaliated with tariffs on a range of US products. Now, China has imposed the following tariffs: a 15% tariff on coal and liquefied natural gas, a 10% tariff on crude oil, agricultural machinery, a small number of trucks and big engine sedans shipped to China from the United States. Now, these tariffs are set to take effect next Monday. Now, despite being the world's largest importer of LNG, China does not significantly import LNG from the US, which is the biggest exporter of LNG products across the world. Now, in addition to these tariffs, China has also announced export controls on several elements that are critical to the production of modern high-tech products. Now, these elements are designated as critical minerals by the US Geological Survey, which essentially means that they are important to America's economic or national security. Now, China has also announced an antitrust investigation into Google. Although Google's search services have been blocked in China since 2010, it still conducts business through partnerships with local developers, providing apps and games to the Chinese market. Moreover, China has added Calvin Klein owner PVH Corp and US gene sequencing company Illumina Inc. to a so-called blacklist of entities. Remember, Trump had warned that he might increase tariffs on China further unless Beijing takes action to stem or to stop the flow of fentanyl, which is a powerful opioid that kills tens of thousands of Americans each year. Now, what's China's role in this? American officials say that chemicals used in fentanyl come from China. But will we see a repeat of what happened with Canada and Mexico, where Trump paused the tariffs for a month? Well, all eyes are on whether the door is open for talks and negotiations, as both Trump and Xi Jinping are expected to speak this week. Back to you.
All right, Archana, many thanks for joining us. That's the latest in the tariff war between China and the US. But Canada and Mexico have managed to avert the tariffs at least for a month. President Trump held 11th-hour phone conversations with leaders from both countries and agreed to pause the tariffs for a period of 30 days. In return, Canada and Mexico have promised to bolster security at the border. Here's how the US reached agreements with its neighbors and its biggest trading partners. Take a look.
U.S. President Donald Trump backed away from his threat to impose a steep 25% tariff on Canada for 1 month, according to Canadian Prime Minister Justin Trudeau. The decision came after the two leaders had a phone call that Trump said went very well, during which Trudeau promised to deploy new technology and personnel along its border with the United States to stop the flow of fentanyl. Just hours earlier, Trump also paused a planned 25% tariff on Mexico after President Claudia Sheinbaum agreed to send 10,000 National Guard members to the border to stem the flow of illegal drugs. She told reporters on Monday the agreement included a U.S. commitment to act to prevent trafficking of high-powered weapons to Mexico.
I told him we wanted him to pause the tariffs, so we reached that agreement. But I also explained to him that the amounts of high-potency weapons that enter from the United States into Mexico is a serious issue.
Trump said Mexico sending soldiers to the border would stem the flow of narcotics, fentanyl in particular, as well as curb illegal immigration.
He asked me how long I wanted to pause tariffs. I said forever. He told me how much time. I told him a month. But I'm sure that during this month, we'll be able to deliver good results for his people and the people of Mexico.
Trump said the month-long suspension would be used to engage in further negotiations. U.S. tariffs on Mexico, Canada, and China had been set to take effect at midnight on Tuesday.
Well, all of that did help the markets globally. The Sensex and the Nifty saw a sharp rebound thanks to positive global cues. The Sensex gaining nearly 1,400 points and the Nifty up over 370 points. So that's where the markets closed almost 2% higher on the Sensex, 1.5% higher on the Nifty, the mid-cap index 1.5% higher, and the Nifty Bank almost 2% higher. So strong close there for the markets. Prashant is standing by to wrap up the market highlights for us. Relief as there is a de-escalation, at least for now, on tariffs, Prashant. Global markets heaving a sigh of relief.
Well, solid recovery coming back, and a broad-based one at that. So, I mean, this has been missing for some time, and that came back in some fashion today. So the start was positive. There was an early dip, but that was it. After that, the market never looked back, and it just sort of kept climbing higher and higher. The Nifty up on your screen, the Nifty Bank, about 1.5% gains. Mid-cap, small-cap indices. I mean, actually, the mid-cap index was largely in line with what the broader, larger indices did. The small-cap index may be lagging behind just a little bit. Market breadth was pretty positive through the course of the day as well. I'll start with what was higher on the large-cap Nifty index. Shriram Finance was the big mover. Larsen & Toubro, Bharat Electronics, Adani Ports, IndusInd Bank, we spoke with the management today, and Tata Motors was another one. Remember, there has been a fair bit of dispersion and pressure across the market, across lots of stocks, which I'm going to mention. So, you know, these gains, some of these large gains have to be kept in mind with that context. Now, on the lower side of the Nifty, Trent was the big loser. There was also Britannia and Hero MotoCorp, which were lower as well. In the broader space, lots of big volume-led gainers. Kalyan Jewellers was the big one, about 14% by close. Vishal Megamart, it's not done very much since listing, 120 plus, but big 7% gains. NLC India, there was ABB, which looked very strong. AG's Logistics, Motherson Sumi, Cummins India, which reports tomorrow. Amber was a big gainer. REC is, and of course, REC and PFC both have cracked quite a bit. REC was a big mover. Castrol of course, on the back of earnings. Novama went up 10% plus, but of course, it had fallen to about 5,500 rupee levels. JSW Energy, Sundaram Finance, Poly Medicure, we had the management with us after numbers. NCC, which cracked big time yesterday, came back up. Techno Electric, Taj GVK, Natco, Aeroflex, India Cements. A name like Westlife has rallied over the last 4 days non-stop. And there was something like a Prudent, which is a capital market mutual fund distributor, which came back and ended higher. Premier Energy, just to look at stocks on the downside, was a loser, 4% lower, big swing from the day's high. Swiggy was down about 6%, and you had something like a Triveni Turbine, which was down about 10% as well. There were more names, but it was largely concentrated on what was doing well. So looking good, solid, and I think some of the global tariff news flow also reversing, and these tariffs being backpedaled for now, postponed. I think that is also helping global sentiment quite a bit. Back to you.
Well, that certainly has helped global sentiment. Prashant, many thanks for joining us. The rupee managing to hold steady against the dollar, along with most emerging market currencies. Most Asian currencies, including the Chinese yuan, stabilized after Beijing retaliated with levies of its own on the US. Latha is here with the money market wrap. Latha.
Yes, that said, the dollar rupee was actually a picture of resilience despite the trade war and China announcing retaliatory tariffs on some US goods. The rupee moved actually in a fairly narrow range. At its strongest, it was 87.02. At its weakest, about 87.13. In any case, for the better part of the day, it was above yesterday's close. And of course, yesterday was the day of big fall. Actually, today, the sentiment in the entire FX market was more pro-EM. It looked like US had backed off against Mexico and Canada. And even after the Chinese retaliation, the yuan actually strengthened. So it was seen as people, trading partners standing up to the US. I wouldn't be surprised if there was even a sentiment change in the equity markets. Quite a few dealers said that they did not see, the FPIs coming and, buying dollars in a big way. There doesn't seem to have been a sell-off by the FPIs. Maybe there is a sentiment change towards India in particular. The budget plus the upcoming rate cut, all of them seen as pro-growth. The rupee has seen as having fallen enough. So it looks like today could be the start of some resilience in Indian financial markets.
Latha, many thanks for joining us. Oil prices retreated after US President Trump's decision to pause the imposition of tariffs on Mexico and Canada. China's retaliation to US tariffs with levies on US coal and LNG also increased fears of demand disruption. Brent is currently trading at $75 mark. Trump's decision to hold tariffs has also boosted the cryptocurrency market, Bitcoin recovering after yesterday's sharp fall, briefly reclaiming the $100,000 mark. Ethereum and Solana also followed suit, up over 15% each. Meanwhile, gold prices rose today, holding near a record peak that was hit in the previous session. This as lingering US tariff and inflation concerns boost safe haven demand. Prime Minister Modi will visit the US and hold talks with President Trump on the 13th of February. This will be the Prime Minister's first bilateral trip to the country since President Trump took office for his second term. Prime Minister Modi is scheduled to visit Washington for 2 days. The visit comes against the backdrop of concerns in India over President Trump's rhetoric on tariffs and immigration. The US has meanwhile deported over 200 Indian nationals who were allegedly staying illegally. This is the first round of deportation of illegal Indian immigrants. Parikshit is standing by now with the details. Parikshit, take us through the details of this first batch of illegal immigrants being deported.
Well, the process has kick-started. Last night, 205 Indian nationals who had been staying in the US illegally were put on a C-17 military transport plane in San Antonio, Texas. And that plane took off around 3 a.m. last night for India. So there will be more batches, more Indian nationals who will be deported back, as there are 18,000 Indian nationals staying illegally in the US. And this information has already been conveyed to Indian authorities over the last 6 months. India has expressed its readiness, saying that it is against illegal immigration. It creates all sorts of issues. And we are ready to take back these citizens if it's proven that they are Indian nationals. Last year also, we had seen the deportation of around 1,100 Indian nationals from America to India through different flights that had taken place. The US Embassy has also spoken and sent a very strong message saying this only goes to show that illegal immigration is not worth the risk. The US is tightening border controls, custom rules, immigration laws, and more action is on the cards as well.
Parikshit, many thanks for joining us. Defence stocks gained in early trade today. This after the Defence Secretary Rajesh Kumar exclusively told CNBC-TV18 that they intend to end the fiscal year with orders worth 2 lakh crore rupees or more. This target would be close to double of last year. When asked about Donald Trump's message asking India to buy more defence equipment from the US, the Defence Secretary said India is willing to procure more from the US if they meet requirements on quality and indigenization. Take a look.
We do have some procurements which are on the anvil where American companies would be in the picture, and as long as they are able to meet our requirements in terms of quality and in terms of certain levels of indigenization, of course we'll be, those are carrots that will be that we will be able to dangle before the Americans. We are already meeting a good proportion of our requirements from capable American companies, and we intend to continue doing so. There will be significant buys, and some of that will go to the US as well.
Well, that's the Defence Secretary exclusively speaking to CNBC-TV18. OpenAI CEO Sam Altman is scheduled to visit India tomorrow. He's expected to meet Prime Minister Modi and IT Minister Ashwini Vaishnav to discuss the company's plans for India. Speaking at the CNBC-TV18 budget verdict, India's Electronics and IT Secretary S. Krishnan said the government is willing to explore a potential cooperation with OpenAI. However, he added a caveat: AI models will have to be built on open source foundations. Take a look.
He is expected to visit New Delhi, and he is expected to meet hopefully the Prime Minister or the Minister for Electronics. We presume it is to discuss on what OpenAI can do for India and the kind of applications of OpenAI in the country, and how well India is equipped and what we can do to benefit from this. OpenAI's model is not an open model, right? So the ChatGPT is not an open model, so if at all we are going to build on models, it has to be on other open source models which we pick up and work towards.
Well, that is the METI Secretary on Sam Altman's India visit. In earnings, Asian Paints reported mixed set of numbers in Q3. Margins were a slight beat while revenue missed the mark. On an annual basis, the company's net profit dropped more than 23%, while revenue fell 6%. The company's decorative business revenue has declined nearly 8%, largely led by muted demand and weak festive demand. MobiKwik shares were down in trade after payment solutions provider posted a net loss of 55 crore rupees in Q3. This despite a revenue growth of 18% when compared to the last year. The company said that higher lending-related costs and lower financial services revenue weighed on its bottom line. Mumbai civic body, the BMC, has unveiled its highest ever annual budget of more than 75,000 crore rupees, more than 43,000 crore rupees allocated for capital expenditure on key infra projects. Santhya is standing by with more. Santhya, take us through the key highlights of the BMC budget.
This was the third consecutive year that the BMC budget was presented to an administrator and not to a standing committee. Why? Because the term of the corporators ended in March 2022 and the elections for the new term and the new corporators are yet to be held. Now the 74,427 crore rupees budget, out of this, an allocation of 43,162 crore was made for capital expenditure, 5,100 crore rupees for roads and traffic department, 5,807 crore rupees for Mumbai Coastal Road project, 3,039 crore rupees for storm water drain department, and 650 crore rupees for sewage operation department. For key public services, over 4,000 crores were allotted to education department, over 7,000 crore for health department, 261 crore rupees for fire department, 309 crore rupees for disaster management, and 220 crore rupees for the garden department. BMC announced that it's going to start 250 new public clinics, also known as Apla Dawakhana, all over the city. One interesting initiative announced by the BMC was the introduction of cyber awareness program for students. It will serve two key purposes. One will be to ensure that the students learn how to use the internet in a safe manner and to keep them safe from cyber fraud. BMC also focused on environment initiatives and projects like promoting eco-friendly cremation and proper disposal of residue from idle immersion. These are the projects which will take place under environmental related initiatives in the next few months. We also spoke to Bhushan Gagrani, the BMC commissioner himself. This was the first time that he presented the BMC budget. Listen to what he has to say about this BMC budget.
The budget of this year, that is 25-26, is of 74,400 crores, which is more than almost 15% than that of last year. The main aspect of this budget is that the huge thrust on the capital budget and capital expenditure. So out of the 74,000, around 43,000 crore is being provided for capital investment and capital expenditure. So our revenue expenditure is consistently under control and coming down.
Well, it is budget season, and that's the BMC's budget. Now, the Supreme Court has come down hard on the Assam government for failing to deport those declared as foreigners. The court questioned the state government's decision to keep 63 foreigners in detention centres indefinitely. The apex court has ordered that the individuals must be deported within 2 weeks. The Assam government has also been instructed to file a compliance affidavit. Well, with that, it is time for us to wrap up this edition of Business 360. The news will continue right after this. Stay tuned. You're watching CNBC-TV18. We're back in a moment.
Tonight, I am announcing Canada will be responding to the U.S. trade action with 25% tariffs against $155 billion worth of American goods. This will include immediate tariffs on $30 billion worth of goods as of Tuesday, followed by further tariffs on $125 billion worth of American products in 21 days' time to allow Canadian companies and supply chains to seek to find alternatives. Canadian energy powers American manufacturing, businesses, and homes. Of America's top 5 trading partners, Canada is the only one with whom the United States runs a trade surplus in manufacturing. And Canada buys more goods made by Americans than China, Japan, and Germany combined.
Hello and welcome to Commodity Champions. I'm Manisha Gupta. Well, the gold price has hit record high yet again in the previous trading session and remained in sight of peak on renewed concerns over US-China trade war. The US President Donald Trump hit pause on tariffs against Canada and Mexico, but the same favor was not extended towards China. The Chinese government imposed retaliatory tariffs against the US on some goods and export controls on certain metals. Inflationary concerns also have fueled demand for safe haven buying of the yellow metal. So what's in store for gold next? To discuss this, we are now joined by Sachin Jain. He's Regional CEO for India at World Gold Council. Sachin, hi, good to have you. And to the global cues first, because they really seem to be taking priority right now. We are looking at gold taking support, even as we've seen tariffs push back a bit. How are you reading onto the US tariff turbulence at this point?
First of all, Manisha, thanks for having me on your platform. It's always a pleasure. Well, the world of gold has been quite interesting. You know, coming out of 24, we think the year of gold, the year of 24 has been a year of gold. And it progresses in the same fashion. And all the elements that you just mentioned that have stood behind gold have been the fundamentals. Gold as a safe haven, gold as a liquid asset, gold as a hedge, gold as a diversified portfolio. So all elements have paid out. And if you look at the core pillars on which the gold sort of pans out, the central bank's mind, which is really the strength of the country and the strategic view of any nation, and that has been very interesting last year. That has grown significantly, and move fast forwarding to 2025 will continue as the world becomes slightly the way it is on trade tariffs and so on and so forth. Now, gold as a financial instrument has played up very well last year with almost a 30% plus return, and that has got a lot of interest from the financial markets on gold as a segment, and that will continue in 2025. Jewelry as overall consumption, we've seen globally has been a bit of dip, but India has done very well with, of course, an outstanding Q3 of August, like July, August, September, post the reduction of custom duty. But I think what's happened, particularly on Saturday with the new budget coming out, a budget that's so strong, a budget that sort of almost marches India to a Viksit Bharat 2047 with core pillars of simplicity, core pillars of investment in infrastructure, and other elements that have paid out. We believe that this is going to be a very strong, phase for gold, not just India, but overall. Now, you mentioned about things happening in America and everything. Again, go back. I always talk about this, the core pillars of gold, which is around hedge, around geopolitics that happens and how gold tends to be a stable asset class. So all those fundamentals of gold are panning out.
Sure. Sachin, coming back to budget, and as you mentioned onto that one, we also saw jewelry import duty cut from 25 to 20%. How is that going to impact Indian buying and overall market?
Well, I think the Indian market is quite sort of well segmented, and there is a lot of consumption that is led from a high-end luxury sort of consumer. And I think a reduction of gold import duty is a good thing. It'll only amplify consumers' interest who perhaps are buying overseas for certain brands will buy here. But I think it also, what's really done is that when we talk about the per capita income of an Indian on the street, a regular Indian, and how that's going to change with the changes in the income tax and other elements, we've seen as historically that every 1% increase in the sheer money in the hands of people, the sheer disposable income, it leads to about 1% increase in demand of gold. So we believe that as the Indians or Indians at mass will have more disposable income, it'll have an impact positively on the gold consumption. What you mentioned around the import duty on gold as jewelry, that's gone down little. But I think it's only a positive. I think it only amplify the Indian creativity to be, there'll be a bit of competition, which is a good thing. And also, I think it'll make us work better as Indian manufacturing and Indian creativity to almost, appeal to a global consumer as well.
Sachin, the other thing clearly was about India creating different tariff lines with more HSN codes. Now, we do understand that this would plug perhaps the revenue loss that the government was having, and it would make it easier to understand what kind of gold we are importing.
Well, actually, I think if you go back to the four sort of pillars of Viksit Bharat, one of them, of course, is infrastructure, the other is manufacturing, then it's about skill development. There's a lot of talk in the budget around skill development. But the fourth, I think, is what you're alluding towards, is simplicity. And simplicity with, of course, bigger steps. So when we saw the respectable finance minister give out the budget in July, it was a very big step for the gold business, where not just make it simple, but also, almost erasing the whole parallel gray market that used to exist. But I think now, with all the different elements that you mentioned, operating in India as a business, an ethical business, will get more simpler. And I think it's only positive for the overall industry to operate more transparently. We've always had seen as gold industry, being a slightly opaque business. But if you look at how many industry players and people in the gold business have gone in the mainstream, to list their companies or stock markets and so on and so forth, it's only an amplified view that we can operate more transparently. And you rightly said that this one change has plugged this loophole that existed.
Clearly. Sachin, I understand, the previous conversations that we've had as well, you've said this many a times that 2024 was a phenomenal year, not just in sense of the gold price return, but also the number of IPOs that Indian market came out with from the jewelry sector and the kind of transparency that India continued to show there. 2025, what is your sense? Because you're just working with so many things with ministries on a global level as well. What are we looking forward to gold as a financial asset or a sector for 2025?
I think gold 2025 will be again a strong year because the core pillars on which gold is standing on, and I mentioned about the geopolitics, the hedge, all the core fundamentals are strong. But I think the big steps that the Indian industry and the government took a few years ago, elements like mandatory hallmarking, which now we're seeing impacts on the floor, where consumers' trust in gold is high and will get better. We're also initiating, newer sort of projects like the SRO, the first one in the gold value chain, and a lot of such impetuses where transparency, confidence are the core structural changes that the industry is working on. Sure. And I'm super confident that a consumer on the street, whether it's a rural consumer or an urban consumer, their confidence on how gold gets to them is more contemporary, it's more transparent, it's more systematic. You can get on the app and see what's happening to your gold. And all of these things will amplify the consumption because the core element of what gold brings in is the trust, and that will get amplified.
Fair point. I do understand that World Gold Council, and Sachin, you don't talk about the gold prices, but I mean, look at the prices, all-time highs in the US dollar terms, in euro, in Chinese yuan, in the Indian rupee as well. Is direction on the higher side from here?
Well, I think from our perspective, we always say that look at gold from a long-term perspective, and the fundamentals of gold have always been, always stayed truth, particularly in 2024, where we've seen gold as a hedge, as I said, gold as a liquid asset, all those elements have stood forth, and they will continue to do so in 2025. Now, whether the market is going to go up crazily high or no, at World Gold Council, we don't indicate that. But we believe it's going to be a strong year. It's going to be stable to perhaps a slightly positive year as we go forward.
Sachin, as always, thank you so much for joining and a pleasure talking to you. So, well, there's various stuff that is happening in case of gold. Budget has been positive as well. More money coming to people would always mean buying more gold. And we have seen that happen all the time in India. But with that, it's time for a short break. But coming up, government pushes for self-reliance and pulses and improving production of makhanas. We will decode the impact with experts on the other side.
Presently, taxpayers can claim the annual value of self-occupied properties as nil only on the fulfillment of certain conditions. Considering the difficulties faced by taxpayers, it is proposed to allow the benefit of 2 such self-occupied properties without any condition. To streamline the process of transfer pricing and to provide an alternative to yearly examination, I propose to introduce a scheme for determining arm's length price of international transaction for a block period of 3 years. This will be in line with global best practices. With a view to reduce litigation and provide certainty in international taxation, the scope of safe harbor rules is being expanded. A number of senior and very senior citizens have very old national savings schemes accounts. As interest is no longer payable on such accounts, I propose to exempt withdrawals made from NSS by individuals on or after 29th August 2024. I am also proposing to allow similar treatment to NPS Vatsalya accounts as is available to normal NPS accounts subject to overall limits. The middle class provides strength for India's growth. This government, under the leadership of Prime Minister Modi, has always believed in the admirable energy and ability of the middle class in nation building. In recognition of their contribution, we have periodically reduced their tax burden. Right after 2014, the nil tax slab was raised to 2.5 lakhs of rupees, which was further raised to 5 lakh rupees in 2019 and to 7 lakh rupees in 2023. This is reflective of our government's trust on the middle class taxpayers. I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees. So, detail the indirect tax reforms and changes in direct taxes in Part B. Financial sector reforms. The FDI limit for the insurance sector will be raised from 74 to 100%. This enhanced limit will be available for those companies which invest the entire premium in India. The current guardrails and
Welcome back. You're watching Commodity Champions, and let's shift focus to the buzz around makhanas, also known as foxnuts. Finance Minister Nirmala Sitharaman announced the setting up of a makhana board in Bihar to improve production and value addition of the superfood in the state. The initiative will have an initial budget outlay of 100 crore rupees and will focus on training farmers as well. Makhana has gained popularity in the recent times due to its high nutrition value. Its market in India is estimated to double to nearly 1900 crore rupees by 2032. We are joined by Gunjan Jain, President of the Nuts and Dry Fruit Council in India, to discuss this further. Gunjan, hi, good to have you. We do understand
Thank you, Manisha.
We do understand that putting up a board is one thing, announcement of a board is one thing, but by the time it starts work, etc., is going to take some time here. Another interesting thing really is, Gunjan, that 90% of makhanas comes in from Bihar, but the export happens from Punjab. Do you think a lot of these things perhaps could be plugged well?
Yeah, I think it's a great step. This budget has been a mixed bag for our industry. A lot of very nice announcements Foxnuts or Makhana becoming a board being formed just tells that the board will take time, but all it just tells is that it is on the government's map now to try and it's on the map of the government for future improvements. Bihar, as everybody knows, is 90%, a little bit in Jharkhand, a little bit in West Bengal. And the great thing about this Makhana product is that today, India is the 95% exporter of Makhana in the world. There are only two other origins, China very little and Pakistan very little. The main producer of gorgon nuts or fox nuts or Makhana is India. So a huge potential in exports, and not just exports, even the domestic market. Now that the fact that it is being treated as a superfood has led to such a huge surge in demand and prices, and it's leading to a lot more interest. I was talking to some growers, and we'll see a lot of production, more production taking place this year, not just out of Bihar, but also out of adjoining eastern Uttar Pradesh. You'll see a lot of production happening there too, because of the way the prices have seen. Start of this crop year, Makhanas, the average quality was priced at around 400 rupees a kilo. And right now, it's being traded, the same crop year, it's being traded at 1,000 rupees a kilo. So the prices have moved up by 600 rupees a kilo. So whopping 120%, 25% increase in prices. So because of that, the whole industry, and demand is still there. So the great thing is that even at when prices moved that, we did not see any let out in demand.
Gunjan, I have to tell you, I was checking it on online maps, and Makhana there showed for a consumer, for a retail consumer like me, at around 2,000 rupees a kg. So clearly, it's a big cost that consumers are paying here. But also talk to me about what is the export price of this, because that I understand is much higher than that.
No, actually, you flavor the Makhana. The reason that the export price looks higher is because it's a very voluminous product. So when the freight gets added, it's not done on a per kilo basis, it's done on a volume basis. One container, which would normally fit in, let's say, 20 tons of walnuts, would fit in just 4 tons of Makhana. So because of that, the export prices, although looks much higher, but the realization is slightly higher only. But the potential, of course, is much bigger if we can do. And you rightly said, more is being exported out of Punjab because it's more a traded item than a trader, a factory owner in Bihar. I think this industry is at that cusp where we can make it into an industry. Today, I wouldn't say it's an industry, it's growers who are really working hard from cottage industry to make it a product. But I think there is now scope for large players, and large players are getting in. We, as the largest nuts and dried fruit brand in India, I used to sell Makhana as a fulfillment product, and today I am selling 100 tons of Makhana a month. And the demand is still bigger. I could do even more. Nataraj could sell 200 tons of Makhanas. We can't because we're not getting enough product. But that's the kind of demand there is of the product.
Gunjan, so what is the production right now and how has that grown? I mean, that also being aside, what is the kind of demand growth that we've seen in, let's say, last 5, 6 or 7 years?
So demand growth has been phenomenal. And that you can see from prices that even at such high prices, there's still shortage of the commodity. And this is not like it is shortage because of traders. This is shortage because of the end consumer wanting the product. So I think the total production, India varies between 80,000 tons to 120,000 tons, depending on year to year, how they do it. Last 3 years ago, the production had dipped because the prices weren't too great as a return to the farmer. But the last 3 years, every year is seeing a steady rise. India has a potential, I think this year, I'm expecting Indian crop to touch about 120 to 135,000 tons. That's the size that will become because of additional area coming under Makhana farming. It's a very difficult product to make. It's not as simple as your normal wheat or rice. It's a very tough. The whole process is very tough. So I think the establishment of a board and the fact that there'll be some government attention, some subsidies, will encourage more and more companies to invest in the Makhana trade, and it will also lead to, I think, back end where the farmer is getting a better return. If we are able to train them, we are able to educate them, I think sky's the limit for this product right now.
Oh, well, yes, it is profitable, but as you said, it's labor intensive as well. But the demand growth seems to be really pushing up. And I'm really stuck on what you said, that the prices in this crop year itself, rupees a kg. So clearly a very strong interest coming in for this one. Gunjan, as always, thank you so much for coming by and making sense of what the budget means and, of course, what the market really is looking at. But shifting focus now, and we want to talk about pulses. In a bid to cut reliance on imports, the finance minister announced a 6-year program to boost the output of pulses in India. Measures include direct state agencies to buy the staple at guaranteed prices. Rising demand has forced India, the world's biggest producer and consumer of pulses, to spend a record $5 billion on importing pulses such as pigeon peas, black matte and red lentils in 2024. The budget has allocated 1,000 crore rupees towards the scheme, which aims to provide minimum support price-based procurement and post-harvest warehousing solutions in respect of the 3 pulses. But how challenging is the execution? To discuss this, we are now joined by Mr. Bimal Kothari. He's chairman of India Pulses and Grains Association. Mr. Kothari, hi. Again, a very good directive coming in from the government, but it really is about the execution, isn't it?
Hi, Melissa. Thank you for inviting me to the show. As we all know that this has been a good move in the budget by the government, that they are looking at the self-reliance to achieve the self-reliance in pulses. In fact, the finance minister spoke in her speech that we nearly achieved the self-reliance, but as you know, our demand is increasing and the pulses are basically grown in the rain-fed areas. So one bad season, we see that the pulses production, get very badly hit. From 16-17, when we had about 16-17 million tons of pulses, by 21-22, say next in another 6 years, we could achieve 27 million tons, which has been a record production. But from 27 million tons in last 2 years, we have seen that the production is on decline. From 22-23, it was 26 million tons, and in 23-24, it has been 24 million tons. So we have seen the production is declining. And the reason is the weather vagaries which the pulses has to bear, because as I mentioned, that the pulses are grown in the rain-fed areas. So the government's announcement on the pulses mission and allocation of 1,000 crore rupees is a welcome decision. But we need to see execution, whether this is enough to achieve the self-reliance, because that is the object of the government, to achieve the self-reliance. As I would like to mention, that India will require 40 million tons of pulses by 2030. So there is going to be huge demand, of the pulses, because pulses is staple food for us. We consume the pulses day in, day out. I mean, in every meal, we have the pulses, either breakfast, lunch, dinner, or snacks. We consume pulses in different forms. So pulses is very, very important food, and it is the major source of protein to our population also.
So, Mr. Kothari, we've seen the budget come out through now, and as you said, it's going to take some time, but we've seen a record import also happen in the year 2024. From here on, aside of the budget, even as we are looking at imports free for many of these pulses, what is it that the industry is looking for from the government?
Yeah, so I was in fact coming to that. So you see, it's just not that you just announced these steps. These are not enough. You need to do much more than beyond this to achieve the self-reliance, because the present policies are based on the minimum support price. We are government every year increase the minimum support price to encourage the farmers. But on the other hand, they are also allowing the cheaper imports. For example, you are aware, we have spoken several times on your channel that from December 2023 allowed the import of yellow peas at 0 duty. So whenever there is an issue with the government, they immediately take the knee-jerk decision. They take the, harsh decision. This decision needs to be balanced. You see, when you are allowing the import of, say, for example, yellow peas, which the landing cost is 32 rupees, where is the minimum support price more than 56 to 85 rupees.
Sure.
So this is contradicting your own policy. This is a very allowing the cheaper import, it is definitely hurting the farmers. And this kind of message, the farmers get very wrong message, because the cheaper import, then they are not inclined to the grow pulses, more pulses.
Sure.
Despite of a robust monsoon last year, I don't think we have a significant increase wherever our demands are increasing. Though as finance minister announced that we reached the self-reliance. But what happened? Our demands are increasing. So demand, as I mentioned, it will be 40 million tons. So we need to have balanced policy. What we need to do, which we have advised the government several times, and we will keep on doing this, that the lending cost of the imports must be more than the minimum support price. So it doesn't hurt the farmers. And it will also take care of the interest of the consumers. And moreover, government is allocating 1,000 crore rupees. I say trade will give you 5,000 crore rupees annually if you if you have a dynamic duty structure. We don't need an allocation from your budget. We will give you 5,000 crore rupees. So you see, government needs to have a balanced policy so that we can move toward. I don't know whether we can achieve the self-reliance in next 5 years, but at least we can move towards the self-reliance, and we can decrease our imports, and we can have balanced pricing also, so that consumers are also not hit, the farmers' interests are also taken care, trade interest is also taken care, and the government's interest is also there. So I think we need to have a balanced policy, and then look into this, because Manisha, we are going to have a very serious issue if this issue is not taken up by the government seriously. There has to be a long-term policy. There has to be a long-term vision on this. These knee-jerk decisions are really hurting not only the trade and industry. Definitely, trade industry are badly hit in last 6 months, but it is hurting the farmers in long term, I am telling you. And if this goes on, I don't think India can achieve the self-reliance. So we need to really look at our policies, and we need to have a long-term vision. We need to ensure that by 2030, we are almost close to the self-reliance.
Absolutely. A very last quick question, Mr. Kothari, and this one is on the yields. We understand that India continues to suffer from that as well. Is enough being done on that front?
Yeah, I think more is required to be done on this. Of course, our research institutes are working on it. Government has also announced the steps to be taken to increase the yields, because our yields are very low. At the moment, we are growing the pulses in about 30-31 million hectares. I really don't think that how much area we can further cover. But even if we cover, it is important that we require to increase the yields, because if you really want to double the farmers' income, as our Honorable Prime Minister always imagined about it, always thought about it, which is a good thought, of course. And so then we need to increase our yields, because our yields at the moment are, if you look at even we compare with the world average, our yields are very low. So it is important that we need to work on the climate resilient seeds, because climate is becoming very erratic and very uncertain of last few years, what we have seen, and the way the global warming is happening. And also we need to look at the pest resilient seeds, and of course we have a lot of post-harvest losses. The budget has also allocated this 1,000 crore rupees to manage the post-harvest storage. So all these things we need to, bring a lot of infrastructure. The budget is also talking about the agri infrastructure. So that is also going to help, in the long term. So as I say, these are not the short-term policies. These are long-term policies, but needs to be implemented with more budget allocation. And as I mentioned, the trade is, if there is a dynamic duty structure, trade will only, fund this kind of projects. So I'm sure the government will look into it, and through your channel, I'm telling you, the IPGA is ready to work with the government towards this.
Mr. Kothari, thank you so much for joining in. Well, I understand the sector has gone through a lot, and we're looking at cheaper imports coming into the country. So I take your point, as you say, that the imports should be at a landed cost above MSP, dynamic duty structure, and long-term consistent policies is something that the pulses industry is asking for from the government. But with that, that's all the time that we have on this edition of Commodity Champions. Thank you for watching.
Associated with foreign investment will be reviewed and simplified. The services of India Post Payment Bank will be deepened and expanded in rural areas. NABFID will set up a partial credit enhancement facility for corporate bonds for infrastructure. Public sector banks will develop Grameen Credit Score Framework to serve the credit needs of SHG members and people in rural areas. A forum for regulatory coordination and development of pension products will be set up. To implement the earlier announcement on simplifying the KYC processes, the revamped Central KYC Registry will be rolled out in 2025. We will also implement a streamlined system for periodic updating. Speaker, I present the budget for 25-26. This budget continues our government's efforts to A. Accelerate growth, B. Secure inclusive development, C. Invigorate private sector investments, D. Uplift household sentiments, and E. Enhance spending power of India's rising middle class. Together, we embark on a journey to unlock our nation's tremendous potential for greater prosperity and global positioning under the leadership of Honorable Prime Minister Shri Narendra Modi. As we complete the first quarter of the 21st century, continuing geopolitical headwinds suggest lower global economic growth over the medium term. However, our aspiration for a Vikasit Bharat inspires us, and the transformative work we have done during our government's first 2 terms guides us to march forward resolutely. Our economy is the fastest growing among all major economies. Our development track record for the past 10 years and structural reforms have drawn global attention. Confidence in India's capability and potential has only grown in this period. We see the next 5 years as a unique opportunity to realize Sabka Vikas, stimulating balanced growth of all regions. The great Telugu poet and playwright Gurujada Apparao had said, "Deshamante matti kadoy, deshamante manushuloy," meaning a country is not just its soil, a country is its people. In line with this, for us, Vikasit Bharat encompasses zero poverty, 100% quality good school education, access to high quality, affordable and comprehensive health.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. China retaliates after US President fired his first tariff salvo. Beijing imposes additional taxes on select US goods and launches an antitrust probe into Google. Trump puts the tariffs on Canada and Mexico on hold after 11th hour talks. Global stock markets attempt to rebound after a sharp fall yesterday. The rupee holds steady along with other emerging market currencies against the dollar. Sensex and Nifty turned positive for 2025 after a sharp rebound. Asian Paints reports a mixed bag in the third quarter. Decorative paint volumes and margins beat street. Management highlights subdued demand, especially in the urban centers in the third quarter. Remains cautiously optimistic on demand recovery. Defense stocks rally in trade a day after Defense Secretary exclusively tells CNBC-TV18 that they intend to end the fiscal year with orders worth 2 lakh crore rupees or more. This would be close to double of last year. Hindustan Aeronautics and Bharat Electronics rally over 5% in trade. Prime Minister Modi said to visit the United States and hold talks with President Trump on the 13th of February. The visit comes against the backdrop of concerns in India over President Trump's rhetoric on tariffs and immigration. The United States deports over 200 Indian nationals who were allegedly staying illegally. This is the first round of deportation of illegal Indian immigrants. Sources say that the military flight carrying the Indians would land at Punjab's Amritsar airport tomorrow morning. Finance Secretary Tuhin Kanta Pandey says that discussions are ongoing on the issue of waiving AGR dues for telecom companies, but refuses to divulge more. Tells CNBC-TV18, and I quote, "You will come to know when it comes," end quote. CNBC-TV18 Citizens Monetary Policy Committee expects the RBI to cut rates on Friday by a 4-1 majority. Economists at JP Morgan and Nomura predict 100 basis point rate cuts through the year. Mumbai Civic Body unveils its highest ever annual budget of more than 75,000 crore rupees, more than 43,000 crore rupees allocated for capital expenditure on key infra projects, proposes a universal footpath policy to make the city more pedestrian friendly. Delhi goes to polls tomorrow in a three-cornered fight among the Aam Aadmi Party, the BJP and the Congress. 699 candidates across 70 assembly seats are in the fray. Over 15 million citizens are eligible to cast their vote. Results to be announced this Saturday. All right, the latest that we are getting for you is Prime Minister Modi is addressing the Parliament. Let's cut across.
संबोधन पर आभार प्रकट करने के लिए मैं उपस्थित हुआ हूं। कल और आज, कल तो रात देर तक सभी माननीय सांसदों ने अपने विचारों से इस आभार प्रस्ताव को समृद्ध किया। कई माननीय अनुभवी सांसदों ने भी अपने विचार प्रकट किए और स्वाभाविक है कि लोकतंत्र की परंपरा भी है, जहां आवश्यकता था वहां प्रशंसा हुई, जहां परेशानी थी वहां कुछ नकारात्मक बातें भी हुई, लेकिन ये बहुत स्वाभाविक है। अतः कि मेरे लिए बहुत बड़ा सौभाग्य है कि देश की जनता ने मुझे 14वीं बार इस जगह पर बैठ करके राष्ट्रपति जी के उद्बोधन को आभार व्यक्त करने के लिए अवसर दिया है। और इसलिए मैं आज जनता जनार्दन का भी बड़े आदर के साथ आभार व्यक्त करना चाहता हूं। और सदन में चर्चा में जिन जिन लोगों ने हिस्सा लिया, चर्चा को समृद्ध किया, उन सब का भी मैं आभार व्यक्त करता हूं। आदरणीय सभापति जी, हम 2025 में हैं। एक प्रकार से 21वीं सदी का 25% हिस्सा बीत चुका है। समय तय करेगा 20वीं सदी के आजादी के बाद और 21वीं सदी के प्रथम 25 साल में क्या हुआ, कैसा हुआ। लेकिन इस राष्ट्रपति जी के संबोधन में अगर हम बारीकी इसको अध्ययन करेंगे तो ये साफ नजर आता है कि उन्होंने देश के सामने भविष्य के 25 वर्ष और विकसित भारत के लिए एक नया विश्वास जगाने वाली बात, एक प्रकार से आदरणीय राष्ट्रपति जी का ये उद्बोधन विकसित भारत के संकल्प को मजबूती देने वाला है, नया विश्वास पैदा करने वाला है और जन सामान्य को प्रेरित करने वाला है। आदरणीय सभापति जी, सारे अध्ययन बार बार ये कह चुके हैं कि गत 10 वर्ष में देश की जनता ने हमें सेवा करने का मौका दिया। 25 करोड़ देशवासी गरीबी को परास्त करके गरीबी से बाहर निकले। आदरणीय सभापति जी, 5 दशक तक गरीबी हटाओ के नारे सुने हो और अब 25 करोड़ गरीब गरीबी को परास्त करके बाहर निकले, ऐसे ही नहीं हो। योजनाबद्ध तरीके से, समर्पित भाव से, अपनेपन की पूरी संवेदनशीलता के साथ जब गरीबों के लिए जीवन खपाते हैं ना, तब ये होता है। आदरणीय सभापति जी, जब जमीन से जुड़े लोग जमीन की सच्चाई को जानते हुए जमीन पर जीवन खपाते हैं, तब जमीन पर बदलाव निश्चित होके रहता है। आदरणीय सभापति जी, हमने गरीब को झूठे नारे नहीं, हमने सच्चा विकास दिया। गरीब का दुख, सामान्य मानवी की तकलीफ, मिडिल क्लास के सपने ऐसे ही नहीं समझे जाते। आदरणीय सभापति जी, इसके लिए एक जज्बा चाहिए। और मुझे दुख के साथ कहना है कि कुछ लोगों में ये है ही नहीं। आदरणीय सभापति जी, बारिश के दिनों में कच्ची छत, फुसकी, प्लास्टिक की चादर वाली छत, उससे नीचे जीवन गुजारना कितना मुश्किल होता है। पल पल सपने रौंद दिए जाते हैं, ऐसे पल होते हैं, ये हर कोई नहीं समझ सकता। आदरणीय सभापति जी, अब तक गरीबों को 4 करोड़ घर मिले हैं। जिसने उस जिंदगी को जिया है ना, उसे समझ होती है कि पक्की छत वाला घर मिलने का मतलब क्या होता है। आदरणीय सभापति जी, एक महिला जब खुले में शौच जाने के लिए मजबूर हो जाती है, वो या तो सूर्योदय के पहले या सूर्यास्त के बाद, कठिनाइयों के झेलने के बाद इस छोटा सा अपना नित्य कर्म करने के लिए निकल सकती है। तब उसे क्या तकलीफ होती थी, ऐसे लोग समझ नहीं सकते। आदरणीय सभापति जी, हमने 12 करोड़ से ज्यादा शौचालय बनाकर बहनों बेटियों की मुश्किलें दूर की। आदरणीय सभापति जी, आजकल मीडिया में ज्यादा ही चर्चा हो रही है, सोशल मीडिया में और अधिक हो रही है। कुछ नेताओं का फोकस घरों में जकूजी पर, स्टाइलिश शावर्स पर, लेकिन हमारा फोकस तो हर घर जल पहुंचाने पर है। आजादी के 75 साल के बाद देश में 75% करीब 16 करोड़ से भी ज्यादा घरों के पास जल का करने के लिए नल का कनेक्शन नहीं था। हमारी सरकार ने 5 साल में 12 करोड़ परिवारों को घरों में नल से जल देने का काम किया है और काम तेजी से आगे भी बढ़ रहा है। आदरणीय सभापति जी, हमने गरीबों के लिए इतना काम किया और इसके कारण आदरणीय राष्ट्रपति जी ने अपने अभिभाषण में इसका विस्तार से वर्णन किया है। जो लोग गरीबों की झोपड़ियों में फोटो सेशन कराकर अपना मनोरंजन करते रहते हैं, उन्हें संसद में गरीबों की बात बोरिंग ही लगेगी। आदरणीय सभापति जी, मैं उनका गुस्सा समझ सकता हूं। आदरणीय सभापति जी, समस्या की पहचान करना एक बात है, लेकिन अगर जिम्मेवारी है तो समस्या की पहचान कर करके छूट नहीं सकते। उसके समाधान के लिए समर्पित भाव से प्रयास करना होता है। हमने देखा है और पिछले 10 साल के हमारे काम को देखा होगा और राष्ट्रपति जी के अभिभाषण में भी देखा होगा। हमारा प्रयास समस्या की समाधान का रहता है और हम समर्पित भाव से प्रयास करते हैं। आदरणीय सभापति जी, हमारे देश में एक प्रधानमंत्री हुआ करते थे। उनको मिस्टर क्लीन करने कहने की एक फैशन हो गई थी। उस प्रधानमंत्री जी को मिस्टर क्लीन कहने की फैशन हो गई थी। उन्होंने एक समस्या को पहचाना था और उन्होंने कहा था कि दिल्ली से 1 रुपया निकलता है तो गांव में 15 पैसा पहुंचता है। अब उस समय तो पंचायत से लेकर पार्लियामेंट तक एक ही पार्टी का राज था। पंचायत से पार्लियामेंट तक एक ही पार्टी का राज था। और उस समय उन्होंने सार्वजनिक रूप से कहा था कि 1 रुपया निकलता है 15 पैसा पहुंचता है। बहुत गजब की हाथ सफाई थी। पंद्रह पैसा किसके पास जाता था, ये देश का सामान्य मानवी भी आसानी से समझ सकता है। आदरणीय सभापति जी, देश ने हमें अवसर दिया, हमने समाधान खोजने का प्रयास किया। हमारा मॉडल है बचत भी विकास भी। जनता का पैसा जनता के लिए। हमने जनधन, आधार, मोबाइल की जेम ट्रिनिटी बनाई और डीबीटी से डायरेक्ट बेनिफिट ट्रांसफर ये देना शुरू किया। आदरणीय सभापति जी, हमारे कार्यकाल में हमने 40 लाख करोड़ रुपया सीधा जनता जनार्दन के खाते में जमा किया। आदरणीय सभापति जी, इस देश का दुर्भाग्य देखिए, सरकारें कैसी चलाई गई, किसके लिए चलाई गई।
माननीय सदस्य, मैं सबसे आपसे आग्रह कर रहा हूं, आप सदन की गरिमा बनाए रखें। बैठे बैठे कोई माननीय सदस्य टिप्पणी नहीं करे, उचित नहीं है, ये गलत तरीका है आपका। ये सदन की मर्यादा नहीं है आपकी। आप प्रोटेक्ट करना चाहते हो उनको इस तरीके से, गलत तरीका, ये गलत तरीका है। आप बैठे बैठे टिप्पणी करना चाहते हैं।
आदरणीय सभापति जी, जब ज्यादा बुखार चढ़ जाता है तब लोग कुछ भी बोलते हैं, लेकिन इसके साथ साथ ज्यादा हताशा निराशा फैल जाती है तब भी बहुत कुछ बोलते हैं। आदरणीय सभापति जी, जिनका जन्म नहीं हुआ था, जो भारत की इस धरती पर अवतरित नहीं हुए थे, ऐसे 10 करोड़ फर्जी लोग सरकारी खजाने से अलग अलग योजनाओं का फायदा ले रहे थे। आदरणीय सभापति जी, सही को अन्याय न हो इसलिए राजनीतिक फायदा नुकसान की परवाह किए बिना हमने इन 10 करोड़ फर्जी नामों को हटाया और असली लाभार्थियों को खोज खोज करके उन तक मदद पहुंचाने का अभियान चलाया। आदरणीय सभापति जी, ये 10 करोड़ फर्जी लोग जब हटे और भिन्न भिन्न योजनाओं का हिसाब लगाएं तो करीब करीब 3 लाख करोड़ रुपया गलत हाथों से जाने से बच गए। मैं हाथ किसका था ये नहीं कह रहा हूं, गलत हाथों से। आदरणीय सभापति जी, हमने सरकारी खरीद में भी टेक्नोलॉजी का भरपूर उपयोग किया, ट्रांसपेरेंसी लाए और जेम पोर्टल जो आज राज्य सरकारें भी उसका उपयोग कर रही है, जेम पोर्टल से जो खरीदी हुई उससे आमतौर पर जो खरीदी होती है उससे कम पैसों में खरीदी हुई और सरकार के 1,15,000 करोड़ रुपए की बचत हुई। आदरणीय सभापति जी, हमारी स्वच्छता अभियान का बहुत मजाक उड़ाया गया, ऐसा जैसे हमने कोई पाप कर दिया, कोई गलती कर दी, न जाने क्या क्या कहा जाता था। लेकिन आज मुझे संतोष से कहना है कि इन सफाई के कारण हाल के वर्षों में सिर्फ सरकारी दफ्तरों से जो कबाड़ बेचा गया ना, उसमें 2,300 करोड़ रुपया सरकार को मिले। महात्मा गांधी ट्रस्टीशिप के सिद्धांत की बात करते थे। वो कहते थे कि हम ट्रस्टी हैं, ये संपत्ति जनता जनार्दन की है और इसलिए हम पाई पाई को एक ट्रस्टीशिप के सिद्धांत के आधार पर बचाने की और सही जगह पर उपयोग करने का प्रयास करते हैं। और तब जाकर के स्वच्छता अभियान से कबाड़ बेचकर 2,300 करोड़ रुपया देश की सरकार के खजाने में आ रहा है। आदरणीय सभापति जी, हमने एक महत्वपूर्ण निर्णय लिया इथेनॉल ब्लेंडिंग का। हम जानते हैं हम एनर्जी इंडिपेंडेंट नहीं है, हमें बाहर से लाना पड़ता है। जब इथेनॉल ब्लेंडिंग किया और हमारे पेट्रोल डीजल की आय कम हुई, उस एक निर्णय से 1,00,000 करोड़ रुपए का फर्क पड़ा है। और ये पैसे करीब करीब 1,00,000 करोड़ रुपया किसानों की जेब में गया है। आदरणीय सभापति जी, मैं बचत की तो बात कर रहा हूं, लेकिन पहले अखबारों की हेडलाइन हुआ करती थी, इतने लाख के घोटाले, इतने लाख के घोटाले, इतने लाख के घोटाले। 10 साल हो गए, ये घोटाले न कर करके, घोटाले न होने से भी देश के लाखों करोड़ रुपए बचे हैं जो जनता जनार्दन की सेवा में लगे हैं। आदरणीय सभापति जी, हमने ये जो अलग अलग कदम उठाए उससे लाखों करोड़ रुपए की बचत हुई, लेकिन उन पैसों का उपयोग हमने शीश महल बनाने के लिए नहीं किया। इसका उपयोग हमने देश बनाने के लिए किया है। इंफ्रास्ट्रक्चर का बजट 10 साल पहले 1,80,000 करोड़ था, हमारे आने से पहले। आदरणीय सभापति जी, आज 11 लाख करोड़ रुपया इंफ्रास्ट्रक्चर का बजट, और इसलिए राष्ट्रपति जी ने भारत की नींव कैसी मजबूत हो रही है इसका वर्णन इसमें किया है। रोड हो, हाईवे हो, रेलवे हो, ग्राम सड़क हो, इन सभी कामों के लिए विकास की एक मजबूत नींव रखी गई है। आदरणीय सभापति जी, सरकारी खजाने में बचत हुई वो तो एक बात है और वो करना भी चाहिए, जैसा मैंने ट्रस्टीशिप की बात कही। लेकिन हमने इस बात पर भी ध्यान रखा है कि जन सामान्य के उनको भी बचत का लाभ मिलना चाहिए। योजना ऐसी हो ताकि जनता को भी बचत हो। और आपने देखा होगा आयुष्मान भारत योजना, बीमारी के कारण सामान्य मानवी को जो खर्च होता था, अब तक जिन लोगों ने इसका बेनिफिट लिया है उसी के हिसाब से मैं कहता हूं कि करीब करीब देशवासियों का आयुष्मान योजना का बेनिफिट लेते के कारण जो खर्चा उनको अपने जेब से करना पड़ता, वैसे 1,20,000 करोड़ रुपया जनता जनार्दन के बचे हैं। ये आवश्यक है कि अब जैसे जन औषधि केंद्र, आज मध्यम वर्ग के परिवार में 60-70 साल उम्र के परिवार के स्वजन हो तो स्वाभाविक है कोई न कोई बीमारी आ ही जाती है, दवाई का खर्चा भी होता है, दवाएं महंगी भी होती है। हमने जब से जन औषधि केंद्र खोले हैं जिसमें 80% डिस्काउंट होता है और उसके कारण जिन परिवारों ने इन जन औषधि केंद्रों से दवाइयां ली हैं उनके करीब करीब 30,000 करोड़ रुपए दवाई को खर्चा बचा।
%100% skilled labor with meaningful employment, 70% women in economic activities, and farmers making our country the food basket of the world. In this budget, the proposed development measures span 10 broad areas focusing on Garib, Youth, Annadata and Nari, spurring agricultural growth and productivity, building rural prosperity and resilience, taking everyone together on an inclusive growth path, boosting manufacturing and furthering Make in India, supporting MSMEs, enabling employment-led development, investing in people, economy and innovation, securing energy supplies, promoting exports and nurturing innovation. For this journey of development, our four powerful engines are agriculture, MSME, investments and exports. The fuel, our reforms, our guiding spirit, inclusivity, and the destination, Vikasit Bharat. This budget aims to initiate transformative reforms across 6 domains. During the first 5 years, these will augment our growth potential and global competitiveness. The domains are taxation, power sector, urban development, mining, financial sector, and regulatory reforms.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 Budget Headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen. We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years.
Hello and welcome to our monetary policy curtain raiser. It is baptism by fire for the new Reserve Bank governor as he goes ahead to present his maiden monetary policy. The budget was kind, yes, in terms of a lower deficit, but President Trump has created a perfect storm in the global currency markets, including for India. So exactly what should the Reserve Bank and the MPC do? Can you cut when there is a global storm in terms of EM currencies? That's the question for which we need answer. And as always, the Citizens Monetary Policy Committee of CNBC-TV18 meets on the eve of the RBI MPC to deliberate on what should be the issues and how to look at them. I have with me Chairman of our committee, Dr. Pranab Sen, and members Soumyakanti Ghosh of State Bank of India, Sajid Chinoy of JP Morgan, Samiran Chakrabarti of Citi India, and Sonal Verma of Nomura. Gentlemen and Sonal, thank you very much indeed for your time. It's a very, very crucial policy, as I said. Sajid, it is the global churn that is going to worry us most. Just outline the, the announcements that have come from the US. What does it do to global inflation and our own inflation expectations? And what does it do to global growth?
Thank you, Lata. I think the global economy is getting more precarious by the day. 2024 was characterized by US exceptionalism, where US growth was very resilient, and that meant a stronger dollar and higher US rates. And both of those things put pressure on emerging market currencies, constraining their space and their ability to respond. What we're seeing now is the onset of the much feared trade war. The US has put on tariffs on Canada, Mexico, China. The question really is, number one, this is going to depress global growth. I think the lesson from the first trade war in 2018 was very clear. It was the uncertainty of the trade war that depressed global business sentiment and global capex intentions, and it was very clear in the data in 2018 and 2019. So I think we should brace for a global environment with more growth headwinds, where exports will most likely, take a hit. The difficult question is whether the trade war is going to exacerbate or undermine US exceptionalism, because there is a scenario in which global growth gets hit, but US growth gets hit less because that country has offsets, easier fiscal policy and more deregulation. Now that's the worst of all worlds for emerging markets, because you are living with lower global growth and therefore lower export growth, but your ability to respond to lower growth is compromised by the fact that US exceptionalism means the dollar remains elevated. Today's dollar rate is almost at 20-year highs, and US rates remain elevated. And then you're in this bind where you want to respond to a more hostile global environment in terms of weaker growth, but you're unable to do so completely.
Yeah, I take your point.
That's the dilemma that these economies face.
Yeah, I take your point entirely, which brings you to the classical question, which the MPC will have to address, Samiran. Can you really respond with rate cuts and growth stimuli in a situation of, tension on the currency?
3 points here. The first point is that when there is so much of global
जमीनी सच्चाई से तब के प्रधानमंत्री कितने कटे उठे थे और हवाई बातों में लगे हुए थे, इसका वो जीता जागता प्रदर्शन करने वाला कार्टून। आदरणीय अध्यक्ष जी, जिन्होंने तब 21वीं सदी की बातें की थी, वो 20वीं सदी की जरूरतों को भी पूरा कर नहीं पाए थे। आदरणीय अध्यक्ष जी, आज जब मैं देखता हूं, पिछले 10 साल से सारे बीतों को बारीकी से देखने का अवसर मिला है, तो मुझे बड़ा दर्द होता है। हम 40-50 साल लेट हैं, जो काम 40-50 साल पहले हो जाने चाहिए थे। और इसलिए ये साल जब 2014 से देश की जनता ने हमको सेवा का अवसर दिया, हमने ज्यादा से ज्यादा युवाओं पर फोकस किया। हमें युवाओं की आकांक्षाओं पर बल दिया। हमने युवाओं के लिए ज्यादा अवसर बनाए। हमने कई क्षेत्रों को खोल दिया और जिसके कारण हम देख रहे हैं देश के युवा अपने सामर्थ्य का परचम लहरा रहे हैं। देश में हमने स्पेस सेक्टर को खोल दिया, डिफेंस सेक्टर को खोला, सेमीकंडक्टर मिशन लेकर के आए, इनोवेशन को बढ़ावा देने के लिए अनेक नई योजनाओं को हमने आकार दिया। स्टार्टअप इंडिया इकोसिस्टम पूरा डेवलप किया और इस बजट में भी आदरणीय अध्यक्ष जी एक बहुत महत्वपूर्ण निर्णय हुआ है। 12 लाख की आय पर इनकम टैक्स की माफी। ये समाचार इतना बड़ा बन गया कि बहुत सी महत्वपूर्ण चीजों पर अभी भी कुछ लोगों का ध्यान नहीं गया है। वो महत्वपूर्ण निर्णय हुआ है। हमने न्यूक्लियर एनर्जी सेक्टर को ओपन कर दिया और इसके दूरगामी सकारात्मक प्रभाव और परिणाम देश को देखने के लिए मिलने वाले हैं। आदरणीय अध्यक्ष जी, एआई, 3D प्रिंटिंग, रोबोटिक्स, वर्चुअल रियलिटी की चर्चा हम तो गेमिंग का भी महात्मा क्या होता है इसके लिए भी प्रयास करने वाले लोगों में से। मैंने देश के नौजवानों से कहा है कि दुनिया का गेमिंग क्रिएशन का, क्रिएटिविटी वर्ल्ड का कैपिटल भारत क्यों न बने। और मैं देख रहा हूं बहुत तेजी से हमारे लोग काम कर रहे हैं। कुछ लोगों को अब जब एआई की बात होती है, कुछ लोगों को अब ये शब्द फैशन में है तो बोला जाता है, लेकिन मेरे लिए सिंगल एआई नहीं है, डबल एआई। भारत की डबल ताकत है। एक एआई आर्टिफिशियल इंटेलिजेंस, दूसरा एआई एस्पिरेशनल इंडिया। हमने स्कूलों में 10,000 टिंकरिंग लैब्स शुरू किए और आज उन टिंकरिंग लैब से निकले बच्चे रोबोटिक्स बना करके लोगों को चकित कर रहे हैं। और इस बजट में 50,000 नए टिंकरिंग लैब्स उसका प्रावधान किया गया। भारत वो देश है जिसके इंडिया एआई मिशन को लेकर के पूरी दुनिया बहुत आशावादी है और विश्व के एआई प्लेटफॉर्म में भारत की मौजूदगी एक महत्वपूर्ण स्थान प्राप्त कर चुकी है। आदरणीय अध्यक्ष जी, इस साल बजट में हमने डीप टेक के डोमेन को में इन्वेस्टमेंट की बात की है और डीप टेक मैं समझता हूं हमारे लिए तेज गति से आगे बढ़ने के लिए और 21वीं सदी पूरी तरह टेक्नोलॉजी ड्रिवन सेंचुरी है। ऐसे में हमारे लिए आवश्यक है कि भारत डीप टेक के क्षेत्र में बहुत तेजी से आगे बढ़े। आदरणीय अध्यक्ष जी, हम लगातार युवा भविष्य को ध्यान में रखते हुए काम कर रहे हैं। लेकिन कुछ दल हैं जो लगातार युवाओं के साथ धोखा कर रहे हैं, उन्हें धोखा दे रहे हैं। ये दल चुनाव के दरमियान ये भत्ता देंगे, वो भत्ता देंगे, वादा तो करते हैं लेकिन पूरा नहीं करते हैं। ये दल
प्लीज माननीय सदस्य गरिमा प्रतिष्ठा बनाए रखें। भारत की संसद में आप प्लीज बैठे बैठे टिप्पणी नहीं करें। और नए माननीय सदस्य बैठे बैठे टिप्पणी कर रहे हैं।
आदरणीय अध्यक्ष जी, ये दल युवाओं के भविष्य पर आपदा बनकर गिरे हुए हैं। आदरणीय अध्यक्ष जी, हम कैसे काम करते हैं ये हरियाणा में अभी अभी देश ने देखा है। बिना खर्ची, बिना पर्ची नौकरी देने का वादा किया था। सरकार बनते ही नौकरी मिल गई नौजवानों को। हम जो कहते हैं उसी का परिणाम है। आदरणीय अध्यक्ष जी, हरियाणा में तीसरी बार भव्य विजय और हरियाणा में के इतिहास में तीसरी बार विजय, ये अपने आप में ऐतिहासिक घटना है। आदरणीय अध्यक्ष जी, महाराष्ट्र में भी ऐतिहासिक परिणाम, जनता जनार्दन के आशीर्वाद। महाराष्ट्र के इतिहास में सत्ता पक्ष के पास इतनी सीटें पहली बार, ये जनता जनार्दन के आशीर्वाद से हम करके आए हैं।
कुछ समझते हैं
आदरणीय
चीजों को?
अध्यक्ष जी,
कल जवाब दिया था ना आपको। चलिए।
आदरणीय राष्ट्रपति जी ने अपने अभिभाषण में हमारे संविधान के 75 वर्ष होने पर भी विस्तार से चर्चा की है। आदरणीय अध्यक्ष जी, संविधान में जो धाराएं हैं उसके साथ साथ संविधान का एक स्पिरिट भी है और संविधान को मजबूती देने के लिए संविधान की भावना को जीना पड़ता है। और मैं आज उदाहरणों के साथ बताना चाहता हूं। हम वो लोग हैं जो संविधान को जीते। आदरणीय अध्यक्ष महोदय, हमारे यहां ये बात सही है, परंपरा है कि राष्ट्रपति जी जब उद्बोधन करते हैं तो उस सरकार के उस साल के कार्यकाल का ब्यौरा देते हैं। उसी प्रकार से राज्यों में गवर्नर का जो उद्बोधन होता है सदन में, वो उस राज्य के कार्यकलापों का ब्यौरा देते हैं। संविधान और लोकतंत्र का स्पिरिट क्या होता है? जब गुजरात के 50 वर्ष हुए, गोल्डन जुबली ईयर मना रहे थे और सद्भाग्य से मुझे उस समय मुख्यमंत्री के रूप में सेवारत था मैं, तो हमने एक महत्वपूर्ण निर्णय किया। हमने किया इस गोल्डन जुबली ईयर में पिछले 50 वर्ष में सदन में जितने भी गवर्नर के भाषण हुए, मतलब उस समय की सरकारों का ही वाहवाही उसमें होती है। हमने कहा कि उन 50 साल में जितने भी गवर्नर के भाषण हुए हैं, सबको ही एक पुस्तक के रूप में तैयार किया जाए, ग्रंथ बनाया जाए, और आज सभी लाइब्रेरीज में वो ग्रंथ अवेलेबल है। मैं तो बीजेपी वाला था, गुजरात में तो ज्यादातर कांग्रेस की सरकारें रही थी, उन सरकारों के गवर्नर के भाषण थे, लेकिन उसको भी प्रसिद्ध कराने का काम भाजपा से बना एक मुख्यमंत्री कर रहा था। क्यों ना जानते? हम संविधान को समर्पित है, हम संविधान के स्पिरिट को समझते हैं। आदरणीय अध्यक्ष जी, आप जानते हैं 2014 में जब हम आए तब मान्य विपक्ष नहीं था, रिकॉग्नाइज्ड अपोजिशन पार्टी नहीं थी, उतने अंक भी लेकर के कोई नहीं आए थे। भारत के अनेक कानून ऐसे थे कि हमें पूरी स्वतंत्रता थी उस कानून के हिसाब से काम करने की। अनेक कमेटियां ऐसी थी जिसमें लिखा था लीडर्स ऑफ अपोजिशन उसमें आएंगे, लेकिन अपोजिशन था ही नहीं, रिकॉग्नाइज्ड अपोजिशन नहीं था। ये हमारा संविधान जीने का स्वभाव था, ये हमारा संविधान का स्पिरिट था, ये हमारी लोकतंत्र की मर्यादाओं का पालन करने का इरादा था। हमने तय किया कि भले मान्य विपक्ष नहीं होगा, रिकॉग्नाइज्ड अपोजिशन नहीं होगा, लेकिन जो सबसे बड़े दल का सब नेता है उसको मीटिंगों में बुलाएंगे। ये लोकतंत्र का स्पिरिट होता है, तब होता है। चुनाव आयोग की कमेटियां, आदरणीय अध्यक्ष जी, पहले तो प्रधानमंत्री फाइल करके निकालते थे। ये हम हैं जिसने अपोजिशन के लीडर को भी उस कमेटी में बिठाया है। और हमने इसके लिए कानून भी बनाया, और आज विधिवत रूप से इलेक्शन कमीशन बनेगा तो अपोजिशन लीडर भी उसके निर्णय की प्रक्रिया में हिस्सा होंगे। ये काम हम करते हैं, और ये मैंने पहले ही कहा, हम इसलिए करते हैं कि हम संविधान को जीते हैं। आदरणीय अध्यक्ष जी, दिल्ली में आपको कई स्थान ऐसे मिलेंगे जहां कुछ परिवारों ने अपने म्यूजियम बना करके रखे हुए हैं। जनता जनार्दन के पैसों से काम हो रहा है। लोकतंत्र का स्पिरिट क्या होता है, संविधान को जीना किसको कहते हैं? हमने पीएम म्यूजियम बनाया और देश के पहले से लेकर के मेरे पूर्व तक के सभी प्रधानमंत्रियों के जीवन को और उनके कार्य को उस पीएम म्यूजियम बनाया गया है। और मैं तो चाहूंगा कि पीएम म्यूजियम में जो जो महापुरुष हैं उनके परिवारजनों ने समय निकाल करके उस म्यूजियम को देखना चाहिए, और उसमें कुछ जोड़ने के लगता है तो सरकार का ध्यान आकर्षित करना चाहिए, ताकि वो म्यूजियम समृद्ध हो और देश के बालकों को प्रेरणा। ये होता है संविधान की भावना। अपने लिए तो सब करते हैं, खुद के लिए जीने वालों की जमात बहुत छोटी नहीं है। संविधान के लिए जीने वाले यहां बैठे हैं। आदरणीय अध्यक्ष जी, जब सत्ता सेवा बन जाए तो राष्ट्र निर्माण होता है। जब सत्ता को विरासत बना दिया जाए तब लोकतंत्र खत्म हो जाता है। आदरणीय अध्यक्ष जी, हम संविधान की भावना को लेकर के चलते हैं। हम जहर की राजनीति नहीं करते हैं। हम देश की एकता को सर्वोपरि रखते हैं और इसलिए सरदार वल्लभ भाई पटेल का दुनिया का सबसे ऊंचा स्टैच्यू बनाते हैं और स्टैच्यू ऑफ यूनिटी देश को जोड़ने का जिस महापुरुष ने काम किया उसका हम स्मरण करते हैं। और वो भाजपा के नहीं थे, वो जनसंघ के नहीं थे। हम संविधान को जीते हैं, इसलिए इस सोच से आगे बढ़ते हैं। आदरणीय अध्यक्ष जी, ये देश का दुर्भाग्य है कि आजकल कुछ लोग अर्बन नक्सल की भाषा खुलेआम बोल रहे हैं। और अर्बन नक्सल जिन बातों को बोलते हैं, इंडियन स्टेट के सामने मोर्चा लेना, ये अर्बन नक्सल की भाषा बोलने वाले, इंडियन स्टेट के खिलाफ लड़ाई की घोषणा करने वाले न संविधान को समझ सकते हैं, न देश की एकता को समझ सकते हैं। आदरणीय अध्यक्ष जी, 7 दशक तक जम्मू एंड कश्मीर और लद्दाख उसे संविधान के अधिकारों से वंचित रखा गया। ये संविधान के साथ भी अन्याय था और जम्मू कश्मीर और लद्दाख के लोगों के साथ भी अन्याय था। हमने आर्टिकल 370 की दीवार गिरा दी। अब जम्मू कश्मीर और लद्दाख के उन राज्यों को, देशवासियों को जो अधिकार हैं, वो अधिकार उनको मिल रहे हैं। और संविधान का महात्म्य हम जानते हैं, संविधान की भावना को जीते हैं, इसलिए ऐसे मजबूत निर्णय भी हम करते हैं। आदरणीय अध्यक्ष जी, हमारा संविधान हमें भेदभाव करने का अधिकार नहीं देता है। जो लोग संविधान को जेब में लेकर के जीते हैं, उनको पता नहीं है कि आपने मुस्लिम महिलाओं को कैसी मुसीबतों में जीने के लिए मजबूर कर दिया था। हमने ट्रिपल तलाक का खात्मा कर करके संविधान की भावना के अनुरूप मुस्लिम बेटियों को हक देने का काम किया है, समानता का अधिकार दिया है। जब भी देश में एनडीए की सरकार रही है, हमने एक लंबे विजन के साथ काम किया है। पता नहीं देश को बांटने के लिए किस किस प्रकार की भाषाओं का प्रयोग किया जा रहा है। हताशा, निराशा पता नहीं उनको कहां तक ले जाएगी, लेकिन हमारी सोच कैसी है, एनडीए के साथी मिलकर के किस दिशा में सोचते हैं। हमारे लिए जो पीछे है, जो आखिरी है, और महात्मा गांधी जी ने जो कहा था, उसकी तरफ हमारा ध्यान ज्यादा है। और उसी का परिणाम है कि अगर हम मंत्रालयों की रचना करते हैं, तो भी मंत्रालय कौन सा बनाते हैं? पूर्वोत्तर के लिए अलग मंत्रालय बनाते हैं। हम देश में इतने साल हो गए, अटल जी आए तब तक किसी को समझ नहीं आया था भाषण तो देते रहते हैं, आदिवासियों के लिए अलग मंत्रालय एनडीए ने बनाया। आदरणीय अध्यक्ष जी, हमारे दक्षिण के राज्य समुद्री तट से जुड़े हैं, हमारे पूर्व के कई राज्य समुद्री तट से जुड़े हैं। वहां के समाज में फिशरीज का काम और फिशरमैन की संख्या बहुत बड़ी तादाद में है, उनका भी ख्याल रखना चाहिए। और जमीन के भीतर के छोटे पानी के जो इलाके रहते हैं, वहां भी फिशरमैन के रूप में काम करने वाले समाज के आखिरी तबके के लोग हैं। ये हमारी सरकार है जिन्हें फिशरीज के लिए अलग मंत्रालय बनाया।
माननीय सदस्यों, अगर सभा की सहमति हो तो सभा की कार्रवाई इस विषय की समाप्ति तक बढ़ा दी जाए। माननीय प्रधानमंत्री जी।
आदरणीय अध्यक्ष जी, समाज के दबे कुचले वंचित लोग, इनके अंदर एक सामर्थ्य होता है। अगर स्किल डेवलपमेंट पर बल दिया जाए तो उनके लिए नए अवसर बन सकते हैं, उनकी आशा आकांक्षा अनुरूप जिंदगी बना सकते हैं। और इसलिए हमने अलग स्किल मंत्रालय बनाया। आदरणीय अध्यक्ष जी, देश में लोकतंत्र का पहला धर्म होता है कि हम सत्ता को सामान्य से सामान्य नागरिक तक उसका अवसर मिले। और इस बात को ध्यान में रखते हुए भारत के कोऑपरेटिव सेक्टर को और समृद्ध बनाने के लिए और तंदुरुस्त बनाने के लिए देश के करोड़ों लोगों को जोड़ने का उसमें अवसर है। अनेक क्षेत्रों में कोऑपरेटिव मूवमेंट को बढ़ाया जा सकता है और उसको ध्यान में रखते हुए हमने अलग कोऑपरेटिव मंत्रालय बनाया। विजन क्या होता है ये यहां पता चलता है। आदरणीय अध्यक्ष जी, जाति की बातें करना कुछ लोगों के लिए फैशन बन गई है। पिछले 30 साल से सदन में आने वाले ओबीसी समाज के सांसद दलों के भेदभाव से ऊपर उठ करके एक होकर के 30-35 साल से मांग कर रहे थे कि ओबीसी कमीशन को संवैधानिक दर्जा दिया जाए। जिन लोगों को आज जातिवाद में मलाई दिखती है, उनको उस समय ओबीसी समाज की याद नहीं आई। ये हम हैं जिन्होंने ओबीसी समाज को संवैधानिक दर्जा दिया। पिछड़ा वर्ग आयोग आज संवैधानिक व्यवस्था में जो है। आदरणीय अध्यक्ष जी, हर सेक्टर में एससी, एसटी, ओबीसी को ज्यादा से ज्यादा अवसर मिले, उस दिशा में हमने बहुत मजबूती के साथ काम किया है। मैं आज इस सदन के माध्यम से देशवासियों को उनके सामने एक अहम सवाल रखना चाहता हूं। और अध्यक्ष महोदय, जरूर देशवासी मेरे इस सवाल पर चिंतन भी करेंगे और चौराहे पर चर्चा भी करेंगे। कोई मुझे बताएं, क्या एक ही समय में संसद में एससी वर्ग के एक ही परिवार के 3 सांसद कभी हुए हैं क्या? एससी वर्ग के एक ही परिवार के 3 सांसद कभी भी हुए क्या? मैं दूसरा सवाल पूछता हूं, कोई मुझे बताए कि एक ही कालखंड में, एक ही समय में संसद में एसटी वर्ग के एक ही परिवार के 3 एमपी हुए हैं क्या? आदरणीय अध्यक्ष जी, कुछ लोगों की वाणी और व्यवहार में कितना फर्क होता है, मेरे एक सवाल के जवाब में जमीन आसमान का अंतर होता है, रात दिन का अंतर होता है। आदरणीय अध्यक्ष जी, हम एससी एसटी समाज को कैसे सशक्त कर रहे हैं? आदरणीय अध्यक्ष जी, समाज में तनाव पैदा किए बिना हुए समाज के वंचितों का कल्याण कैसे किया जाता है, इसका मैं एक उदाहरण देता हूं। 2014 में 2014 से पहले हमारे देश में मेडिकल कॉलेजों की संख्या 387 थी। 2014 के पहले मेडिकल कॉलेज की संख्या 387 थी। आज 780 मेडिकल कॉलेज हैं। अब मेडिकल कॉलेज बड़े हैं तो सीटें भी बड़ी हैं। ये बहुत महत्वपूर्ण एंगल है आदरणीय अध्यक्ष जी, और इसलिए कॉलेजें बड़ी हैं, सीटें भी बड़ी हैं। 2014 में हमारे देश में एससी छात्रों की 2014 से पहले हमारे देश में एससी छात्रों की एमबीबीएस की सीट 7,700 थी। हमारे आने से पहले दलित समाज के हमारे 7,700 युवा डॉक्टर बनने की संभावना थी। 10 साल हमने काम किया, आज संख्या बढ़कर एससी समाज के 17,000 एमबीबीएस डॉक्टर की व्यवस्था की है। कहां 7,700 कहां 17,000? अगर दलित समाज का कोई कल्याण और समाज में तनाव लाए बिना एक दूसरे के सम्मान को बढ़ाते हुए, आदरणीय अध्यक्ष जी, 2014 के पहले एसटी छात्रों के लिए एमबीबीएस की सीटें 3,800 थी। आज ये संख्या बढ़कर लगभग 9,000 हो गई है। (2014) के पहले ओबीसी के छात्रों के लिए एमबीबीएस में 14,000 से भी कम, 14,000 से भी कम सीटें थी। आज इनकी संख्या लगभग 32,000 हो गई है। ओबीसी समाज के 32,000 एमबीबीएस डॉक्टर बनेंगे। आदरणीय अध्यक्ष महोदय, पिछले 10 साल में हर सप्ताह एक नई यूनिवर्सिटी बनी है। हर दिन एक नई ITI बनी है। हर 2 दिन में एक नया कॉलेज खुला है। सोचिए, SC, ST, OBC हमारे युवा युवतियों के लिए कितनी वृद्धि हुई है, इसका आप अंदाज लगा सकते हैं। आदरणीय अध्यक्ष जी, हम हर योजना के पीछे लगे हैं 100% सिचुएशन, 100% उसको लागू करें। उसके जो भी लाभार्थी हैं वो उसमें छूट न जाए, उस दिशा में हम काम कर रहे हैं। पहले, ताकि हम चाहते हैं कि जिसका हक है उसको मिलना चाहिए। अगर योजना है, उसका हक है, तो उस तक पहुंचना चाहिए। 1 रुपया और 15 पैसा वाला खेल नहीं चल सकता। लेकिन कुछ लोगों ने क्या किया, मॉडल ही ऐसा बनाया कि कुछ ही लोगों को दो, औरों को तड़पाओ और तुष्टीकरण की राजनीति करो। देश विकसित भारत बनाने के लिए तुष्टीकरण से मुक्ति पानी होगी। हमने रास्ता चुना है संतुष्टीकरण, तुष्टीकरण नहीं, संतुष्टीकरण। और उस रास्ते पर हम चले हैं। हर समाज, हर वर्ग के लोगों को बिना भेदभाव के जो उसके हक का है वो उसको मिलना चाहिए। ये है संतुष्टीकरण। और मेरे हिसाब से जब मैं 100% सैचुरेशन की बात करता हूं तो उसका मतलब होता है एक असल में सामाजिक न्याय है, ये असल में सेकुलरिज्म है और असल में ये संविधान का सम्मान है। आदरणीय अध्यक्ष जी, संविधान की भावना है सबको बेहतर स्वास्थ्य मिले, और आज कैंसर डे भी है। देश भर में और दुनिया भर में आज हेल्थ को लेकर के काफी चर्चा भी हो रही है। लेकिन कुछ लोग हैं जो गरीब को, बुजुर्गों को आरोग्य की सेवाएं देने मिले उसमें अड़ंगे डाल रहे हैं, और वो भी अपने राजनीतिक स्वार्थ के कारण। आज आयुष्मान से देश के 30,000 अस्पताल जुड़े हैं और अच्छे स्पेशलाइज्ड प्राइवेट अस्पताल जुड़े हैं जहां आयुष्मान कार्ड वाले को मुफ्त इलाज मिलता है। लेकिन कुछ राजनीतिक दलों ने अपने संकुचित मानस के कारण, कुनीतियों के कारण गरीबों के लिए इन अस्पतालों के दरवाजे बंद करके रखे हुए हैं, और इसका नुकसान कैंसर के मरीजों को उठाना पड़ा है। पिछले दिनों पब्लिक हेल्थ जर्नल लैंसेट की स्टडी आई है। उसका कहना है कि आयुष्मान योजना से समय पर कैंसर का इलाज शुरू हो रहा है। सरकार कैंसर की जांच कराने के संबंध में बहुत ही गंभीर है, क्योंकि जितना जल्दी जांच हो, जितना जल्दी ट्रीटमेंट शुरू हो, हम कैंसर पेशेंट को बचा सकते हैं। और लैंसेट ने आयुष्मान योजना को क्रेडिट देते हुए कहा है कि भारत में इस दिशा में बहुत बड़ा काम हुआ है। आदरणीय अध्यक्ष जी, इस बजट में भी हमने कैंसर की दवाइयों को सस्ते करने की दिशा में बहुत बड़ा महत्वपूर्ण कदम उठाया। इतना ही नहीं, एक महत्वपूर्ण जो निर्णय लिया है वो आने वाले दिनों में, और जब आज कैंसर डे है तो मैं जरूर कहना चाहूंगा सभी माननीय सांसद इसका लाभ ले सकते हैं अपने इलाके के ऐसे मरीजों के लिए, और वो है मरीजों को आप जानते हैं अस्पताल उतने नहीं होने के कारण भी काफी दिक्कत रहती है बाहर से आने वाले पेशेंट को। 200 डे केयर सेंटर बनाने का निर्णय इस बजट में किया गया। ये डे केयर सेंटर पेशेंट को भी उसके परिवार को भी बहुत बड़ी राहत देने वाला काम करेगा। आदरणीय अध्यक्ष महोदय जी, राष्ट्रपति जी के भाषण की चर्चा के समय यहां विदेश नीति की भी चर्चा हुई और कुछ लोगों को लगता है जब तक फॉरेन पॉलिसी नहीं बोलते तब तक वो मैच्योर नहीं लगते, इसलिए उनको लगता है फॉरेन पॉलिसी तो बोलना चाहिए फिर भले ही देश का नुकसान हो जाए। मैं ऐसे लोगों को जरा कहना चाहता हूं, अगर उन्हें सच में फॉरेन पॉलिसी सब्जेक्ट में रुचि है और फॉरेन पॉलिसी को समझना है और आगे जाकर के कुछ करना भी है, ये मैं शशि जी के लिए नहीं कह रहा हूं तो मैं ऐसे लोगों को कहूंगा एक किताब जरूर पढ़े। हो सकता है उनको बहुत फिर कहां क्या बोलना उतनी समझ हो जाएगी। वो किताब का नाम है JFK's फॉरगॉटन क्राइसिस। JF कैनेडी की बात है। JFK's फॉरगॉटन क्राइसिस नाम की किताब है। ये किताब एक प्रसिद्ध फॉरेन पॉलिसी स्कॉलर ने लिखी है और इसमें महत्वपूर्ण घटनाओं का जिक्र है। इस किताब में भारत के पहले प्रधानमंत्री और वो विदेश नीति को भी नेतृत्व करते थे। इस किताब में पंडित नेहरू और अमेरिका के तब के राष्ट्रपति जॉन एफ कैनेडी के बीच हुई चर्चाओं और निर्णयों का भी विस्तार से वर्णन है। जब देश ढेर सारी चुनौतियों का सामना कर रहा था, तब विदेश नीति के नाम पर क्या खेल हो रहा था, उस किताब के माध्यम से सामने आ रहा है। और इसलिए मैं कहूंगा कि जरा ये किताब पढ़िए। आदरणीय अध्यक्ष जी,
गोरा है गोरा है गोरा है, अब मत ले लो।
आदरणीय अध्यक्ष जी, राष्ट्रपति जी के अभिभाषण के बाद एक महिला राष्ट्रपति जी एक गरीब परिवार की बेटी, उनका सम्मान न कर सके, आपकी मर्जी, लेकिन क्या क्या कहकर उनको अपमानित किया जा रहा है। मैं राजनीतिक हताशा निराशा समझ सकता हूं, लेकिन एक राष्ट्रपति के खिलाफ क्या कारण है, क्या कारण है? आदरणीय अध्यक्ष जी, आज भारत इस प्रकार की विकृत मानसिकता को छोड़ करके, उस सोच को छोड़ करके विमेन लेड डेवलपमेंट के मंत्र को लेकर के आगे बढ़ रहा है। अगर आधी आबादी उसको अगर पूरा अवसर मिले तो भारत 2 गुनी रफ्तार से आगे बढ़ सकता है, और ये मेरा विश्वास है। 25 साल से इस क्षेत्र में काम करने के बाद मेरा विश्वास और दृढ़ हुआ है। आदरणीय अध्यक्ष जी, पिछले 10 साल में सेल्फ हेल्प ग्रुप्स अब तक 10 करोड़ नई महिलाएं एसएचजी में जुड़ी है और ये महिलाएं वंचित परिवारों से, ग्रामीण बैकग्राउंड से, समाज के अंतिम पायदान पर बैठी इन महिलाओं का सामर्थ्य बढ़ा, उनका सामाजिक स्तर भी ऊपर उठा, कार्यक्षमता बढ़े, उसका स्केल बढ़े, उस दिशा में हम प्रयास कर रहे हैं और उसका आज ग्रामीण अर्थव्यवस्था पर बहुत ही सकारात्मक प्रभाव हो रहा है। आदरणीय अध्यक्ष जी, राष्ट्रपति जी ने अपने अभिभाषण में लखपति दीदी अभियान की चर्चा की है। हमारी नई सरकार तीसरी बार बनने के बाद अब तक जो जानकारियां रजिस्टर हुई है उस हिसाब से 50 लाख से ज्यादा लखपति दीदी की जानकारी हम तक पहुंची और जब से मैंने इस योजना को आगे बढ़ाया है अब तक करीब करीब 1.25 करोड़ महिलाएं लखपति दीदी बनी है और हमारा लक्ष्य है कि हम 3 करोड़ महिलाओं को लखपति दीदी बनाएंगे और इसके लिए आर्थिक कार्यक्रमों का बल दिया जाएगा। आदरणीय अध्यक्ष जी, आज देश के अनेक गांवों में ड्रोन दीदी की चर्चा हो रही है। एक मनोवैज्ञानिक परिवर्तन गांवों में आया है। महिला के हाथ में ड्रोन चलाते हुए देख के गांव के लोगों का महिला के प्रति देखने का नजरिया बदल रहा है और आज नमो ड्रोन दीदी खेतों में काम कर करके लाखों रुपया कमाने लगी हैं। मुद्रा योजना भी नारी शक्ति के लिए उसके सशक्तिकरण की बहुत बड़ी भूमिका अदा कर रहा है। करोड़ों महिलाएं पहली बार मुद्रा योजना लेकर के उद्योग के अंदर अपने कदम रखे हैं और उद्योगपति की भूमिका में आई है। आदरणीय अध्यक्ष जी, 4 करोड़ परिवारों को जो घर दिए उसमें से करीब करीब 75% मकान ऐसे हैं जिसके मालिकाना हक महिलाओं को मिला है। आदरणीय अध्यक्ष जी, ये बदलाव 21वीं सदी के सशक्त भारत की नींव रख रहा है। आदरणीय अध्यक्ष जी, विकसित भारत का लक्ष्य ग्रामीण अर्थव्यवस्था उसको सशक्त बिना किए बिना हम विकसित भारत का निर्माण नहीं कर सकते और इसलिए रूरल इकोनॉमी के हर क्षेत्र को हमने स्पर्श करने का प्रयास किया है और हम जानते हैं रूरल इकोनॉमी में खेती किसानी का बहुत महत्व रहता है। विकसित भारत के 4 स्तंभों में हमारा किसान एक मजबूत स्तंभ है। बीते दशक में खेती के बजट में 10 गुना वृद्धि की गई है, 10 टाइम। 2014 के बाद की बात मैं बताता हूं और ये बहुत बड़ा जंप है। आदरणीय अध्यक्ष जी, आज जो लोग यहां किसान की बातें करते हैं, 2014 से पहले यूरिया मांगने पर लाठी पड़ती थी, रात रात कतारों में खड़ा रहना पड़ता था और वो जमाना था जब खाद किसानों के नाम पर निकलती थी लेकिन खेत में नहीं पहुंचती थी, कहीं और ही काले बाजारी में, और 1 रुपया 15 पैसा वाला हाथ की सफाई का खेल चलता था। आज किसान को पर्याप्त खाद मिल रही है। कोविड का महासंकट आया, सारी सप्लाई चेन डिस्टर्ब हो गई, दुनिया में अनाप शनाप दाम बढ़ गए और परिणाम ये हुआ क्या, क्योंकि हम यूरिया पर डिपेंडेंट हैं, हमें बाहर से लाना पड़ता है। आज भारत सरकार को जो बोरा यूरिया का 3,000 रुपए में पड़ता है, सरकार ने वो झेला और किसान को 300 से भी कम कीमत पर दिया है, 300 रुपए से कम। किसान को ज्यादा से ज्यादा फायदा हो, इसके लिए लगातार हम काम कर रहे हैं। आदरणीय अध्यक्ष जी, किसानों को सस्ती खाद मिले, इस एक काम के लिए पिछले 10 साल में 12 लाख करोड़ रुपया खर्च किया गया है। पीएम किसान सम्मान निधि, उसे करीब 3.5 लाख करोड़ रुपए डायरेक्ट किसान के खाते में पहुंचे हैं। हमने रिकॉर्ड एमएसपी भी बढ़ाया और पहले की तुलना में बीते दशक में 3 गुना अधिक हमने खरीदी की है। किसान को ऋण मिले, आसान ऋण मिले, सस्ता ऋण मिले, उसमें भी 3 गुना वृद्धि की गई है। पहले प्राकृतिक आपदा में किसान को अपने हाल पर छोड़ दिया जाता था। हमारे सेवा काल के दौरान पीएम फसल बीमा के तहत 2 लाख करोड़ रुपए किसानों को मिले हैं। आदरणीय अध्यक्ष महोदय, सिंचाई के लिए बीते दशक में अभूतपूर्व कदम उठा गए और जो लोग संविधान की बातें करते हैं उनको ज्यादा ज्ञान नहीं है, ये भी दुर्भाग्य है। बहुत कम लोगों को मालूम होगा कि हमारे देश में डॉक्टर बाबा साहब आम्बेडकर ने पानी की योजनाओं को लेकर इतना उनका विजन क्लियर था, इतना व्यापक था और इतना समावेशी था, जो आज भी हम लोगों को प्रेरणा देता है। और 100 से बड़ी सिंचाई परियोजना जो दशकों से लटकी हुई थी, हमने उसको पूरा करने का अभियान चलाया ताकि किसानों के खेत में पानी पहुंचे। बाबा साहब का विजन था नदियों को जोड़ने का। नदियों जोड़ने की वकालत बाबा साहब आम्बेडकर ने की थी, लेकिन सालों तक, दशकों दशक बीत गए, कुछ नहीं हुआ। आज हमने केन बेतवा लिंक प्रोजेक्ट और पार्वती काली सिंह चंबल लिंक प्रोजेक्ट पर काम शुरू कर दिया और मैं तो गुजरात में कई नदियों को इस प्रकार से जोड़कर नदियों को जिंदा करने का काम करने का मेरा सफल अनुभव भी रहा है। आदरणीय अध्यक्ष महोदय, हर देशवासी का इस सपना होना चाहिए, हम सबका सपना होना चाहिए कि दुनिया के हर डाइनिंग टेबल पर मेड इन इंडिया फूड पैकेट क्यों न हो। आज मुझे खुशी होती है जब भारत की चाय, इसके साथ साथ अब हमारी कॉफी भी दुनिया में अपनी महक फैला रही है, बाजारों में धूम मचा रही है। इवन हमारा टर्मरिक कोविड के बाद सबसे ज्यादा मांग बढ़ी है। आदरणीय अध्यक्ष जी, आप जरूर देखेंगे आने वाले समय में हमारा प्रोसेस सी फूड, और जिसको लेकर कुछ लोगों को पता नहीं कब क्यों दर्द हुआ, बिहार का मखाना दुनिया में पहुंचने वाला है। हमारा मोटा अनाज यानी श्री अन्न, ये भी दुनिया के बाजारों में भारत की शान बढ़ाएगा। आदरणीय अध्यक्ष महोदय, विकसित भारत के लिए फ्यूचर रेडी शहर वो भी बहुत जरूरी है। हमारा देश बहुत तेजी से अर्बनाइजेशन की ओर बढ़ रहा है और इसे चुनौती और संकट नहीं मानना चाहिए, इसे अवसर मानना चाहिए और हमने उस दिशा में काम आगे करना चाहिए। इंफ्रास्ट्रक्चर का विस्तार, अवसरों का प्रसार होता है। जहां कनेक्टिविटी बढ़ती है वहां संभावनाएं भी बढ़ती हैं। दिल्ली यूपी को जोड़ने वाली पहली नमो रेल, उसका लोकार्पण था और मुझे भी उसमें यात्रा करने का अवसर मिला। ऐसी कनेक्टिविटी, ऐसा इंफ्रास्ट्रक्चर भारत के सभी प्रमुख शहरों को पहुंचे, ये हमारी आने वाले दिनों की जरूरत है और हमारी दिशा है। आदरणीय अध्यक्ष जी, 10 साल में दिल्ली का नेटवर्क डबल हुआ और आज टियर 2, टियर 3 सिटी में भी मेट्रो नेटवर्क पहुंच रहा है। आज हम सभी गर्व कर सकते हैं, आज भारत का मेट्रो नेटवर्क 1000 किलोमीटर पार कर गया और इतना ही नहीं, वर्तमान में 1000 किलोमीटर और उस पर भी काम चल रहा है। यानी हम कितना तेजी से आगे बढ़ रहे हैं। आदरणीय अध्यक्ष जी, प्रदूषण को कम करने की दिशा में भी कई इनिशिएटिव भारत सरकार ने लिए। 12,000 इलेक्ट्रिक बस हमने देश में दौड़ाना शुरू किया है और दिल्ली को भी बड़ी सेवा करी है, हमने दिल्ली को भी दिया है। आदरणीय अध्यक्ष जी, हमारे देश में एक नया अर्थव्यवस्था हमेशा समय समय पर इसका विस्तार होता रहता है। आज बड़े शहरों में गिग इकोनॉमी एक महत्वपूर्ण एरिया डेवलप हो रहा है। लाखों युवा इसमें जुड़ रहे हैं। हमने इस बजट में कहा है कि ई श्रम पोर्टल पर ऐसे गिग वर्कर अपनी रजिस्ट्री करवाएं और वेरिफिकेशन के बाद उनको इस न्यू एज सर्विस इकोनॉमी है उसको हम किस प्रकार से सहायता कर सके और उनको एक आईडी कार्ड मिले ई श्रम पोर्टल पे आने के बाद। और हमने कहा है कि इन गिग वर्कर्स को आयुष्मान योजना का भी लाभ दिया जाएगा ताकि गिग वर्कर को एक सही दिशा में जाने की सुविधा मिलेगी। और एक अनुमान है कि आज देश में करीब करीब 1 करोड़ गिग वर्कर है और उस दिशा में भी हम काम कर रहे हैं। आदरणीय अध्यक्ष महोदय, एमएसएमई सेक्टर बहुत बड़ी मात्रा में जॉब के अवसर लेकर आता है और ये ऐसा क्षेत्र है कि जिसमें रोजगार की अपार संभावनाएं हैं। ये छोटे उद्योग आत्मनिर्भर भारत के प्रतीक है। देश की अर्थव्यवस्था में हमारा एमएसएमई सेक्टर बहुत बड़ा योगदान दे रहा है।
Hello and welcome to Startup Street. I'm Shruti Mishra and with me are Arundhati Ramanan and Ritu Singh. Arundhati, what's the top story today?
Right, Shruti, thank you so much for that. You know, the top story today is that Chinese fast fashion label Shein has made a comeback into the Indian market. Reliance Retail has relaunched the app almost 5 years after Shein was banned over data security issues. Shilpa Ranipeta joins us now with the details. Shilpa, will Shein's comeback in India with Reliance shake up the fast fashion market?
Well, the fast fashion app Shein went live in India over the weekend and it is currently shipping in Mumbai, in and around Mumbai, in Delhi NCR and in Bengaluru, and pan-India shipping will start very soon. Now, the anticipation was such that it saw over 10,000 downloads within just the first day of being launched. So clearly a lot of weight was there for Shein in India. Now, remember it was banned in 2020 over data security issues around the time that apps like TikTok were also banned. So now in its new avatar, Reliance Retail will own Shein. All of the operations will be managed by the company, and that customer data also will remain within India, where Shein is only a technology partner. Reliance will pay a licensing fee to Shein, and Shein will have no access to any of the customer data. And in its new avatar, all the products that will be sold on Shein will now be made and designed in India, with a possibility to eventually export them as well. And the prices start as low as $199, and only fashion products seem to be being sold on the app right now, but there is a possibility that that will expand into other categories as well. Now, there are concerns over what this means for the value retail space in India, and how the competitive landscape will evolve, because it takes on players like Trends, Zudio, Shoppers Stop's Intune, and ABFRL's Style Up as well. And these are some of the value retail players, especially Zudio, that soared to popularity in the past couple of years, and they sell everything under $9.99. So what this does to the competitive landscape and to the value retail landscape will be very interesting to see, because Reliance Retail has an existing supply chain infrastructure throughout the country that Shein can leverage to sell, and Reliance Retail also has plans to cross-sell Shein's products on Ajio, and we cannot rule a possibility of it being offered in its offline stores as well. And even globally, right, Shein has been such a popular fast fashion app. If you look at just the first half of last year, it clocked revenues of $18 billion and a profit of just under $400 million, and this is actually down from a $2 billion profit that it had clocked last year. And it is also currently gearing up for an IPO in London, and its last funding round last year, it was valued at a whopping $66 billion. So, you know, a fast fashion behemoth now back in India, controlled by India's largest retail player. It will be really interesting to see what this does to not just the retail, but especially the value retail space in India. Back to you.
Shilpa, thanks very much for joining in with that. Now let's shift focus to the union budget, which has been dominating headlines for the last few days. A strong push coming in for India's startup and deep tech ecosystem. The government has doubled its commitment to the fund of funds for startups, adding another 10,000 crores to fuel high potential ventures. So far, AIFs for startups have received investment commitments of more than 91,000 crore rupees, and this latest injection aims to sustain that momentum.
Right, Ritu. Artificial intelligence is another major focus of this budget, with 500 crore rupees allocated to an AI Centre of Excellence and the establishment of 5 national skilling centres. The budget also introduced a deep tech-focused fund of funds with an allocation of 20,000 crore rupees designed to accelerate advancements in critical technologies such as AI, quantum computing, semiconductor research. Now, to further support startups, Nirmala Sitharaman also announced an enhancement of the credit guarantee scheme, and for MSMEs struggling with working capital, a new 5 lakh rupee credit card scheme aims to provide short-term liquidity support.
And that's not all. A new initiative targeting 5 lakh women entrepreneurs from scheduled castes and scheduled tribes over the next 5 years was also announced in the budget, facilitating term loans of up to 2 crores. But for more on the significance of this for the startup ecosystem, we have with us Siddharth Pai, who's the founding partner of 314 Capital, and Bhaskar Majumdar, who's the managing partner of Unicorn India Ventures. Bhaskar, Siddharth, thanks very much for joining us here on Startup Street. Siddharth, let's start with you on how effective you think the original fund of funds has been in easing the funding crunch for startups. And now with the government doubling down on this, how much do you think will actually trickle down to these early stage founders?
That's actually a fantastic question. The original SIDBI fund of funds has been the nucleus around which a large amount of rupee capital formation has actually happened. If you actually go by the numbers, less than 15% of the capital being raised by Indian startups actually comes from Indian sources as of now. The entire Indian startup industry is actually overly contingent on foreign capital coming in to end up fueling their M&A, fueling their growth, fueling their expansion, their marketing, as well as all their operations for that matter. I think what the fund of funds has actually done is the fund of funds is one of the first initiatives by the government to end up increasing rupee capital participation. The numbers speak for itself for that matter. The IRR on the investments is roughly about between 21 to 22%, which is far higher than what the stock market is actually given. Disabusing everyone of the belief that the private markets can't end up actually generating returns. Number two, we've actually seen that the rupee capital formation happening through AIFs is actually enthusing a large number of startups to flip back to India to end up raising funding and then to end up actually tapping the markets as well. out of the last few growth rounds that happened in 2024, the vast majority of them, for that matter, ended up actually coming from Indian family offices as well as Indian funds. So it's fantastic that the government has reaffirmed its commitment to Startup India by actually going back to this tried and tested program. And hopefully the scope of this can end up actually increasing, and we'll end up seeing a multiplier effect of 9x, the same way that the previous fund has actually demonstrated so far.
All right, so it's a big thumbs up, Siddharth. Coming across to you, Bhaskar, this is Shruti quickly stepping in. Let's talk about deep tech. The world is no more looking at India as merely the hub of IT and IT services, which Chandrayaan launched for $150 million. The world is realizing that India is the hub of low-cost tech innovation. Also, China is changing the rules of the game with DeepSeek. What kind of a boost will the deep tech fund of funds provide to Indian deep tech startups to get ahead in the global AI race?
You're absolutely right, Shruti. Over the last, I think about a couple of years, the move has been already towards deep tech by the Indian VCs. And no doubt this fund of funds is going to be a big boost towards that. Not only is the fund of funds a boost, already some of the government initiatives earlier, like the PLI scheme and especially the DLI scheme that they launched has been working very, very well. So we've got a number of startups within the semiconductor space where, along with the initial equity put in by the seed and early stage investors like us, the DLI grant sits in very well and enables these companies to grow up. And again, something which is not well known in the general public is there is now a strong patent framework that is starting to take place within the whole Indian startup ecosystem. So this triangulation of this global macro towards a China plus strategy, money's coming in both from the VCs and now from the fund of funds, plus, a patent framework will definitely lead to an overall boost in the whole deep tech environment going forward.
But Bhaskar, this 20,000 crore deep tech fund, it is strong intent, but how do you see it being structured? I mean, is it likely to have direct equity participation or co-investment alongside venture capital companies like yourself?
It's the jury is out on that, and obviously we'll have some clarity within a few years, within a few weeks and months. But I think the fund of fund structure, which Siddharth alluded to earlier, has yielded result. And the government has rightly realized that, investing direct is not the government's job. It is for professionals like Siddharth, me, and others in the ecosystem, because we do this for a living. So my gut is it would be a sort of a fund of fund structure where they would invest in, deep tech funds or funds which have a deep tech allocation to go ahead and do it. So my gut is it is not going to be a direct structure. Co-invest, I think first the SIDBI fund of fund will start doing co-invest, and they've been talking about this for some time. And, from the IVCA, we've also been pushing it. So once that sort of happens, I guess it'll come to the deep tech side.
All right. Siddharth, let's talk about the credit guarantee scheme expansion to 20 crore rupees. It is a big move, especially for capital-intensive startups. But will this really move the needle for early-stage ventures that struggle with working capital and collateral requirements?
No, I think this is a fantastic step forward. I think every startup, they actually tell you the hardest round they raise is not the last round, but it's the first round of debt they end up actually getting. I think the banks have actually been fairly muted spectators about the entire startup revolution that's happening. And that's in no part because of the RBI norms that actually require you to end up having hard assets, you to end up being profitable for that matter. All of these end up actually failing when it comes to the new age economy and startups. So I think the government's move to end up having a credit guarantee scheme has allowed a number of banks to end up exploring smaller credit exposure to these startups, allow them to build up a credit score, and then thereafter end up actually giving them more credit when time is actually needed. If you notice, the average percentage held by a founder when they end up going to list is normally in the higher single digits or lower double digits. If you contrast this with the US, where the founders end up owning anywhere between 25 to 40% of their companies at the IPO, we've seen that the dilution effect on Indian founders is large. The dilution effect is large because debt does not play a very, very large role in the capital structure. I think with the credit guarantee scheme, and hopefully they end up increasing it over time, these startups can end up actually raising debt capital for working capital, rather raising equity, hold on to a higher stake, and end up actually generating more value for themselves and the shareholder.
Well, that's an interesting point, Siddharth, and we hope to see more banks also coming forward with this. We've talked about the funding part, but, the government has also extended, for instance, the period of incorporation for startups by another 5 years. So beyond this access to credit, What more could the government have done to support startups, you think, in the budget, particularly when we talk about regulatory ease or tax incentives?
No, I think the first thing the government should have done is to actually demolish the IMB, the Interministerial Board. I think India has 1.5 lakh DPIT registered startups as of now, but less than 3,000 of them have gotten any of the tax benefits stated by the government. This is the tax holiday of 3 out of 10 years, the ESOP tax deferral that the government also promised, and the ability to carry forward your losses when there's a change in shareholders. It is harder for a person to end up getting an IMB certification than it is for them to pass the CA final exams or for them to get into IIT. I think if the government was serious about democratizing these tax incentives to a larger set of startups, they should start by removing the IMB. We can't have a group of bureaucrats or a group of people who don't have skin in the game to decide who's innovative or not and decide who gets the tax benefits that are actually stated. So I think if the government had done that, that would have been fantastic. Deferring the period of incorporation to 2030 doesn't end up solving the issue. It just gives a longer period of time for a larger number of startups to get denied the tax promises that they were promised by the tax benefits they were promised by the Prime Minister all the way in the year 2016. So I think if that change had happened, it would have been fantastic for the startup ecosystem. But we're hopeful that the government will end up actually looking upon it kindly, maybe in the next budget or so.
Absolutely, and we'll surely keep a track of that, Siddharth, and thank you for those insights. Bhaskar, moving away from budget for a bit, Unicorn India Ventures is currently releasing its 1,000 crore rupee Fund 3. So far, the fund has raised over 500 crore rupees and is expected to reach its final close this year. With this fund, you aim to build a portfolio of 20 startups that are focused mostly in the deep tech sector. What sub-segments will you be looking at, Bhaskar?
So you're absolutely right. We are, I guess, close to 700 odd crores now, or 750 crores, and we would be looking at the final close by April or May this year. We already have created a portfolio of 12 to 13 companies, of which I guess about 8 or 9 of them are in the deep tech. Within deep tech, deep tech is a very loose terminology as such. And the way we view deep tech is anything that is outside of consumer internet and primarily pure SaaS businesses and platforms. Fundamentally, where there is a patentable IP, that's how we sort of define deep tech. And within that, we've invested in robotics business, we've invested in a space tech business, we've invested in a fantastic semiconductor, AI chip design business, and we're looking to invest in a couple more in the mobility space. So broadly, these are some of the sub-segments we are looking at. Of course, with the huge change in the nuclear pact and of the government, that's another sector which will mushroom up definitely, and we are also keeping our eyes on that.
All right, on that note, Bhaskar and Siddharth, thank you both very much for helping us pass through the relevance of this budget as far as the startup ecosystem is concerned. We appreciate your time here on Startup Street. Thank you.
Thank you very much, guys.
On that note, it's time for us to head into a short break. But coming up, autonomous robotics firm Ati Motors has backed $20 million to expand its product offerings and enter new geographies. We put the firm's founder on the hot seat to find out more. Stay tuned.
CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Welcome back. You're still with us on Startup Street. Athi Motors, an autonomous robotics company, has raised $20 million in a Series B funding round led by Walden Catalyst Ventures and NGP Capital, reflecting the growing momentum in India's startup ecosystem. The round also saw participation from existing investors, including True Ventures, Xfinity Venture Partners, Athira Venture Partners, and Bloom Ventures. The company will use the new capital to accelerate product development and expand its operations and strengthen its global presence. Joining us now to discuss this further, Saurabh Chandra, the founder and CEO at Athi Motors. Saurabh, thank you so much for taking time out and being here with us on Startup Street. You know, Athi Motors is an industrial robotics firm, right? If you could take us through what you have on offer, how are you streamlining processes for your clients, and what makes your robots stand out versus competition?
So we make autonomous robots which work in factories. Compared to many of the competition, I think where we have really stood out is with our focus on manufacturing. Our 3D navigation technology, which allows the robots to go outdoors, handle the rain, and handle very rugged environments. So a lot of robots have been there out in the market, but really focused around warehousing or in very nice environments. I think we have really taken advantage of being developed in India in rugged environments, and we are taking that capability to the world.
Right, and you've raised this $20 million. How do you plan to use these funds? Anything new in the pipeline?
Of course. I mean, we started with a good tugging robot. We have the best tugging autonomous robot in the world now. And in factories, people move bins, pallets, and other custom things. So our product portfolio is increasing. First of all, with the capital that we have, we are bringing more SKUs into the market. Plus, we have our robots already running in US, Mexico, Southeast Asia, India. So we intend to just go deeper into all these markets with the capital that we have. So product expansion and deepening our ties in the market. We have 40 very large customers, 15 of them Fortune 500. So we have a lot of potential and scope to expand into our existing customers. Plus, there's just a huge amount of pipeline. I think robots are just getting adopted in manufacturing. We need to get to hundreds of customers, right? So we have a long way to go.
Absolutely. So big opportunity there from what you're saying. We're going to discuss your clients and, your order book a little bit in detail. But before that, you saw revenues of 12.42 crore rupees in FY24, according to reports, versus 5.7 crore rupees in FY23, right? But you also saw your losses surge nearly twofold to about 20.3 crore rupees. The opportunity is just now getting bigger for you. Talk to us about what you're targeting for this year and how do you plan to bring down your losses?
Right. So I think that's the nature of many early stage companies. As you grow, the volume of as long as your unit economics is right, which we have very strong focus on, the scale will automatically bring the burn down, right? So I think it's a natural course. You have this kind of an inverted U-turn. In fact, we expect the burn to increase before it comes down, right? So the idea is not to focus on profitability immediately, but make sure that you have solid unit economics, great customers, and the right go-to-market strategy.
Right, absolutely. And if you could sort of, take us through, you said Fortune 500 companies, you're working with a bunch of them. If you could give us a few names of the clients and, across which sectors are you working with them, and how do you plan to grow this further, right? What's your current order book at?
So mostly automotive. I think automotive is just simply the early adopter. Typically, when it comes to manufacturing automation, we are in customers like Faurecia, Forvia, or Hyundai, and many others. Typically, especially large customers in manufacturing, not very excited about showing the edge they have against other people with the automation they're using, and I'll keep that discretion for them. But generally, I think all kinds of discrete manufacturing, we saw early success with automotive, but now we are seeing consumer goods and, for example, electrical as a big sector and electronics picking up also, right? So it's basically going across all kinds of. We just bagged our first FMCG customer a few weeks ago. So I think the potential is across sectors, but this is where we have started at.
Right. So you see potential across sectors. So you just bagged even your first FMCG client, as you just pointed out. And what about your operations? Your robots are deployed across how many geographies, and where are your manufacturing facilities? What's the global expansion plan?
So we are currently, as I mentioned earlier, our robots are running across US, Mexico, India, Thailand, Singapore, Vietnam, right? So we are in all these countries. All the robots are manufactured here in Bangalore, where we also have our R&D center. So we are a full stack company, do everything from mechanical design, electronics, software, all the way to manufacturing our own robots too, right? So we absolutely do full stack on our robots, and all the robots that run around the world are manufactured right here.
So made in India for the world at this point. All right, Saurabh, we're completely out of time. But thank you so much for joining us on the show today. And we wish you all the best on your journey going forward.
Thank you.
And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.
this issue that Donald Trump fears so much. We offer this question of the land. I don't know what Donald Trump has to do with South African land, because he's never been here. And he must keep his America. We will keep our South Africa.
The union budget has rejigged the income tax slabs to put more money in the hands of the middle class. Will it spark a revival in consumption, and can the government stay on the path of fiscal consolidation as promised? What about the capex push? CNBC-TV18 and India Inc. quizzed the top architects of the budget at our annual budget verdict. India's top bureaucrats who are in charge of the economy were in attendance at the interactive session, which was the first dialogue between the government and industry after the budget's presentation. US President Donald Trump's tariff threats are rattling the global markets, but India's finance secretary is not perturbed. Tuhin Kantapande believes the apprehensions over tariffs is unwarranted, but the bureaucrat also asserted that India must build a domestic value chain to insulate itself.
We should not really anticipate something which is not really stated. The kind of thing which you say, tariff against India. This has not been stated. I mean, if the US admin or anybody has not really stated, so why should we really be saying so? So that will be premature and not warranted, because these are different grounds on which the tariff is being put in. So far as we are concerned, we are a very open economy. If you really look at the US imports into India, most of them are into a very, the tariffs are very low. They're in the range of, up to 10%. They are in 2.5 category, they are 0 category, 0%, 5%, 7.5, 10. Incidentally, if you look at our industrial goods, out of 8,400 odd tariff lines, 6,000 tariff lines are already below 100, close to the ASEAN rates. And these are MFN rates, which are equally applicable to US as well. So therefore, India is protectionist and neither intends to be protectionist. And therefore, I would say that this is an apprehension which is probably.
I think it's right now a wait and watch perspective. I mean, on the one hand, straight away you could say that it might be advantageous to us because tariffs may come down more heavily on other trade rivals, so there could be that issue. But if you look at it from another perspective, you could have a scenario where if the sourcing is from the same country, then will you have a problem in further exports? So we are not yet clear as to how this will play out, and we need to be prepared for all scenarios. I think there is reason for hope, and I think there is reason to assume that electronics as an export from India, which has suddenly become very big in especially what we send out to the US, we need to sort of ensure that we build the domestic value chain more significantly and increase domestic value add so that we protect ourselves against any possible pushback on the value addition point of what happens in India.
India is all set to flex its defense manufacturing muscle. Rajesh Kumar Singh, India's defense secretary, told me at the budget verdict yesterday that the ministry intends to end the fiscal year with orders worth 2 lakh crore rupees or more. This would be close to double of last year. Also, the secretary said that India is willing to procure more from the US if the US meets the requirements on quality and indigenization. Here's the defense secretary in this.
We are on pace right now to sign the largest number of contracts ever in our history. Okay. The largest last year was another high of 1 lakh 8,000 crores. This year we've already hit 1,15,000, and my intent is to double last year's number before the end of this financial year, and the result in terms of expenditure will follow thereafter.
So doubling by the end of this financial year, sir?
Yes, I intend to cross 2 lakh crores and maybe even more. Coming back to the other issue of reforms, from day one, after I've joined this ministry, my focus has been on procurements. That's an area which has always been bedeviled by delays. We've identified where the delays are. The delays are in a lot of, in 3 specific areas essentially. In terms of the delays in finalizing the documents, the RFPs, delays in the field, what they call the field evaluation trials, and thereafter the delays in what they call the cost negotiations. All of them take years at a time. And those are the areas where we are going to ensure accountability in terms of much shorter timelines. And that is why, as I said, I intend to ensure that our contracts this year will be double, if not triple of last year. And we intend to ensure that order books are full across the board in the defense industry so that everybody has visibility, everybody from the OEMs down to the component manufacturers, that their order books are full for the next 4 to 5 years and everybody is on the same page when it comes to fulfilling our capability gaps.
Well, that's quite a headline, sir, when you're talking about doubling and tripling and order books being full for the next 4 or 5 years. But if I may extend this conversation to react and respond to what has happened globally, and the comments coming in from President Trump saying very specifically that India needs to do more by way of procuring security equipment from the United States. I was just taking a look at the numbers, sir. India's already bought defense technology worth over $25 billion from the US since 2007. So when you hear President Trump saying that we need to do more in terms of procuring US security equipment, what does this mean? What should we realistically expect? What's on the table?
So first of all, of course, this has nothing to do with the budget.
No, it doesn't. But it's linked to the overarching landscape that we're dealing with.
Sure. So we do have some procurements which are on the anvil where American companies would be in the picture. And as long as they are able to meet our requirements in terms of quality and in terms of certain levels of indigenization, of course we'll be, those are carrots that we will be able to dangle before the Americans, and hopefully we'll be able to give some of those contracts. Let me stress that India has already ordered some 1,500 odd civilian aircraft from both American and from Airbus about 1.5 years back, over the last 1.5 years, which means in a sense that we've lost some leverage there. We've also already ordered these Predator drones a few months back. So yes, we are already meeting a good proportion of our requirements from capable American companies, and we intend to continue doing so. There will be significant buys, and some of that will go to the US as well.
Electronic and IT Secretary S. Krishnan confirming that OpenAI CEO Sam Altman expected to meet Prime Minister Modi and Minister Ashwini Vaishnaw when he lands in India. Krishnan did not rule out a potential tie-up with OpenAI, but added a big caveat. AI models will have to be built on open source foundations, and OpenAI is not.
He is expected to visit New Delhi, and he is expected to meet hopefully the Prime Minister or the Minister for Electronics. We presume it is to discuss on what OpenAI can do for India and the kind of applications of OpenAI in the country, and how well India is equipped and what we can do to benefit from this. OpenAI's model is not an open model,
yes.
Right? So the ChatGPT is not an open model, so if at all we are going to build on models, it has to be on other open source models which we pick up and work towards.
There is a need to recalibrate the RBI discussion paper on crypto assets. That's the word coming in from India's Economic Affairs Secretary Ajay Seth. Remember, the RBI in its discussion paper last year had flagged cryptocurrencies as a negative force when it came to India's financial stability. However, the Economic Affairs Secretary conceded that several jurisdictions had changed their position on cryptocurrencies, or digital assets as they're called. since that time, which necessitates India re-looking at its own stance. Take a look.
Cryptocurrency, as we are aware, we have done a discussion paper, including at the senior level participation from the Reserve Bank of India, and the committee had finalized the discussion paper. But thereafter, we find that when it was about to be issued, that several jurisdictions, and you named one, but more than one jurisdictions have changed their position on crypto assets in terms of their scope, where they see the utility, including for settlement, multilateral settlement of payments, cross-border payments. So there's one side, they're saying that much stronger use of crypto assets as a stable coin, which will have a large implications for an emerging economy like ours. The second one, using it as a multilateral settlement mechanism, which will again has a very major implications that how the global systems are organized. So in that context, we are recalibrating the paper, because the purpose of that paper is to pose the right questions to the stakeholders so that we get the right answers in terms of an appropriate answer to inform our policy making.
But what does the recalibration mean, sir? Because at this point in time, the RBI was very clear. They don't believe that cryptocurrency is the road to take at all. Is there a change in approach, given the fact that countries like the US are now full-fledgedly moving forward with cryptocurrencies?
So I will mention it that in 2023, when India had the G20 presidency, at that point of time, the stances of various jurisdictions, and I'm using the word jurisdictions instead of using the word countries, was fairly well known, and there was a stable position each one of them have taken. And this is one asset class which doesn't believe in the borders. We have to, what others will do, we have to be fully conscious of before we decide our own policies. It is not just a stable coin. At the 2023 issue was only different jurisdictions were looking for crypto assets as a stable coin. Right. Which is not a stable coin, doesn't have any much value. But a stable coin can cause a significant risk for our economy, for all emerging economies. Then a new element has come in. Some jurisdictions talking about a cross-border settlement doing it here, which is altogether a new dimension being brought in. So that requires to getting back not from the ground zero, but certainly going to the last stages of the drawing board and saying that do we have to recalibrate few of the questions so that we understand the risks very clearly and what can be the possible policy responses.
So by when do you believe this recalibration exercise will be over? And I'll get Mr. Nagaraju to comment on that as well.
I'll say that soon, but it may take a couple of months, but not longer.
India perhaps rethinking its position on digital assets. That's the Economic Affairs Secretary. We will head into a break, but when we return, more from our exclusive budget verdict with the budget architects themselves coming up.
I think FI selling is not beyond a point a big negative. It is that whether India is doing well or not. And then there is some correction of excesses and stuff like that, which clearly seems to have been done. One reason has to be India related, that Indian results came out very bad.
We are hitting the limits on what the government can directly do in terms of capex, and therefore the guidance from the government was that we will maintain capex as a percentage of GDP here onwards, that the scope for us to do more is now gone. So now they're experimenting with, for example, this 1 lakh crore that they've decided to spend on urban infrastructure. They have to find such avenues so that capex continues, but there is very little more they can do at the central level. Investment activity in the country is going to be a lot more dependent on how well the real estate cycle turns, how well the power generation cycle turns. And I think this almost obsession with waiting for the government to spend an extra 30,000-40,000 crores, in the larger scheme of things, these are all rounding errors.
I think FI selling is not beyond a point a big negative. It is that whether India is doing well or not. And then there is some correction of excesses and stuff like that, which clearly seems to have been done. One reason has to be India related, that Indian results came out very bad. I think it is one of the best budgets that we've seen in many, many years. And I tweeted that's a dream budget. So first thing is that you normally want money with the public rather than with government. It should just be the general thumb rule of looking at anything, that money with public is better than money with the government. You have not said that, oh, you cut a tax rate across the board, therefore the rich will get much more. It has come to the correct audience in that sense. So it has to be travel. It has to be savings. It has to be these car consumer durable types. As I said, we are not buying those, but they could. If the overall markets are down a lot, then India may outperform because A, it's not directly affected, and B, don't worry about markets like Taiwan because they have been closed for a week. So if you just look at how TSMC ADR was trading during this period because of NVIDIA and others, and then the TSMC local fall. So don't get totally carried away. A little bit you are allowed to get carried away. But the point is that the budget was good and this tariff situation is bad.
Some of these kind of an IT services name is something we like to have. If you look at our portfolios, our regional funds would have something like a Cognizant Technologies that's not participated in the rally, trades at 15 times earnings. We discussed about bank in the previous question. I think things improve for banks from here. One would be still careful of expensive small to mid cap names. See, they had a one-way rally over the last couple of years. And again, nobody could understand what was happening in these names between, I would say, Jan to whatever, somewhere August, September of last year. That is going to unwind. We've seen part of that unwind. I won't be surprised if these names correct another 15-20%. All the noise.
You're watching the Budget Verdict, our special broadcast. Finance Secretary Tuhin Kantapande said the new direct tax code will have only half the text of the current law and words like assessment year may perhaps even vanish. CBDT Chairman Ravi Agrawal says the new legislation will be simpler, inspired by similar exercises in the UK and Australia. The new law is scheduled to be introduced in Parliament this week. Take a look.
We are making a very sincere attempt. This particular thing in other sovereigns also, this has been attempted. Some people have taken years, 4 years, 5 years to change the new law, to rewrite the law. We had some groundwork earlier in some committees which they did the work. But this work, this piece of the work, bringing it has been done in about 6 months. So obviously, while we will say that we have done a great job, we don't know. So we have to, the suspenses, the jury will still be out.
Yes, the jury is out and we'll have to wait for you to actually bring the bill.
But what I can say is that the words will be halved, chapters will be halved.
As a result of this entire exercise in this 6 months, the act has been now, the proposed act would be about half. I would not say exactly half, but it will be about half. it'll be about how, because we have to take care of different situations, you see. The shift in approach is that, well, we have taken some provisions which were elaborated in the Base Act to the rules also. And also we took inspiration from the similar exercise which was done in other sovereigns. For example, UK, Australia.
The government does not want money locked up, says Financial Services Secretary on the RBI's new liquidity coverage ratio rules, which kick in from the 1st of April. The Financial Services Secretary M. Nagaraju says the government has conveyed its views to the RBI and it's yet to hear back on the matter. Take a look.
Not going to second guess the RBI, but RBI has issued the draft, and we have conveyed our views on that. Now they have not issued the final draft, the regulations. We want to we don't want to lock up a lot of capital into this kind of ideal situation. So we have expressed our views based on the feedback we received from the industry. Okay. Now the RBI has not issued. So let us put a full stop there.
DPAM Secretary Arunesh Chawla highlighted a calibrated asset monetization approach when it comes to the public sector. He also said that the government hopes to monetize land assets of BSNL and MTNL in FY26. The Finance and Revenue Secretary Tuhin Kanta Pandey said the PSU dividend strategy is aimed at being consistent and not one of maximizing revenue.
We are going to help MTNL and BSNL in monetizing whatever assets they have, so that the value that is locked in can be redeployed, the liability is cleared, and we can re-energize the sector.
And do you expect that to go through within this in the next financial year, FY26?
Touch wood.
Touch wood. Okay, that's an important headline.
Really look at the dividend, as Arunesh mentioned, we are looking at consistent dividend, not maximization of dividend. Because if you maximize the dividend, you basically evacuate the money out and then it doesn't help for growth of the company. So there is a consistent dividend policy, and consistently also the targets of dividend are being met.
The highlights of CNBC-TV18's exclusive budget verdict with the budget makers. Before we say goodbye, we leave you with a quip from Finance Secretary Tuhin Kanta Pandey on artificial intelligence. Take a look, have a laugh, and thanks very much for watching. Stay tuned to CNBC-TV18.
Note, as a joke, I would say that we should not finance enough to, finance our own
demise,
extermination, human extermination.
So which is why you've been stingy in your budget for the AI mission, sir. It's self-preservation. But that's
humanity must preserve itself.
Absolutely, I couldn't agree with you more. Humanity must preserve itself.
On tariffs is basically escalate to de-escalate. We saw this early this morning, Mexican president promising 10,000 troops to guard the border. And the same thing got repeated with Canada. So I think there is a call, or there are interactions scheduled with the Chinese authorities in the coming days. And the hope is all these tariffs come with a lag, basically, and some solution is going to be found out. And our sense is, look for China, it's going to be do or honor a part of the deal from 2018-19, buy some of the goods, sell part of the TikTok business, which is in US. And again, at the end of the day, the administration here wants to leave a legacy. President Trump wants to leave a legacy of a strong growth rate. So I don't think they do anything significant to derail the story. But yeah, there is going to be a lot of noise, a lot of bumps along the way.
Tonight, I am announcing Canada will be responding to the U.S. trade action with 25% tariffs against $155 billion worth of American goods. This will include immediate tariffs on $30 billion worth of goods as of Tuesday, followed by further tariffs on $125 billion worth of American products in 21 days' time to allow Canadian companies and supply chains to seek to find alternatives. Canadian energy powers American manufacturing, businesses, and homes. Of America's top 5 trading partners, Canada is the only one with whom the United States runs a trade surplus in manufacturing. And Canada buys more goods made by Americans than China, Japan, and Germany combined.
Presently, taxpayers can claim the annual value of self-occupied properties as nil only on the fulfillment of certain conditions. Considering the difficulties faced by taxpayers, it is proposed to allow the benefit of 2 such self-occupied properties without any condition.
Hello and welcome to our monetary policy curtain raiser. It is baptism by fire for the new Reserve Bank governor as he goes ahead to present his maiden monetary policy. The budget was kind, yes, in terms of a lower deficit, but President Trump has created a perfect storm in the global currency markets, including for India. So exactly what should the Reserve Bank and the MPC do? Can you cut when there is a global storm in terms of EM currencies? That's the question for which we need answer. And as always, the Citizens Monetary Policy Committee of CNBC-TV18 meets on the eve of the RBI MPC to deliberate on what should be the issues and how to look at them. I have with me Chairman of our committee, Dr. Pranab Sen, and members Soumyakanti Ghosh of State Bank of India, Sajid Chinoy of JP Morgan, Samiran Chakrabarti of Citi India, and Sonal Verma of Nomura. Gentlemen and Sonal, thank you very much indeed for your time. It's a very, very crucial policy, as I said. Sajid, it is the global churn that is going to worry us most. Just outline the, the announcements that have come from the US. What does it do to global inflation and our own inflation expectations? And what does it do to global growth?
Thank you, Lata. I think the global economy is getting more precarious by the day. 2024 was characterized by US exceptionalism, where US growth was very resilient, and that meant a stronger dollar and higher US rates. And both of those things put pressure on emerging market currencies, constraining their space and their ability to respond. What we're seeing now is the onset of the much feared trade war. The US has put on tariffs on Canada, Mexico, China. those countries have begun to retaliate. So this trade war could get ugly very quickly. And the question really is, number one, this is going to depress global growth. I think the lesson from the first trade war in 2018 was very clear. It was the uncertainty of the trade war that depressed global business sentiment and global capex intentions. And it was very clear in the data in 2018 and 2019. So I think we should brace for a global environment with more growth headwinds, where exports will most likely, take a hit. The difficult question is whether the trade war is going to exacerbate or undermine US exceptionalism, because there is a scenario in which global growth gets hit, but US growth gets hit less because that country has offsets, easier fiscal policy and more deregulation. Now, that's the worst of all worlds for emerging markets, because you are living with lower global growth and therefore lower export growth. But your ability to respond to lower growth is compromised by the fact that US exceptionalism means the dollar remains elevated. Today's dollar rate is almost at 20-year highs, and US rates remain elevated. And then you're in this bind where you want to respond to a more hostile global environment in terms of weaker growth, but you're unable to do so completely.
I take your point.
That's the dilemma that these economies face.
Yeah, I take your point entirely, which brings you to the classical question, which the MPC will have to address, Samiran. Can you really respond with rate cuts and growth stimuli in a situation of tension on the currency?
3 points here. The first point is that when there is so much of global growth uncertainty, we have to think of what we can do for our domestic growth. And from that perspective, whatever the budget is trying to do or whatever the MPC is trying to do will be very much focused on trying to get the domestic growth up. The second point is that to start with, our currency was somewhat overvalued by standard metrics of 40-country trade-weighted RER, etc. So part of the depreciation that we are seeing might actually be a good thing, and to some extent might be also giving that little bit stimulus that exchange rate depreciation gives to the overall growth outlook. So some part of the depreciation might not actually be a bad thing at all. And the third issue is that there is, at least our view is that our capital flows are more growth sensitive than interest rate sensitive. So it is somewhat unorthodox view, but if the governor, RBI, MPC, they believe that they can spur growth expectations at this juncture by a somewhat easier monetary policy in tandem with the fiscal consumption stimulus that we have seen, then it might just kickstart the capital flows into India, which are more growth sensitive, and to some extent that can stabilize the currency as well. So to me, the interest rate cut is not necessarily an antithesis to the currency story.
No, actually, you're right. Even in the last few days, we have seen inflation, we are seeing actually debt flows continuing somewhat. It's only equity that's hurt. If interest rate differential was such an issue, we should not be seeing debt flows. But, your growth issue is more important. Is growth really under so much threat? Dr. Sen, that question to you actually. The budget is expected to have boosted consumption since it has cut taxes so generously. So what's your assessment of growth per se, domestically speaking? Do you think growth has a better chance now in FY26?
That's not clear, Lata, because they've given with one hand and taken away with another. And the way it's been done, I find a little disturbing, particularly for the consumption story.
Yeah.
Because what they've done in effect is given a break to the middle class.
Yes.
But they have reduced the outlay on education, health, social services of various kinds, which essentially affect the lifestyle of the poorer, which is much the larger number. And we do not know whether these people will be then forced to in a sense, rejig their consumption basket. And the net effect may well turn out to be negative.
Okay, well, yeah, that there is, of course, not much for the bottom of the pyramid if you look at it that way. But let me also get some inflation questions out of the way. Sonal, how would you look at inflation now? Is there a possibility that with so much of uncertainty and supply chain disruptions likely, inflation may surprise negative, or is inflation definitely headed towards 4.2 or something, which the Reserve Bank is forecasting?
For now, Lata, it looks like we are headed in the 4.5% range. I mean, if you look at India's CPI basket, bulk of it is actually non-tradable. So food services play a much bigger role. The pass-through from currency weakness, our estimate is a 5% depreciation leads to about a 30 basis point impact on headline inflation. And we are in a soft demand environment, so really the spillover to consumers will be less. There's a bigger risk that firms see pressure on their corporate profit margins. Food in particular, we've seen a positive surprise. The two items that were holding inflation up, which is vegetables and pulses, are sequentially falling. And the big run-up in edible oil prices, the pace of increase there is also slowing down. So we are seeing some positive news on food inflation. Rabi prospects look a bit uncertain, but on the whole, I would say the decline in headline inflation and core, which is very well anchored, soft demand conditions mean that headline inflation, which was at 5.2% in December, should come down to below 4.5%, in fact, in January itself, and then stay in this 4.5% range through the next 12 months. So the inflation outlook does look a lot more favorable.
Okay, so that means the Reserve Bank has more elbow room. Well, let me get a little more on growth, and then I come to the all-important steps, the liquidity steps in particular. Soumya, if you can wrap up the growth argument, how will a lower currency at 87.30 or 87.50 help growth? Again, there is the budget. Are we in a position to expect better growth in FY26 than in 25?
Yeah, thank you, Lata. I think regarding before I answer the question on growth, the point on exchange rate you mentioned, I think exchange rate movements in India, as we see that the exchange rate there has been again a significant depression in the value of the exchange rate because of the measures of President Trump. But my sense is that also a large part of the currency movement is also growth accretive in the Indian context. If you actually do an empirical analysis, you will find that apart from the dollar index movement, which determines the direction of the value of the rupee, a large part of the rupee is also determined by the factors which are positive to growth. So from that point of view, I think these current movements in exchange rate, we should understand the global idiosyncrasies. And the best thing to happen at this point of time is basically look into the growth prospects. As of now, if you ask me about the growth prospects for the next fiscal year, the numbers are actually not significantly different from what you will get in the current fiscal year, which is basically FY26. So my sense is that I think it will be better if we look into the perspective from a growth one rather than purely from an exchange rate perspective that what one may think of.
Okay. So short point, you're saying that next year's growth will be as good as this year's or as bad as? So yeah, something like 6.3, 6.4.
Yeah, it should be similar to this year's growth rate. So from that point of view, I think there could be, it is required that there could be policy interventions which could actually spark growth.
Okay, fair point. Exactly what should those policy initiatives be, especially on the liquidity front, where we just heard a bunch of them? That question after the break.
To streamline the process of transfer pricing and to provide an alternative to yearly examination, I propose to introduce a scheme for determining arm's length price of international transaction for a block period of 3 years. This will be in line with global best practices. With a view to reduce litigation and provide certainty in international taxation, the scope of safe harbor rules is being expanded. A number of senior and very senior citizens have very old national savings schemes accounts. As interest is no longer payable on such accounts, I propose to exempt withdrawals made from NSS by individuals on or after 29th August 2024. I am also proposing to allow similar treatment to NPS Vatsalya accounts as is available to normal NPS accounts subject to overall limits. The middle class provides strength for India's growth. This government, under the leadership of Prime Minister Modi, has always believed in the admirable energy and ability of the middle class in nation building. In recognition of their contribution, we have periodically reduced their tax burden. Right after 2014, the nil tax slab was raised to 2.5 lakhs of rupees, which was further raised to 5 lakh rupees in 2019 and to 7 lakh rupees in 2023. This is reflective of our government's trust on the middle class taxpayers. I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Welcome back. We have been speaking with the members of the Citizens Monetary Policy Committee of CNBC-TV18, Shaumikanti Ghosh, Sajid Chinoy, Samrat Chakraborty, Sonal Verma, and Chairman of the committee, Pranab Sen. They have been outlining that growth definitely needs a helping hand. So what should the Reserve Bank do is the obvious next question. Samiran, let me start first with the liquidity steps because there's so much interest. A bunch of them have already been announced. Does that take care of it, or do you think the extreme Brahmastra of CRR cut also is needed?
So, Lata, the way we are looking at it is that if you assume that seasonally BOP is stronger in the Jan-March quarter, and whatever weakness in BOP we have seen in the month of January that reverses from February onwards, we move into some sort of a BOP surplus scenario, then maybe whatever has been announced is good enough to keep the durable liquidity in positive till March end. However, if that assumption is wrong, if global developments lead to more capital outflows and BOP turns deficit, then we might need more infusion of liquidity as we move forward. February 7th might be too early to decide on this matter. We might not have enough clarity on this. So maybe not too many liquidity announcements on February 7th itself. What will be very useful is if the RBI articulates the liquidity view more clearly, that they will want durable liquidity to stay in surplus as an independent objective, not just ensuring that the overnight rate is close to the repo rate, which has been the standard practice, which can be achieved through the daily VRRs also. Now comes the question of the CRR cut. Our sense is that the CRR has been reduced below 4% only in some sort of emergency situations in the past. This is definitely not an emergency situation for India. So we don't see the need for a CRR cut at this juncture. It might send wrong signals. However, there is possibly need to rethink the overall liquidity framework because the LCR thing is now very much prominent in the bank's minds. So with a large LCR holding, to what extent that 4% CRR is required or not, I think that's a more broader question, which at some point of time we will have to discuss and debate.
Oh, okay. I don't know if the RBI will venture into that on MPC Day, unless prodded on by some of our questions. But what's your sense, Sonal? Should growth be tackled only by rate alone, or does it need a mixture of rate and liquidity on February 7th itself?
Well, not necessarily Feb 7th itself, because RBI has already been proactive with durable liquidity measures, but clearly liquidity easing is a precondition to ensure policy transmission takes place, because in the last 9 months or so, bank funding costs have gone up. So any rate cuts we deliver now, the full transmission is going to take time. So we need to basically do a lot more in terms of durable liquidity injection. I mean, for Feb 7th itself, we are not expecting any major liquidity announcement given the surprise we've already seen. But I think looking over the next 6 to 9 months, our own estimate is we need to create reserve money of over 4 trillion INR. And this essentially cannot come through one tool alone. So a mix of tools in terms of further VRRs, FX swap, as well as more OMO purchases. Our own estimate is over 2 trillion INR worth of OMO purchases will also be needed in order to create the durable liquidity. So it's going to be a mix of various tools going forward.
Okay, so that, and we may not know that on Feb 7th itself, obviously. But, Soumya, the Reserve Bank has been not just LCR, it has been sounding cautious even in terms of the credit deposit ratios. Do you think you will get a sense that the Reserve Bank will say, okay, credit growth has fallen enough, now it will change its lingo to spur credit growth? Are you expecting anything on those lines, the language?
Yeah, thank you, Lata. I think just taking this point forward, which others panelists said, I think liquidity continues to be an issue. But regarding the larger objective of this credit growth significantly outpacing deposit growth, I think that has significantly corrected in the banking system as of today. As of today, both the credit and the deposit growth are almost running parallelly together. So my sense is that the objective of the Reserve Bank of India calibrating their credit growth through the increase in the regulatory weights may have run its course, and possibly the fear of the deposits, actually deposits are now a little bit higher than the credit growth because of the decline in the credit growth in the last 1 or 2 months. So from that perspective, the central bank may be comfortable or may just indicate that the objective which we wanted to do with the credit growth moderation, that has been achieved. And basically we'll keep a strong vigil. But as of now, I think the objective of this credit growth narrowing down has been achieved for the time being. So that will be a part of the discourse of the central bank communication.
That'll be very big, you know, if they also indicate that we are, as Samiran is asking, that liquidity, we will keep liquidity in surplus and we are satisfied with the credit deposit ratios. That is asking a lot from the central bank. Sajid, are we really that confident of inflation? I mean, after all, the rupee is now at 87, 25, 30. Can we really be sure that the inflation problem dragon is bolted?
The core for a very long time. And I think even if you look at the last few months, the momentum has been soft. So one would argue that there is space for core inflation to absorb some imported inflation, if the rupee weakens. What we're also forgetting is that the rest of the world may suffer from an adverse supply shock because of a trade war, which pushes up prices. But in Asia, there's another disinflationary force, there's a countervailing force, because if the US and China get into a trade war, more and more of the Chinese excess capacity should come to Asian countries, including India, and that should be disinflationary. So I think on core inflation, despite a weaker rupee, I think there are no alarm bells. And with growth, with pricing power not really there in many sectors, much of these input cost inflation can be absorbed in the form of margins. The wild card here is food. And I think one has to bank on the fact that we've had a good Kharif harvest. Rabi sowing is going well. Food prices are rolling over. So I think over the next 3 to 6 months, there's some visibility here that inflation is going to be around 4.5%, which should give the RBI some comfort. One final point I'll make, you see, with fiscal policy consolidating, the onus on growth has shifted decisively to monetary policy. If we want rate cuts to be efficacious, it will not be efficacious in an environment in which banks are borrowing 1 trillion or 2 trillion from the RBI, because if they're doing that, behaviorally, they will not be cutting deposit rates. And they aren't cutting deposit rates, they aren't cutting lending rates. So the RBI will have to inject enough durable liquidity over the next 3 months just to ensure that banks have that comfort and start cutting deposit rates. By our estimates, they've injected almost 2 trillion of durable liquidity in the last few weeks. But despite that, in February, headline liquidity should be in a deficit of over 1 trillion, and in March, over 2 trillion. So more work needs to be done. So I think liquidity is not adding for the sake of adding. You add as much as you need to get the monetary policy transmission of your rate cuts.
Okay. Well, actually, Dr. Sen, all your members are actually wanting the Reserve Bank to be much more considerate to growth. What is your sense? How should the Reserve Bank sound? Should they sound like we are here to help growth in every way, or should they be cautious?
No, I think they should continue to sound cautious. Not so much. I think the budget has raised no real issues as far as the MPC is concerned, but Mr. Donald Trump has.
Yes.
And until that plays out, if I were the MPC, I would be very, very cautious.
Oh, okay. So the chairman, I think, is going to vote differently. But gentlemen and Sonal, why don't we start the voting itself? First question is obvious. What will the MPC do to repo rate? Start with you, Chairman. Dr. Sen?
I think they should hold it as of now.
Oh, really? Okay. Samiran?
We are calling for a 25 basis point cut in the February policy.
Okay. Sonal?
25 basis point cut.
Soumya?
25 basis point cut.
Sajid?
25 basis point cut.
Okay. Chairman, sir, you've been overruled, and how? Why don't we come to the CRR? What should or will the MPC do to the cash reserve ratio? Dr. Sen?
I wouldn't fiddle with the CRR. I would operate with other instruments.
Wouldn't. Fine. Samiran?
No change in CRR.
Oh, okay. Now you'll agree with the chairman. Sonal?
No change.
No change. Soumya?
No change for now.
For now. Okay, fine. Point taken. Sajid?
No change.
Okay, so there's a
It's
unanimity on this issue, at least for this policy. How many cuts in this calendar year, including the one in February, since some of you have? Dr. Sen, how many cuts?
Uncertain.
Oh, okay. You're not committing. Sonal, how many cuts, including the one in February that you have voted for?
100 basis point in total.
Okay. Samiran?
50 to 75 basis points.
All right. Soumya?
75 basis points.
Okay, there's wide variety. Sajid?
100 basis points, global conditions permitting.
Okay.